So hi guys, welcome to the marathon lectures from Sreshta for CA and CMA by Sreshta faculties. Okay, so right now you may be watching the accounting or auditing or law, whatever the subject. Out of 8 subjects, you may be watching any subject. I don't know. This is just an introduction video from me. Now, what important thing that you need to do right now is don't directly skip to the subject. Don't directly fast forward the video. Please watch this video without any interruption. Even when you're watching the marathon, we have given below the description timestamps. If you click on a particular timestamp, you will go to that particular chapter. But what I sincerely advise you, please watch this entire marathon in the same order. Suppose we uploaded 12th hour, don't directly go to the 5th hour and start watching. Watch in the same order because there is a structure that we follow so that you get the best understanding. Getting it? And further, after this 1 or 2 minutes, getting it, there is my another video which is merged, which is already merged. Please watch that also because that is an instruction to be followed while watching the marathon, what material to be used, all that also I covered. So the initial 5-7 minutes of my content, please do not skip. Please do not skip. So you're going to get some guidance on how to watch this marathon. Then you can directly start with the subject. That's it. Getting it? So take care, continue watching. And please do not watch at higher playback speed. Some students think watching at higher speed, 1.5 times, 2 times the speed, dangerous approach. See, your objective of listening to the marathon class is not to listen, but to learn something. Learning, you should not make it fast. If at all we can cover the video in 5 hours, we would have covered in 5 hours, no? See, suppose I uploaded 10 hours marathon. If at all we can cover it in 5 hours, we would have taken it in 5 hours, right? Why the hell we take 10 hours? Why the hell we take 20 hours? So if at all you're watching at 2 times the speed, 1.5 times speed, you are not actually learning. You're only listening to the words. You are not learning. You're not analyzing. Analysis will not transmit. Understanding, you'll not get the emotion exactly. Whatever the emotion, with whatever the emotion or intensity the faculty is teaching, if at all you're watching at higher speed, higher playback speed, you will never get that intensity. You will never get that connection. You just listen and leave. See, this is the reason why students, in spite repeat many a times, they still do not recollect. They still do not understand the content. Some students say, sir, some students may be faster in learning. If at all you are very fast in learning, try to listen the song at 1.5 times speed. Take any one particular song, try to listen at a higher speed. See whether you are connecting or not to it. You are listening, no? Music is audible, song words are audible, vocals and music, everything is audible, but why you are unable to connect? Connection is required with the subject. In order to establish that connection, please listen to the subject at standard speed. Even though you may be very smart, you may be very intelligent, just try that intelligence while listening to the songs also. Listen to a song at 2 times the speed. Emotion is important. In anything, any work you do, emotional connection is required. So please watch the entire content at standard speed. And I'm telling you, if at all you want to try 1 hour, if 1 hour you watch at standard speed, another 1 hour you watch at higher speed, you check back yourself where you are learning better. I think that is the best judge, that is the best decision. Just try that and then do. Because many people in YouTube are misguiding students saying, listen at higher speed, revise more number. No, that's not. Listen at standard speed. Your revision, number of times revision will naturally reduce. That's it. So continue watching the video. Thank you. Have a nice time. Bye-bye. So, hi guys. First of all, thank you very much for, encouraging our institutes, rest of us CA and CMA to this level. Anyhow, so here is a good news for all of you from Sreshta. Again, in respect of November 2022 exams, we are going to upload again all updated marathon classes, revision classes. Okay, we are once again uploading the videos or revision videos for November 2022 exams. And we are doing it for all 8 subjects. So who are the faculties that first of all taking all these marathon revision classes? And myself, I will take audit and I will take some 2 or 3 important chapters of company law. And so nothing but P5, mainly I'll focus on, paper 6. And Satyaraju sir will focus on paper 1 and paper 5. So you will be getting approximately 20 plus 20, 40 hours of marathon for accounts and advanced accounts put together. Then Subramaniam sir will be taking paper 2 part A, company law main chapters. And Harish Krishnan sir will be taking paper 7, which is EAS and SM marathon. And Vikita madam is taking paper 2B, other laws marathon. And Samba sir is going to take paper 4, income tax, separate marathon for 12 hours. GST some 10 hours, separate marathon. And Srinivas Reddy sir, paper 3, costing marathon, approximately we are going to upload for 15 hours. And coming to our another faculty, paper 8 part B, Naga sir is going to take economics marathon. And same Samba sir is going to take paper 8 part A, financial management marathon class. So from the entire Shrestha team, we are going to give you all 8 subjects revision marathon classes on YouTube. Now, first thing that you might get a doubt. So what are the things or what are the materials that you are going to use for these marathons? So before that, where you will find this marathon on the YouTube? Very simple. You just open caramharsha. Okay, there is a YouTube channel. So go to that home videos and there is a playlist. Here you will find a playlist separately for November 2022 marathons, revisions, CA, Inter. So in this playlist, you will find all 8 subjects. Now immediately you might get a doubt. Are all 8 subjects uploaded right now? No. By 10th of the September, you may be watching this video. You may be watching this video, on the date on which it was uploaded, or even maybe later. I don't know. Getting it? By 10th of September, all subjects except auditing, we will upload. Audit subject new marathon, we will upload after September 20. After September 20, audit related subject marathon will be uploaded. And you know what? The all revision classes, entire revision marathons are absolutely in English. Because Shrestha is having 1500 plus students across 20 states in India. Not 20, I can say 26 states I think we have covered. Some 2 or 3 northeast states only we have not covered, but 26 states we are having admissions. So obviously, for us, the students across India, we can't use any particular regional language. So we have to stick to English. So entire explanation will be in English. Now, coming to a few questions which you need to understand. Okay. One. We have uploaded in May 2022 exams some video classes, marathon classes. And I'm telling you, the same revision classes with slight modifications we are uploading. Some for few chapters we re-recorded like 1 or 2 chapters wherever there were amendments. But actually speaking, for May attempt and November attempt, the subject, the material, everything is exactly same. Because right now we are in September month 2022, right? If at all you go and check ICI website, what is the latest material available? November 2021 edition, October 2021 edition. So typically for May attempt, whatever material we are using, the same material we are going to use for November. I hope you are getting it. And now then, so we are using a particular material, right, for marathon, where you can download this marathon, where you can download this particular material which is used in the marathon classes. So there is an app in Shrestha for SHRE, Shrestha for CA and CMA. There is an application called Shrestha for CA and CMA. You will find right side, above me, there are 2 logos. First logo is there white color logo. That logo. If you type this name in the Play Store, you will get that logo. Getting it? Only from Android you can download the material. Suppose if you do not have an Android phone, please use somebody's Android phone and download the material. Okay, so in this application, you just download and log in. We have given in the main menu. If you go to the application, there is something called main menu. Just after opening the app, left side top, you will find main menu. Click on that, you will find study material. Inside that, November 2022 and May 2023, there are materials. Please download the materials. PDF copies, please download and keep it with you, so that it will be useful when you're watching the revision class, so that whatever faculty is actually using the material, so it is with you in hand. That's it. If at all you want to have a hard copy, you can buy that hard copy on the same application. But I don't think you require a hard copy, because it's a revision class. So whatever you already have gone through, whatever material you already learned from, please stick to that material. Take our revision classes as a additional guidance. And I'm telling you, you're going to enjoy the subject like anything from, see, generally in YouTube, you'll find many subject related marathon, but for all 8 subjects at a single place with a particular standard, uniform standard, you'll rarely find. So here, our institute's rest of a CA and CMA is giving you that option. Getting it? So I hope you understood what we are going to deliver. Now, what are the topics that we are going to cover approximately, if at all you ask me? So, if you look at paper 1, accounting, we are going to upload 2 videos. Approximately both the videos put together will be 20 plus hours. So, these are the chapters: fundamentals, incorporation, introduction to accounting standard frameworks, AS2 and AS12, financial statements of company, bonus, investment accounts, redemption of debentures. That's it. We are not covering anything else from accounts subject. And paper 2A, company law, if you look at, me and Subramani sir, both of us are taking in this case the classes. Like if you look at accounts of companies and dividend, audit and auditors, these 3 chapters related revision I will take. Rest of the chapters, basic, incorporation, share capital, deposits, charges, these chapters revision will be handled by Subramaniam sir. Then other laws, all these topics are being covered by Vikita madam. And paper 3 costing, all these topics, 100% of all the chapters are being covered by Srinivas Reddy sir. Okay. Then part 2, see, costing video will be uploaded in 2 parts. Both together will be 15 to 16 hours. Then paper 4A, income tax, we are going to cover 5 heads of income, clubbing provision, set up and carry forward, chapter 6A, return of income, TDS and TCS. And GST, we are going to cover almost all the chapters. Then advanced accounts, introduction, few accounting standards, amalgamation, reconstruction, liquidation, partnership, consolidation. All these topics we are going to cover as part of revision. And accounting, advanced accounting is also being uploaded in 2 parts. Accounts, you will have 2 parts videos. Advanced accounts, you'll have 2 parts videos. Sorry. Company you will have 2 parts. Sorry. Costing, you'll have 2 parts videos. Then coming to auditing, ignore auditing right now because I have not yet uploaded the, marathon. Then paper 8A, financial management, these chapters. Paper 8B, these chapters. Even paper 7A, paper 7B also, we are going to upload all the subjects. I told you where you will find all these videos. You will find that in the Play Store. Open caramharsha, open playlist. Inside that you will find November 1st playlist, November 2022 marathon. So in that playlist you will find all the 8 subjects video. By the way, you will find all these videos by 10th September maximum. Getting it? So actually I'm recording this video on 4th September. So right now after this video I'll be uploading the marathon videos. And this video will be a common video in all in all marathon videos, whatever I'm going to upload, 12 hours videos. In all the videos, this video right now whatever I'm recording will be a common video, so that every time whoever is watching a new revision class will not miss all this. Now one more important thing, now who should not watch this marathon class? If at all you are a first time learner. Now many people will ask me, sir, is it useful for a first time learner? No, this is not for first time learners at all. This is for those who are going to write exam. Okay, those who are just about to go and write the exam. No, for them only this is. See, a subject is completely covered in 20 hours. 100 marks paper is hardly being covered in 20-24 hours. A regular course will be 120-150 hours. Imagine we are reducing 1/5 time. It's a revision. First of all, understand revision is useful. Revision class will be useful only for those who already prepared the subject once. You may have prepared in self-preparation method or you may have taken coaching. That doesn't matter. That doesn't matter. But those who already prepared once, only for them this is useful. For others, strictly I'm saying not at all useful. Because don't waste your time. But I'm telling you, those who already have gone through books, who already wrote 1 or 2 attempts, getting it, or who are a first timers, maybe you are first time you're writing in November, but you already gone through the coaching. For you, these marathons are going to be a best thing in your preparation. Definitely after watching this marathon, you will definitely get a new look on the subject, new idea, new perspective on the subject, so that within next 1.5 months you can plan your preparation perfectly. That's it. Okay, take care, have a nice time. So continue the classes. Getting it? So this is an intro video. First I'll upload this normally, then again I'll upload this as part of the revision videos. Getting it? So continue. Thank you, have a nice time. Bye bye.
A very good evening, students. So welcome to the taxation marathon classes. So this is CA SAMBA, faculty for taxation. And in this marathon classes, see, first let us try to understand what are we going to get from this marathon classes. The inputs which you are going to get from this marathon classes. Number one, see, first of all, try to remember that these are marathon classes, not the regular classes, right? Sir? So here, generally in the regular classes, 100% of the syllabus will be covered, 100% of the provisions will be covered, right? And when it comes to crash batches, I can say 80 to 90% of the provisions will be covered in crash batches. And when it comes to marathon classes, now in marathon classes, I'm going to cover you a minimum of 60 to 70% of the provisions in every chapter. 60 to 70% of the syllabus will be covered in marathon classes, right? Because if you look at the income tax, totally we have 17 chapters at CA inter level syllabus, which took me around 150 to 175 hours to complete the syllabus, which will take, as per my previous batches, right, experience, a minimum of 150 hours will be required to complete the income tax syllabus, up to a maximum of 175 hours. And when it comes to the GST, we have 10 chapters and it will take us around 65 to 75 hours of the time. So for regular classes, I'll take for income tax minimum of 150, right? If you take the minimum of portion 150 and maximum of 175, GST 65 to 75. Let us go with the minimum. So 150 for income tax and 65 for GST. Total put together 215 hours for the completion of regular classes. A minimum of 215 hours, right? Sir? But marathon classes, only at 10% of it. I'm going to take you around 22 to 25 hours to complete the taxation marathon classes, right? So from the total regular classes recordings, only 10% of the time I am spending for marathon classes. Then only it will be treated as a marathon class. Otherwise, it would be treated as either crash batch or a regular batch, right, sir? So maximum in 25 hours, I'm going to complete the taxation marathon classes. So that you can understand how much of the syllabus will be covered. But I can give you guarantee that 60 to 70% of the syllabus will be covered in this marathon classes, right, sir? And second most important thing, this is a marathon cum amendments class. Marathon cum amendments class. So that means here I'm going to cover you all the important provisions of that particular chapter along with the amendments came into effect in that particular chapter, right, sir? So here you can see for May 2022 examinations, right? The amendments made up to, 31st October 2021. Whatever the amendments made up to 31st October 2021, applicable for May 2022 exams. And whatever the material I have prepared, this is our regular class material, regular class material. Whatever the material I have prepared, this material is purely based on the amendments made up to 31st October 2021, right, sir? So whatever the study material I have already prepared, this study material is applicable for both May 2022 and November 2022 exam. So the material which I am going to use for marathon classes is an updated material. It is an updated material, right, sir? Every one of you. And anyhow, I'm also discussed with the help of statutory guidelines issued by the ICI for May 2022 exams. Here also you can see the amendments from every chapter. Are you following, sir? Every one of you. So what are you going to get in my marathon classes? 60 to 70% of the syllabus I can guarantee you, and it is a marathon cum amendments classes. There is no need for you to attend a special amendments classes. Are you following, sir? So the importance is given to the all the important provisions of that particular chapter, See, in every chapter, we'll be having some important topics. Right? So the first priority is given to that important topics, then amendments will also be. So amendments will be discussed in a very detailed manner, right? Don't worry. There is no need to attend a separate amendments class for you. Clear? And all the important topics will be covered. And keep an important point in your mind in this marathon classes where I am going to discuss about only theory ma, all the problems after listening to the marathon classes, every chapter ma. So with that knowledge, you can deal the problems, all the problems. See, every chapter, at the end of the every chapter, you will be having problems. So I will discuss you theory in this marathon class. With the theoretical knowledge, you can just do the problems on your own. See, doing a problem is nothing but application of theory, what you learned from that particular chapter. Yes or no? Doing a problem is nothing but application of theory, what you have learned from that particular chapter. That's it. So if you are very strong in theoretical knowledge, then the problems are very easy. Clear, everyone? Right? So I'm not going to discuss any practical problems in this marathon classes. Only theory I'm going to discuss. And you can see that this is my running notes for regular classes, right? And this is a latest notes. You can see here the time stamp also. This is a video recorded on 15th of December 2021, right, at 7:53. Are you following here? So this is the latest. These are the running notes which are maintained for regular classes of May 2022 examination. And in this running notes, you can see the examples, right? For each and every provision. Generally, 90% of the provisions, I'll explain you with the help of examples. So all that examples you will find in this running notes. You can see here. Okay, so while I'm explaining the theoretical provisions, I'll use these running notes also. I'll use these examples also. So for the better understanding of the provisions, every one of you clear, right? Next. So these are the inputs generally you are going to get in these marathon classes. Now at the end of the marathon classes, I can say you that, right, in the taxation paper, the total taxation paper, after listening to this 25 hours marathon class, I can give you an assurance that you can score a minimum of 50 marks easily. I cannot say you that just listen to my marathon classes, it is enough that you can score 90 marks. I cannot say you like that, right? I cannot, use all this publicity stunts, right? But I can give you assurance that after listening to my taxation marathon classes, you will get a confidence that you can get the required marks to qualify that paper. Generally, to qualify the paper, you need 40 marks. You need 40 marks, right? And to meet the aggregate condition, you need 50 marks. You need 50 marks, right, sir? So I can give you the confidence up to 50 marks. After listening to these classes, you will get such confidence. That's my guarantee. Okay, mom. So these are the inputs which you are going to get from marathon classes. Okay, now before moving into the first chapter, sir, in taxation marathon classes, first I'm going to discuss with GST, right, ma? 10 chapters. I'm going to spend you 10 to 12 hours for complete all the 10 chapters of the GST. 10 to 12 hours. Okay, mom, right? And then we'll move for income tax marathon classes, because you know very well that GST having the less portion, though the chapters are 10, but the regular classes I've completed in 70 hours. In 70 hours, I've completed my GST regular classes for May 2022, right, sir? So that's why I'm starting with GST, ma. Very easy to complete, right? And even in the main exams also, sir, I've already told you while I'm taking my regular classes, right? So it's better to write down the GST questions first in the main exam. The first 1 hour you have to spend for writing the GST questions, ma. 40 marks out of the 40 marks, you can easily score up to 30 marks. So in the very first hour, if you got a 30 marks guaranteed, the remaining 2 hours, no, you can spend that 2 hours time very wisely in order to score you another 30 marks. So first hour 30 marks you already got. Spend the next 2 hours to score another 30 marks. So taxation paper, you got exemption in such a way that you have to plan your answers. Okay, right? So we all know that taxation paper number 4 of group 1, 100 marks, in which you have two parts, part 1 income tax 60 marks and part 2 GST 40 marks, right sir? So GST, the list of chapters, you can see here, totally we are going to have 10 chapters for 40 marks. So chapter 1 GST in India and introduction, chapter 2 supply under GST, chapter 3 levy and collection of GST, levy and collection of GST, levy, it was merged with number 3 here, let me write. Levy levy and collection of GST, and then chapter 4 exemptions under GST. Chapter 5, in chapter 5 we have two parts, part A time of supply, part B value of supply, right sir? So the total chapter name is time and value of supply. Chapter 6 input tax credit, chapter 7 registration under GST, chapter 8 tax invoice, DN stands for debit note, CN stands for credit note, and e-way bill. Then after that payment of tax, and that's your chapter number 9. Chapter number 10 returns under GST. So these are the 10 chapters we are going to learn from the GST. And among these 10 chapters, no sir, I can give you some, very important chapters, right? Because it's very easy for you to select the chapters which should be revised first, the chapters which should give more importance, right? So you can see here the 3 star marks for the chapter number 5, right? Time and value of supply, because in this chapter you are going to get 2 questions. 10 marks, right sir? And then input tax credit, you can get 1 question 5 marks, and then registration under GST 1 question 5 marks. Collection, levy and collection of GST, in this the very important topics you are going to have, like reverse charge mechanism, then composition scheme for the small dealer, and then optional rate scheme for small dealers. So these 3 are the very important topics: reverse charge mechanism, composition scheme for small dealers, optional rate scheme for the small service providers, right? So among these 3 topics, you can get 1 question compulsory, sir. You can get 1 question compulsory, so 5 marks. And then chapter number 2 supply under GST, the taxable event under GST, is supply. Are you following, sir? So what is supply? You are going to learn in the chapter number 2. You are going to learn about the meaning and scope of supply, right? Concept of supply, parameters of supply, deemed supplies, right? All this you are going to learn in the chapter number 2. Hence, it's a very important chapter. You can get 1 question compulsory for 5 marks. So if you focus on 1, 2, 3, 4, 5 chapters, you can score up to 30 marks. 30 marks minimum you can expect from these 5 chapters. See, the total weightage of the GST is 40 marks. Out of the 40 marks, 30 marks you can expect only from these 5 chapters. Are you following, sir? So thereby you can understand these 5 chapters needs more attention, more importance. Clear? Next. So that's about our GST paper. Let's moving on to the chapter number 1, GST in India and introduction. Right, sir? So this is a material which is up to date. Whatever the amendments given up to 31st October 2021, all the amendments have been incorporated while preparing this material. Okay, and then here you can see the necessity for collection of the taxes. So generally it's a primary responsibility of the government to provide, right, fulfill the developing needs of the people with the limited resources in India, right? So taxes are the major source of revenue to the government, sir. Right. So generally to meet the needs of the public, to incur the public's expenditure, to fulfill the economic objectives. See, for the purpose of the laying of the roads, construction of the dams, bridges, canals, funding to the school, government schools, funding to the security, funding to the army, funding to the government hospitals. For doing all these activities, government needs funds, and one of the major source of revenues to the government is taxation. So that's why the government is levying taxes. So taxing the transactions is one of the sources of the generating revenue to the government. Branches of taxation, we know that there are two branches: direct taxes, indirect taxes. And in the textbook, I've given you only two differences between direct taxes and indirect taxes. Whereas in my running notes, you can see here, I've given you almost 10 differences between direct taxes and indirect taxes. So yeah, 10 differences. Let us see what are these differences one by one. Yeah. Incidence and impact. You can see types of taxes, direct taxes. I've given you the examples: income tax and wealth tax. Of course, wealth tax at present, it is not there in implementation. It was abolished. And coming to the indirect taxes, earlier we used to have excise duty, service tax, VAT means value added tax, CST, central sales tax, customs duty. But now with the introduction of GST, all they were subsumed into GST, except customs duty. Now for indirect taxes, you can use examples like GST, customs duty. That's it. Okay. Now look at the differences between direct taxes and indirect taxes. Direct taxes, incidence and impact is on the same person. Incidence and impact is on the same person. But you can see when it comes to the indirect taxes, incidence is on one person, impact will be on another person. Now, what is this incidence and impact? So incidence means to be levy of tax, and impact means to be burden of payment of taxes. So when it comes to the direct taxes, see, take my own example. Sir, I'm working as an assistant manager finance in Southeastern Coalfields Limited, one of the subsidiary of Coal India Limited. It's a central government public sector undertaking. So I'm earning salary every month, right? I'm an E3 officer. I'm earning salary every month, right? And what is that salary? Don't ask me. Okay. And apart from that, I'm also taking classes. Whenever I find the free time, I'm taking classes, right? But of course, I can spend easily 3 hours a day for take care of my classes, right? So I'm also getting income from taking classes. I'm also providing tax consultancy services, right? Because earlier, before I've joined this organization job, I used to be a practicing chartered accountant. So I'm maintaining that client base. So by providing tax consultancy services, I'm also earning some professional income, right? Now, on all these incomes, who has to pay the tax? I have to pay the tax because I'm earning this income right now. I'm earning this income, salary, right? Taking classes, I'm earning certain income, right? Providing consultancy services, I'm earning certain income, and all these incomes, I have to pay the tax. Since I'm earning the income, the tax is levied on me, the incidence is on me, and the impact also I have to face. So the burden of payment of tax also is on me. It's an income tax. Since I'm earning income, right? I have to pay the tax on it, income tax. It's a direct tax. So incidence is on me and impact will also be on me. Let us suppose that I'm earning income. And if I'm asking you to pay the taxes, will you pay tax on behalf of me? You don't pay, right? You will simply say like, sir, you are earning income, no? So you have to pay the tax on it. Why should I pay the tax on it? Immediately you will question me, yes or no? Sir, you are earning lakhs of rupees. So pay certain amount as tax to the government, right? But when it comes to the indirect taxes, no. The incidence is on one person, impact will be on another person, like manufacturers. Manufacturer manufacture the product. Since he is engaged in the manufacturing process, he is subject to the payment of GST, right? Now, whatever the GST he pays, he transferred the GST liability to the subsequent buyer. Means if a wholesaler buying the product from manufacturer, the tax burden shifted to wholesaler. Wholesaler shift the tax burden to retailer. Retailer shift the tax burden to customer. So the incidence is on manufacturer. The impact is on customer. So the ultimate person who is facing the burden of taxes is a consumer. Right, sir? See, now you are in a student stage. Right? I don't know like how many of you are earning income, but I can say that majority of the students who are in learning stage not be in a position to earn the money. Right? You are in now learning stage. After completion of this phase only you coming into earning stage. Yes or no? Now you are in learning stage. Right, sir? Now from this phase, you will come into earning only after completion of your studies generally. See, if you have a special talent with respect to dance or singing or sports, I don't know, sir. If you're already earning, it's a very good thing, appreciable thing. But majority of the students, when they are in learning, it's not possible to earning. But from learning to earning, you have to forego certain things. L. So if you ignore about L, then only you will come to earning. I hope you understand what you meant by L here, right? What I meant by L here, right? Nowadays the students are very sharp to understand, right? So if you ignore that L life, then you coming into the earning. Otherwise, you always in learning position. So at present, you are not paying any income tax, right, sir? Because you are not earning any income. But since your childhood, you started paying your indirect taxes. The day the first time you purchase a chocolate with 1 rupee or 50 pies in your childhood days, from that particular day onwards, you started paying indirect taxes without knowing the fact that you are paying taxes. That's the beauty of indirect taxes, right? After this, we are going to study about the characteristics of indirect taxes, right, sir? In that, I'm going to explain you, right? So the incidence is on manufacturer, impact is on ultimate consumer. Whoever consume that product or services have to face the burden of payment of taxes. Next, you can see I've given the example here also. So second difference, the person who earn the income and the person who paying the taxes will be one and the same. Yes, I'm earning the income and I am paying the tax on it. Income tax, I'm talking about income tax. But when it comes to indirect taxes, no, the person who earning the income is different from the person who paying the taxes. See, who are earning the incomes? Manufacturer earning the income, wholesaler earning the income, retailer earning the income. But who is paying taxes? Consumer is paying taxes. So the person who earns the income is different from the person who paying the taxes. That's the second difference between direct taxes and indirect taxes. Next, third difference, shifting of tax burden is not possible. Since I'm earning the income, I have to pay the tax on it. So I cannot shift the tax burden to someone else. It's not possible. But whereas in the case of indirect taxes, shifting of tax burden is quite possible, 100% possible, because see, manufacturer transfers the burden to wholesaler, wholesaler transfers the burden to retailer, retailer to consumer. Next, direct taxes are progressive in nature, whereas indirect taxes are regressive in nature, for which I've given you the example here. Progressive in nature, progress means what? Increase, increment. See, in our school days, we used to get the progress cards after the completion of examinations. First unit, second unit, quarterly, half yearly, pre-final, annual exams. So after the completion of these exams, we used to get the progress cards. What do you mean by the progress card? A card which shows the progress of the student in the academics. And how that progress will be decided depends upon the marks you got in the exams. Yes or no? Depends upon the grade you got in the exams. That is why that card which you get after the completion of your exams is what we call progress card. Progress means growth, right? So direct taxes, if you look at the income tax slab rates, I've taken the example for individual assessees whose age is less than 60 years. So up to 2,50,000 nil, 2.5 lakh to 5 lakh, 5%, 5 lakh to 10 lakh 20%, and about 10 lakh 30%. If you see here, when your income increases, the tax rates applicable to you also increases. So progressive in nature, right? But whereas when it comes to the indirect taxes, they are regressive in nature. Here regressive means, it doesn't mean that the taxes are in decreasing trend. Regressive means here there is no rich and poor consideration. No rich and poor consideration. Everyone is equal in the eyes of indirect taxes department. A turnover with 1,000 crores. Let us suppose that whatever the products he's manufacturing, turnover, he got 1,000 crores turnover, the rate of GST 18%. But same product is manufactured by a small manufacturer whose turnover is just 10 lakhs per annum, but still he has to pay 18% rate of GST, because here under the GST, the rates of taxes decided basing upon the products, basing upon the services, not depends upon the turnover, not depends upon the turnover, right, sir? See, if you are providing restaurant services, 5% is the rate of GST. See, if you are a small restaurant service provider, or if you are a giant restaurant service provider, irrelevant. The rate of GST, 5%. Are you following or not? Every one of you, right? If you take the example of, see, when it comes to Hyderabad, one of the beautiful cities of India, right? When you listen to the city name Hyderabad, immediately two things comes to your mind. Hyderabad is famous for two things, very famous. Number one, biryani. Hyderabad biryani is a world famous biryani. You never get such a taste in the entire world. So Hyderabad is famous for biryani. And number two, my classes. No, sir, I'm just kidding. Number two, Irani chai. Irani chai. These two things are very famous in Hyderabad, right? See, if you are from Hyderabad, no, if you go to the our ICI chapter, which is there in Lagdi Couple, near to our ICI chapter, you will find a cave called Nilofer Cave. Nilofer Cave. There is a Nilofer hospital. So near to that hospital, there is a cave called Nilofer Cave. Right? If you ever been to that our ICI chapter, now don't forget to go to the Nilofer Cave. Try to go to the Nilofer Cave and have Irani chai with Usmania biscuits. Great combination. Great combination. Right, sir? So, and whenever you listen to the word biryani, right? In Hyderabad, Paradise Biryani. Paradise Biryani is famous, right? There is a center name called Paradise Center. Are you following here? So Paradise Biryani is a world famous biryani. His turnover is having thousands of branches across India. His turnover is more than 1,000 crores. For him, the rate of GST applicable 5%. Now in a small street, there is also another restaurant whose turnover is just 10 lakhs. For him also, the rate of GST applicable 5%, right? See, that's why there is no rich and poor consideration in GST, sir. Very unfortunate. It's department saying like, everyone is equal in the eyes of GST department. But here you have to take into the consideration of the person's ability to pay the taxes. Fortunately, that was there in direct taxes. You can see in direct taxes, there is a rich and poor consideration, but whereas in indirect taxes, there is no rich and poor consideration. See, GST department is least bothered about your ability to pay the taxes. But whereas income tax department is not like that. Okay, if you have less income, pay the tax at the lower rates. If you have the high income, pay the tax at the higher rates. Are you following here? Next, there is a slab rate system and there is a flat rate system. In income tax, we have the slab rate systems applicable for individuals, HUF, AOP, BOI, any other artificial judicial persons. Yes or no? But whereas When it comes to GST, there is no such a kind of slab rates, flat rates, right? Next, income of the previous year is taxable in the assessment year. In income tax, you have a flexibility that in 1 year you can earn income. Now on that income, you can pay the taxes in the next year. You have that flexibility. No need to pay the taxes immediately upon earning the income, right, sir? But whereas in GST, it's not like that. Income of the previous year, it's taxable in the previous year itself. See, in this particular month, if you earn 10 lakhs income, you have to pay the tax on this 10 lakhs immediately in the next month. Immediately in the next month, not next year. Are you following, sir? So now here we have learned the concepts of previous year and assessment year. What do you mean by the previous year, sir? The year in which you earn the income is called previous year, and the relevant previous year is 2021-22 for your May and as well as November 2022 exams. The relevant previous year is 2021-22. And when it comes to taxation subject, year means to be financial year. Financial year is always starts with the 1st April of the every month, every year, and ending with 31st March of the next year. So that's why here the year 2021-22 means 1st April 2021 till 31st March 2022. Next, assessment year. The year in which we pay the tax is called assessment year. The year in which we pay the tax is called assessment year, right? And the relevant assessment year is 22-23. So in 21-22, you earn the income. You just earn the income. On this income, you will pay the tax in 22-23. Are you following, sir? Right? Next. There is a time gap between earning of income and payment of taxes. Yes, because you're earning income in the year 21-22, but you're paying the tax in the year 22-23. There is a huge time gap. When it comes to indirect taxes, there is no such a time gap. Whatever the income you have earned in 21-22, you have to pay the tax immediately in 21-22 itself. In 21-22 itself. Are you following, sir? Every one of you. Next. Penalty provisions are not that stringent. In income tax, we have penal provisions. Penalty provisions are there. Let us take an example that if you made any delay in payment of taxes, what is the rate of interest? 1% per every month of delay. Let us suppose that my tax liability is some 1 lakh rupee. 1 lakh మీద 1% rate of interest అంటే ఎంత వస్తుందమ్మా? మహా అయితే 1000 rupees. If I made delay in payment of tax by 2 months, I have to pay a interest of just 2000 rupees. Now, should I fear about this 2000 rupees? Should I fear? Not required, sir. 2000 is a very nominal. Are you following, sir? See, your tax liability is 1 lakh, means your total income would have been more than 10 lakhs. See, a person earning more than 10 lakhs in a year, should he fear about 2000 rupees interest? No, never. So penalty provisions are there in direct taxes, but not that stringent. But when it comes to indirect taxes, penalty provisions are very stringent. If you made any default with respect to GST, no, the penalty is equal to 100% of the default. Suppose that if you made a default of 10 lakhs, you have to pay that 10 lakhs plus 10 lakhs in addition to that with as penalty. Totally, you have to pay 20 lakhs. So very stringent. Next, income indirect taxes, the penalty, the tax evasion is higher. Yes, because there is a huge time gap, sir. There is a huge time gap in earning of income and payment of taxes. You are earning the income in 21-22, paying the tax in 22-23. Right? You have enough time gap to think about how to evade the taxes. Time is a motivating factor to the assessee with respect to the evasion of taxes. Right? And whereas in GST, you don't have such time. This month income taxed in the next month immediately. So there is no time for the assessee to think about evasion of taxes under GST. So that's why under GST tax evasion is lower. Okay, sir. Next. So this is the branches of taxation and its differences. And after that, you have the topic of features of indirect taxes. You can see here the features: wider tax base. Yes, indirect taxes. It levies the taxes on products and services, on all the activities manufacturing, starting from manufacturing till the product reaches to the consumer stage. Whatever the transactions are there, all the transactions are subjected to GST. Its scope is very wider. Almost all the products, 90% of the products covered under GST resume, and as well as 90% of the services covered under GST resume, taxable. A very few are exempted, and what are that exempted goods and services we are going to learn in the chapter number 4. Next, regressive in nature, we have already discussed. Indirect taxes doesn't differentiate the person based on their ability to pay the taxes. Right, sir? All the poor and rich are equal in the eyes of the GST. So that's why they are regressive in nature when it comes to the poor people. Next, inflationary in nature. Yes, obviously. Right, indirect taxes directly affects the prices of the goods. I think I've given one example here. You can see the example here. Inflationary in nature. Let us assume the price of the product 100 rupees, and that product is subject to the GST at the rate of 18%. So GST 18 rupees. So bill value becomes 118. So 100 rupees is the actual price, but just by adding 18 rupees GST, now the ultimate price to the consumer 118 rupees. So your price is increased by 18 rupees. And what is this 18 rupees? GST. So that's why GST is an inflationary nature. Taxes, indirect taxes directly affects the price of the goods. Are you following, sir, every one of you? Right. Next. Tax on commodities and services. I've already told you that, right? It is a tax on commodity and services. It levies on manufacturing, right? And purchase, sale, import, export, everything. On all these transactions, the GST, indirect taxes are levied. Burden shifting, yes. There is a clear shifting of tax burden from the manufacturer shift the burden to wholesaler shift the burden to retailer shift the burden to consumer. Next, important source of revenue. Yes, so now every year, you believe it or not, the government is getting approximately 30 lakhs crores by levying the both direct and indirect taxes. And out of that 30 lakhs crores, a minimum of 20 lakhs crores, only from GST, sir. Only from GST. Are you following or not, every one of you? Right, sir. Every year, the government is getting a minimum of 20 lakhs crores by levying the GST. It's a very important source of revenue to the government. Next, no perception of the direct pinch. Yes, this is the beauty of indirect taxes. No perception of direct. See, you don't know that you're paying taxes to the department without knowing the fact you're paying taxes. Are you following or not? Because generally in majority of the products, you'll see like MRP, let us say 100 rupees. And after that, immediately in the brackets, you'll find these wordings, inclusive of all taxes. So you purchase this product and you'll pay 100 rupees to the shopkeeper. Now, can you tell me that how much tax included in this 100 rupees? You don't know. You don't know, sir. That's the beauty actually. See, when you know that you're paying this amount of tax to the on this particular product, you will feel the pain. See, every year I'm paying income tax. Since last 11 years, I'm paying income taxes, right? So whenever I'm paying income taxes, I feel certain pain. See, if our tax money 100% utilized effectively, I don't feel any pain. I don't feel any pain. I'm being a responsible citizen of India. I'm paying taxes, but my pain is that these tax revenues are not utilizing properly. Yes or no? Right? Are you feeling like all our tax revenues are being utilized properly? No scams are happening. No bribes are happening. No corruption is happening. Yes or no? That's why I'm feeling pain. Right, sir? So, but when it comes to indirect taxes, I never feel pain of paying taxes because I don't know how much I'm paying. right? See, for majority of the products or services which we are purchasing or receiving, we don't ask any invoice. Only when you get the invoice, you'll get to know how much you're paying taxes. But without invoice, 90% of the products you are purchasing in your daily routine life. So without invoice, how much tax you're paying, you cannot know. You don't know, right? Simply you purchase that product and pay the money to the shopkeeper. That's it. So that's why you don't feel any pain while paying the taxes to the department, right, sir? So you can see here, the value of indirect tax is generally included in the price. So most of the time taxpayer pays the same without actually knowing that he is paying the tax. So the taxpayer does not perceive a direct pinch while paying indirect taxes. Next, social welfare promotion. So generally department saying that by levying the higher taxes on consumption of harmful products, which also known as sin goods, right? We are promoting the social welfare. How? You'll get it out here. Sir, how the government promoting the social welfare? By levying high taxes. Like, see, sin goods category, what are covered here? Like alcoholic products, right? Drugs, tobacco products, like cigarettes, right? Zarda, Kaini, Gutka, drugs, all these are sin goods. Consuming these particular products amounts to sin. So in order to reduce their consumption, right, sir? Government what started levying is sorry, ma. Government started levying, you know, in order to reduce the consumption, government started levying taxes at a very high rate. When tax rates are higher, the price of the product will becomes higher. So when the price increases, consumption decreases. Yes or no? Are you following, sir? Every one of you. So that's the main logic, that the government is levying huge taxes on these sin goods. But my question is, in reality, is it happening really? Right, sir? See, way back, 10 years back, the price of a particular beer, let us take an example of a beer. The price of a particular beer, I think 50 rupees. Now the price of a beer is 200 rupees. Earlier, let us say some 10 years back, one beer costs 50 rupees. Now after 10 years, the same beer costing some 200 rupees. Right, sir? Now over these 10 years, the prices increased from 50 to 200, almost 4 times. But what about the consumption, sir? If you look at the consumption in previous 10 years and now, the consumption increased to a great extent. With respect to these sin goods, even if you increase the prices, if you levy the huge amount of taxes, the consumption will never be reduced. You never find a wine shop without a customer. Yes or no? Always 24 by 7, 365 days, evergreen business. How can you say it like that, sir? 365 days, October 2nd and August 15th, the shops are closed, right? No, in black, they will be available. Yes or no? Right? Okay, come back. So that's about the features of indirect taxes. So just go through it once. Completed, sir. Now let's moving on to the next topic, concept of GST and need for GST. So first of all, what is this concept of GST and what is the need for the introduction of this GST? So GST is a value added tax. I can say that it's not a new kind of taxation system introduced. The system is already in existence, but only at the central level. Only at the central level, called central VAT. SENVAT. In short, we call SENVAT. The other name for SENVAT is nothing but excise duty. Excise duty, also called as SENVAT, Central Value Added Tax. Are you following, sir? But now this concept in central level, we have a concept of SENVAT. At the state level, you have a state VAT. But its implementation is, piecemeal and fragmented. Means no integration of central taxes with the state taxes, non-integrated. Because of this, what happens is there is a lot of disputes arises between the central and state governments, right? The concept is same, but the implementation is fragmented. So because of this, I've already told disputes arise. So when the concept is same, why the separate implementation? Why the separate provisions? SENVAT, we have a excess duty act, right, or look after by the central government. And state VAT, each and every state have their own state VAT acts, right, sir? So their implementation, the state VAT acts, each and every state government have their own VAT act. They have created the provisions very convenient to them, which may not be convenient to other states. All these problems arise. So when the concept is same, its implementation throughout the India will be same. So one nation, one tax. The concept is same. Value added tax. Excess duty is a value added tax, and whatever the intrastate sales taxes we are levying on intrastate sales, value added tax. Value added tax, right? Earlier it is called as a sales tax. The concept is same, but the implementation is fragmented. That is why, right, there is a need arises for the central tax. Throughout the India, one taxation system should be in implementation. See, just like income tax, no, for every person, for every SSE, whether you are from Telangana, whether you are from Tamil Nadu, whether you are from Karnataka, whether you are from Maharashtra, right? The Indian Income Tax Act 1961 applicable to you. One tax, one income tax for the entire India. In the similar manner, there should be one indirect tax applicable to whole of India, right? So that's why they come up with the GST. Of course, there are many reasons. I will explain you. First of all, it is a value added tax, right? It is a value added tax levied on manufacturing, sales, and consumption of the goods and services. Now, I will explain you this concept with the help of an example. It's a value added tax. And for the understanding of this example, this concept of value added tax, I've given you the example in two different situations. Situation one, position under sales tax system, that is up to 31st March 2005, right? And then position under value added tax, with effect from 1st April 2005 to 30th June 2017. Because with effect from 1st July 2017, what happens? GST came into picture. So the date of implementation of GST, 1st July 2017. Okay, mom, right? So here first look at the position under sales tax system. So example, I've taken you manufacturer level, wholesale level, retailer, and consumer, right? So first look at the manufacturer level only at the manufacturer level. Cost of the raw materials 60 rupees and conversion cost 40 rupees. See, whatever the cost you have incurred for converting that raw materials into finished goods, that is what we call conversion cost, 40 rupees. Total, it gives you 100 rupees. and the manufacturer selling this product to wholesaler, right, sir? Now that means manufacturer entered into the transaction of sales. Now, whenever you are entering into a transaction of sale, you have to pay the sales tax on it. Are you following, sir? So let us assume the sales tax rate is 10%. So 10 rupees. Now the invoice value become 110 rupees. So that means wholesaler is buying this product at 110 rupees from the manufacturer. Are you following, sir? Now, at the wholesaler level also, there should be some conversion cost. There will be some conversion cost. You will get a doubt here. Sir, how come the wholesaler have a conversion cost? Because see, at the manufacturer level, yes, there is a conversion cost because raw materials is being converting into the finished goods. There will be a conversion cost. See, the manufacturer has to deploy the machinery, man, material, right? For all this, the manufacturer incurred certain expenditure. But at wholesaler level, whatever the product purchased by the wholesaler, it is already a finished product. He can directly sell it, correct? But from the manufacturer's premises to the wholesaler premises, how the product will come now? Transportation charges. Technically, we call them freight charges, right? During the freight transportation, transit insurance, loading, unloading, packing, repacking, labeling, all these expenses happen now at the wholesaler level, and all these expenses are what we called here conversion cost. Let us assume 50 rupees. Totally 160 to the cost of wholesaler. Now this product is selling to the retailer. Now the wholesaler engaging into the sales transaction. Wholesaler has to pay the sales tax at the rate of 10%, 160 into 10%, 16 rupees. So the invoice value become 176. So that means the retailer has to purchase this product at 176 rupees. Yes, he purchased for 176. Now at the retailer level also same, right? Freight charges, transit insurance, loading, unloading, packing, repacking, labeling expenses, all this covered under conversion cost, 60 rupees. Now the total cost to the retailer is 236. Now the retailer selling this product to the consumer. Retailer is selling the product to the consumer at 200 and since the retailer is now engaging into the sales transaction. Are you following, sir? So now the retailer has to pay the sales tax at the rate of 10%, 24 rupees, 236 into 10%, which comes out to be 23.6, which I have rounded up to 24 rupees. Okay, ma'am. So now the ultimate selling price to the consumer becomes 260 rupees. The ultimate selling price to the consumer. Right, sir? So the consumer is buying the product from the retailer at 260 rupees. Are you following, every one of you? Right, sir? No. This is a position under sales tax system. This is how the transactions are used to be taxed under sales tax. Clear now? But if you look at this example now, you can find a major drawback under sales tax system, that is cascading effect of taxes. Cascading effect of taxes. Cascading effect is nothing but tax on tax, double taxation. If you look at here at the wholesaler level, wholesaler is levying the tax on 160 rupees. 160 rupees at the rate of 10%, he's paying taxes, which comes out to be 16 rupees. So the selling price to the retailer 176 rupees. Sir, in this 160, the actual cost is only 150 rupees. The remaining 10 rupees is a tax element. The tax element, the 10 rupees he paid to the manufacturer. Are you following, sir? So that means on this 10 rupees, again 10% tax is paying. Right? So out of the 16 rupees, no, 150 is a cost into 10%. 15 rupees is a tax on cost, and 10 rupees is a tax on which again we are paying 10%. So 1 rupee. So this 1 rupee is a tax on tax. Is a tax on tax. Applying the same logic at the retailer level also, on 236 rupees, retailer is paying the taxes. Are you following, sir? Now in this 236 rupees, I can say the cost element is 150 plus the conversion cost at retailer level is only 210 rupees is a cost element. The remaining 26 rupees is a tax element. 10 rupees at the manufacturer level, 16 rupees at the wholesaler level. 26 rupees is a tax element. On this 236 is paying tax at the rate of 10%, and it comes out to be 24 rupees, out of which 21 rupees is a tax on the price and 3 rupees is a tax on tax. On this 26 rupees, you're paying 10% tax, no, under 2.6, which I've converted into 3 rupees. This 3 rupees is a tax on tax. Right, sir? So now because of this, what's happening? Because of the cascading effect of taxes, there is the burden on consumer is increasing, because even though the manufacturer paying taxes, wholesaler paying the taxes, the same is being collected from the wholesaler, from the retailer. See, manufacturer initially paid 10 rupees, but the same is being collected from wholesaler. Right, sir? Wholesaler paid 16 rupees, but the same is being collected from retailer. Retailer paid 24 rupees, but the same is being collected from consumer. So ultimately, who is facing the tax burden? Consumer. So the burden on consumer increases because of the cascading effect of taxes. There is a rise in prices, which leads to ultimately inflation. And whenever there is an inflation, what happens? The purchasing power of the consumer decreases. No consumer comes forward to purchase the product, and thereby the industries have to be shut down. Of course, you can take the best example of the country Sri Lanka now. Sri Lanka is facing the huge amount of inflation right now. You believe it or not, the petrol prices ranges from 240 rupees per liter to 250 rupees per liter in Sri Lanka. 1 kg chicken is now selling in Sri Lanka for 1000 rupees. Here in India, we are paying just 230 rupees per 1 kg chicken, but in Sri Lanka, 1000 rupees per kg chicken. Huge amount of inflation is happening. No, consumer is coming forward to buy the products. Thereby, almost 50% of industries in Sri Lanka have been shut down. Right? These are all the problems comes into picture with cascading effect of taxes. Right, sir? So in order to overcome all these drawbacks, right, our department comes up with a concept called VAT, value added tax. Value added tax. Right, sir? Now, what is this concept of value added tax? You can see the same example under VAT system, right? So at the manufacturer level, wholesale level, retail level, and consumer level, look at manufacturer level, sir. Cost of the raw material 60 rupees, add conversion cost 40 rupees, VAT at the rate of 10%. Earlier it is sales tax. Now in 2005, 1st April 2005, VAT has been introduced at the state levels, right? So from 1st April 2005 onwards, what started levying? Value added tax started levying at the state level. See, it was introduced at the central level in 1986 itself. With the name called SENVAT, Central Value Added Tax. But at the state level, it was introduced in 2005 with the name State VAT. Okay, ma'am. So now coming to the wholesaler. Look at the wholesaler, ma'am. When he purchased the product from a manufacturer, he will show only 100 rupees as his cost of the product, cost of purchase. But earlier in sales tax, you can see he has shown 110 rupees as a cost of purchase from manufacturer. But in VAT, he will show only 100 rupees. This tax element, he will not add it to the cost element. Why? I'll tell you in 2 minutes. So then conversion cost 50 rupees, right, sir? Then 150, and he's selling the product to retailer. Now he will levy the VAT at the rate of 10%. So 150 into 10%, 15 rupees. Now the selling price to the retailer 165. 165 rupees is paid by the retailer to the wholesaler to purchase this product, but the retailer shows the cost of purchase as 150 only, not 165. This 15 rupees tax element he will not add to the cost of the product. Why? I'll tell you in few minutes. Okay, now the conversion cost 60 rupees, 210. Now he's selling the product to the consumer. He will levy the VAT at the rate of 10%, 21 rupees. Now the ultimate selling price to the consumer 231 rupees. You can see the ultimate selling price to the consumer under sales tax system 260 rupees. But under VAT system, it is just 231 rupees. Sales tax system under sales tax system, the ultimate selling price to the consumer 260 rupees. But under value added tax system, under VAT system, the ultimate selling price to the consumer is just 231 rupees. You can see the decrease in the price by 29 rupees. Right, sir? Now, all this, how it was happened, how the selling price, ultimate selling price to the consumer got reduced by 29 rupees. It is because of the input tax credit. It is because of input tax credit. Right, sir? Now, what is input tax credit? Before going to that, let me introduce you some basic wordings which we are going to be used in this subject. Output goods, nothing but the goods which we are sold outwards. Output goods, the goods are going out, the goods which we are selling. Input goods, the goods which we are purchased. Inputs, the goods are coming in. Incoming, input goods. Output tax, tax collected by selling the goods. Whatever the taxes you are collecting by selling the goods is what we call output tax. Input tax, taxes paid at the time of purchase of the good. So at the time of purchase of the goods, whatever the taxes you are paying, that is what we call input tax. Input tax credit, it's nothing but taking the credit of input tax from the output tax collected. Like you can see here, manufacturer example. Manufacturer collected 10 rupees output tax from the wholesaler while he's selling the goods to wholesaler. So before that, you can see the formula here for the finding out of the tax liability. Output tax collected minus input tax paid. That will give you the tax liability. That will give you the tax liability. So output tax collected how much? 10 rupees. And what is the input taxes paid by the manufacturer? Here we have taken assumption that whatever the raw materials he is using for the manufacturing of that particular product, they are the own raw materials of manufacturer. So he has not purchased them from outside the market. Hence, he has not paid any input tax. So that's why input tax paid by the manufacturer is 0. So the entire 10 rupees tax, he has to pay to the department. Now coming to the wholesaler, by selling the product to the retailer, he collected 15 rupees output tax. Output tax collected 15 rupees. Are you following, sir? Now, by collecting 15 rupees from the retailer, now he has to pay the 15 rupees to the department. But the wholesaler already paid in advance 10 rupees to the department. When, sir? When he purchased the goods from manufacturer. Yes or no? While he purchasing the goods from manufacturer, he already paid 10 rupees VAT. So whatever the 10 rupees VAT he already paid, now that 10 rupees he can take credit out of this 15 rupees. So out of 15 rupees he collected, 10 rupees will be retained by the wholesaler himself, with himself. Only the 5 rupees he will be paid to the department. So retaining this input taxes is what we called input tax credit. Taking the credit of input tax from output tax collected is what we call input tax credit. So at the time of purchases, he already paid 10 rupees. The same he is retaining. Only the 5 rupees is going to pay. Now applying the same logic. See, that is why whatever the 10 rupees he paid here is getting credit. So initially he paid out of his own pocket 10 rupees. So 10 rupees is going out of his pocket, but later on he's collecting the same from retailer. So the 10 rupees is coming into my pocket. 10 rupees gone and 10 rupees coming in. So whatever the 10 rupees I've paid, I got the 10 rupees back. Now, what is the need of adding the same 10 rupees to the cost of the product? So if you're not getting back your taxes paid as credit, then you have to add back them to the cost of the product. That is what the major drawback in sales tax system. Under sales tax system, the concept of input tax credit, no, there is no concept called input tax credit under sales tax system. Since the credit of input taxes is not allowed under sales tax, what the people started doing is whatever the input taxes they have paid, they have added to the cost of the product. Now, after adding to the cost of the product, what happening? Cascading effect comes into picture. Are you following, sir? But under VAT system, whatever the input taxes you have paid, that input taxes are allowed as credit to you. So then there is no need of adding input taxes to the cost of the product. Are you following or not? Clear, sir? Next. So apply the same logic at the retailer level. Retailer collected 21 rupees from customer. He collected 21 rupees from customer by selling the product to customer. But out of 21 rupees, there is no need to pay the entire 21 rupees to the department. He already paid 15 rupees GST to the department. When, sir? When he purchased the goods from wholesaler. That 15 rupees he can take credit now. Only the 6 rupees enough to pay to the department. Are you following or not? Since he got back this 15 rupees in the form of input tax credit, he has not added to the cost of the product. Simply he has taken only 150 rupees as his cost of the product. Are you following or not, every one of you? Enappa. Right. So the major advantage under VAT system is elimination of cascading effect of taxes. Elimination of cascading effect of taxes. And how we are eliminating this? By allowing input tax credit across the supply chain. So manufacturer, wholesaler, retailer, every one of them will get the input tax credit except consumer. Consumer has to pay the burden, right? See, whether it is GST, whether it is VAT, whether it is excise duty, customs duty, the ultimate burden is on consumer only. But under VAT, under GST, the burden on consumer reduced. The burden on consumer reduced. Are you following, sir? Right? So no double taxation, burden on consumer reduced, and a reduction in prices. You can see under sales tax system, it is 260 rupees ultimate selling price to consumer, but under GST it is just 231 rupees. So reduction in prices. Reduction in prices means a reduction in inflation. These are all the advantages of VAT system, value added tax system. Are you following or not? Okay, so this is the concept of the value added tax. Clear? So you can claim the comprehensive and continuous chain of tax credits, right? From the manufacturer stage till the retailer stage, everyone will get the input tax credit. From the point of manufacturer to the point of retailer, everyone will get input tax credit. Credit of GST, right, ma? At every stage of GST, ma, whoever the supplier is there, he will claim the input tax credit. Only the final consumer bears the GST charged by the last supplier. Okay, ma. So the same example explained here. No cascading effect of taxes. I've already told you. Under GST, input tax credit allowed is at every stage of supply. Hence, we successfully eliminated the cascading effect of taxes. Okay, now. And GST is a destination-based tax. Means from where the goods are supplied is relevant, but from where the goods are delivered to where the goods are destined is ultimately matters. Are you following, sir? Let me explain you through running notes. Yeah, here you can see GST is a destination-based tax. Mr. A supplier from Andhra Pradesh, right, sending the goods to Mr. B, a recipient from Telangana. So the goods originates from the state of Andhra Pradesh and the destination is in Telangana. Here in this particular transaction, there is a GST of 18,000 rupees. Now, who will get this 18,000 rupees? Destination state will get the GST revenues. Are you following now? See here, it is an interstate transaction. So IGST will be leviable. IGST is levied and collected by central government, but IGST revenues shared with the destination state government. Here, the goods are originated from Andhra Pradesh, but having the destination Telangana. Now, in this 18,000 GST revenues, certain share of revenue will go to the destination state, Telangana state. Are you following or not, every one of you? So from where the goods are originated, irrelevant, sir. So that is where I've given you the important point here. From where the goods were supplied is irrelevant, but from where the goods were consumed, relevant. Only the destination state will get the tax revenues of GST. Now you'll get a question here. Why, sir? Because in India, sir, out of the 28 states now we are having, how many states are having the manufacturing capacity? And all the 28 states equal amount of manufacturing happening? No. Hardly I can count like the major manufacturing happening in Gujarat, Maharashtra, Tamil Nadu, Karnataka, West Bengal. Yes or no? Hardly 5 to 10 states having the 90% of manufacturing happening in India. Yes or no? Right? See, if you made the provisions like the origination states will get the GST revenues, then only 5 to 10 states of India will get major share of GST revenues. Right? But the ultimate provisions of levying the GST, ultimate concept is to see that each and every state of India will get developed in an equal manner. So without sharing the revenues to the state governments, how can the state governments develop? So that's why, see, even though the manufacturing happening only in 5 to 10 states, but their consumption is happening across the India. So that's why, in order to make sure that every state of India getting GST revenues, they have placed a provision like this. GST is a destination based tax. Only the destination state government will get the GST revenues. So that means now we can say all the 28 states are getting GST tax revenues. Clear now? Right? So with this, we have completed the concept of GST, and from the need for GST, I'll explain you in the next session. Okay, now time for a short break. After the break, we'll start with need for GST in the next session. Clear, ma? Right. So see you in the next session, sir. Till then, have a good day. Stay home and stay safe. So a very good morning, students. Welcome to the GST marathon classes. So in the very first session, we have started discussion about our first chapter, GST in India, an introduction, and we have completed up to topic number 4, concept of GST and need for GST. In that, we have completed only up to concept of GST. So let us continue with the need for GST. So what is the need of introducing this concept called goods and services tax? So this concept came into effect from 1st July 2017 onwards. GST came into effect from 1st July 2017 onwards. Right, mom? Now, before 1st July 2017, we used to have the taxes called excise duty, customs duty, right, sir, service tax, value added tax, central sales tax at the indirect taxes level. Now, with effect from 1st July 2017, GST came into effect. Why? What is the need for introducing GST? And what is the need? All these existing indirect taxes were subsumed into this GST. See, just look at my running notes. Yeah. Existing tax regime, that is up to 30th June 2017. On manufacturing of the goods or production of the goods, we used to levy the excise duty. And then on exports and imports, we used to levy the customs duty, right? On exports and imports, customs duty. On intra-state sales, value-added tax, and interstate sales, CST, central sales tax, we used to levy, sir. Are you following, every one of you? Now, and on provision of services, we used to levy the service tax. But with effect from 1st July 2017, what happens? Right, in the place of central excise duty, VAT, CST, CVD, special CVD, and service tax, we have introduced a single taxation system that is called GST, goods and services tax. Why? What is the need for GST? You can look at here. GST is nothing but a concept of value added tax. We have learned in the last session. And this concept of value added tax introduced at the central level in the year 1986, introduced at the state level in the year 2005. Right, sir? But what actually happens is, we have already discussed these implementations of the SAMBA and state VAT was, non-integrated. You can see here, I've given the reason also here. The major drawback in the existing tax regime. See, generally, whenever you are introducing a new tax regime in the place of existing tax regime, there must be some reason, right? Under the existing tax regime, there must be some defaults, loopholes, drawbacks. So in order to overcome the drawbacks or loopholes, you are introducing and you are coming up with a new tax regime. Yes or no? Now you will get a doubt here. What is the major drawback in the existing tax structure? You can see here, the major drawback is this: non-integration of central taxes with state taxes. And because of this, what happens is, it leads to cascading effect of taxes. And you know the ill effects of cascading effect of taxes. As a result of the cascading effect of taxes, there will be a tax on tax comes into picture. Tax burden on ultimate consumer increases, selling price per product is increases, and when there is a rise in prices, it leads to inflation, and inflation leads to stagnation of the growth of the country. These are all the ill effects of cascading effect of taxes. Though you have introduced the concept of VAT at the central level and state level, because of the not integration of the central taxes with the state taxes, again, the advantages of VAT will be vanished. You can see the ill impact of this non-integration. Look at this example, sir. Mr. X is a manufacturer. Cost of the production, let us say some 10 lakhs rupees. And excess duty, when he is engaging into the manufacturing of production, he has to pay the excess duty at the rate of 10%. So totally 11 lakhs. Now he is selling this product to Mr. Y, wholesaler. Now, since he is engaging into the sales transaction, he is subject to the payment of VAT also, value added tax. Let us say at the rate of 10%, it becomes 1,10,000 rupees. Okay, ma'am. Now, totally, the cost of goods purchased will be 12,10,000 to Mr. Y. Now, but Y, in his books of account, he will show the cost of the goods purchased only 11 lakhs, because whatever the VAT he is paying here, this VAT will be allowed as input tax credit to him, because he's a trader. No, he's a trader. Buying and selling of the goods is his business activity. So whatever this 1,10,000 VAT he was paid, this will be allowed as input tax credit to him. Are you following, sir? But this excess duty of 1 lakh he paid, right? This will not be allowed as input tax credit, because excess duty is a central tax. Central tax. And Mr. Y is a state level dealer, not central level dealer. He's a wholesaler. Right? For traders, excess duty is not allowed as credit. You can see here, ma, trader is eligible only for input VAT as credit. Input excess duty is not eligible for credit. So the tax element added back to the cost element, then cascading effect of taxes comes into picture. For traders, only the VAT element is allowed as credit, sir, not the excess duty element, because VAT is a state level tax and excess duty is a central level tax. Non-integration. Are you following or not? Right, sir. Now you can see here, excess duty is allowed as credit only for the manufacturers and service providers. Traders, excess duty credit not allowed. Clear, sir? So when a trader paid the excess duty, in order to get it back, what he will do, sir, he will add to the cost of the product. As a result, what happens? Cascading effect of taxes comes into picture. Are you following or not? For manufacturer, excess duty, yes, allowed as credit. VAT, yes, allowed as credit, because he will be having input VAT and as well as output VAT. He will be having input excess duty, output excess duty. So he can claim credit, right? But whereas when it comes to the trader, he will be having input VAT, output VAT. He can claim that VAT as credit. But when it comes to excess duty, he will be having only input excess duty, not output excess duty. Because, sir, when you will get the output excess duty liability, only when you engage into the manufacturing. But here you are a trader, not engaging in the manufacturing. Trader means he is just engaging in the activity of buying and selling. That's it right now. So he won't be having any output excess duty liability. So without having output excess duty liability, how can he claim input excess duty as credit? Not allowed, sir. So when the credit is not allowed, in order to get back that amount, in order to recover that amount, what he will do? Add to the cost of the product. As a result, what happens? Cascading effect of taxes comes into picture. Right, sir. So at trader level, yes, there is a scope for cascading effect of taxes. Now, when it comes to the service provider, yes. Again, there is a scope for cascading effect of taxes because, sir, as a service provider, whatever excess duty you paid, you can claim SENVAT credit. Whatever the service tax you paid, you can claim SENVAT credit. Absolutely no problem, because excess duty, service tax, both are central taxes. But whereas as a service provider, whatever the input VAT you paid, not eligible for credit, because you are a service provider. You're not engaging in the buying and selling of the goods. You might have purchased the goods for rendering your services, but whatever the goods you purchase, you won't be sell them back. You're purchasing the goods for consumption, not for resale. So if you resale, you're not a service provider, you are a trader. Are you following or not? So for service provider, he will be having input VAT because he will buy some goods for rendering his services. So at the time of purchase of that goods, he will pay input VAT, but he won't be having any output VAT. So whatever the input VAT he paid, credit is not allowed. In order to recover that input VAT, what he will do? He will add to the cost of provision of services. Cascading effect of taxes comes into picture. Are you following or not? So at the service provider level also, there is a scope for cascading effect of taxes. Now look at here. Look at this example. Another example for non-integration of central taxes with state taxes. So Mr. X, Chennai, right, from Tamil Nadu, supplier, supplying the goods to Mr. Y. Y is from Bangalore, recipient, Karnataka. Now, here the supplier, Mr. X from Chennai, raised an invoice value 10 lakhs. Now, this is an interstate supply, means a supply between two different states. CST is leviable at the rate of 2%, 20,000 rupees, and invoice value 10 lakh 20,000. Okay, ma. Now, Mr. Y selling the goods to Mr. Z from Karnataka, Bidar, Karnataka. Okay, ma'am. Now, invoice value at Y level, there is a value addition of 20%. So value becomes 12 lakhs. And now this transaction between Mr. X and Mr. Y, it's an intrastate transaction because both the supplier and recipient are from the same state. VAT is leviable at the rate of 10%, 1.2 lakh. So 13.2 lakh. Now here, look at the net VAT liability calculation in the hands of Mr. Y. Sir, output tax collected 1,20,000, input tax paid 0. You will get a doubt here. So why? So Mr. Y is, when he purchasing the goods from X, he paid 20,000. Now can he not claim this 20,000 as input tax here? Answer is no, because he buy the goods from where? From Chennai, Mr. X. Interstate transaction. And what is the tax he paid? Is he paid VAT? No, he paid CST, central sales tax. So by paying a central tax, you cannot adjust that central tax against the state taxes. No integration. Central taxes not allowed to be adjusted against the state taxes. Hence credit not allowed. So in order to recover this 20,000, what he will do? he will be add back to the cost of the product. As a result, what happens? Cascading effect of taxes comes into picture. Are you following, sir? Next. And you can see the drawbacks here. At the manufacturer level, no cascading effect. At the dealer level, yes, there is a cascading effect. At service provider level, there is a cascading effect. So because of these main reasons, GST came into effect. GST came into effect. You can see the reasons also. Right, double taxation of transactions which involves both goods and services, no SENVAT after manufacturing stage, non-integration of VAT and service tax. Clear, sir? Next, GST is a cure for ills of the existing indirect taxes regime. So what are the taxes subsumed into GST? At the central level, you can see the excise duty, additional excise duty, service tax, excise duty under Medicinal and Toilet Preparations Act, CVD, countervailing duty, special countervailing duty, cess and surcharges. And at the state level, VAT, sales tax, luxury tax, tax on advertisements, entry tax and purchase tax, entertainment tax, except levied by the local bodies, tax on betting, gambling and lotteries. These are all subsumed into GST, ma'am. Right, sir? Now, in the place of all these taxes, there is only one taxes, that is GST. Okay, now before going further, you just look at the customs duty structure before the GST and after GST. Before the GST, you can see whenever you are importing the goods, let us assume that we are importing the goods. Whenever we are importing the goods, we used to pay 4 different types of taxes. Basic customs duty, we call it as BCD, basic custom duty. Then CVD, countervailing duty, special CVD, and then NCCD, national calamity and contingency duty. These 4 duties we have to pay, ma'am, whenever you are importing the product. Are you following, sir? Right. And next, after GST, BCD remains to be levied. It continues to be levied, ma. Now, in the place of CVD and special CVD, now we are levying IGST. Sir, all these import and export transactions, here we are assuming that they are interstate transactions. By assuming they are interstate transactions, we are levying what, ma? We are levying IGST. In the place of what, ma? In the place of CVD and special CVD. So after GST, what was the change? BCD continues to be levied and NCCD continues to be levied. In the place of these two, CVD and special CVD, now we are levying what, ma? We are levying IGST. So after GST, whenever you are engaged into the exports and imports transactions, what are the different types of taxes you have to pay? You have to pay basic customs duty, IGST, and NCCD. Are you following or not, ma? Right, sir. Next. So GST versus current IDT structure. Sir, under GST, the taxable event is supply. Right. What is taxable event? Taxable event explains about the point of time at which the tax is leviable. At what point of time the tax is leviable? That is what we call taxable event. So under GST, taxable event is supply. So what do you mean by supply? We will learn in the chapter number 2. We will learn in the chapter number 2. Okay, mom. Right? Because the chapter number 2, entire chapter is about a single word, supply. Clear? Next. And under the existing taxing indirect taxes regime, taxable event under excise duty is manufacturing, VAT or CST, sale of goods, and service tax, rendering of services. So different taxes, different taxable events. Okay. Now, benefits of GST. We have seen already with that example. GST is a win-win situation. That means it is advantageous to the taxpayers and as well as to the government. What are the advantages to the taxpayers? You can see here, it lowers the cost of the goods and services. Yes. Before the GST, we have seen in that example, the selling price to the customer 260 rupees. But after GST, the selling price to the customer is 239 rupees. So there is a reduction in the price of the goods. Yes or no? Right? And it gives the boost to the economy. See, whenever the price decreases, right? So more and more consumers will come forward and will purchase the goods, right? More and more trading will happen. It will increase. and it will give some encouragement to the economy and make our goods and services globally competitive. See, because of the high prices, our products are not that competitive at the world market, in the world market. But now, because of the GST, there is a reduction in the price of the goods. So now our goods will become a very competitive product at the global level. Okay, now significant benefits have been elucidated. Creation of unified nation market. Yes, now with the GST, one nation, one tax concept, there will be a common market across the India, right? Mitigation of ill effects of cascading. Yes, this is the main reason why we have introduced GST. Integration of central taxes with the state taxes, right? So integration. Because of this, now all the manufacturers, traders, service providers are entitled for the input tax credit, whereby we can successfully avoid the cascading effect of taxes. Elimination of multiple taxes and double taxation. Yes, now whether it is a product or it is a service, now we have a common taxation system, right? Earlier, whenever there is involvement of both goods and services, we used to levy both VAT and service tax. But now in the place of that, we will levy only a single tax called GST. It boosts to the Make in India initiatives, right? Yes, Modi government introduced a concept called Make in India. So self-reliance, we need to depend upon our manufacturing facilities only. We should not be depending upon other countries for the products. What are the products so far we are importing from other countries? That products should be manufactured in India only. Make in India initiatives. This concept of GST gives a lot of encouragement to the Make in India initiatives, right, sir? Because our products now becoming competitive in Indian markets and as well as in the global markets. Buoyancy to the government revenue. Buoyancy means easiness. Earlier, different taxes are there, different departments, and there is no coordination between the different departments. Because of this, there is some reduction in the revenues to the government. But now it is a single taxation system, a single department. Now it is very easy for the department to collect the revenues. Okay, next. These are all the advantages of the GST. Now moving on to the constitution of GST. Sir, introducing of any tax in India, there must be authorization from the Indian Constitution. Without having a proper authorization from the Indian Constitution, you cannot levy, or you cannot introduce a new taxation system into India. Yes or no? See, whatever the taxes so far in implementation, they have already proper authorization from the Indian Constitution. Now, even for the GST also, we need a proper authorization from the Indian Constitution. Right, sir? So now you'll get a doubt here, sir. Indian Constitution was introduced in the year 1950. GST was introduced in the year 2017. How can this new taxation system GST have authorization from Indian Constitution? Was it already prepared at the time of Indian Constitution? Was it inserted a new clause or a new article? The creators of the Indian Constitution dreamed about 2017. In 2017, 1st July 2017, okay, GST comes into picture. So, okay, creators, let's have a separate article for it. No, sir. So how can this GST comes into picture? How can it got a authorization from the Indian Constitution? The answer is we have made amendments to the Indian Constitution. So Indian Constitution, supreme law of India, can it be amended? Yes. So over a period of this 61, 62 years of its introduction, not 60, 71, 72 years of its introduction, more than 100 times our Indian Constitution got amended. See, when something is not in accordance with the Indian Constitution, we are not changing. We are changing Indian Constitution. We are changing Indian Constitution and we are making it accordance with us. And that's why more than 100 times our Indian Constitution got amended. And 101st amendment is GST. Okay, so look at this story, ma. The constitution of GST. Mainly two articles we will discuss, Article 265 and Article 245. Article 265 said like no tax shall be levied or collected without any authorization, right? And Article 245 giving the authorization to the central government and state government to make the laws. And Article 246 read with Schedule 7, where we have three different types of list. List 1 is a union list, list 2 state list, and list 3 concurrent list. List 1, we have entries like entry 1, 2, like that up to entry number 97. In that entries, there are some matters will be discussed, and on that matters, the taxes should be levied by only the central government. It is an exclusive power of the central government to levy the tax. You can see I have given you some examples here. Entry number 82, income tax, 83, excise duty, 84, customs duty, 92A CST, and 97, service tax. And list 2 is a state list where we have entries again. Entry number 51 deals with the excise duty, state excise duty, and entry number 54 deals with the state VAT. And list 3 is a concurrent list. Both central government and state government have the power to levy the taxes. Okay, ma'am. And regarding the excise duty, yes, we have two different types of excise duties, state excise duty and central excise duty. State government also have the power to levy the excise duty, but only on a few products like alcoholic liquor for human consumption, opium, Indian hemp, narcotic and narcotic drugs. And apart from these three products, remaining on all the products, central government have the power to levy the excise duty. Next, types of GSTs. You all know that we have different types of GSTs: CGST, SGST, IGST, and UTGST. CGST is a central goods and services tax levied by the central government. SGST levied by the state government. IGST levied by the central government again, right? And UTGST levied by the union territories having their own state legislatures. Okay, right. I've given you some examples here. Intrastate supplies, both CGST and SGST is leviable. Interstate supplies, IGST leviable. Imports and exports, I've already told you that they are considered to be interstate supplies, IGST leviable. And you can see the example here. Supplier from Telangana, recipient from Telangana. It's an intrastate supply. So CGST and SGST leviable. And supplier from Karnataka, recipient from Karnataka. Again, intrastate supply, CGST and SGST leviable. Supplier from Andhra Pradesh and recipient from Telangana. Interstate supply. Interstate supply. So IGST leviable. Supplier from Delhi and recipient from Maharashtra. Interstate supply, IGST leviable. Supplier from Ladakh and recipient from Ladakh. Intrastate supplies, right? Of course, I can say that this is intra-union territory supplies. So we have to levy CGST and UTGST. And supplier from Daman and Dadar and recipient from Daman and Dayu. IGST leviable. Okay, supplier from USA and recipient from India. IGST, it is an import, IGST leviable. So like this, I've given you some example. Before that, let's go for the textbook again. And you can see here with the amendment, 101st amendment to the Indian Constitution. I already told you it is about the GST ma, right? And Article 246A, it's a new article introduced for giving the powers to the central government and state government to give the laws, to give the power to the central government and state governments to make the laws against in relation to the GST, right, sir? So Parliament has the exclusive power to make the laws in respect of the goods and service tax, and where the supply of the goods or of services takes place in the course of interstate trade or commerce in relation to IGST, right? So as per Article 246A, Parliament and as well as state government also got the power to make the laws with respect to GST. And in relation to the interstate supplies, Parliament got the exclusive right. Next. So Article 246A is to confer the authority to impose the GST by both central and state governments. But in the case of interstate supplies, right, center has an exclusive power. Okay, sir. Next. However, in the following goods, in respect of the following goods, GST shall be levied from a date recommended by the GST Council. See, at present, these goods are out of the purview of GST. These goods are still taxing under existing tax regime, existing tax structure. Means excess duty, service tax, VAT. Okay, ma. What are they? High-speed diesel oil, petroleum crude oils, aviation turbine fuel, nothing but white petrol used in the aeroplanes, helicopters, right? Aviation turbine fuel, white petrol, known as white petrol, natural gas, and petrol. These 5 products still taxing under the existing taxation regime only. But in future, if GST Council recommends a particular date, from that particular date onwards, these will also be brings under GST. Ma. Next. Article 269A, it is about giving the power to the central government to levy the taxes under interstate supplies. Okay, ma'am. Article 269A empowers the center to levy and collect the GST on interstate supplies. Right, sir. And whatever the tax collected, it shall be apportioned between the center and state governments. And for this purpose, supply of the goods and services in the course of imports shall also be considered as interstate supplies, and then IGST is leviable, ma'am. Okay, now next. And then after that, another new article introduced, right? For formation of the GST Council. GST Council is nothing but GST in order to making decision in relation to the GST, right? There must be a statutory body required, and that statutory body is a GST Council, right? So GST Council is nothing but the decision making body of the GST. Who are the members? Union Finance Minister is the chairperson of this GST Council, and the state finance ministers are the members of this GST Council. This GST Council make the decisions in relation to GST, sir. It make the recommendations to the states and centers with respect to the tax rates, threshold limits, and exemptions, etc. And also recommended effective date for the levy of GST on these 5 products: petroleum, crude oils, high-speed diesel oil, motor spirit, natural gas, and ADF. Okay, ma'am. Now, focus point. Even after the introduction of GST, you can see excess duty continues to be levied on tobacco, petroleum, crude oil, diesel, petrol, ADF, right? But of course, it's important to note that Union reserved its power to levy the GST on and excess duty as well as on tobacco, right, sir? So at present, Union also reserved its right to power levy the GST and excess duty as well as on tobacco, right, sir? And regarding the alcoholic liquor, I've already told you that alcoholic liquor is outside the purview of the GST. So at present, only the excess duty, state excess, and that to state excess duty, sir, not central excess duty. Alcoholic liquor meant for human consumption, state excess duty. If the same alcoholic liquor used in the medicinal and toilet preparations, central excess duty. Okay, ma'am. Next. So state excess duty leviable on manufacturing or production of alcoholic liquor. Further, state excess duty could also be levied on opium, Indian hemp, and narcotics. VAT is leviable on intrastate sale of petroleum, crude, diesel, petrol, ADF, natural gas, and alcoholic liquor. Okay. And real estate sector, GST is not leviable on sale or purchase of immovable property. Why? Because immovable property is not covered under the neither covered under the definition of goods nor covered under the definition of services. Basically, GST is nothing but a tax on goods and services, right? Immovable property, neither a good nor a service. Hence, not GST will not be levied. Okay. And then after that, framework of GST models, right? See, generally, GST is nothing but a value-added tax. We already know that. And France was the first country to introduce a GST in the year 1954. GST, globally known as what? It is an old concept which was first implemented in France in the year 1954. And in India, we have introduced at the central level as SENVAT in the year 1986, at the state level as state VAT in 2005, and both at center and state level as an integrated GST in 2017. And we have different models of GST. Different countries are using the different models, and our India is using concurrent dual GST model. Tax is levied by both central and state government on both goods and services. At present, this model is being followed by Brazil, Canada, and India. Okay, mom. GST models in India. India has adopted a dual GST model, which is imposed concurrently by both central and as well as states. So that is center and state simultaneously levies a tax on goods and services. Now center has a power to tax intrastate sales and states are empowered to tax services. Before the introduction of GST, these powers are not there, sir, actually. Right, on intrastate sales, it is the exclusive power of the state government to levy the VAT. And on services, it is the exclusive power of the central government to levy the service tax. But now, with the integration of both central and state taxes, now central government got the power to levy the tax on intrastate sales. If it is an intrastate sales, what are we going to levy, ma? CGST and SGST. So that means central government also got the power to levy the interstate transaction, and states also empowered to levy the tax on services. Okay, and GST extends to the whole of India, including the Jammu and Kashmir. Okay, right? Now, types of GSTs I've already told you: CGST, SGST, IGST, and UTGST. UTGST is applicable only for those union territories having their own, having without any state legislatures. Okay, sir. So Delhi, Jammu and Kashmir, Puducherry, these are the state union territories having their own state legislatures. And then Andaman and Nicobar Islands, Lakshadweep, Ladakh, Dadar and Nagar Haveli, and Daman and Diu, Chhattisgarh. These are the union territories not having their own state legislatures. So Delhi, Jammu and Kashmir, Puducherry also a union territories, but they are having their own state legislatures. And these are also union territories without state legislatures. And they won't be having their own assembly, CM like that. There will be administrator appointed by the central government. He will look after everything with respect to that union territory. Okay, ma'am. Now here we have seen some amendments regarding the union territories, ma'am. You can see the amendment here. Before amendment, Jammu and Kashmir is actually a state. But now what happened after amendment? Jammu and Kashmir and Ladakh. Earlier, Ladakh is forming part of Jammu and Kashmir. It's a state. But now after the amendment, after the removal of that Article 370, what was happened, ma? Right, central government has decided to convert a single state into two union territories. Jammu and Kashmir, a union territory with their own state legislature, and Ladakh, a union territory without any state legislature. This is one amendment, ma. A state is divided into two union territories. That is why now the number of states in our country is just 28. Earlier we used to have 29. Now it is 28. Okay. And we have one more amendment, ma. Before the amendment, this is before the amendment. Dadra and Nagar Haveli, a separate union territory, and Daman and Diu, a separate union territory. A separate union territory. Two union territories. But after the amendment, what was happened is, after the amendment, these two merged into a single union territory. A single union territory. Dadra and Nagar Haveli, Daman and Diu, a single union territory. Earlier, two separate union territories. Now it is a single union territory. Clear, ma? I've explained you here in the running notes also. States and union territories position after the removal of Article 370 and amendments. So before the article of removal of Article 370, Jammu and Kashmir is a natural state. Transaction between Jammu to Jammu, intrastate transaction, CGST, IGST levied. Ladakh to Ladakh, intrastate, CGST, SGST levied. Jammu to Ladakh, intrastate, CGST and SGST is leviable. But now after the removal of Article 370, you can see here, Jammu and Kashmir is now becoming a union territory with their own state legislature. Ladakh, another union territory without state legislature. Now you can see the same examples here. Jammu to Jammu intra-state transaction, CGST, SGST leviable. Ladakh to Ladakh intra-state transaction, but CGST and UTGST leviable. Earlier we used to levy the SGST, but now we are levying UTGST. And Jammu to Ladakh, earlier we said it is an intra-state transaction, CGST, SGST is leviable, but now it is an interstate transaction, IGST leviable. Okay, ma. So very important amendment, very important amendment. You might get a multiple choice question in your main exams. Okay, now next, merger of two union territories. I've already told you, before the merger, there are two separate union territories, Daman and Diu, Dadra and Nagar Haveli. Transaction between Daman and Dadar, it is an interstate transaction, IGST is leviable. But after merger, it is a single union territory called Daman and Diu and Dadra and Nagar Haveli. Now the transaction between Daman and Dadar is an intrastate transaction, CGST and UTGST is leviable. Okay, next. And final position of the states and union territories. Existing, we have 29 states, out of which one state is removed. So totally now we have only 28 states. Okay, now, and union territories with state legislature. Earlier we used to have only two union territories with state legislature, Delhi and Puducherry. Now one more added, that is Jammu and Kashmir. So now we have three union territories with state legislatures. Okay, and without state legislature, earlier we used to have 5 union territories. Now also 5 union territories, because one union territory newly added, Ladakh. So 5 plus 1, it will become 6. But again, one union territory got reduced because of the merger of Daman and Diu and Dadra Nagar Haveli. So it remains to be same, 5 union territories without state legislature. Okay, mom. Next. Manner of utilization of input tax credit. Of course, we have a detailed analysis of this topic at chapter number 6. In chapter number 6, we will be having a detailed analysis of this concept, input tax credit utilization. But of course, let us try to have a brief here. So input tax credit of IGST, it should be utilized firstly for the payment of IGST. And after the IGST balance is, IGST liability is over, still you have IGST credit. That IGST credit, you can be utilized for the CGST or SGST in any order, in any manner, in any proportion. Like first you can be used for CGST, then you can be used for SGST. Or first you can use for SGST, then you can use it for CGST. Or 50% for CGST, 50% for SGST, 30% for CGST, 70% for SGST. Like this, you can be used in any order, in any proportion, in any manner. Okay. Next, moving on to IGST credit of CGST. First, it should be utilized for the payment of CGST liability. And after the payment of CGST liability, still you have any credit, then it should be utilized for the payment of IGST liability. That's it. But you cannot use CGST credit for the payment of SGST liability. Okay, next. Input tax credit of SGST. First, it should be utilized for the payment of SGST liability. And after paying off the SGST liability, still you have any credit balance of SGST, it can be used for the payment of IGST liability. You cannot use SGST credit for the payment of CGST liability. Okay, ma? Next. After the threshold limits for registration. So we have a detailed analysis of this concept in chapter number 7, because the entire chapter number 7 is about registration topic. Okay, mom. But let's have a brief understanding here. We have totally 3 different registration limits, right? 10 lakhs rupees limit applicable only for Manipur, Mizoram, Nagaland, and Tripura. Those suppliers from these 4 states, if their turnover, what do you mean by turnover here? Aggregate turnover. If their aggregate turnover exceeds 10 lakhs, then they are subject to compulsory registration. Okay, ma'am. Next, 20 lakhs limit. Applicable for Arunachal Pradesh, Telangana, Sikkim, Meghalaya, Puducherry, Uttarakhand. For these states, 20 lakhs is a threshold limit. Sir, I am from a supplier from a state of Telangana. For me, the GST registration provisions are applicable only when my aggregate turnover exceeded 20 lakhs. Yes or no? Next, remaining states, for services, it's always be 10 lakhs is a threshold limit. And for goods, there are two conditions for higher threshold limit, 40 lakhs. Number one, that supplier must be exclusively engaged in the supply of goods, and he should not be engaged in interstate transactions. Like, sir, I'm a supplier from Andhra Pradesh or Tamil Nadu or Karnataka, West Bengal. Sir, I am exclusively engaged in the supply of the goods, and that is to I am supplying only within my state, only within my state. I don't have any customer outside my state. So I'm exclusively engaged in the supply of goods and doing only intrastate supplies. So for me, 40 lakhs is a threshold limit, higher threshold limit. Are you following or not? Okay. Now you can see here in the, sorry, theory also. Manner and utilization of input tax credit that I've already told you, and registration under GST. This is what we are discussing now. Okay. And we have done with already. GST common portal, nothing but our website, gst.gov.in. This is our common portal, right, sir? It's a non-profit company, constitution under section 8 of the Companies Act. Earlier, it is a non-profit and non-government entity where government holds only 49% and private entities held 51%. But in the 27th GST Council meeting, they decided that government decided to purchase that 50%, 51% of shareholding from the private entities and make it is 100% government owned entity, whereas 50% owned by central government and 50% owned by the state government. And GSTN offers a common interface, common IT infrastructure for the taxpayers and governments, and it is accessible via internet. And it's a common portal ecosystem consisting of taxpayers, tax professionals, tax authorities, and banks. And what are the functions we can get from this common portal? Facilitation of registration, forwarding returns to the governments, computation of settlement of GST, matching of tax payment details with the banking networks. Right, sir? I can take you to that common portal once. So you can see here, this is our GST common portal, gst.gov.in, right? So where you can find the taxpayers and GST tax practitioners, right, sir? And then you can have the right due dates list also here. We used to file the different returns with respect to GST, like GSTR 3B, a consolidated return, right? And you can also see who are liable to file this GSTR 3B. Turnover exceeding 5 crores are opted to file monthly return. Those who are opted to file the monthly returns are those whose turnover exceeding 5 crores. They are subject to file a monthly GSTR 3B for the month of February. The due date is March 20th, 2022, already completed. And GSTR 1, it is outward supplies return, right? And to whom it is applicable, same concept. And the due date is March 11th. And GSTR 1 quarterly, this is for quarter month, right? You can see here opted for quarterly filing as per QRMP scheme, quarterly return monthly payment scheme. QRMP is nothing but quarterly return monthly payment scheme. And the due date is April 13th. Okay, ma'am. So like this, you will be having different types of returns here. And you'll also get the services like registration, new registration, right? And the payments, create a challan and track the payment status. User services like search HSN code harmonized system of nomenclature, right? And look at the GST tax practitioners, and you can also get the GST laws here, and you can also get some downloads, offline tools and statistics, search a taxpayer, right, through PAN, through temporary ID. So these are all the services you can get from the GST common portal. You can file the returns, right, sir? You can also create an e-way bill. Generally, e-way bill is required to be generated whenever there is a movement of goods, right, sir? And e-way bill can be generated by using, we have a separate portal called e-way bill gst.gov.in, right? E-way bill is nothing but an electronic document generated on the GST portal evidencing the movement of goods. Next, who is a GSP or ASP? GSP is nothing but GST Suvidha providers. Just like for your easy knowledge, easy understanding, I can say it like it is a kind of e-seva centers or me-seva centers, right? Now, see, there are certain services to be provided by the government authorities. But because of the busy schedule, or rather you can say because of the lack of manpower, what the government started doing is government started giving the licenses to the people for providing that services. Like if you go to the Me Seva Center, you can get all kinds of certificates like income certificate, right? You can get the community certificate, date of birth certificate, right? You will get caste certificate, OBC, like this, right, sir? See, generally these are the services to be provided by the government, but because of the manpower, scarcity of the manpower, or because of the administrative issues, or because of the busyness, government, what has the government done is government given this power to the people to provide these services, licenses. So Me Seva centers, it is also kind of a creation of employment. Okay, now similarly, for providing the GST services also, government started giving license to certain people. You can start a GST Suvidha Kendra, whereby you can render the services in relation to GST, like GST registrations, filing of GST returns. Okay, now see, if you have the enough knowledge of how to do the GST registration, how to file the GST returns, what are the different types of returns, if you know the GST provisions, you can also apply for a license for put up a GST Suvidha Kendra. You can take a shop on rental basis. You can start GST Suvidha Kendra, whereby you can provide GST services. This is GSP. Now ASP, application service provider. Like I can give you the examples like Clear Tax, Joho Books, Tally ERP, right, sir? So these are all the application service providers, whereby by using their applications, you can receive all kinds of services in relation to GST, like filing of GST returns, right, sir? And then, claiming of the refunds, matching of the, invoices, all these kinds of services you can enjoy with this private software providers. Okay, now, so GSTN, GST network is a pool of IT companies to facilitate the interaction between GSTN and the taxpayers. GSP, GST Suvidha providers, is a single stop shop for providing the uploading the invoices and filing of the returns. ASP is a link between the taxpayer and GSP. They customize the products that addresses the needs of the users. Okay, ma. So this is a first chapter GST marathon, right, sir? Hope that I've covered almost all the provisions. Almost 90% of the provisions I've covered in the first chapter, as the first chapter majorly contains the fundamentals. Okay, ma'am. So in the next session, I'll start with the second chapter, supply under GST. So those who are attending this marathon classes, you can get our Shrestha materials at free of cost in our Shrestha app. And you can also get the running notes in our Shrestha app. Okay, ma. And coming to the amendments in the first chapter, there are no amendments from the first chapter, ma. Are you following or not? And whatever the amendments we have, I've already covered, like the removal of that article number 370. And what is the position after that? Amendments in relation to the definition of India. Okay, Jammu and Kashmir, earlier it is a natural state, now divided into the two separate union territories. Like Jammu and Kashmir with state legislature, and Ladakh, a union territory without state legislature. And one more amendment, merger of two union territories into single union territory. Daman and Diu and Dadra and Nagar Haveli, earlier two separate union territories, now a single union territory. Clear, ma? Every one of you. Right. So then see you in the next session for the chapter number 2. And meanwhile, if you got any doubts, don't hesitate to text me or call me. Clear? So in the material, you can find my mail ID. Of course, at the, I think in the second page, yeah, after the immediately this index, you can have my mail ID here and also mobile number. You can either text me or call me, sir, for regarding the clarification of your doubts. Okay. So have a good day, sir, and see you in the next session. Till then, stay home and stay safe. A very good evening, students. So welcome to the GST marathon classes. So in the last session, we have completed our first chapter marathon recordings. Now time for the second chapter. So second chapter, supply under GST. Now in this chapter, we are going to discuss about only one topic, that is supply. Right, sir? See, under GST, the taxable event is supply. Yes or no? Right? See, we have learned in the first chapter that the taxable event under GST is supply. And that in the first chapter, I've told you that I've not discussed about the supply concept in the first chapter because we have a dedicated chapter for that, chapter number 2, right? So in the first chapter, simply said taxable event. What do you mean with a taxable event, and what is taxable event under GST? Right, sir? And we have not gone in depth in the first chapter. Now this is the time to know about supply. In-depth analysis in this chapter we are going to discuss now. Okay, now. So you can see the running notes. The taxable event under GST is supply of the goods or services, right? And what do you mean by the supply? I've given you the definition here. Sorry, what do you mean by the taxable event? Taxable event is nothing but the point of time at which the tax is leviable. When the tax will be attracted, right, sir? See, before GST, we used to have the different types of taxes and duties like excise duty, customs duty, service tax, value added tax, and central sales tax, right? And for each and every duty and each and every type of tax, we used to have the different taxable events. Like for excise duty, manufacturing and production of the goods. So whenever you engage in the manufacturing or production of the goods, then excise duties is leviable on you. The taxable event for excise duty is manufacturing or production. And when it comes to the customs duty, imports and exports of the goods. So whenever you are engaged into the imports and exports, right, sir, then you're supposed to pay the customs duty. Customs duty is leviable on you. Next, when it comes to the service tax, provision of services, whenever you are providing the services, whenever you are rendering the services, service tax will get attracted. The taxable event for service tax is provision of services. Now coming to the value added tax, it is levied by the state governments. So whenever you are engaged in the intra-state sales within the same state, intra-state means within the same state, then VAT is leviable. If the sale is happening between two different states, interstates, then CST is leviable. So like this, we used to have the different taxable events for the different types of taxes and duties. But now all these taxes were subsumed into GST, right, sir? So a single tax has been placed in the place of all these different types of taxes and duties. One nation, one tax. So whenever you have that one tax concept, you must be having only one taxable event. So that is why under GST, there is only one taxable event, that is supply. Okay, ma. Now, what do you mean by the supply? We are going to learn in this chapter. You can see here. So the incidence of the tax that is levy is the foundation stone of any taxation system. It determines the point at which the tax would be levied, and that is what we call taxable event. Okay, ma'am. So earlier, before the introduction of GST, as I already told you, we have different types of taxes, different types of duties, for which we used to have the different types of taxable events, which leads to unnecessary controversies, disputes among the different state governments, among the taxpayers, among the administrators. Now, for all these issues, we have a full step with a single taxable event called supply. Right, sir. Next. So you can see here, there are so many controversies regarding the taxable event under the earlier indirect tax regime, largely related to issues like whether a particular process amounting to manufacturing or not, whether the sale was a predetermined sale, or whether a particular transaction was a sale of goods or services. These are all the issues we used to face. But now for all these issues, GST law comes up with the solution, and that solution is one comprehensive taxable event, that is supply. Okay, right. Now what do you mean by the concept of supply? So supply is a keystone of the GST architecture, right? And regarding the supply definition, meaning, scope, right? All this we are going to learn in the chapter number 3 of the CGST Act, which contains the following sections and schedules. Section number 7 deals with the meaning and scope of supply. Section number 8 deals with the taxability of composite and mixed supplies. That is our last topic of the chapter, section number 8. Then schedule 1 deals with activities to be treated as supply even if made without consideration. Right. This is generally we called concept of deemed supplies. Right, sir. So generally, in order to call a particular transaction as a supply, there are some parameters, 5 parameters. Among the 5 parameters, one of the parameter is consideration. Supply should be made for consideration. Supply should be made for consideration. Right. If any of these parameters are missing, that particular transaction not to be treated as a supply. But we have some exceptions for it. There are 4 transactions where even if the consideration factor is missing out, still that particular transaction will be deemed as supply. And that transactions we are going to learn in schedule 1. Schedule 2 deals with transactions to be treated as supply of goods or as supply of services. See, there are certain transactions which includes both goods and services. Right, sir. So earlier we used to levy both VAT and as well as service tax on a single transaction, as it is involving both goods and services. But now we are bifurcating them as either supply of goods or supply of services. Right. So there is no more a combination of goods and services transactions. Either the entire transaction have to be treated as supply of goods or supply of services. But anyhow, end of the day, whether it is a supply of goods or whether it is a supply of services, the same tax is leviable called GST. Okay. Next, schedule 3, activities and transactions which shall be treated neither as supply of goods nor as supply of services. This is what we call technically negative list. Negative list. The transactions which are not at all taxable under GST. Not taxable under GST. Because in order to levy the GST, it must be either supply of goods or supply of services. But here schedule 3 deals with a transaction neither to be treated as a supply of goods nor as a supply of a service. So it is not a supply of goods, not a supply of service. Hence, no GST is leviable on that particular transactions. And all such transactions we are going to learn in the schedule number 3. Okay, ma? Right. Now let us start with the section number 7. Section number 7 deals with the meaning and scope of supply. Section number 7 deals with what, ma? Meaning and scope of supply. So here's the supply definition having 2 parts. Supply includes, supply excludes. Supply includes, supply should be for consideration or it should be made in the course or in furtherance of business. In furtherance of business is nothing but in supportive of business. Okay, now importation of services for consideration, right? Whether or not in the course or in furtherance of business. See, whenever the consideration factor is existing when it comes to importation of services, see, it should be made in the course or in furtherance of business is a second matter, irrelevant. So when it comes to importation of services, if consideration factor is existing, you can treat straight away it is a supply. Okay, next, supplies without consideration. I've just told you about supplies without consideration, demote supplies, going to be discussed in schedule number 1. Next, so activities to be treated as supply of goods or services, schedule number 2, and negative list of services, schedule number 3. Okay, now first let us look into the 7.1a. Supply should be made for a consideration or it should be made in the course or in furtherance of business. 7.1a. I've already told you, there are 5 parameters, and that 5 parameters we are going to study in section number 7.1a. So first parameter, supply should be made of goods or services. Okay, so if it is a good, okay, right, it is a supply. If it is of service, yes, it is a supply, right? Anything which is neither goods nor services, not a supply. Like money and securities. Money and securities, these two are not covered in the definition of goods, not covered in the definition of service. Neither a good nor a service. Money, securities, even you can also add here immovable properties. Immovable properties. Immovable properties also neither a good nor a service, hence not taxable under GST. Okay, sir. So in order to levy the GST, it should be made, right? Either it is a supply of goods or it is a supply of services. Next, it should be made for a consideration. Supply should be made for a consideration. So consideration factor should be there. And of course, we have some exceptions. We have some exceptions, and that exceptions we are going to study in what, ma? Study in schedule number 1. Next, supply should be made in the course or in furtherance of business. And for this also we can write exceptions like importation of services. In the case of importation of services, if consideration factor is there, then it should be made in the course or in furtherance of business, not a relevant factor. Okay, and supply should be made by a taxable person, means only a registered person. If made by a registered person, then only it should be treated as a supply. If that particular transaction is made by an unregistered person, it is not to be treated as a supply. Okay, and supply should be a taxable supply. It should be taxable under GST. So these are the 5 parameters. Generally, if any one of these parameters are missing out, then it is not a supply. But of course, we do have some exceptions, like for consideration, schedule number 1, in the course or in furtherance of business, importation of services, we have some exceptions. Next, so as I already told you, parameters of supply, these are all the 5 parameters. It should be made in the goods or services. It should be made for a consideration. It should be made in the course or in furtherance of business. Supply should be made by a taxable person, and supply should be a taxable supply. Okay, now let us understand in detailed manner each and every parameter. Okay, first parameter is what? Supply should be made of goods or services, and supply of anything other than goods or services does not attract GST. Okay, so you can see here, supply includes sales and transfer. See, generally whenever you come across the word supply, the first thing comes to your mind is sale. Supply of goods means sales of goods. Supply of goods means provision of services, selling of services. But supply not only includes sales, supply also includes transfer, barter, exchange, license, lease, rentals. It covers everything. These are all the different modes of supply. Right, sir? Not only sale, it is just like the definition of transfer under section number 2 clause 47 of Income Tax Act. If you remember the transfer definition, which we have discussed under section 2 clause 47 of Income Tax Act 1961, which deals with the definition of transfer, there you have we have discussed like transfer includes sales, exchange, relinquishment, extinguishment, conversion of a capital asset into stock in trade, compulsory acquisition of the capital asset, section 53 capital A of the Transfer of Property Act, right? So transfer includes all these activities. Similarly, under GST, supply includes sales, sale of goods, sale of services, transfer of the goods, transfer of services, barter, exchange, license. Even if you are giving a particular asset on lease basis, on rental basis, that is also amounts to supply. Right, sir? Next. What do you mean by the goods? Definition of goods discussed here, ma. Definition of goods. Section 2, clause 52 of the CGST Act. Goods means every kind of movable property. You can see here, they clearly said every kind of movable property. That means immovable properties are out and out of definition of goods. So immovable properties are not covered under the definition of goods. So it clearly said every kind of movable property. So only movable properties are goods as per the definition of goods by the section number 2 clause 52. Okay, so one, immovable property is excluded. Two, other than money and securities. So even money and securities also outside the definition of goods. But includes, we have some inclusions like actionable claims like unsecured debts, right? Like coupons, vouchers, that all comes under the definition of actionable claims. Growing crops, grass, things attached to or forming part of the land, which are agreed to be severed. Severed means separated before the supply or under a contract of a supply. Right, sir? So these are all covered under the definition of goods. So all kinds of movable properties covered under the goods definition. Then growing crops, grass, all these are also covered under the definition of goods. But goods definition excludes money, securities, and also immovable properties. Okay, ma'am. Next. What do you mean by the service? Look at the definition of service. Definition of service is given by section 2 clause 102. Section 2 clause 102 of the CGST Act. Service means anything other than goods. So anything other than goods is a service. And but you can see here anything other than goods, money and securities. So that means money and securities here also covered under exclusions. You can see the definition of goods, money and securities covered under the exclusions category. So goods excludes money and securities, and even you can see here service excludes money and securities. So money and securities, that's why not chargeable under GST. Right, sir? But includes activities relating to the use of money, its conversion. Sir, pure monetary transactions, I can say that pure monetary transactions, GST not attracted. GST not attracted. Pure monetary transactions. Like I can say that cash deposits, cash withdrawals, loan receivables, loan repayments. These are all pure monetary transactions, doesn't attract the GST. Suppose that today you are depositing some 10 lakhs rupees in your bank account. Banker said like, sir, 18% GST will be attracted. So out of 10 lakhs, right? Out of 10 lakhs, we will charge 18% GST. So that means 1.8 lakhs we will take as GST. Only 8.2 lakhs will be credited to your bank account. Will you accept? Though you are depositing 10 lakhs, end of the day, only 8 lakhs 20,000 will be credited to your bank account. Will you accept for it? No, it's your hard earned money. Why will you accept for that? You don't accept, right? Okay, now. Suppose that you are taking a loan from a banker giving you 50 lakhs loan. Banker said this transaction is attracting 18% GST. So out of loan of 50 lakhs, 9 lakhs we will be retained as GST. We need to pay it to the government. Only 41 lakhs will be credited to your account as your loan. But at the time of repayment, no, you have to repay entire 50 lakhs. So we will give you only 41 lakhs to you, but you have to repay 50 lakhs to us. Will you accept that loan? No, you don't accept. So pure monetary transactions does not attract to GST because money is not covered under the definition of goods, not covered under the definition of services. But you know what? For providing the services, if the banker charges any additional amount, that additional amount attracts GST. Like when it comes to the loans, the banker will charge you like some processing charges, documentation charges, stamping charges. These are all in addition to your loan amount, right, sir? So that processing charges, interest for the delayed payments, penalties for the delayed payments, these will attract GST. Clear now? Next, and its conversion, like from one currency to another currency. Foreign exchange services liable to GST. From one denomination to another denomination, right? You have given the notes and you're converting them into coins. Converting the currency notes into coins, also a taxable service, liable to GST. Okay, next. You can see here regarding the securities. Since securities are excluded from the definition of both goods and services, they are neither goods nor services. However, facilitating or arranging the transactions in securities liable to GST, like services provided by the stockbroking agencies. Stockbroking agencies like Zerodha, Motilal Oswal, Sher Khan, right? These people providing us services in relation to facilitating the transactions. They are creating a platform by using, we are entering into the transactions. We are dealing in securities, buying and selling, right, sir? So services provided by the stockbroking agencies, they are liable to GST. They're taking some service charges and that service charges are liable to GST. Okay, ma? Right. And after that, you have the definition of money. It's not that important from definition of from examination point of view, you can just have a single reading it. Then definition of person, the same definition just like you have studied in Income Tax Act, right? It includes individuals, HUF, companies, partnership firm, AOP, BOI, right? Local authorities and every other artificial judicial person. The same definition which you have learned in Income Tax Act. And next, after that, supplier, the person who's supplying the goods or services, generally whoever supplying the goods or services called as a supplier. But at the same time, it also includes an agent. See, I am in Chhattisgarh. Suppose that I am providing the goods directly to my customers. I'm a supplier. But I'm here in Chhattisgarh. I have some customers in my hometown, Warangal, Telangana state. There also I am supplying the goods, but not by me. I'm supplying the goods through my agent. I have appointed one person there to act as my agent. Are you following now? So I'm also supplying the goods in Warangal through my agent. Right. Even that agent also called as now a supplier. Though he is supplying the goods not in his individual capacity, he is supplying the goods in a representative capacity, still he is called as a supplier. Okay, mom. So that's the first parameter. Supply should be made of a goods or services. Clear? Next. Supply should be made by a supply should be made for a consideration. Second parameter, supply should be made for a consideration. Right, sir? So you can see the running notes here. Supply should be made for a consideration. So there should be a consideration for supply. And any transaction without consideration is not a supply. And we have some exceptions in schedule number 1. In schedule number 1, we have some exceptions, right, sir? And consideration may be in cash or in kind. Sir, you can supply the goods to your service, your customers, and you can take the consideration in the form of a cash or in the form of a service, in the form of a kind. Suppose that, sir, I am rendering services, tax consultancy services. Suppose that I am rendering tax consultancy services. And I provided services worth 20,000 rupees. In return, I've taken 20,000 worth of furniture. Suppose that my customer is dealing in furnitures. Buying and selling of furniture is his business activity. I provided him 20,000 worth of tax consultancy services. So he's ready to give me the cash. But I said, like, I would like to purchase some office furniture. So do one thing, give me 20,000 worth of furniture in return. So here I have received the consideration, but not in cash, in kind. That is also liable to GST. See, whether you're receiving the consideration in cash or in kind, it doesn't matter. What ultimately matters whether consideration existing or not. Okay. Next, consideration can be received either before or during or after the supply. See, if you're receiving the consideration before the supply, it called as an advance. It called as an advance. And during the provision of services, during the supply of the goods also, you can receive the consideration. Or sometimes even after supplying the entire goods, right, sir, you can take the consideration. Generally, in the normal tendency, what happens, sir? We will first supply the goods, and then later we will receive the consideration. We give them some credit period, 1 month or 2 months, like that. We will allow the customers to pay the amount to us after 1 month or 2 months of the delivery of the goods or provision of services. So the consideration can be received before the supply of the goods or services. That is what we call advance. Or during the supply of the goods. Suppose that you're supplying the goods in installments and you're receiving the amount in installments. Ho sakta hai na? Or after the supply of the goods, you have supplied the entire goods and later on you have received the consideration. Next, coming to the security deposits. Sir, when it comes to the security deposit, keep one point in your mind. If the security deposit is refundable in nature, then it is not to be included in consideration. You just ignore about the security deposit. While you are calculating the value of supply, no, ignore about security deposit. No, sir, if security deposit is non-refundable, then it is forming part of consideration. Are you following now? It is forming part of consideration. Means, sir, today we have given a particular contract to Mr. X. And he has to submit the security deposit to us, SD. We call it as SD. Security deposit. Sir, in some 5% of the contract value. Let us assume contract value 1 crore. Contract value 1 crore. 5% of which amounts to what amount? 5 lakhs. So now the contractor has to submit us an SD of rupees 5 lakhs, security deposit of rupees 5 lakhs. Okay. And this 5 lakhs will be refundable after the completion of the contract. Right. And I can say that after the completion of the satisfactory contract. See, generally I'm working in a Coal India Limited right now. No, I'm looking after the establishment department and all the contractual payments I'm dealing with. So I'm releasing the all contractual payments. So every day I'm dealing with the releasing of the security deposits, SD we call. EMD is also there, earnest money deposits. And we have to release this SD only basing upon the contract completion certificates. Right, sir? So a bunch of certificates will be given to us from the different departments. Okay, the contract was completed, satisfactory. All the authorized signatories should be there. Only after all this documentation process, then I will release the SD amount. Are you following now? So whatever the SD that was deposited at the time of the contract, if it is a refundable in nature, then that SD amount is not forming part of consideration. So we have received the SD. and later on we are refunding it to the contractor. Are you following now? So it is not forming part of consideration. But sometimes some security deposits are adjustable to consideration. Adjustable. In that scenario, that means we are not refunding it, we are adjusting to the consideration. So it is always forming part of consideration. Okay, now next. So these are all the points here we are going to discuss. So here it is about supply of the goods or services, whether by the recipient or by any other person. Sir, here in this point, we discussed about, sir, consideration can be received. Can be received from any person. Means always need not be from recipient. Always need not be from recipient. Sometimes you can also receive the consideration from a third party. Yes, possibility is there. See, what ultimately matters end of the day, whether you receive the consideration or not. From whom you received is ultimately not a big deal, sir. So sometimes the consideration can also be received from a third party to the contract. Like we may provide services to the subsidiary company and we will receive the consideration from holding company. We may supply the goods to the branches, but we may receive the consideration from its head office. So whether you receive the consideration or not is ultimately matters. From whom you received doesn't matter, sir. Next, but shall not include any subsidy given by the central government or state government. So regarding subsidy, we have a chart here. So yes, subsidy, if received from central government or state government, not to be included in consideration. From any other person, always forming part of consideration. So whenever you come across the word subsidy, please look into that. Who is giving that subsidy? Okay, now next. Significance of any act of forbearance. Forbearance means tolerance, right? Sir, regarding this, I've given one example here. Yeah, this is the relevant example. So in our Telangana state government, no, one metro rail project is going on, sir. Initially, this metro rail project is given to Mitas Infra. Mitas is actually the company which is formed by the successors of Ramalingaraju, Satyam Ramalingaraju. You might have already heard about this, Satyam Computers. If you reverse Satyam, then you will get Mitas, M-A-Y-T-A-S, Mitas. So Mitas Infra is the company which is formed by the sons of Satyam Ramalingaraju, right? Initially the metro rail project is given to the Mitas Infra, but in the meanwhile, you know, the project has been started, but meanwhile Satyam company fraud comes into the picture. Satyam company was taken over by Tech Mahindra, and then there is some, you know, allegations even been made on sons of Satyam Ramalingaraju, and with that allegations, what happens? Even Mitas Infra also closed, shut down. So after that, the project is given to the L&T Constructions, Larsen and Toubro, right, sir? But initially the project is given to Mitas Infra and they are unable to complete the project within the given time. So Telangana state government has claimed the liquidated damages. Are you following, sir? So that liquidated damages also comes under the purview of consideration. Okay. So here the Telangana state government tolerated the act of Mitas Infra. For tolerating the act of the others, we will claim the liquidated damages, and that liquidated damages are also forming part of the definition of consideration. Okay, sir. Next. Important points. I've already covered all these important points, ma. And look at the note point number 1. Artworks sent by the artist to the galleries for exhibition is not a supply, as no consideration flows from the gallery to the artist. See, you are an artist. You made some paintings. artworks, and you are sending that paintings or artworks to the gallery for displaying purposes. So initially they were displayed, they will be displayed in the gallery. Then the interested persons will come out to the gallery and look at the paintings, and if they are happy with the painting, they will buy. That person will buy and pay the amount to the gallery, then the gallery will be given to you. This is a process. So initially, whatever the paintings you are sending to the galleries for exhibiting them, you are not getting any consideration. So it is not a supply, not liable to GST. Next, donations received by the charitable institutions from individual donors without quid pro quo. Quid pro quo means something for something. Suppose that if I'm giving any donation to a charitable trust, but I'm not getting anything in return. Suppose that I'm giving 10,000 rupees, 10,000 rupees to some Ramakrishna mission. And in return, I'm not getting any benefit out of that donation. Now, whatever the 10,000 I'm giving, the 10,000 is not, forming part of consideration and not liable to GST. Are you following, sir? But suppose like I've given 10,000 rupees to them, but upon a condition. What is the condition? Okay, dear Ramakrishna Mission, I'll give you 10,000 donation, but allow me to display my advertisement boards, hoardings in your premises. And they said, okay, fine. Okay, in this particular premise, you can place your products advertisement. Now here, by giving 10,000 rupees, a conditional donation, I'm getting some commercial advantage. I'm advertising my products in the premises of Ramakrishna Mission. So I'm getting a commercial gain. Now, if there is any commercial gain to you, then whatever the donation you are giving, that is forming part of consideration, it amounts to consideration liable to GST. If there is no commercial gain, just like what Ramakrishna Mission has done is, they have placed my my name like 10,000 rupees received by so and so person, or like they mentioned like good wishes. Now, just because of that particular wordings, I'm not getting any commercial gain. Donation received by Mr. Samba Shiva. That's it. So who is Samba Shiva? What is doing? What is profession? What is business? Nothing was mentioned. Donation received by Mr. Samba Shiva. Good wishes from Mr. Samba Shiva. Right? Donation received in the memory of his father. So because of these wordings, I'm not getting any personal gain, any commercial gain. So not liable to GST. Clear? But if there is any commercial gain, liable to GST. Next. So that's the second parameter about the consideration. Third parameter, supply should be made in the course or in furtherance of business. So whatever the supply you're making, it should be made in the course of your business or in supportive of your business. In supportive of your business, then it should be treated as that particular transaction should be treated as a supply. Okay, now like you can see here, we have a definition of business. Business definition is there. You just go through it once. The definition of business. GST is a tax on commercial transactions. Yes, it should be incurred in the course or in furtherance of business. Then it will be constituted as a supply. If there is, no commercial motive, then it is not a supply, sir. Right. So for any trade or commerce or any other similar activity to qualify as a supply, right, the business frequency, volume, continuity, regularity of such transactions is not a prerequisite. Like there are some seasonal businesses like umbrellas. Generally, the umbrellas business will be having its peak stage during the rainy season. Nowadays, it becomes, usable even in the summer season also, but no one will purchase umbrellas in winter season, right, sir? Okay, now. So hardly it will be having a season of 6 months in a year. 6 months, the business will be shut down. So there is no continuity, no problem. Even if it is for 1 month, even if it is for 1 week, then it is amounts to supply, sir. So regularity, continuity, volume, how much quantity you are selling, whether you are selling 10 lakhs umbrellas or whether you are selling 10 umbrellas, it amounts to business. right? Sorry, ma'am. Yeah, here we are. And you also given some examples. Just go through that examples, ma'am. And exceptions to the term in the course are in furtherance of business, importation of services. I've already told you. And we have a detailed discussion, don't worry. Is any activity done as a part of his job constitute under supply under GST? Like, see, if the supply is made between employer and employee, it is not a supply, not liable to GST, right? Sir, you are a professional person, you are rendering your professional services, yes, amounts to supply. Apart from profession, you have some hobbies, painting is your hobby. Vocationally, you're doing it, not occasionally, vocationally, very rare, but still it is amounts to supply, right? See, because business includes vocation, so sale of goods or service even as a vocation is a supply. You can see here Sundaram Acharya is an actor, so he's a professional actor, but painting is his vocational activity. So the sale of paintings by the actor qualifies as a supply, even though it is a one-time occurrence. Okay, next. Are the services provided by the club or association to its members for consideration constituted as a supply? Answer is absolutely yes. Example, resident welfare association. Sir, for every apartment, there is apartment owners association. So whatever the services provided by these associations to its members, liable to GST, ma. Right. Next, fourth parameter, supply should be made by a taxable person. Who are said to be a taxable persons? Those who are registered. Also includes those who are liable to be registered. So these two people comes under the taxable person category. Only those persons provided services are liable to GST. So supply should be made by a taxable person. Okay, now next, and supply should be a taxable supply, must be taxable under GST. Must be taxable under GST. Okay, sir. Next. Regarding the importation of services, I've already told you, if consideration factor is there, as long as the consideration factor is there, in the course or in furtherance of business is not a relevant factor. See, this provision you have to apply only in the course of importation of services. Let me take you to the running notes for the better understanding. You can see here. Yeah, importation of services. Here you can see, sir, importation of services, case 1, consideration factor is there, existing. In the course or in furtherance of business also there, existing. So you're importing services in your business process and you're also paying the consideration. So whether a supply or not, yes, it amounts to supply. Next, case 2, you are importing services, you're paying consideration, but is not in the course or in furtherance of business. Suppose that I have my brother in USA, I'm importing certain services from him, I'm paying consideration also to him, but whatever the services I'm importing, it is for my personal purposes, not in relation to my business. It is in relation to my personal purposes. So it is not in the course or in furtherance of business, but still it is to be treated as supply because consideration is in existence. I'm paying consideration to him, even though he's a related person to me. He's my relative, but still I'm paying consideration. So consideration is in existence. So amounts to supply. Case 3, sir, I'm importing services in relation to my business only, but I'm not paying any consideration. Right? See, my brother was an architect. I'm receiving services in relation to my office building, architect services in relation to my office building. So in the course of business only I'm receiving, but I'm not paying any consideration to him, not even a single rupee. Still it amounts to supply because I'm receiving the services in the course of my business. Now look at the fourth case. I'm importing services I'm not paying any consideration, and the services are also not in relation to my business. So in this scenario, it is not a supply, because you can see here consideration is missing, and in the quotes are in furtherance also missing. When both are missing, it is not a supply. Are you following now, every one of you? Next. So after that, supplies without consideration. Section 710 read with schedule 1. I have already told you, sir, concept of deemed supplies. Concept of deemed supplies. 4 transactions, right, sir? So schedule 1 deals with what ma? Even though there are some transactions without consideration, they are to be treated as supply. Okay. Now, first case, permanent transfer or disposal of business assets. I've explained you here with an example, right? Permanent transfer or disposal of business assets. Infosys Technologies disposed 100 old computers without any consideration to a charitable school, right, sir? So here, supplier is an Infosys Technology and recipient is a charitable school. And what is supplying, sir? Goods. Permanent transfer, the computers becomes old, obsolete, because when it comes to the electronic items, no, especially the computers, laptops, the technologies keeps on changing very frequently, right? Now, after 2-3 years maximum, the technology changes in every 6 months, every 3 months, but after 3 years it becomes obsolete. So what Infosys Technology decided to dispose of all that 100 old computers permanently, and of course they are giving it as a donation to a charitable school, because even if they sell in the open market, they will get hardly 5% or 10% of its original cost, right, sir? So why unnecessarily taking that very less amount? Okay, let it be a kind of donation, so given to a charitable school at free of cost, all the 100 computers. Sir, even though here consideration factor is missing, no, but still it is amounts to supply. The only condition is that whatever the goods you are disposing of, on that particular goods, you might have already been claimed input tax credit. You must have already availed of input tax credit. Suppose that these computers purchased in 2018. In 2021, disposing of is going on. In 2018, they purchased for 10 lakhs rupees, on which CGST paid 9%, SGST paid 9%, put together 1,80,000. Immediately when these 100 computers are received into the premises, Infosys already claimed input tax credit. Okay, now. So whenever you're permanently transferring or disposing of your business assets on which input tax credit has already been claimed, even though you're transferring them without any consideration, they are amounts to supply. Next, second case, supplies between the related persons are distinct persons. So any transactions between the related persons in the courts or in furtherance of business to be treated as deemed supply, irrespective of the fact whether the consideration is involving or not. So as long as you are a related person, then consideration factor is a secondary thing. But it should be made in the courts or in furtherance of business. It should be made in the courts or in furtherance of business. Okay, now next, distinct persons. Sir, what do you mean by the distinct persons? So before going to understand who are the distinct persons, first you should try to understand some basics of registration. Sir, under GST, it is a state specific registration. State wise, you have to take the registration now. State wise. That means if you have 10 branches in 10 different states, then you have to take 10 separate registrations. You have to take 10 separate registrations. Okay, now Sir, is there any concept of centralized registration under GST? Can I take a single registration for all these 10 branches? No, you cannot. No concept of centralized registration. Okay, ma, you can see here example, X Limited manufacturing of the goods, engaged in manufacturing of the goods and based from Hyderabad, Telangana state. They also have the branches in Bangalore, Karnataka, Mumbai, Maharashtra, Chennai, Tamil Nadu, Kolkata, West Bengal. So they have one headquarters that is in Hyderabad, 4 branches in 4 different states. So that means now in totally, they have to take a separate registration for headquarters in Telangana state, plus 4 separate registrations for 4 different branches in 4 different states. So all put together, now X Limited has to take 5 separate registrations. Okay, now with respect to all these 5 registrations, even though the owner is one, but in the eyes of the GST department, they have to be treated as distinct persons. So X Limited headquarters, Mumbai branch, distinct persons. X Limited Bangalore branch, Chennai branch, distinct persons. Are you following now? Right? You can see TCS Hyderabad rendered services without any considerations of TCS Bangalore, Tata Consultancy Services. See, both the establishments are belonging to same owner, but since they are locating in 2 different states, 2 separate registrations are needed. When there are 2 separate registrations, they will be treated as a separate persons, distinct persons. Are you following now? Right. So you can see here, under GST, centralized registration is possible only in one case. And what is that case? You can see here, all the branches should be located in the same state and all of them should be engaged into the same line of business. Then centralized registration is possible. Like example number 3, you can see XYZ Limited is a manufacturer of the goods, headquarters in Hyderabad, Telangana. And they have the branches in Warangal, Karimnagar, Rangareddy. And all these districts are belonging to the state of Telangana. Are you following, sir? So headquarters in Telangana state and all the branches in Telangana state. And all of them are into the same line of business. Now, in this case, we can say centralized registration is possible. Now, that means with respect to all the branches and headquarters, we can take a single registration. Okay, now, next. So location of the business, same state, nature of the business, same line. Then centralized registration is possible. Location of the business in same state. That means all the branches in same state, but they are into different segments. Like one branch is dealing with textile products, the other branch dealing with chemical products, the other branch is engaged in the rendering of services, the other branch having a hotel business. So different business segments, even though all the branches are in same state, but since they are into the different business segments, separate registration is needed. Next, third case. So location of the business in different states without any second thought, separate registration. Sir, all of them are into the same line of business. Still, since the branches are in different states, separate registration is needed. Next, different branches are in different states and they are into different business segments, separate registration. So there is only one possible case where you can go for the centralized registration. That is, all of your branches should be located into the same state and all of them into the same line of business. Then only centralized registration is possible. Okay, now, next. Second transaction, supply between the related persons and distinct persons completed. Next. And after that, you have some related person definition here. You can just go through it. Distinct persons, just now I have discussed. Stock transfers. So you are transferring the stock from one branch to another branch, locating in different states. Amounts to supply, liable to GST. Right, sir? So transactions between different locations with separate registrations of same legal entity will qualify as supply under GST. Right. Next. Is a supply of goods or services both between the employer and employee constitute as supply? Answer is no, because employer and employee covered under the definition of related persons. If you go through the related persons definition now, You can see here, this is a related person definition. And here you can see employer and employee, related persons. Any transactions between the related persons, not a supply. Okay, sir, you can see here, by reading the above definition of related persons, we can surely say that the employer and employee are related persons. However, the services provided by the employee to his employer in the course of employment shall not be treated as a supply of service. Okay. In that case, is gift taxable under GST in the course of employment? Sir, if the gifts are provided in the course of employment, not amounts to supply, not liable to GST. But if it is not in the course of employment, liable to GST. Okay, now. So you can see here, if the gift is made in the course of employment, right, supplied by the employer to the employee in terms of contractual agreement, then it will not be subjected to GST. If it is not in terms of contractual agreement, not in the course of employment, then it is a supply. Okay, ma'am. Right. Next. Supply between principal and agent. This is the third case under deemed supply concept. Ma. So whenever there is a supply happening between the principal and agent, right, even though the consideration factor is missing out, liable to GST, ma, deemed supplies. Right. And fourth one you can see here. These are all about the transactions between principal and supply, ma. Right. Principal and agent. Supply of the goods by the principal to agent and vice versa shall be supplied irrespective of the fact there is no consideration. Okay, ma. And here the important point is that supply of services are not covered here. Only the supply of goods between principal and agent amounts to supply. Okay. Next. Importation of services without consideration. See, if consideration factor is missing out, no, it should be made in the course or in furtherance of business. In the course or in furtherance of business. Then it amounts to supply. Okay, now. So a related person, supplier is from out of India, recipient is from within the India, and the services receiving in the course are in furtherance of business, so amounts to supply. In this diagram, you can see here consideration is not there. So even though the consideration factor is missing out, still you can be deemed it as supply. Okay, now the same explained here under in a diagram way, ma. So with consideration, if consideration is there, is always taxable, irrespective of the fact whether you have received within the in the course or in furtherance of business or not. But whenever there is no consideration, then it must be from a related person and it should be in the course or in furtherance of business. Then only it is taxable. Otherwise, it is non-taxable. Clear now? Right. Next. So that's about the schedule number 1. Section 7.1c read with schedule number 1. Deemed supplies. Okay, sir. Next one. Activities to be treated as supply of goods or supply of services. Schedule 2. Earlier, now before GST, there were so many transactions which involves both goods and services, which leads to a lot of complications regarding the levy of taxes. Like if you take the example of restaurant transactions involves both goods and services. So goods attract VAT and CST, services attract service tax. Now the restaurant people under confusion, dilemma. Should I levy VAT and CST or should I levy only service tax or should I levy both? Okay, what to do here? Let us levy both. Let the customer die. Okay, now. So what all the restaurant people used to do is they started levying both VAT and service tax because it involves both goods and services. Like works contract transactions, which involves both goods and services. So which attracted both VAT and service tax. Because of this, what happens is the tax burden and consumer increased. And there is some complexity, dilemma. Okay, now. But now all that particular lacunae, dilemma, everything have been cleared under GST, because now we have a clear cut information like this is to be treated as supply of goods only. This is to be treated as supply of services only. That's it. Okay, right. Now let us see what are the particular transactions. So first one, transfer of title of goods. Now what is this transfer of title of goods? Title here means be ownership. Ownership in the goods. See, whenever there is a ownership in the goods is getting transferred, right, then it is a supply of goods. By default, it is a supply of goods. Sir, I purchased an air conditioner. Right, recently I purchased air conditioner for my quarter because here in Chhattisgarh, the environment conditions are extremely hot. The humid levels are very high. So you cannot survive here without having an air conditioner. Anyhow, in office, our office is air conditioned, right? And my room, my cabin is air conditioned. So I need to purchase an air conditioner for my quarter also. I purchased worth some 40,000 rupees and I paid the GST also. So now whatever the 40,000 I paid to the Reliance. I purchased in Reliance Distils. So now I own the air conditioner now. So the ownership rights in that air conditioner transferred to me. Okay, so it is amounts to supply of goods. So whether that ownership is transferred immediately or at a future date, as long as the ownership is getting transferred, whether immediately or at a future date, it is amounts to supply of goods only. Okay, now, so we are transferring goods only, but not transferring ownership. Then it is amounts to supply of services. Like, sir, I've taken air conditioner on a rental basis. Only for 3 months I've taken on rental basis. So I have taken an air conditioner, but ownership in that air conditioner not transferred to me. So it is amounts to supply of services. Are you following now? But if ownership also transferred to me, supply of goods. Clear? Any transfer of right in goods, undivided share in goods without a transfer of title. So ownership is not getting transferred. Supply of services. Next. Any transfer of title in goods under an agreement which stipulates that the property shall pass at a future date, means the ownership is getting transferred at a future date. Then supply of goods. Okay, land and buildings, lease, tenants, easement, right? We are giving the land on lease basis. So that means ownership right is not getting transferred. Supply of services. Treatment or process to another process goods like job work, supply of services. Transfer of business assets, supply of goods, because ownership is also getting transferred. Okay, now next, goods held or used for business are put to use for private use. Like, see, I'm using the laptop for my professional purposes now. After a few years, I'm giving this laptop, I'm going to give this laptop to my child for his educational purposes. Sir, here I'm giving the goods, but ownership stays with me only. Even though I'm giving my laptop to my child for his educational purposes, I'm now transferring the ownership. Hence, it is a supply of services. Next. Goods forming part of the assets of any business carried on by a person who ceases to be a taxable person. Right. So that means I'm winding up my business, sir. Whatever the furniture, whatever the goods left over in my business, I'm completely selling them. I'm selling them. Ownership is also getting transferred. So supply of goods. Okay. Renting of immovable property. Right. You're giving the immovable property on a rental basis, but you're not selling that immovable property. So ownership is not getting transferred. Supply of services. Next. Construction of complex building or civil structure, etc. You can see here, it is clearly a supply of services because you're not transferring the ownership rights here. Sir, I have a vacant land in my hometown. some 200 square yards vacant land. Now, on that 200 square yards, I've appointed a contractor, a builder. I asked him to construct a independent house property. Now, what I'm getting from the builder? Construction services. So supply of services. Are you following now? Suppose that I'm purchasing a flat in an apartment. I'm purchasing a flat in an apartment. So the apartment construction already done and the flat is ready to occupy condition. It is under ready to occupy condition. Okay, sir. Now it amounts to supply of goods. Are you following, sir? Because I am purchasing a ready-made flat, ready to occupy. So I can say that I'm purchasing an immovable property. So ownership is getting transferred to me. Okay. So it is not a supply of service. It is a supply of goods. So that's why you can see here, construction of a complex building, civil structure, a part thereof, including a complex or building intended for sale to a buyer, wholly or partly, except where the entire consideration has been received after the issuance of completion certificate by the competent authority or after its first occupation, whichever is earlier, except where the entire consideration has been received after the issuance of completion certificate. So generally when the completion certificate is issued, when it is under ready to occupy status. See, after the completion of the construction, no, the municipal authorities will come for the verification whether the construction has been done as per the rules and regulations or not, as per the norms or not, right? Whether he followed all the safety norms while constructing this particular apartment or not. So they will verify and then they will give the completion certificate. Right, sir? See, if you are purchasing an immovable property after it is got the completion certificate, that means simply you are purchasing an immovable property, supply of goods, not a services. But if you have purchased a flat while it is under construction, sometimes what happens? No, whenever there is a venture is starting out, you know, they will offer the flats, pre-bookings and Chusarama, pre-bookings. So you booked a flat even before the construction started, you booked a flat in that apartment. Now that amounts to supply of services. Here no, because even the construction was not started, or even you can take the construction started but not completed, means completion certificate has not been given, even though you paid the full consideration, but completion certificate is not given, hence it amounts to supply of services. Okay, next. Temporary transfer or permitting the use or enjoyment of any intellectual property rights, IPRs, like patents, copyrights, right? Trade names, logos, designs, drawings, franchisee, all these are comes under IPRs. So temporary transfer of a patents, supply of services, software. Point number D is about software related services, supply of services, right? And transfer or right to use any goods, supply of services. Works contract, supply of services. Supply of goods by an association to its members. What is supply of goods? Okay, next. And you have some examples here. You just go through that example, whether that particular transaction amounts to supply of goods or supply of services. Okay, next. After that, you have the concept of negative list. That is schedule number 3. The transactions which are not at all taxable under GST. They are neither treated as supply of goods nor treated as supply of services. Neither treated as supply of goods nor treated as supply of services. What are they? Let's have a quick look on it. Services by an employee to the employer in the course are in relation to his employment. This we have already discussed because employer and employee are the related persons, and any transactions between the related persons not amounts to supply, not liable to GST. Okay, now, right? Next, but you have to remember something here. The services provided outside the ambit of employment for a consideration would qualify as supply. If the services provided by the employee to the employer, not in the course of employment, not in the course of employment. So then that is amounts to supply liable to GST. Like, sir, assume that I'm working in X limited company now. X limited company having an associate company Y limited. I'm an employee of X limited. Wait, let me check. There is an example for this. Renting of immovable property, I've already told you. If the immovable property is given on let out basis for residential purposes, not liable to GST. For commercial purposes, yes, supply of services liable to GST. Okay. Construction contracts, I've already told you, before or during the construction of property, if the consideration is paid, supply of services, and after the completion of construction, not a supply, not liable to GST. Okay. And then immediately after that, composite and mixed supplies. Okay, fine. So employer and employee, I am an employee of X Limited, right? So whatever the services I'm provided as an employee to X Limited, not liable to GST. But after the completion of working hours, office hours, I am spending 2 hours for rendering my services to Y Limited, an associated company of my employer. See, I'm providing the services to Y Limited here, but I'm not an employee of Y Limited. Whatever the services I'm provided to Y Limited, not as an employee, liable to GST. Okay, next. Services provided on contract basis, liable to GST, because there is no employer and employee relationship. It is principal to principal basis, liable to GST. Okay, now any amount paid for not joining in a competing business, non-compete fees. Non-compete fees. Suppose that I am presently working with CIL, Coal India Limited. So let us assume that after 10 years, I've resigned here and I would like to join with Singareni Collieries. But CIL, before accepting my resignation, they put a condition. You can join in any company except Singareni Collieries. And for that condition, I've asked some consideration. And CIL paid me 10 lakhs consideration. Non-compete fees for not joining a competing business, whatever the amount received by the employee here, liable to GST. Okay, that's the first transaction between the employee to the employer. Second transaction, services provided by the courts and tribunals like district courts, high courts, supreme courts, not liable to GST. And this one about services provided by the government authorities, like services provided by the MPs, MLAs, right? Panchayati members, members of municipalities, local authorities, right now. And services provided by President of India, Vice President, Prime Minister, Chief Justice, Speaker of Lok Sabha, CEC, Chief Election Commissioner, C&AG, Comptroller and Auditor General of India, Chairman of UPSC, Attorney General of India. All these services are exempted from GST. Okay, ma'am. Next. Fourth one is about services which we are going to receive after our death. Services of funeral, burial, crematorium, mortuary, including the transportation of deceased, all these services are not taxable under GST. So if you would like to take any services without any GST, what do you have to do? Die. No, sir, I'm just kidding. But the provision is just like that. Whatever the services which we received after our death, all that services are exempted. Next. Sale of land and subject to paragraph 5B of schedule 2, sale of building. See, land and building are immovable properties. Immovable properties, as we have already discussed, not covered in the definition of goods, not covered in the definition of services. So neither a good nor a service. So hence not liable to GST. Right. Next, actionable claims other than lottery, betting, and gambling. Any transactions in relation to actionable claims not liable to GST. Okay. Next, granting of alcoholic liquor license. Sir, here only the granting of alcoholic liquor licenses. Right. See, states like Telangana state is majorly depending upon the revenues from the selling of the alcoholic liquor. Right. So whenever there is new liquor shops are opening, what happens is first they will offer the licenses. So without having a liquor license, you cannot open a liquor shop. So once in a year or once in a 2 years, state governments offers liquor licenses. Right, sir? So now for this, certain license fees will be received by the state governments, and that license fees here exempted from GST, sir. And for your kind information, only here the license fees received for granting of alcoholic liquor license only exempted from GST, not all other license fees. Okay, ma. So you can see here, services by way of granting of alcoholic liquor license by the state governments are treated neither as a supply of goods nor as a supply of service, so not liable to GST. It may be noted that services provided by the government to the business entities, including by way of granting of privileges, licenses, mining rights, natural resources, such as spectrum, etc., against which the payment of consideration in the form of fees or royalty, etc., they are taxable under GST. Only in relation to the alcoholic liquor license, not taxable, ma. Remaining all other natural resources, licenses, mining rights, they're all taxable under GST. Okay. Right. So now the last topic under the chapter number 2, composite and mixed supplies. Now, what is this concept of composite and mixed supplies? So generally, these are not a new concept, sir. Earlier under service tax, we used to have these concepts with a different names like naturally bundled services, artificially bundled services. We used to have a concept called bundle of services, where we have two different topics, natural bundle and artificial bundle. The same repeated under GST with a different names like composite supplies and mixed supplies. So let's look into the running notes once. You can see here, before GST, that is in service tax, we used to have a concept called bundled services, natural bundle of services, artificial bundle of services. Now the same in GST, we are calling as composite supplies and mixed supplies. Now let's look into the composite supplies. And I've given you one example here, right? Short-term accommodation services. First of all, composite bundled services. Bundle means more than one. Sometimes what happens is, in order to providing a particular service, a single service, in order to provide a single service, you have to provide the multiple services. Only when you provided the multiple services, that single service will get completed. Example, short-term accommodation services. So now, presently I'm working in SECL, Southeastern Coalfields Limited, right? And let us assume that on a temporary basis, like we used to have some, we will be having some training programs, which will happen in Ranchi, right? Dhanbad, where we have some IICM, Indian Institute of Coal Management. Some training center is there, right, sir? So in the training centers, we will be having training. Once in every year, we'll be having some 1 week or 10 days training program. So we went to IICM, right? And there we stayed for 10 days. For 10 days, we got the rooms in a hotel. So our company booked us rooms in a hotel. So that means our company is receiving short-term accommodation services from the hotel. So whenever you book a room in a hotel, what are the different services you are getting? Accommodation services. This is main predominant supply, right? You're mainly booking a room in a hotel for what? Accommodation purposes. Then you will get laundry services, room keeping services, then supply of food and beverages, and as well as security services. Okay, now, so here among these, accommodation services is a predominant supply. Remaining laundry services, room keeping, supply of food and beverages, securities, these are all called ancillary supplies. And suppose that the hotel charging us 2000 rupees per day. Now this 2000 includes accommodation charges, laundry charges, room keeping charges, and charges for food and beverages and security. Yes or no? Right? Now here, I can say that short-term accommodation services are the best example for composite supplies, because composite supplies as our natures are like that. You cannot eliminate any of these services. You cannot expect a single service from this bunch. Like you went to the hotel and you said to the hotel person, sir, among these all, I want only accommodation services. I don't want laundry services. I can wash my own clothes. I don't want room keeping services. I know how to maintain my room clean, neat. I don't want any food and beverages. I can cook for myself. And I don't have any security services because I don't have any valuable things with me right now. Now tell me, what is the tariff rent for the room? The hotel people said like 2000 per day. What, man? I don't want any laundry services. I don't want any room keeping. I don't want any supply of food and beverages. I don't want any security services. I want only accommodation service. Tell me, what is the tariff rent? 2000 per day. See, irrespective of the fact whether you are using all these services or not, you have to pay the full amount, 2000 rupees, because these services will be advertised as a whole, as a group, and these will be provided as a whole, irrespective of the fact whether you are using them or not. You have to pay the total amount, 2000 per day. Are you following or not? These are all the composite supplies, and how they are going to be taxed. So these different services attracts different rates of GSTs. Now what you have to see is, among these bunch of services, look at what is a predominant service. So you booked a hotel room predominantly for accommodation purpose. So whenever you're booking a room in a hotel, you're not booking for laundry services. You're not booking predominantly for a room keeping. You will book for accommodation. So the predominant supply is accommodation service. Look at what is the rate of GST applicable to it. The rate of GST applicable 18%. Okay, on the entire 2000 rupees, you have to apply 18%. Then you'll get the GST amount. So whatever the rate applicable to the predominant supply, the rate is applicable to the whole of supply. Okay, ma'am. I can give you one more example here, like air transportation services. So whenever you're booking a flight, so we went from Bilaspur to Ranchi by flight for attending our training program. So I booked a ticket from Bilaspur to Ranchi. Sir, here, what is a predominant supply? Transportation services. Predominant supply is transportation services. But whenever you book the ticket in a flight, apart from the transportation services, you'll also get launch services, supply of food and beverages, entertainment services, and insurance services as well. Air insurance. So here, launch access, supply food and beverages during the transit, entertainment services, air insurance, all these are ancillary supplies. Sir, here the airfare, assume that 8000 rupees. I paid 8000 to book this ticket. Now in this 8000, it includes transportation charges, right? Supply of food and beverages, entertainment, and everything. See, whether you have received all these services or not, you have to pay 8000 rupees, yes or no? So air transportation services, best example for another, best example for composite supplies. All these services are advertised together, and you cannot expect a single service alone here, right? You will get all this bunch. So it is up to you whether you are going to use them or not. Okay, that's the concept of the composite supply. And what is the rate of tax applicable? Look at the predominant supply. Whatever the rate is applicable to the predominant supply, apply the entire rate to the for the whole value of supply. Next, coming to the next one, mixed supplies. So the nature of mixed supply is like, here also you will get bunch of supplies, but If you don't want any of them or some of them, you can reject them and no need to pay for them. Only those who you selected from the bunch, only pay for them. But bus, right? See, suppose that you are getting a bunch of 5 services. Out of 5, you are rejected 3. So you need not pay for that 3 services. You have selected only 2, only pay for that 2 services only. That's it. Here, these are like not, you know, a kind of bunch of services. If you take out one, it will affect the entire value of supply. No, not like that. See, when it comes to composite supply, no, if you take out one supply from the bunch, the whole supply will get affected. But when it comes to mixed supply, no, if you take out one supply out of the bunch, if you reject that rejected supply cannot affect the whole supply, because here each and every supply is independent of each other. Okay, now I've give you one example here. Bajaj Electronics, we purchase an air conditioner, right? So you predominantly went to the electronics shop for purchasing an air conditioner. And after purchasing the air conditioner, the shop person said like, so purchase stabilizer also, which will control the electricity fluctuations. Make sure that your AC won't affected by electricity fluctuations. So you're purchasing AC worth 40,000, sir. Spend 10,000 out of it, 10% out of it. Your life of the AC will increase. We will convince and we will purchase. And after that, we will ask for insurance. Take insurance, sir. Take AMC, sir. Right. And after that, after you purchasing the AC, no, right, you need to get it transported from the showroom to your house. Then installation charges. So here, how many services are involving? You're buying a good, you're buying stabilizer, you're taking insurance services, AMC services, annual maintenance contract, transportation services, and installation services as well. All this put together, it costs you 52,000 rupees. Now, it is a concept of mixed supply, because those who are purchasing the AC need not purchase stabilizer. Suppose that whatever the air conditioner you purchase, it's already inbuilt having a stabilizer. So there is no need of buying an external stabilizer. Are you following now? And no need of buying an additional insurance when company itself, see, I purchased an air conditioner, I've already told you, where company itself giving the complete insurance for 5 years warranty, 10 years compressor warranty is there. So what is the need of taking an additional insurance? Because an AC having a shelf life of hardly 5 years. Anyhow, after 5 years, we will get it scrapped out and we'll purchase another AC, new AC. AMC services. There is no need to take the AMC from that company itself. You can take from outsider. Are you following now? So you can reject any of these and you can need not to pay for that rejected services, right? So that is the nature of mixed supplies. Here, each and every supply is independent to each other. Now, in this scenario, sir, tell me how to take the rate of supply here, GST rate. Now, among all these supplies, bunch of supplies, take the highest rate of GST and apply that highest rate of GST to the entire value of supply. To the entire value of supply. Clear? See, initially, I've given 18% is the rate of GST for AC, 12% for stabilizer, insurance some 5%, AMC 5%, transportation 5%, installation 5%. Different supplies attracting different rates of GSTs. So the highest rate of GST is to the AC. This 18% I have applied for the entire value of supply. Later on, I've changed my example, said like 12% is the rate of GST applicable for AC and 18% rate of GST applicable for 18%. Insurance services. So here the highest rate of GST is for insurance services. This highest rate you have to apply for the entire value of GST. Even though the insurance is a small factor here, air conditioner is a large factor, but still you need to take simply just write down all the rates of GSTs attracting to all the services involving in this supply. Among this, take whichever is higher. So the higher 18%, the 18% you have to apply for the entire value of supply. Clear, no? Right. So that's the concept of the mixed supplies. So with that, we have completed the second chapter, composite and mixed supplies. Okay, now. And after that, I've given you some examples for composite and mixed supplies and then problems for classroom discussion. So in this session, we have completed marathon of second chapter of GST. Okay, so in the next chapter, chapter number 3, I'll discuss in the next marathon video. Clear, sir? So till then, have a good day and good night. Stay home and stay safe. Very good morning, students. So welcome to the GST marathon classes. So in the last session, we have completed chapter number 2 marathon class. Now let's time for the chapter number 3, levy and collection of GST. Levy and collection of GST. Now in this chapter, the most important topics are, here you can see the running notes of chapter number 3. So the most important topics, I've identified 3 important topics from this chapter. Number 1, reverse charge mechanism, RCM. Number 2, composition scheme for the small suppliers. And number 3, optional rate scheme. These 3 are the most important topics from this chapter. And you can expect at least one question from any of these 3 topics, either from reverse charge mechanism, composition scheme, optional rate scheme. Okay, ma? Right. You can see the very introduction. The very basis for the charge of tax in every tax and statute is a taxable event. And we know that the taxable event under GST is a supply. Right, sir. And there are different types of GSTs, CGST, SGST, UTGST, IGST, and CES. Right, sir. In the case of intrastate supplies, CGST and SGST, or CGST and UTGST is leviable, and in the case of interstate supplies, IGST is leviable. Right, sir. Intrastate means within the same state. Within the state. So the supplier and recipient both are from the same state. Intrastate supplies. Then CGST levied by the central government, SGST levied by the state government. Right, sir. Next, in the case of interstate supplies, that means between 2 different states. Between 2 different states, IGST is leviable, sir. If the transaction is happened between 2 different states, that means supplier is from one state and the recipient is from another state. Then IGST is leviable, and who will levy this? Central government levy the IGST. What do you mean by the intrastate supplies? Just I've said just now, supplier location and place of supply falls in the same state or union territory, having their own state legislature. And interstate supplies, supplier's location and place of supply are different. Right, sir. So falls between different states or between a state and union territory. Okay, now. And definitions from this chapter, the very important definitions I've covered here, like exempted supplies. Section number 2, clause 47 deals with the definition of exempted supply. Sir, what is this? Section 2, clause 47 of what? Section 2, clause 47 of CGST Act. Section 2, clause 47 of CGST Act 2017. Okay, now, right? So now what do you mean by the exempted supplies? You can see in the running notes, I've explained you with the help of the notes here. Exempted supplies means it includes the nil rated supplies. Nil rated supplies and the supplies which are wholly exempt from tax as per the provisions of section 11 of the CGST Act or section 6 of the IGST Act. And then it also includes non-taxable supplies. Sir, what do you mean by the non-taxable supplies? The supplies which are not at all taxable under GST, like petrol, diesel, aviation turbine fuel, natural gas, alcoholic liquor for human consumption. These are not yet covered under GST purview here. They are still taxing under the existing taxation regime only, like excess duty, VAT, service tax. Right, sir. These are not being introduced into GST. So they are called as what? Non-taxable supplies. So exempted supplies covers 3 different types of supplies. Nil rated supplies, wholly exempted from tax, the supplies which are wholly exempted from tax and non-taxable supplies. Okay, sir. So generally, if you look at the GST rates, there are three possibilities, sir. If you go through this particular app, GST Rate Finder app, in that app, you can find a table like this with serial number, activity type, and a rate of GST. Okay, serial number, activity type, and rate of GST. There are some types of activities, transactions, where you will be having the rates under the rates of GST column. Rates may be 0%, 5%, 12%, 18%, 28%, like that. Right, sir. So whenever you're finding a particular percentage here in the rate of GST column, that particular supplies are called taxable supplies. It also includes 0%. We have a separate concept called zero rated supplies. Zero rated supplies, which includes exports and supplies made to cess supplies. Zero rated supplies. These supplies are taxable, but taxable at 0%. Okay, so they're also covered under exempted supplies category. Next, sorry, taxable supplies category. Taxable supplies category. And the second type of activities you will find in the rate of GST column, you will find a nil. The wordings nil. So they are covered under exempted supplies. And the third category type, where you will find the wordings exempted in the rate of GST column. So in the rate of GST column, if you find any percentage, including 0%, it is a taxable supply. But in the case of rate of GST column, if you find the wordings nil or exempted, so they are covered under what, Amma? They are covered under exempted supplies category. Okay, so exempted supplies includes nil rated supplies, the supplies which are wholly exempted from tax, and non-taxable supplies. Clear? That's the definition, sir. And after that, you will be having the definition of aggregate turnover. You can see here, after exempted supplies, you will be having a definition called what? Aggregate turnover, section 2, clause 6. Section 2, clause 6. So aggregate turnover definition, I can say it's a very important definition, sir, because this definition is we are going to study in almost 3 to 4 chapters. This definition you are studying here, and even in the second, 4th chapter you are going to study, and even in the 6th chapter you are going to study, 7th chapter you are going to study the definition of aggregate turnover, section 2, clause 6. Now, what do you mean by the aggregate turnover? You can see the running notes here. First of all, before going to learn about aggregate turnover, first of all, let us try to understand what is the purpose of calculating aggregate turnover. Why should we calculate aggregate turnover? The answer is, sir, if a particular person is liable for registration or not, if a particular person is eligible for composition scheme or not, is eligible for optional rate scheme or not, this will be decided by his aggregate turnover. By his aggregate turnover. So without knowing the aggregate turnover of that particular person, you cannot say like he is liable for registration. You cannot say like he is eligible for composition scheme. He is eligible for optional rate scheme. You cannot say without knowing his aggregate turnover. So in order to decide whether a particular person is liable to registration or not, whether a particular person is eligible for composition scheme or optional rate scheme or not, first of all, we have to calculate his aggregate turnover. Okay, ma. So these are the main purposes behind calculating the aggregate turnover. Okay. Now let us try to understand what do you mean by aggregate turnover. Sir, we have 2 parts here. The definition is discussed in 2 parts. Aggregate turnover includes, aggregate turnover excludes. First, look at the inclusions. Aggregate turnover includes all taxable supplies, also includes all exempted supplies. You will get a dot. So taxable supplies, okay, good. So aggregate turnover includes taxable supplies, good. But sir, what about this aggregate turnover includes exempted supplies? Why exempted supplies are being covered under aggregate turnover? Sir, here we are calculating aggregate turnover only to decide whether you are liable for registration or not, whether you are liable for composition scheme or not. That's it. See, on aggregate turnover, you are not going to pay any tax. Aggregate turnover is different, taxable turnover is different. Clear? Only on taxable turnover, you are going to pay the tax. Every one of you. Okay, now. So that's why aggregate turnover also includes exempted supplies. Next, aggregate turnover includes all the exports of goods and services. And aggregate turnover includes all interstate supplies. The supplies which you made out of your state. And this you have to be calculated on all India basis, computed on all India basis. So then what do you mean by all India basis? Right. Look at here, the example. Mr. X, a supplier, he's having 3 branches, ma. Branch 1 in Hyderabad, Telangana, branch to Mumbai, Maharashtra, and branch to Chennai, Tamil Nadu. And you can see the turnover from Hyderabad branch, they got a turnover of 15 lakhs, Mumbai branch 12 lakhs, Chennai branch 13 lakhs. All the total put together 30 lakhs. Right, sir? And we know the threshold for limit for registration, right? For Telangana state, it is 20 lakhs. For Maharashtra and Tamil Nadu, it's 40 lakhs, assuming that he is exclusively engaged in the supply of the goods and within the same state, right? Sir, here you can see the aggregate turnover. See, if you look at the turnover state-wise, in none of the states, his turnover exceeded threshold limits. None of the states. Right, sir? So that means he can say that I'm not liable for registration because in none of my states, my turnover exceeded threshold limits. So he can be escaped from the registration by saying like this. So that is why what the department said is, whatever the aggregate turnover you are calculating, you have to calculate on all India wise. Means you have to aggregate your turnover from all the 3 branches, all the branches you have, and then look at whether that aggregate turnover exceeded the threshold limit or not. Right, sir? Here your aggregate turnover is 30 lakhs rupees, which is exceeded the threshold limit of 20 lakhs. So I said like Mr. X is liable for registration. Are you following or not? See, that's why the definition is called aggregate turnover. You have to aggregate the turnover of all your branches across the India. Then only you have to see whether that aggregate turnover exceeded the threshold limit or not. Okay, next. Aggregate turnover excludes inward supplies taxable under reverse charge mechanism. Inward supplies means the supplies which we bought, we purchased, the goods which we purchased, the services which we received, they are called as inward supplies, right? So the inward supplies which are taxable under reverse charge mechanism, right? So that means, see, I am the supplier of the goods, right, sir? See, I'm also engaged in inward supplies. See, I'm a wholesaler, sir. I'm purchasing the goods from manufacturer, then I'm selling the same to the retailer. So being a wholesaler, right, sir? From manufacturer, he will purchase the goods and the same will be sold to retailer. So whenever he's buying the goods from manufacturer, it will be his inward supply. Whenever he's selling the goods to retailer, it will be his outward supply. Suppose that these inward supplies are taxable under reverse charge mechanism. Means here the wholesaler has to pay the GST on these inward supplies. Now wholesaler saying like, sir, I'm paying on all these inward supplies, I'm paying the GST. So let me take these inward supplies as my turnover. But department said no. No, Baba, no. Right, even though you're paying the tax on your inward supplies under reverse charge mechanism, they are not forming part of your aggregate turnover. Right, sir? Next, all types of taxes, CGST, SGST, IGST, UGST, right, and cesses, these are not forming part of your turnover. Are you following, sir? Let us say, look at this example. Sir, we purchase an air conditioner for 40,000 rupees. Right, where the cost element is 35,000 and GST is 5,000 rupees. Now Out of this 40,000 rupees, how much is your turnover, sir? Can you say the entire 40,000 is your turnover? No. Out of 40,000, your turnover is just 35,000 only, because the GST element, whatever the 5,000 you collected from the customer, you are going to deposit the same to the department. You are not retaining that 5,000 which you know. You are not retaining that 5,000 with you. You are submitting it to the department. Whatever ultimately retained with you is your turnover. So out of 40,000 you collected from customer, only 35,000 you will be retained with you, and the remaining 5,000 you deposit to the government. So only that 35,000 is your turnover. That is why whatever the GSTs you have collected in any form, IGST, UGST, CGST, SGST, cess, they are not forming part of your aggregate turnover. So that's the definition of aggregate turnover. Okay, now next. And after that, you have the definition of a recipient, section 2, clause 93. Section 2, clause 93, definition of recipient. You can see here, we have different cases. Now, in different cases, who are said to be the recipient? Right. Look at the example here. Mr. X is a supplier, supplied the goods to Mr. Y. So X is a supplier and Y is a recipient, because Y received the goods worth 10,000 and Y is liable to pay 10,000 rupees. So when there is a case where consideration is payable, then whoever the person liable to pay consideration is called recipient. Important point you have to be kept in mind here. Whoever receiving the goods is not recipient. Whoever paying the money, whoever paying the consideration to the supplier is called a recipient. Look at this example. X is a supplier, right? X is entered into an agreement with Y Limited, right? And Y Limited given instructions that whatever the goods purchased by Y Limited, it given clear instructions to Mr. X, deliver the goods to Z Limited, which is a subsidiary of Y Limited. So here, who is taking the delivery of the goods? Who is receiving the goods? Z Limited. But who is the paying consideration? Y Limited. So in this case, Y Limited is treated as a recipient, because Y Limited is liable to pay the consideration. Are you following or not? Okay, mom. So if the consideration is payable, the person who is liable to pay that consideration is the recipient. If no consideration is payable, then the person whoever receiving the goods is a recipient, or the person to whom the goods are made available is a recipient, or the person to whom the possession is made available is a recipient. Okay, now sometimes we can make some donations. Like yesterday we have seen one example. Infosys company given 100 old laptops or computers without any consideration to a charitable school. Now there, that Infosys company said like, okay, dear charitable school, there are 100 laptops or computers available in my godown. You can come and take them. Okay. So that means here we are making the possession available to the recipient. Okay. Next. In case the no consideration is payable for a service, the person to whom we have rendered services is called a recipient. Clear, sir? That's the definition of recipient. And after that, you have the definition of reverse charge. But before going to understand the concept of reverse charge mechanism, let us first try to understand about the forward charge mechanism. FCM, forward charge mechanism. Right, sir? So generally, this reverse charge mechanism and forward charge mechanism, it's purely depends upon, it's purely at the convenience of the department, sir. So generally under forward charge mechanism, the department follows a forward charge mechanism when this equation holds good, where the number of suppliers are less than number of recipients. So the number of suppliers hardly a very few, right? Whereas the number of recipients are very huge. See, the manufacturers are very less, but the consumers are very huge. The consumers are very huge. So the number of suppliers lower than number of recipients. Like if you take the example of a mobile phone manufacturer, right, sir? MI is a single manufacturer, but MI having its consumers in crores. In India itself, they're having a customer base of more than 10 crores. In India, there are more than 10 crores MI mobile phone users are there. So supplier is a single person here, a single manufacturer, but the consumers, recipients are in crores. In crores. Now, basically, sir, tax collection, tax administration, and compliance verification, it becomes very easy for the department to look after the very few people. See, if suppose that if the department saying like, okay, recipient, you have to pay the GST to the department directly, you have to comply with the GST provisions, you have to take the registration, you have to comply with return filing procedures, everything. It's not possible for the department to look after 10 crores people, right, sir? 10 crores people who are using MI phones, whether they have paid the GST correctly or not to the department, whether they are following the GST provisions or not, it becomes very difficulty to the department to look after all this, right, sir? That is why what the department said, the burden is shifted to the supplier. Okay, single MI manufacturer, right? It is your responsibility to collect the GST from your recipients. Whatever the GST you collected, you have to pay to me on a timely basis. That is on monthly basis. Okay, so whenever the number of suppliers are lower than number of recipients, the department follows forward charge mechanism. The burden is on supplier. The supplier have to collect the GST from the recipient. Whatever the GST he collected, he paid to the department, right, sir? So the compliance burden is on supplier. He has to take the registration from the department. He has to maintain the taxable invoices. He has to file the timely returns, GST audits, everything. Clear, sir? Next. Reverse charge mechanism. Quite opposite to forward charge mechanism, where the number of recipients are lower than number of suppliers. Example, LIC of India and its agents. LIC of India and its agents. LIC is a single recipient and its agents are suppliers. So LIC agents providing business promotion services to LIC. Anyhow, I've given the example here itself. LIC agents providing business promotion services to LIC of India. Here, LIC is a single one recipient where its agents are in lakhs. In India, across India, there is lakhs of LIC agents, right, sir? So here the suppliers are more, recipients are less. Now here, the department, if the department follows forward charge mechanism, right, it is not possible for the department to administer lakhs of LIC agents. How many LIC agents are properly paying GST? How many LIC agents are complying with the GST provisions? It becomes very difficult for the department. So that is why in this scenario, the department follows a reverse charge mechanism. Under reverse charge mechanism, the recipient won't pay any GST to the supplier. The recipient pays GST directly to the department. Now the compliance burden is on recipients. Compliance burden is on recipients. Are you following or not? Okay, ma'am. Next. That's the definition of reverse charge mechanism, sir. So with that, we have completed the definitions part from this particular chapter. And now moving on, scope and extent of GST legislature. And we all know that we have different acts like CGST Act, SGST Act, UTGST Act, and IGST Act. So CGST Act, you can see here, this is extend to whole of India, including the Jammu and Kashmir. And after that, you have the definition of India, sir. And then you can see here the definition of India. It includes the territory of India, landmass, and then in the sea waters, Up to 12 nautical miles, we call it as Indian territorial waters. Here, all the GST provisions are applicable. All GST provisions are applicable. And then from 13th nautical mile to 200th nautical mile, only some specified GST provisions are applicable. The specified transactions like extraction of oils, minerals, iron ore, only these are taxable, ma. Okay. And the airspace above the territory and territorial waters, so up to this airspace, this also covers under GST, ma, forming part of definition of India. Okay. And then SGST Act, right? So it is applicable to the respective state governments and union territories having their own state legislature, like Delhi, Puducherry, and Jammu and Kashmir. So applicable to that particular states and union territories, right? And then UTGST Act, this is applicable for only those union territories which are not having their own state legislatures, like Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, Ladakh, Chandigarh, and other union territories. Okay, ma'am. And now levy and collection of GST, right? So GST, CGST levied on all intrastate supplies, right, except alcoholic liquor for human consumption, because alcoholic liquor for human consumption is being now taxable under excise duty VAT provisions. Okay. So the maximum rate of CGST not exceeding 20%. Who will pay the GST? Only a taxable person. And on what value the GST is payable? On transaction value. Transaction value. So what do you mean by transaction value? We are going to study in chapter number 5. We are going to study in chapter number 5. Okay. Next, the rates prescribed under GST with respect to the goods, it's 0%, 0.125, 1.5, 2.5, 6, 9, and 14. In respect of services, 0, 2.5, 6, 9, and 14. These are only CGST rates, ma'am. These are only CGST rates. In addition to these, the same rate of SGST is also applicable. State government and union territories also levy the similar rate of GST. Right, sir? Now, as of now, even though the GST is not leviable on the following products, tax could be levied from a date notified by the central government on the recommendations of GST Council. And these are all we know that petroleum crude oils, high-speed diesel oil, motor spirit, natural gas, aviation turbine fuel. These are all at present taxable under excise duty, VAT provisions only, not under GST. Okay, next. And now let us start with the very important provisions of this chapter, reverse charge mechanism. I said no already. There are 3 important topics from this chapter, right? Reverse charge mechanism, composition scheme, and optional rate scheme. Okay, right. Right. Now we have already learned the concept of a reverse charge mechanism, right? It is a situation where the recipient has to pay the GST directly to the department. Okay, ma'am, right? So here the compliance burden is shifted to recipient. Here the supplier has no role to play. Only one and only recipient have the entire role. Clear? Now coming to the reverse charge mechanism, right? So it is applicable on notified supplies. So what are the notified supplies? You can see here. These are all the notified supplies. And second case where it is applicable in the case of the notified class of registered persons and notified category of intrastate supplies. Means here the supplier is unregistered. Whenever the supplier is an unregistered person and the recipient is happen to be a registered person, so supplier is unregistered and recipient is a registered. So a registered recipient, whenever he is buying the goods or whenever he is receiving the services from an unregistered supplier, now this kind of situation covers under reverse charge mechanism. Being the recipient is a registered person, the recipient has to pay the GST directly to the department. Okay, sir. Right. Next. So under the reverse charge mechanism, the recipient is liable to pay the GST. The burden to pay the GST is on recipient. Compliance requirements shifted from supplier to the recipient. So now the recipient look after all the complaints of the GST provisions. Okay. Now what are the goods taxable under reverse charge mechanism? You have given with a list of goods here like cashew nuts, BD wrapper, leaves, tobaccos, supply of lottery, silk, yarn, vehicles, used vehicles, seized and confiscated goods, waste and scrap, raw cotton, all these are taxable under reverse charge mechanism. Okay, now what are the services taxable under reverse charge mechanism? This is somewhat important. The services taxable under reverse charge mechanism. So notification number 13/2017 given the list of services taxable under reverse charge mechanism, where the entire GST is payable by whom, sir? Recipient. So first one, GTA services, goods transporting agency services. Supply of services by a goods transporting agency in respect of transportation of the goods by road, transportation of goods by road, except the services are provided to the following persons. Sir, here you can see only the GTA services covered here, and that too the transportation of the goods by road. See, whenever the GTA providing services, it can provide the transportation services by road, by rail, by air cargo, by ships and vessels. Right, sir? Here only the road is covered under reverse charge mechanism. That means the remaining three are covered under forward charge mechanism. So if GTA providing services of transportation of goods by rail, by air, by sea waters, taxable under forward charge mechanism. Only by road, you have to look after reverse charge mechanism. Okay, ma'am. And that too, if these services are provided to these people, like provided to the Department of Central Government, state government, or union territories, provided to the local authorities, provided to the government agencies. If GTA providing the services of transportation of goods by road to these people, reverse charge mechanism not applicable, because they said the word except. Okay, next. And whenever the GTA providing services of the transportation of goods by road, these services are taxable under reverse charge mechanism only when he is not paying the GST at the rate of 6%. CGST 6%, SGST 6%, put together 12%. So when GTA paying the tax at 12%, forward charge mechanism applicable. When GTA paying the tax at 5%, reverse charge mechanism is applicable. So now you have to look when, at what rate of GST the GTA is paying. Okay, next, who should be the recipient? Recipient can be any person, a registered factory, society, cooperative society, any registered person, a body corporate, a partnership firm, whether registered or not, including association of persons, and also includes a registered casual taxable person, CTP. Casual taxable person. Sir, who are said to be the casual taxable persons? So casual taxable persons means those persons who are doing the business from a place where they don't have a registered place of business. Suppose that I am from the state of Telangana. I have my registered premises in Telangana state. But apart from Telangana state, I'm also doing the business in Chhattisgarh. But in Chhattisgarh, I am doing the business only on a temporary basis, hardly for 2-3 months. Hardly for 2-3 months. I don't have a registered premises here. I don't have any registered premises here. Here some business exhibition is going on in Chhattisgarh. Now I'm participating in that business exhibition. I'm exhibiting my products here. I've taken an outlet and rental basis here. In that outlet, I am exhibiting my products and I'm selling. Now, I'm a registered person, a normal registered person in the state of Telangana, but I'm a casual taxable person in the state of Chhattisgarh. So I am doing the business in Chhattisgarh without having any registered premises. And also I'm doing the business only for a limited period, not for the throughout the year, hardly for 1 month or 2 months. As long as the business exhibition continues, I'll continue my business. And as and when the business exhibition closes, I'll shut down my business here and move on to Telangana. I'll continue my business in Telangana state. Okay, now. So I will be called as a casual taxable person for Chhattisgarh. Okay. So regarding this, you have a note point. Yeah, here it is. GTA services generally they are taxable at two rates, one at 5%, the other at 12%. Right, sir? If he opted for 5% now, he is not entitled for input tax credit. He is not entitled for input tax credit. Now, in this case, forward charge mechanism is applicable. Sorry, reverse charge mechanism is applicable. When GTA opted to pay tax at the rate of 5%, reverse charge mechanism is applicable. But if it is opted to pay tax at 12%, it would like to take input tax credit. So if it want to take the input tax credit, it has to pay 12% rate of GST. And whenever it is opting for 12% rate of GST, then forward charge mechanism is applicable. So look at here, ma. When GTA opted to pay 5% rate of GST, reverse charge mechanism is applicable. And when it is opted to pay 12% rate of GST, forward charge mechanism is applicable. Okay, sir. Next. And second one is about the legal services, ma. Second and third is about legal services. So generally legal services are exempted from GST, ma. Right? 99% of the cases legal services are exempted from GST. There is only one case where the legal services are taxable, and that is when the legal services are provided to a business entity whose aggregate turnover exceeded the specified threshold limit. Exceeded the specified threshold limit during the preceding financial year. During the preceding financial year. So whenever the legal services are provided to such business entity, then only legal services are taxable, and that is to taxable under reverse charge mechanism. So that means the burden is shifted again to the business entity only, sir. So whether the services provided by an individual advocate or a senior advocate or firm of advocates or tribunals to a business entity, then such legal services are taxable under reverse charge mechanism. Next, sponsorship services. Supplier could be any person, but the recipient must be a body corporate or a partnership firm. So as long as the sponsorship services are received by a body corporate, sponsorship services are received by a partnership firm, then only reverse charge mechanism is applicable. Okay, sir. Next, supply of any services except renting of immovable property. Here, the supplier is a central government, state government, union territorial, local authority. Services are provided by whom? Central government, state government, union territory, local authorities. And recipient must be a business entity. Right, sir? So when central government or state government or union territory or local authority providing services to a business entity, except these services, then such services are taxable under reverse charge mechanism. Except what kind of services, ma? First one, renting of immovable property. Renting of immovable property. So renting of immovable property, right, covered in 5A. Because if covered in 5, reverse charge mechanism is applicable only in the case of business entity. So that's why this renting of immovable property discussed separately. Services supplied by central government, state government, union territory by way of renting of immovable property a registered person. Here the recipient could be any registered person. Recipient could be any registered person. Are you following, sir? Okay. Then reverse charge mechanism provisions are applicable. Next, see, generally majority of the cases the services provided by the governments are exempted from tax. A very few services are taxable. Among them, renting of immovable property, if provided to any registered person, taxable under reverse charge mechanism. Next, services provided by the postal department. Postal department, a very few services are taxable, like speed post, express parcel post, then agency services and life insurance services. Only these 4 services provided by the postal department taxable. Okay, now, and then services in relation to the aircraft, and transportation of the goods or passengers. These are services taxable. In this renting of immovable property, reverse charge mechanism, the remaining are taxable under forward charge mechanism. Next, 5B, 5C, not that important. Regarding the point number 6, we have a separate amendment. In point number 6, services provided by a director to a company or body corporate, we have amendment, right? And that amendment we will be discussed. Yeah, let us discuss itself now itself. That will be at the end of the chapter. No, I've given the amendments at the end of the chapter here. You can see the clarification on levy of GST on directors remuneration. The amendment is given by the Finance Act 2020. We have different cases. Remuneration is paid by the companies to the independent or those directors who are not the employees. So there is no employer and employee relationship. The TDS is deductible under section 194J. Right, sir? So there is no employer and employee relationship between the director and the company. Hence, it is outside the scope of Schedule 3. What is Schedule 3, ma? We all know that negative list. So as long as there is no employer and employee relationship, whatever the services provided by the director to the company, they are taxable. Taxable under reverse charge mechanism. Okay, ma. Now, case 2. The director who is an employee of the company and whatever the remuneration paid is treated as salaries and TDS is deducted under section 192. So their existing employer and employee relationship, and it is covered under the Schedule 3 negative list, and this will not attract GST. So if TDS is deducted under section 194J, GST is applicable. If TDS is deductible under section 192, GST is not applicable. Next, sir, in case director's remuneration which is declared separately other than salaries in the company's accounts subjected to TDS under section 194J. Sir, if it is treated as a salary, then it will not attract the GST. When it is not treated as a salary, then GST is leviable. Right. Salary to a director, not taxable under GST. Not taxable. And other than salary, taxable under GST. Taxable under GST. Okay, ma. So wherever the director's remuneration comes into the picture, now you have to look at the situation, how the remuneration is being treated, under which section TDS is deducted. If the remuneration is treated, एक minute, right, completed, sir. So it's purely depends upon how you are treating your director's remuneration. If treated as salary, not taxable under GST. If treated as the remuneration itself, taxable under GST. Okay, ma. Now come back. Yeah. Insurance agent services, I've already told you. The supplier must be an insurance agent and recipient must be insurance company. Then the services provided by the agent to its company, taxable under reverse charge mechanism. The recovery agent services, supplier is a recovery agent, recipient must be a banking company, a financial institution, right, located in taxable territory. Next, supply of services by way of transfer are permitting the user enjoyment of a copyrights. Here, not all the intellectual property rights are covered, only the copyrights are covered here. Supplier must be an author, a music composer, photographer, artist, or the like, right? And recipient must be a publisher, a music company, producer, or the like, right, sir? So here services provided by a music composer. Suppose a DSP composed a music and given to the Sony Music Company. Here he is transferring the copyrights of that music, right, to the Sony Music Company. The supplier is a DSP here and the recipient is a Sony Music Company. Now the services provided by the DSP to that music company taxable under reverse charge mechanism. Okay, sir. Right. Of course, here we have an amendment only with respect to the book author. Right. So that book author is now have the option of paying the GST under forward charge mechanism. Right, sir. Suppose that I have written a book, sir. A book in relation to the taxation, and I'm giving the publishing rights to the Taxman Publications. Right, sir. Now, generally, the services provided by me, being a book author, to the publication house, publisher, these services are generally taxable under reverse charge mechanism. Means, being the recipient, the publisher has to pay the GST. But now I also have the option of paying the tax under forward charge mechanism. Then you'll get a doubt here. Why, sir? Unnecessarily you are taking responsibility, right? So let it be covered under reverse charge mechanism. The recipient will take the burden of payment of GST directly to the department. He will look after all the complaints burden. What is the need, right? Why you are going for forward charge mechanism? So generally, sir, if we have any input tax credit, we can claim that input tax credit only from your output tax liability. Under reverse charge mechanism, the supplier won't get any output tax liability, right? Because this output tax is directly paid by the recipient to the department. Yes or no? So generally, if it is a forward charge mechanism, the supplier collects the output tax from recipient. Whatever he collected, he will pay to the department. But under reverse charge mechanism, the supplier won't collect any output tax from recipient. The recipient directly pays GST to the department. So when you're not collecting any output taxes from your recipient, how can you claim your input tax as credit? You cannot. And that input tax will be piling up like anything. So that's why if you have the huge amount of input tax credit, go for forward charge mechanism. Collect the output tax from recipient, against to that output tax, whatever the input taxes you have already paid, claim that amount as credit. Clear? So that is why an amendment is being given in Finance Act 2019, and with that amendment, now the author has the option to pay the GST liability either under forward charge mechanism or reverse charge mechanism. But whenever he chooses to play the forward charge mechanism, there are certain conditions to be satisfied, right, sir? And the conditions are, he must have taken the registration and he filed a declaration that he is opting to pay the GST under forward charge mechanism, right, sir? And he has to comply with all the provisions of GST, and then he shall not withdraw that option within a period of 1 year from the date of exercising that option. See, being an author of a particular book, whenever I opted to pay the GST under forward charge mechanism, first of all, I must have taken a registration and I filed a declaration that I'm going to pay the tax under forward charge mechanism. I have to comply with all the provisions of GST. And once the option is exercised, you cannot withdraw that option within 1 year. So that means for the financial year 21-22, if I opted for forward charge mechanism, throughout the financial year 21-22, I have to follow the forward charge mechanism only. For the first 6 months forward charge mechanism, next 6 months reverse charge mechanism, not allowed. Are you following, sir? Next. And after that, remaining services, you can just have a single reading, sir. Now let's move on to persons liable to pay the GST on renting of motor vehicle services. These are also just like GTA services, ma. These services are taxable and at 2 different rates: 5% without input tax credit or a limited input tax credit, 12% with no restriction on availing input tax credit. Okay, now, so when they opted to pay GST at 5%, reverse charge mechanism is applicable. When they opted to pay the GST at 12%, forward charge mechanism is applicable. Okay, now, next. Next, moving on to the composition scheme for small suppliers. You can come to the running notes. Reverse charge mechanism, GTA services, I've already told you. Legal services, postal department services, renting of motor vehicle services. Now come to the composition scheme. Right, sir. So composition scheme, you can see this is applicable only for those suppliers who are exclusively engaged in supply of goods, who are exclusively engaged in supply of goods. They are eligible for composition scheme. Sir, if I'm exclusively engaged in the supply of services, if I'm exclusively engaged in supply of services, I'm not eligible for composition scheme. Composition scheme not allowed. For me, optional rate scheme is allowed. Those who are exclusively engaged in supply of services, optional rate scheme is allowed. Sir, in case if I'm engaged in both supply of goods and services, I'm engaging in both supply of goods and as well as services, then look at the main activity. If your main activity is goods and ancillary activity is services, then you cannot go for composition scheme. Sir, if your main activity is services, ancillary activity is supply of the goods, then you can go for optional rate scheme. Okay, ma'am, right? Now, so generally, the composition scheme, I've already told you that this is given only for the small scale suppliers. In order to remove the compliance burden on small scale suppliers, the department come up with a concept called composition scheme. Okay, sir, you can see here. What do you mean by the composition scheme under GST? It is an option. Sir, composition scheme is not a mandatory scheme for small scale suppliers, sir. It is just an option given to them, to the specified category of small taxpayers, to pay the GST at a very low rate on the basis of turnover. What are the advantages of composition scheme? The tax rates are very low, lower tax rates, hassle-free compliance, very simple procedures for such taxpayers, simple calculation of tax based on turnover, and a very simple quarterly return. See, tax rates are very lower, as low as 1%. Hassle-free compliance, very simple procedures. You're not required to issue tax invoices, ma'am. You're not required to issue tax invoices. Right, sir? In the place of taxable invoice, we will issue bill of supply. Okay. And a very simple calculation of tax. See, when you opted for composition scheme, these are all your advantages. Whenever there are advantages, there are disadvantages as well. The biggest disadvantage is whoever the person applied for composition scheme, right? He is not entitled for input tax credit. Not only the person who opted for composition scheme eligible for input tax credit, not eligible for input tax credit. Also, the person whoever buying the goods from the person who opted for composition scheme, even for them also input tax credit not allowed. So the supplier himself not allowed input tax credit, and the recipient who buying the goods from such suppliers also not eligible for input tax credit. So that means if I opted for composition scheme, I am not eligible for input tax credit. Also, I'm not also eligible to pass on the benefit of input tax credit to my subsequent buyers. If you are buying the goods from me, even you are also not eligible for input tax credit. Clear, sir? These are the biggest disadvantages. And whenever there is no input tax credit allowed, now a simple calculation of tax, you just simply find out your state turnover. On that state turnover, apply the rate of GST 1%. If you are a restaurant service provider, 5%. That's it. And a very simply quarterly return. Generally, if you are a normal scheme taxpayer, you have to file monthly 3 returns. GSTR 1 for your outward supplies, GSTR 2 for your inward supplies, and GSTR 3B a consolidated return. Monthly returns, these are monthly returns. Monthly 3 returns you have to file if you are a normal scheme supplier. if you are a normal scheme supplier. If you opted for composition scheme, then instead of monthly returns, quarterly returns comes into picture. Right, sir? Next, eligibility criteria for composition scheme. We all know that eligibility criteria is your aggregate turnover. Earlier it was 50 lakhs, later on increase it to 1 crore, now increase it to 1.5 crores. You can simply ignore the old threshold limits, this 50 lakhs and this 1 crore, you simply ignore. What you have to remember is 1.5 crores. So if your aggregate turnover is less than or equal to 1.5 crores, then you can opt for composition scheme. You can opt for composition scheme. Okay, ma. Even for the special category states like Assam, Himachal Pradesh, Jammu and Kashmir, the threshold limit is 1.5 crores. Okay, next. But of course, there are certain specific states where the threshold limit is stringently limited to 75 lakhs for special category states. What are they? Arunachal Pradesh, Sikkim, Tripura, Manipur, Meghalaya, Nagaland, Mizoram, and Uttarakhand. For these states, the limit is 75 lakhs. In this scenario, you have to see the aggregate turnover. If the aggregate turnover is less than or equal to 75 lakhs, then you are eligible for composition scheme. And this turnover you have to see during the preceding financial year. During the preceding financial year, if your turnover is less than 75 lakhs in the current financial year, you can opt for composition scheme. Other than these states, the threshold limit is 1.5 crores. Okay, now, while computing the threshold limit, the following items shall be considered. This is nothing but the definition of aggregate turnover. The definition of aggregate turnover, right, sir, which we have already learned in section 2, clause 6. See the example here for composition scheme. Sir, during the preceding financial year, that is 2021, let us say your turnover is just 80 lakhs, means less than 1.5 crores. Now in the current financial year, you can opt for composition scheme. Since the turnover during the preceding financial year not exceeded 1.5 crores, we can adopt composition scheme in the current financial year. Sir, that means in the current financial year, throughout the financial year, are we eligible for composition scheme? No. In the current financial year, up to 1.5 crores turnover, you can pay GST under composition scheme. And as and when your turnover exceeded 1.5 crores in the current financial year, then you have to convert into the normal scheme. Okay, now, next. Who can opt for composition scheme? You can see that whoever aggregate turnover during the preceding financial year, whose aggregate turnover during the preceding financial year not exceeding 75 lakhs or 1.5 crores may opt to pay an amount calculated by using the rates on state turnover. Right, sir. So for manufacturer, 0.5% of the turnover in the state. So this 0.5% is only CGST, sir. SGST also another 0.5% is applicable. Both put together, it becomes 1%. You can see state governments also levy the similar rate of GST. Any other supplier, same CGST 0.5% plus SGST 0.5%, put together 1%. In the case of restaurant service provider, CGST 2.5% plus SGST 2.5%, put together 5%. Okay, these are the rates applicable. Clear? On your state turnover, if your state turnover is 50 lakhs, no, so 50 lakhs into 1%, pay 5,000 rupees as your GST liability. Are you following or not? Sorry, not 5,000, 50,000. 50,000 rupees as your GST liability. That's it. Clear, sir? Next. Supplier of services, right? In case, sir, your main activity is goods, supply of the goods. your ancillary activity is services. In this scenario also, you can opt for composition scheme, but there is a restriction with respect to services. You can pay tax under composition with respect to services subject to a maximum of 10% of the turnover in the preceding financial year or rupees 5 lakhs, whichever is higher. Only up to this turnover you can pay the tax under composition scheme with respect to services. You can see here Ram Sevak opted for composition scheme in the financial year 2021. His aggregate turnover during the preceding financial year 60 lakhs. So he can supply services under composition scheme up to a value not exceeding 10% of preceding year turnover 6 lakhs or 5 lakhs, whichever is higher. So that means in the current financial year, he can be provided the services up to a rupees of 6 lakhs under composition scheme. If his services turnover exceeded 6 lakhs rupees during the current financial year, then with respect to services, he has to shift to the normal scheme. Okay, now for services also composition scheme applicable when the services portion should be your ancillary activity. Services portion should be your ancillary activity. And in the current financial year, up to which turnover you can opt for composition scheme with respect to services, subject to a maximum of 10% of turnover of during the preceding financial year or rupees 5 lakhs, whichever is higher. Okay, now next. Sir, with respect to banking and financial companies, whatever the interest they levied on loans, deposits, advances, that interest portion should not be taken into account while computing the eligibility turnover. Okay, na sir? Right? Next. Procedure for opting for composition scheme. Sir, if you are an unregistered person, not yet registered, right? Then at the time of filing the application for GST registration, that is GST REG 01. This is application for registration. Application for registration. GST REG 01. Right. While applying for the registration itself, you can opt for composition scheme. In that application form, you will be having an option. You just, there will be an option like this. Would you like to apply normal scheme or would you like to apply composition scheme? And you will be having some check boxes here. In this composition scheme, you just tick out. That's it. In that application itself, you will be having option like this. Then just tick that box. Then you can directly covered under composition scheme. Sir, what if the case if I am already a registered person? Then very simple, sir. Just make an intimation to the prescribed authority. Make an intimation to the prescribed authority at the commencement of the financial year or even prior to the commencement of the financial year. Suppose that you would like to opt composition scheme for the financial year 2021-22. Now during the March 2021 itself, you can make an intimation to the department so that you can opt for composition scheme during the financial year 21-22. Okay, sir. And after that, within a period of 60 days from the commencement of the financial year, you have to furnish a statement, stock statement you have to furnish, right, sir? So what are the details of stocks to be furnished in that particular statement? Let me explain you this with the help of running notes. Look at this example, sir. Details of stocks to be furnished. Sir, during the preceding financial year, my turnover is just 1.2 crores. That means in the current financial year, I am eligible for composition scheme. So I opted for composition schemes here. That means in the current financial year, I am not eligible for any input tax credit. Okay, sir. Now, as on 31st March 2021, that is the last day of the preceding financial year, whatever the closing stocks lying in my godown in the form of input goods, in the form of work in progress, in the form of finished goods. See, on that particular goods, you might have already availed input tax credit. You might have already availed input tax credit, right? And in your electronic credit ledger, electronic credit ledger, you already availed of input tax credit. Let us say 10 lakhs you have availed input tax credit. What you have to do is, right, after you opting for the composition scheme, you have to furnish the details of such stocks to the department. Thereby, the department disentitles you from using this input tax credit of 10 lakhs. Are you following, sir? It will alert you that Babu, you opted for composition scheme. Now you are not entitled to use this balance of 10 lakhs. Right, sir? For these purposes, the stocks details to be furnished. Next, conditions and restrictions for composition scheme. There are certain conditions. See, the turnover condition is only one condition. It is not the only condition. It is only one condition. Right, sir? There are other conditions to be satisfied for opting for composition scheme. Like the person who avails this option shall pay the tax under reverse charge mechanism on inward supplies. Right? And they should not make any interstate supplies, any interstate outward supplies. See, generally the composition scheme is given for the small suppliers. Small supplier means he is having the customer base only within his own state. Within the state, he's having his customer base only within his own state. If he's having the customer base across the India and different states, he's not said to be a small scale supplier. When he's not a small scale supplier, he's not entitled for composition scheme. So whenever you're opting composition scheme, you have to sell the goods only within your state. If you're engaged in any interstate outward supplies, the day on which you entered into interstate outward supply, from that particular date onwards, you have to shift to the normal scheme on a compulsory basis. Are you following, sir? Every one of you. Right? So, and the very important point here you have to understand, there is only a restriction with respect to the outward supplies. There is no restriction with respect to the inward supplies. Are you following, sir? So when you opted for composition scheme, you should not engage in interstate outward supplies. So you cannot sell the goods to other states. You cannot sell the goods to other states. Right? But you can buy the goods. You can buy the goods from other states. You can buy the goods from other states. There is absolutely no problems here. Okay, next. And whenever you opted for composition scheme, you have to use the words like composition taxable person. I'm a composition taxable person, not eligible to collect the tax on supplies. You have to prescribe these words on each and every bill of supply you're issuing. And you have to place the words, the composition taxable person. You have to display these boards at the prominent places like your billing counter, like your delivery counter. You have to place a board. We opted for composition scheme. Let the recipient knows that you are a composition person. Okay, now next, who are not eligible for composition scheme? Manufacturer of ice cream, pan masala, tobacco, and aerated waters. These people are not eligible for composition scheme. Supplier of services other than restaurant services. CTP, casual taxable person, and NRTP, non-resident taxable person. CTP we have already learned now. Now NRTP, non-resident taxable person. Who are said to be the non-resident taxable persons? Means a non-resident doing the business in India without having a place of business in India, without having a permanent residence in India. Suppose that an American national doing business in India, but he's not having a registered premises in India, he's not having a residential premises in India, then he will be called as a non-resident taxable person. So casual taxable persons and non-resident taxable persons, they are not entitled for composition scheme. Next, supplier who engaged in making interstate outward supplies. Those who are selling the goods out of his state. Across the India, they are selling the goods. They are not eligible for composition scheme. And suppliers engaged in making any supply of the goods or services which are not leviable to tax. That means you are exclusively engaged in exempted supplies. There is no need of opting for composition scheme. And the persons who are supplying the goods through e-commerce operators, they are also not eligible for composition scheme. And after that, with effect from the 1st October 2019, the manufacturer of aerated waters and suppliers of aerated waters both are not eligible to pay the tax under composition scheme. Okay, now next, withdrawal from the composition scheme by a taxpayer. So whenever you want to withdraw from the composition scheme, right, then first of all, you have to make an application for such withdrawal. You have to make an intimation to the department, prescribed authority that you are withdrawing from the composition scheme. And again, you need to furnish the stock details. Right, sir, at the time of withdrawal from the composition scheme. I will explain to the running notes. You can see here now, withdrawal from the composition scheme. Suppose that during the preceding financial year, that is during the preceding financial year, 2020-21, your turnover is just 1.3 crores. So that means in the current financial year, you opted for composition scheme. Right. Now in the current financial year, up to 1.5 crores turnover, you can be covered under composition scheme. And whenever your turnover exceeded 1.5 crores, you have to convert into the normal scheme. Suppose that on 1st November 2021, your turnover exceeded 1.5 crores. So you have to convert into the normal scheme. Now, the immediately preceding day, that is on 31st of October 2021, whatever the closing stocks lying in the godowns in the form of input goods or work in progress or finished goods, the input tax credit attributable to such goods, now you can avail with effect from the 1st November 2021. Okay, sir. So that is why you need to provide the stock details even at the time of withdrawal of the composition scheme. Next, important points you can see here, a composition scheme supplier not eligible to issue the tax invoices. Instead, they have to issue what? Bill of supply. Okay, now, and composition scheme suppliers neither eligible for input tax credit and nor eligible to pass on the benefits of input tax credit to subsequent buyers. Next. After that, focus points, this we have already discussed. Now moving on, optional rate scheme, the last important topic from this chapter. So optional rate scheme is given for those suppliers who are exclusively engaged in supply of services. Exclusively engaged in supply of services, or predominantly the main activities services, ancillary activities goods. For those people, optional rate scheme is introduced. CGST 3%, SGST 3%, both put together 6%. It is just like composition scheme. 90% of the provisions are composition scheme provisions. Right, just like we have composition scheme for those suppliers who are exclusively engaged in the goods, we have optional rate scheme for those suppliers who are exclusively engaged in the supply of services. Right, sir. So you can see here optional rate scheme, and the threshold limit is here 50 lakhs rupees. Threshold limit is 50 lakhs rupees. So during the preceding financial year, if your turnover, aggregate turnover not exceeded 50 lakhs, in the current financial year, you can opt for optional rate scheme. And in the current financial year, up to rupees 50 lakhs worth of turnover, you can pay the tax under optional rate scheme. As and when your turnover exceeded 50 lakhs, then you have to convert into the normal scheme. Okay, now next. You can see here a registered person whose aggregate turnover in the preceding financial year not exceeding 50 lakhs. Right, who are exclusively engaged in supply of services, right, or mainly main activity supply of services along with supply of goods. Okay, conditions, the same conditions which we studied in composition scheme. not engaged in making any supplies which are not leviable to tax, not engaged in making any interstate outward supplies, neither CTP or NRTP. They should not be made supply through e-commerce operators, and they should not making in supply of notified goods. These people are not entitled for optional rate scheme. Right, sir. These are all the conditions. Right. And yes, we know that we have to issue the bill of supply instead of tax invoice. They have to use the words like taxable person paying the tax at the optional rate scheme, not eligible to collect the tax on supplies. Right, sir. Important points, the same points which we have learned in the composition scheme, the same provisions are applicable here. Let me see any important points right here. That's it. They are all just compliance provisions. And then after that, you have the IGST Act, and then tax on levy of GST and director's remuneration, problems for classroom discussion. That's it. Of course, come to the running notes. Whatever we left over, we'll discuss. Optional rate scheme, no, the same provisions are applicable, sir. You can see here the same provisions, just like composition scheme. During the preceding financial year, your turnover is just 40 lakhs. So that means in the current financial year, you are eligible for optional rate scheme. So in the current financial year, up to rupees 50 lakhs, you can pay the tax under optional rate scheme. Beyond 50 lakhs, you have to pay the tax under normal scheme. Okay, sir. And then the immediately preceding day, which is preceding to the day on which you opted for composition scheme. You opted for composition scheme on 1st April 2021. The immediately preceding day means 31st March 2021. Whatever the closing stocks lying in your godown in the form of input goods, work in progress, finished goods, and capital goods, the input tax credit availed on such input goods and capital goods, right, sir, that input tax amount you have to make a debit to electronic credit ledger or cash ledger, because this input tax credit not entitled, not usable in the current financial year. As you opted for optional rate scheme, no, when you opted for optional rate scheme, you are not entitled to input tax credit. So whatever the credit you already availed of with respect to the closing stock and capital goods, that credit should be reversed. Okay, next. Yeah, that's it, sir. So with this, the GST marathon recording of chapter number 3 completed. Okay, now in the next session, we will discuss chapter number 4, exemptions. Okay, right. So till then, have a good day, good night, stay home and stay safe. If you come across any doubts during these lectures, you can text me or you can call me anytime. Clear, sir? Right, all the best. A very good evening, students. So welcome to GST marathon classes. In the last session, we have completed the marathon class of 3rd chapter, that is levy and collection of GST. Now time for the 4th chapter, exemptions. So in this chapter, we are going to discuss about what are the exempted goods and what are the exempted services. Goods and as well as services which are exempted from the GST. Right, sir? So let's have some basic introduction. So a supply of the goods or services of both shall be chargeable to GST only when it falls within the ambit of the charging section. Right, sir? So however, the liability to pay the GST arises only when such supply shall not be an exempted supply. If it is an exempted supply, there is no liability arises for the payment of GST. Right, sir? So what do you mean by an exempted supply? The definition which we have already learned in the chapter number 3. Right, sir? Exempted supply definition we have seen in section number 2, clause 47 of CGST Act, which includes the goods which attracts nil rate of tax, the goods which are wholly exempted from tax, right, and also includes non-taxable supplies. 3 parts, right? So the supply of any goods or services which attracts nil rate of tax, wholly exempted from tax, and also including non-taxable supplies. Right, sir? Next. Essential goods used by the general public have been exempted, and essential services like healthcare services, educational services, etc. have also been exempted. So generally in our day-to-day life, what are the basic necessities which we are using, such basic necessities are covered under exemption categories here. Like all the essential goods which we are using, food grains, ghar, milk, eggs, curd, lassi, unpacked paneer, vegetables, salt, right? These are all covered under exempted goods category. And essential services like healthcare services, educational services, these are covered under exempted category. Exemption, like some basic examples regarding exemption goods and services. Okay, now. And empowerment of granting of exemption. Central government got the power under section 11 of the CGST Act, and as per the section 6 of the IGST Act, it gives the power to the government to grant exemption from the tax, and that exemption can be given either by issuance of a notification or by issuance of a special order. Right, so you can see here, granting of exemption is by way of issuance of a notification, and granting of exemption by way of issuance of a special order. Right, sir. Next. Now look at the exempted goods. The same list comes into the picture. Exempted goods. Everyday items used by the common man have been included in the list of exempted items. Right. Public consumables such as unbranded atta, maida, besan, unpacked food grains, milk, eggs, curd, lassi, and vegetables are among the items exempted from GST. And you can see here some examples also. The first one, you can see the national flag or Indian flag. So these are called as items of national importance. Right, exempted from GST. Milk, bangles, fish, right, fruits, right, these are all exempted from GST, sir. Right, so in this chapter, exempted services are important, not the exempted goods, exempted services, because you have a very big list of exempted services. Okay, right. Now let us see one by one what are the services which are exempted from GST. So we have a very big list, a list of some 60-70 services, but of course not all are important from examination point of view. So I'm going to cover in the marathon classes only those services which are exempted, which are important from examination point of view. Okay, mom, right? So first one, charitable related services. Any services provided by the charitable trust, right? And mainly with a charitable motive, without taking any consideration in return, right? All the charitable related services are exempted from GST. But of course, in order to claim the exemption benefit, that charitable trust must have been registered as per the provisions of section 12A of the Income Tax Act, and then it should be carries out one or more of the specified charitable activities. So if these two conditions are satisfied cumulatively, right, if these two conditions are satisfied cumulatively, then whatever the charitable activities provided by the charitable trust are exempted from GST. So first of all, it must be a registered charitable trust, and it must have been provided one or more specified charitable activities. Okay, sir. Services provided other than charitable activities, taxable. See, if it is a charitable activity, exempted. Other than charitable activity, taxable. Like you can see the example here. Granting of advertisement rights to a person on the premises of charitable or religious trust, or on the publications of the trust. Granting of admission to the events, functions, celebrations, shows against admission ticket or fees. See, if you went to any charitable trust, like I went to Ramakrishna Mission, there I found an advertisement signboard or a hoarding, a digital display board where some different companies' products are being advertised. So here, the Ramakrishna Mission given the rights to advertise their products in their premises, but of course, For providing such facility, Ramakrishna Mission charging, let us assume that they are charging 1 lakh rupee per month. Now this 1 lakh rupee per month chargeable under GST, because that provision of giving the advertisement rights in the premises of charitable trust not covers under charitable activities. It's a commercial activity liable to GST. Are you following or not? Next. So what are covered under charitable activities, sir? You can see here, I have given the example here. Activities of running the schools, colleges, or any other educational institutions, right, run by the charitable trust by way of education or skill development of abandoned, orphans, homeless children, physically or mentally abused persons, prisoners, persons over the age of 65 years or above, residing in a rural area will be considered as charitable activities. Okay, sir. Next, activities of school, college are run by the charitable trust which do not fall within the scope of charitable activity will not be exempted from GST. See, if it is fall under charitable activity, exempted. Suppose that if a charitable trust running the school and in return they're collecting the fees from the children, so it again comes under commercial activity, not a charitable activity, liable to GST. Okay, sir. Hostel accommodation services provided by the trust to the students do not fall within the scope of charitable activity, hence not exempted from GST. So hostel accommodation services liable to GST, even though it is provided by a registered charitable trust, it becomes under commercial activity liable to GST, sir. Accommodation services provided by the trust having the value of supply below 1000 rupees per day exempted from GST. So if the value of supply less than 1000 rupees per day, then exempted. If it is more than or equal to 1000 rupees per day, taxable. Okay, sir. Next, hospital services fully exempted from GST, sir. Healthcare services, essential services fully exempted. Okay. Next, services provided to charitable trust. Sir, services provided by charitable trust exempted if it is falls under charitable activities. Right, sir? In case if services provided to charitable trust, that means here the charitable trust nature becomes service recipient. It is receiving services. Now that services are taxable. See, if charitable trust is a supplier, then it can claim exemption benefit. Okay, but if the same charitable trust is a recipient, so then it will be taxable, because here services are not being provided by charitable trust. Here the services are being provided by someone else. Are you following, sir? Let us assume that charitable trust, right, they would like to construct a new building. For this purpose, they have engaged a contractor. Now this contractor is providing charitable trust services to charitable trust, construction services. So the construction services provided by the contractor to the charitable trust liable to GST. Are you following, sir? So this is the first one, charitable related services. Next, religion related services. Religion related services. So services provided by the religious trust. Okay. Now look at here. Services provided by a person by way of conducting of any religious ceremonies, renting of pressings of a religious place meant for general public, right? So these are the services exempted, ma'am, right? Any services in the conducting of any religious ceremony and renting of the pressings of a religious place. See, whenever you've been to a temple, a church, a mosque, a gurudwara, right, in the premises of the temple, church, or mosque, you will find some retail shops, some commercial shops like some flowers shops, coconut shops, some sweet house shops, camera, photography shops, toys, right? Juice parlors, tiffin centers, tea centers, mess, all these kind of commercial shops you can find in the premises of a temple, right, sir? See, all that premises are belonging to temple, and that premises is given on let out basis to that vendors, right? Now the religious trust claiming the rent from them, and now that rent amount, here you have to see what is the rent amount exemption up to. See, you can look at here, ma. The following services are not exempted if the renting of rooms where the charges are 1,000 rupees or more per day. You can also find some accommodation facilities in the temple premises, right, sir? See, if you ever been to Tirupati, where you can book the rooms in Tirumala and Tirupati as well, for which you need to pay the rent amount, right, sir? Suppose that if you're paying a rent amount of 2,000 rupees per day, now that 2,000 is liable to GST, because we have the exemption benefit only when the value of supply is less than 1,000 rupees per day. This is exempted. If the value of supply, that means the rental charges per day, is greater than or equal to 1,000 rupees, then it will be taxable. Then it will be taxable. Are you following, sir? Every one of you, right? Next, renting of premises, community halls, kalyana mandapams, or open area, if the tariff rate is 10,000 rupees or more per day, taxable. If the rent amount is less than 10,000 per day, exempted. If the rent amount is greater than or equal to 10,000 per day, it will be taxable. It will be taxable. So less than 10,000 per day, exempted. Greater than or equal to 10,000 per day, taxable. Like if you book TTD Kalyana Mandapam for a marriage, TTD Kalyana Mandapam for a marriage, and you're paying the rent is 15,000 per day, 15,000, it will be fully taxable, right, sir? Next, and for the commercial shops, I already said, you know, commercial shops, you need to see the tariff rent per month, not per day, per month. 10,000 or more per month, right? So if the rent per shop is less than 10,000 per month, then it will be exempted. If the rent amount is greater than or equal to 10,000 per month, then it will be taxable. It will be taxable. Okay, mom. Next. So the amount charged by whatever name called for the conducting of any religious ceremony is fully exempted from GST, right? And you can see the example also here. Ramanand Joshi, a priest, charges 12,000 rupees for conducting a religious ceremony on the occasion of the birthday of Ghanshyam's son. The amount charged for conducting of religious ceremony is fully exempted from tax. Okay, sir. Next. Services provided by the Hajj Committee and Kumaon Mandal Vikas Nigam Limited, KMVN, in relation to a religious pilgrimage facilitated by the government of India. It is fully exempted from tax. Right, sir? See, assume that you're going to some Hajj Yatra, right? For the Hajj Yatra, Hajj pilgrimage tour, you're receiving the transportation services, traveling services from a travels company. The travels company charging some 2 lakhs from you, 2 lakhs from you for providing the traveling services to Hajj Yatra. Now, whatever the services you're receiving from the travels company, exempted from GST. Right, sir? Right? And in relation to KMB and Kumaon Mandal Vikas Nigam Limited. So generally, you can see the example here regarding KMVN. KMVN supplies numerous services, namely medical facilities, catering services, security, accommodation services, etc., to the pilgrims who are undertaking the Kailash Manasarovar pilgrimage. Now, such services provided by KMBN in relation to religious pilgrimage to Kailas Manasarovar fully exempted from GST. Clear? Next. Coaching related services. Services provided by the coaching centers in relation to the arts or culture, right? And in relation to the sports by charitable entities fully exempted from GST. But of course, if the training or coaching is given in relation to recreational activities in the areas other than arts, culture, or sports, they will not be exempted from GST. They will be fully taxable. Okay, ma'am. Next. Coaching or training in relation to the all forms of dance, music, painting, sculpture making, literary, theater, sports of any school, tradition or language, or any of the sports falls within the scope of recreational activities, they will be fully exempted from GST. Okay, now next, look at this example. Manvata Sansthan, a charitable trust registered under Section 12A of the Income Tax Act, has organized a basketball training camp for teenagers. Now, GST would be exempted on the same as the services provided by an entity registered under 12A, and they're providing the services by way of training or coaching in sports. So fully exempted from GST. Okay, next one. Fourth one, agriculture related services. So generally, when it comes to agriculture related services, no, you simply remember one thing. Majority, I can say 90% of the agriculture related services are exempted from GST. Whatever the services you have received, right, up to that agricultural product to be marketable in a primary market, they are fully exempted from GST. Once the goods crosses the primary market, in order to make them marketable in a secondary market, then whatever the services you are receiving, these are fully taxable. So as long as you are receiving the services in relation to an agricultural product, only in order to make it marketable in a primary market, means up to I can say market yards, up to market yards, exempted. Once the goods crosses the market yard, once it enters the wholesale market, or once it enters the retail market, then it will be fully taxable. So just remember these wordings enough. Okay, sir. So look at here. Services by way of loading, unloading, packing, storage, or warehousing of the rice, fully exempted. Services by way of warehousing of the minor forest produce, fully exempted. Fumigation services, fully exempted. Then cultivation of the plants and rearing of all lives of forms of animals except rearing of horses, fully exempted. Next. So agricultural operations like cultivation, harvesting, threshing, plant protection, testing, fully exempted. Supply of the farm labor, fully exempted. Now look at this point. Processes carried out at an agriculture farm, including tending, pruning, cutting, harvesting, sun drying, cleaning, trimming, fumigating, curing, sorting, grading, cooling, are bulk packaging and such like operations. And here comes the important point, which do not alter the essential characteristics of agricultural produce, but make it only marketable in the primary market. Make it only marketable in the primary market. I already told you, no, whatever the services you have received up to the primary market, to make it marketable in a primary market, all that services are exempted from GST. All that services are exempted from GST. But once the goods crosses primary market, from there onwards, whatever the services you're receiving, they are fully taxable. They are fully taxable under GST. Every one of you following now? Right, sir? So if you are receiving any services which changes the essential characteristics of agricultural produce, it will be liable to GST. Like, sir, there is a farmer, right, who cultivated tomatoes. After the cultivation harvesting completed, after the crop was completed, right, he uh, took out the tomatoes from the crop, and in a bulk he's selling in the market, right sir? So that means it's a primary market. So in that primary market, let us assume that uh, Priya Pickles, you might have heard this company name, Priya Pickles, very famous in our Telugu states, right? Uh, Priya Pickles company owner came to the market and he purchased tomatoes. Now, from that market yard till his factory, whatever the services he received, like loading, unloading, packing, unpacking, transportation charges, transit insurance, all these are liable to GST. And the tomatoes reach to the factory. Now, from the tomatoes, he's creating some products like tomato pickles, tomato ketchups, and then tomato sauce, tomato chips, right, sir? So all these kind of products he is manufacturing. Whatever the services he is receiving for manufacturing all this, liable to GST. And once the products are manufactured, they will be sent to the wholesale markets for the sale. Again, liable to GST. So whatever the processes undertaken for converting the tomatoes into the tomato ketchup, liable to GST. For converting the tomato into the tomato pickle, liable to GST. For converting the tomatoes into tomato sauce, liable to GST. Because that process is changing the essential characteristics of the tomatoes. Before the application of that process, it is called as a tomato. After the application of that process, it is now calling as a tomato ketchup, tomato sauce, tomato pickle. The name is changing, the usage is changing, right, sir? So whatever the activities you have undertaken, whatever the services you have received, only to make it render marketable in primary market, exempted, but secondary market taxable. Okay, that's it. Next, renting or leasing of agro machinery, fully exempted from GST. Loading, unloading, packing, storage, warehousing, exempted from GST. Agricultural extension services, exempted from GST. Services provided by APMC, Agricultural Produce Marketing Company, exempted from GST. Fumigation services, exempted from GST. Okay, next. Processes which changes the essential characteristics of agricultural produce, liable to GST. That I've already told you. Potato chips are manufactured through processes which alter the essential characteristics of potatoes. Next, processes which makes the marketable agricultural produce marketable in primary market, exempted. Okay, next, processes of grinding, sterilizing, extraction, packaging in retail packs. So that means you are going to sell them in a retail market, fully taxable. Okay, next. Milling of paddy into rice, right? You can see here, here the essential characteristics of the agricultural produce is getting changed. Hence, that process of converting the paddy into rice, liable to GST, sir. Liable to GST. Okay, next. So that is agriculture related services. Next, educational services. You can see here when it comes to the educational services, right? Basically, up to a particular qualification of education, exempted from GST, like the services provided by the educational institutions of kind of primary school education up to secondary school education, these are all exempted from GST, sir. Right? So means that play schools and from up to class 12th, right? Up to class 12th, whatever the educational services are provided, they are fully exempted from GST, sir. Right? And also vocational training institutions, right? Vocational educational qualification, they are also exempted from GST, sir. So vocational training services also exempted from GST, sir. Okay, so look at here, services provided by an educational institution to its students, faculty and staff, right? They are exempted from GST. Services provided by an educational institution by way of conducting entrance examination against the entrance fee, exempted from GST. Next, here in the first case, the status of the educational institution is a service provider. Now in the second case, the status of this educational institution is a service recipient, because they said like educational services to an educational institution, right? Services provided to an educational institution by way of transportation of students, faculty and staff, exempted, and catering services, exempted, security or cleaning housekeeping services, exempted, right, sir? And supply of online educational journals and periodicals also exempted. Now, sir, here, what do you mean by the definition of educational institution? Sir, here educational institution means the institution providing services by way of conducting preschool education. Preschool education means, for easy understanding, I can say play school. Play school. And then education up to higher secondary school or equivalent. Higher secondary school. Right, sir? So higher secondary school means to be up to +2, intermediate, +2. Okay, sir. So the educational institution which providing the services, in the form of preschool education, exempted, and education up to +2, exempted. Okay, sir. And then education as a part of curriculum for obtaining a qualification recognized by any law for the time being in force. Any law means any law which is prevailing in India. In India. Suppose that you're studying in a university. So you're studying BCom in Osmania University. You're studying that particular BCom in a particular college. And after the completion of 3 years course, you will be getting a qualification, Bachelor of Commerce. Right, sir? So you're obtaining a qualification which is recognized by law, which is enforcing in India. So now the services provided by such college also exempted from GST. See, if you are pursuing any education of a particular curriculum, right, for obtaining a qualification, then that educational services also exempted from GST. And third one, vocational education courses exempted from GST. Clear? Next, conducting of degree courses by colleges, universities, institutions. These courses lead to grant of qualification recognized by law, and exemption is available. Okay, next, training given by the private coaching institutions. Such training does not lead to a grant of recognized qualification, hence exemption not available. Right, sir? See, you're taking coaching at present. You're taking coaching Stresta, right? So it's an online platform. See, just by taking the coaching in Stresta institution, you're not going to get any CA qualification. Yes or no? Right. You need to clear the examinations, which is being conducted by the ICAI. Then only you will get the qualification. Just by taking coaching in Stresta institution, or for that matter, any other private coaching institution. See, we are here providing only a coaching. We are giving you a knowledge to clear the examinations. That's it. We are not giving you a qualification, right? So whatever the services, training services provided by private institutions, fully taxable. Okay, sir. Next, education as a part of a curriculum for obtaining a qualification recognized by law of a foreign country, taxable. Only a course recognized by an Indian law are covered herein, and hence exemption not available. Right. Suppose that you would like to pursue CPA, Certified Public Accountant. CPA course is not being recognized by an Indian law. It is being recognized by the US law. Right. So for whatever the training services you're receiving in relation to CPA here in India, they are fully taxable. Okay, next. Private coaching centers are other unrecognized institutions. Though self-styled as educational institution, would not be treated as educational institutions. There are so many universities. They are not actually universities. They are deemed to be universities. Deemed universities. Unrecognized educational institutions. They are not covered under the definition here. Hence, whatever the services they are providing, fully taxable. Okay, sir. Next. And after that, important points, IIMs, services provided by Indian Institute of Management. So here the services provided by IIMs are fully exempted except only one particular service. Services provided by the IIMs in the form of ETP, executive training programs. These are taxable, sir. As you already know that I'm working in Coal India Limited. See now, for every 2-3 years, we will be having ETP programs, executive training programs in a reputed business schools like IIMs, right, sir? IBM, then very famous B schools in India, whatever the very famous B schools in India, right? In all that B schools, we will be having ETP, executive training programs. Now, whatever the services provided by IIMs in the form of executive training programs, they are fully taxable, sir, at the rate of 18%. Right? IIMs also provide very short-term, short duration participation certificate courses to the executives professionals. Right? And these participation certificates are not any qualifications. Right? And participants are also not considered as students of IIM. We are executives. We are the employees of the central government, public sector undertakings. So company itself providing us these services, and these short-term duration executive programs are taxable at the rate of 18%. Okay, now next, health-related services. Sir, health-related services are fully exempted from GST, sir. Whether that hospital services being provided by a government hospital or a private hospital, fully exempted, because health related services is an essential service, right? And services provided by veterinary clinic in relation to healthcare of animals, birds, fully exempted. Services provided by the cord blood banks in relation to the preservation of stem cells, fully exempted, right? Services provided by clinical establishment, hospitals, whether it's a government hospital, whether it is a private hospital, it is fully exempted from tax. And services provided by authorized medical practitioners, doctors, fully exempted. Paramedics means what? Supporting staff. Paramedics means supporting staff. Lab technicians, pathologists, nurses, right? All these are services also exempted. Transportation of patient in an ambulance, fully exempted. Whether it's a private ambulance or a government ambulance, fully exempted. Next, healthcare services does not include hair transplant or cosmetic or plastic surgeries. These are taxable, sir. These are taxable. See, in case if these are being undertaken in an emergency situation, if the plastic surgery is not happen, then the patient will die. It's an emergency situation. If it is happened in an emergency situation, then it will be exempted. Plastic surgery, see, if this plastic surgery is not going to be taken, then the patient will be died definitely. It's an emergency situation. So plastic surgery should be undertaken to save the life of that patient. Then in that case, the plastic surgery is exempted from GST. Otherwise, in normal cases, right, it will be fully taxable. Suppose that I'm going for hair transplantation, right, sir? See, I'm fully healthy man. I'm going for hair transplantation. Now, what are the services I'm receiving in relation to the hair transplant? They are fully taxable. Following, sir. Next. Only the services in relation to recognized systems of medicines in India exempted from tax. Now then you will get a doubt. What are the recognized systems of medicines in India? You can see allopathy, homeopathy, Siddha, Unani, yoga, naturopathy, Ayurveda. These are all the recognized systems of medicines in India, and any healthcare services in relation to these medication systems are exempted from GST. Okay, I'll give you one example here, like some palliative care services. It is also a kind of healthcare services, but these are taxable because palliative care services are not being covered under recognized systems of medicines in India. It is not a recognized systems of medicines in India, hence fully taxable. Okay, next. A room provided for rent in patient in the hospitals exempted from tax. Services provided by doctors, consultants, technicians exempted from tax. Right, even the retention money also exempted from tax. Okay, and supply of food and this not that important, you just go through it once. Construction related services, you simply remember this. I'm going to underline some points, just remember that point. Then if you come across that point, it will be exempted from tax. Like you can see here, uh, housing for all mission, Pradhan Mantri Awas Yojana. So any construction services in relation to housing for all mission or Pradhan Mantri Awas Yojana fully exempted from tax. Next. Here, try to remember this distribution network up to the tube well. These are electricity distribution services, ma. So electricity distribution network up to tube well of the farmer exempted from tax. And in this construction services in relation to a single residential unit means an independent property, independent house, a single independent house. So any construction services related to a single residential independent house fully exempted from tax. That's it. Okay, sir. Next, passenger transportation services. So when it comes to the air transportation services, right, transportation of passengers by air embarking from or terminating in an airport located in Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, or Bagdogra located in West Bengal. So from these states, if you are availing air transportation services now, fully exempted. In remaining on all other states, like if you are availing the air transportation services from Maharashtra, Karnataka, Tamil Nadu, except Bagdogra in West Bengal, Telangana, Andhra Pradesh, fully taxable. Air transportation services fully taxable except in these states. Okay, then non-air conditioned contract carriage, non-AC transportation service, right? For a contract basis, fully exempted. Other than radio taxi, if it is a radio taxi, then it is taxable. For radio taxi, GST applicable. For the transportation of passengers, excluding tourism conducted to charter or hire, again it will be taxable. See, if you are booking a non-AC contract carriage, a non-AC bus, a non-AC jeep, a non-AC vehicle, right, for the transportation of passengers, then okay, it is exempted. But if you are booking for your tourism purposes, then it will be taxable. Okay, next, stage carriages other than air conditioned stage carriages. So means local stage carriages means the buses or the local transportation vehicles stops from one stage to another stage, like red buses, right, sir? Local city buses within the city, those are the buses roaming within the city, right? They are covered under stage carriages category. If it is a non-AC stage carriage, exempted. If it is a AC stage carriage, taxable. Okay, now next, services provided by a tour operator to a foreign tourist exempted from GST, provided such services are in relation to a tour conducted outside the India. Right, sir? Suppose that a US national, an American citizen came to India for tourism purposes. Now, a tour operator services provided to him, they are fully taxable. Okay. Now, after the completion of his tour in India, he's going to Sri Lanka. Now, the same Indian tour operator, Indian tour operator providing the services to that American national in relation to a tour conducted in Sri Lanka. So an Indian tour operator providing services to a foreign tourist in relation to a tour conducted outside the India. If all these conditions are satisfied, then you can claim exemption benefit. Okay, now next, services of transportation of passengers by railways other than first class or air conditioned coach. See, these two are taxable, sir. Now what are exempted? Now in exempted category, no, you will get like general class, you will get like second sitting, you will get like sleeper class. These are exempted. Now, whatever the classes you will be having over and above sleeper class, like share car, first AC, second AC, third AC, they are taxable. Okay, next. Services by way of metro rail, monorail, tramways exempted. Services through inland waterways exempted. Public transport by vessels. If it is for local transportation, exempted. If it is for tourism purposes, taxable. Right, sir? By vessel, if it is for a tourism purposes, then it will be taxable. Okay, sir. Next, metered cabs, auto rickshaws, including e-rickshaws, exempted. Okay, next. Goods transportation services. Services by way of transportation of goods by road, except the services are provided by GTA or courier agency. These are taxable. GTA and courier agency. So transportation of goods by road by a GTA, fully taxable. By a courier agency, fully taxable. By inland waterways, exempted. Okay, now exempted. And next. Exemption is granted to the transportation of the specified goods through rail or vessel or by a GTA in a goods carriage are presented in the following table. So in relation to some specified goods, we have exemption benefits now. Now, first of all, let us see what are the specified goods. You can see here, these are all the specified goods. Transportation of the following goods by rail, vessel or GTA exempted from tax, like agricultural produces, milk, salt, food grains, organic manure, newspapers, magazines, relief materials, and defense or military equipments. All these are covered under specified goods category, and the transportation of these goods by way of rail or vessel or GTA fully exempted from tax. Okay, sir. Next, and even the railway equipments materials also exempted from tax. Now, in case if the transportation of the following goods by GTA, right? If the GTA providing the services in relation to the transportation of goods, right? If the consignment amount is, right, in a single goods carriage, the goods are being covered and the goods are being transported in a single vehicle where the freight charge is not exceeding 1500 rupees, right? So gross amount charged for the transportation of goods on a consignment in a single goods carriage means in a single vehicle. So only one truck we are using for transportation of goods, and the freight charges we are claiming hardly some, let us say 1000 rupees, fully exempted. 2000 fully taxable. So as long as the freight charges are less than or equal to 1500, no, you can claim exempted. Okay, next, goods where the gross amount charged for the transportation of all such goods for a single consignee. So the truck is only one, but in the truck, different consignees goods are being transported, right? For every consignee, the amount charged is less than or equal to 750, exempted. More than 750, taxable. So don't confuse between point number 1 and point number 2. Point number 1 is stretching on a single goods carriage. So you are using only a single vehicle for the transportation of goods of a particular consignee. If the freight charges levied is less than or equal to 1500, exempted. Second point, stretching with respect to a single consignee. For a single consignee, freight charges are levied less than or equal to 750, exempted. More than 750, taxable. Okay, ma'am. Life insurance related services, I've already given it in italics. So whatever the text I've given in italics, that means they are not that important from examination point of view. Okay, ma. General insurance, same. I've given the text in italics font style, not that important from examination point of view. And next important service, I can say banking and financial services. Okay, sir. So next one, sir, banking and financial services. So services provided by the Reserve Bank of India, fully exempted from GST, sir. Sir, here you have to see, as long as the Reserve Bank of India in a supplier position, service provider, then it can claim exemption benefits. But if the service recipient status, if the RBI is a service recipient, see, any services provided by RBI exempted, but any services provided to RBI taxable. Okay, sir. Next, services by way of extending the deposits, loans, or advances, insofar as the consideration is represented by way of interest or discount, fully exempted from tax. But of course, the important point here is, other than the interest involved in the credit card services. See, if you made any delay in payment of your credit card bill, for which you happen to pay the interest, that interest amount is liable to GST. That interest amount is liable to GST. Are you following or not? Okay. Next, sale or purchase of foreign currency amongst banks, authorized dealers of foreign exchange, amongst the banks and such dealers. Foreign exchange services provided by a bank to another bank, exempted. Provided by a bank to foreign exchange dealer, exempted. Provided by a foreign exchange dealer to a bank, exempted. Provided by a foreign exchange dealer to another foreign exchange dealer, exempted. Provided by a bank to public, taxable. Provided by a foreign exchange dealer to general public, taxable. So you can see here, foreign exchange services provided by themselves to themselves. So between them, bank to bank, bank to foreign exchange dealer, or foreign exchange dealer to bank, bank to foreign exchange dealer to another foreign exchange dealer. If the services are flowing in between them, fully exempted. But if the same services are being provided to general public, fully taxable. Are you following, sir? Okay. You can see in the running notes also. So these are the running notes for exemptions. So banking and financial services, you can see SBI providing foreign exchange services to ICICI Bank. So a bank to another bank, exempted. SBI providing the same services to Western Union money transfer, and authorized foreign exchange dealer, exempted. If the SBI providing same services to a general public, fully taxable. Are you following, sir? Every one of you. Okay, next. Then, sir, I've already told you services provided by the banking and financial institutions. Majority of their services are exempted from GST, sir. Majority of their services are exempted from GST. Like, what are the different kinds of services they will provide? They will provide services like deposits, withdrawals, loans. Yes or no? Bank guarantees, overdrafts, demand drafts. These are the general services they will provide to us. All these services are exempted from GST. The money involving, the amount involving in these particular services that is fully exempted, sir, right? But if they are receiving, if they are claiming any additional charges for providing the services in the form of service charges, in the form of administrative charges, right, then they are taxable. Like for creating a DD, demand draft, you have to pay some commission charges. For the processing of a loan, you have to pay some administrative charges. You have to pay some processing charges. They are taxable. So the loan amount or the interest which you are going to pay on that loan amount, not taxable. But any additional amount you are paying in the form of service charges, processing charges, administrative charges, they are fully taxable. Okay, now you can see here service charges, administrative charges, entry charges collected over and above the interest on loan or advance or a deposit are not exempted from GST. Clear? Next, any interest or delayed payment charges charged to clients for delay in payment of brokerage amount, settlement obligations, margin trading facility is exempted from GST. Since settlement obligations, margin trading facilities are transactions which are in the nature of extending loans. Next, this is important point. Interest charged on outstanding credit balances. Interest charged on outstanding credit balances has been specifically excluded from entry number 27. Hence, the same is liable to GST. Okay, sir. Next. Supply of services by some specific bodies like ESIC. Any services provided by Employee State Insurance Corporation exempted. Any services provided by EPFO, Employees Provident Fund Organization, exempted. Services provided by CMPFO, Coal Mines Provident Fund Organizations. Presently, my PF is being covered under CMPFO because I am belonging to Coal Mines Organization, right? So Ministry of Coal. My company covers under Ministry of Coal, right? So we have a separate Provident Fund Organization, CMPFO, Coal Mines Provident Fund Organization. Right, sir. So that is also exempted from GST. Services provided by NPS, National Pension System Trust, exempted from GST, and services provided by IRDAI, Insurance Regulatory and Development Authority of India, fully exempted from GST, and services provided by SEBI, fully exempted from GST. Okay, sir. Next, pension related services. Any services related to Atal Pension Yojana exempted from GST, and any pension scheme organized by the state governments also exempted from GST. Okay, next. Next important services. Government as a supplier of services. So generally, majority of the services provided by the governments are exempted from GST, like, right? So like services provided in form of municipality corporations, panchayats, exempted. And yeah, services provided by the central government, state government, union territories, local authorities. Majority of the services provided by these people are exempted, but except the following services. These 4 services provided by central government, state government, union territories, local authorities are taxable under GST. What are that 4 services? You can see here. First one, services provided by Department of Post, Postal Departmental Services. And we all know that only 4 services provided by Postal Department are taxable. What are they, ma? You can check out in running notes. Department of Post, right? So only these 4 services are taxable. Speed Post, Express Parcel Post, Life Insurance Services, and Agency Services. If these services are provided by Department of Post, Postal Department to general public, taxable. But if the same services are being provided to central government, state government, and union territories, exempted. Okay, ma. Next. Services in relation to aircraft or a vessel inside or outside the precincts of the ports or airports, fully exempted. Transportation of the goods or passengers, we have already come across, right? And any other services provided to business entity apart from the above 3, taxable, right? Now you'll get a doubt here, sir, what do you mean by the agency services? You said like postal departmental providing the services of agency services. Now that agency services are taxable. Now what kind of agency services you're talking about? Sir, here agency services means distribution of mutual funds, bonds, passport application, collection of telephone or electricity bills on a commission basis. See, all these kind of services you can find in a postal department. Okay, now these are comes under agency services provided by postal department, taxable. Next, services provided by the Department of Post, taxable under forward charge mechanisms. That four services provided by postal department, taxable under forward charge mechanism. Next, services provided by police or security agencies of government to any PSUs or private business entities are taxable and taxable under reverse charge mechanism. Okay, ma'am. And next, important services. Yeah, this one you can see. Services applied by central government, state government, union territory to their undertakings are public sector undertakings by way of guaranteeing the loans taken by such undertakings or PSUs from the banking companies and financial institutions. Like, look at this example. Coal India Limited, right? My employer company now. It is a central government public sector undertaking, right? Sir? It applied for a loan, let us say 100 crores from SBI, for which SBI asking for guarantee. Okay, Coal India Limited, don't worry, I'll give you 100 crores loan to you, but I need a guarantor for this. So immediately Coal India Limited approached the central government because its PSU, its undertaking. It is central government undertaking, sir. So central government come forward and giving the guarantee to SBI. Don't worry, SBI. If Coal India Limited fails to make the repayment, don't worry, I'll pay you. I'll pay you that 100 crores with interest. So here the central government providing the guarantee services to a banking company in relation to a loan taken by its undertaking, a public sector undertaking. So now whatever the guarantor services provided by the central government here, fully exempted from GST. Next. Services provided by CG, SG, UT local authorities by way of a registration under any law for the time being in force. Registration, like, sir, whenever you want to establish a company, you have to be registered under ROC, Registrar of Companies. You have to obtain a registration certificate from the ROC, for which you need to pay certain amount from 7,000, 8,000 rupees. You have to pay the challans to register as a company, right? So now here the registration charges, whatever you are paying here, the registration charges are exempted from GST, right? Whatever the services provided in the form of a registration by the CG, SG, UTR local authority, exempted, sir. Next, services in the form of testing, calibration, safety checker, certification relating to protection of safety of workers, consumers, or public at large, including fire license, right? So these are all the services also exempted from GST. Next, services provided by CG, SG, Union Territory, local authorities by way of issuance of a passport, visa, driving license, birth certificate, or death certificate. So for getting this passport, yes, you need to pay certain amount like 3,000 rupees. I paid 3,000 rupees for getting my passport, right? In a passport seva kendras. Now, whatever the 3,000 I paid, that is exempted from GST. For driving license, I paid 1,500 rupees in the RTA services centers, exempted from GST. For getting birth certificates or death certificates from the municipal authorities, you need to pay certain amount to them, and that amount also exempted from GST. Okay, sir. Next. Services provided by CGSG, UT, or LA by way of tolerating the non-performance of contract, for which the consideration is in the form of fines or liquidated damages, also exempted from GST. Next. Now here the government as a recipient of services. That means now from now onwards, the government status is service recipient. It is receiving services from the other persons. Now, what are the kind of services received by governments or exempted from GST? First one, pure services, pure labor services, pure works contract services, exempted from GST, right? Like you can see the example here, supply of manpower for the cleanliness of the roads, public places, architect services, consulting engineering services, advisory services, and the like. Right? These are all covered under the pure services category, exempted from GST. Okay, now next. A governmental authority awarding the work of maintenance of the street lights in a municipal area to an agency, which involves, apart from the maintenance, replacement of defunct lights and other space. Here also the pure services comes into the picture, but of course, in the case of defunct lights, defunct means the lights which are not functioning, right? Not lighting, not functioning. So in the place of the defunct lights, they will take out the defunct light and they will install another new light. Goods also involving here, but the goods amount not exceeding 25% of the total value. Then they will be treated as pure services exempted from GST. Next, services provided by fair price shops. In a general language, we call them as ration shops. In order to provide some basic goods, essential goods to the public at large at the subsidized prices, they will give the dealerships to the people, ration dealerships. Ration dealers will be there. They will take the dealership and the government will provide the goods like food grains, kerosene, sugar, edible oils. Now the ration dealer, after obtaining the goods from the government, he has to distribute to the public at the subsidized prices. So here the ration dealer providing the services of distribution of such goods to the public. See, generally the government has to distribute, but the government is busy with works, and also it creates an employment to the unemployed youth. So those who are unemployed, they can apply for the ration dealer, right? Ration dealership. And once they got the dealership from the government, on a monthly basis, he will receive the goods, rice, food grains, kerosene, sugar, edible oils. Now he has to distribute the same to the, especially to the white card holders, white ration card holders at the subsidized prices, for which he will get the commission. He will get the margin from the government. And what are the services provided by that fair price shops? Exempted from GST. Next. Services, legal services. Government services are completed. Government services are completed. Government as a supplier completed. Government as a recipient also completed. Legal services. Sir, I've already told you when it comes to the legal services, 90% of the cases, legal services are exempted. Only the legal services are taxable only when the same is being provided to a business entity whose turnover exceeded the threshold limits during the preceding financial year. That's it. That is the only case where legal services are taxable. Are you following, sir? Legal services are taxable only when they are provided to a business entity. So the recipient must be a business entity and whose aggregate turnover exceeded the specified threshold limits, like 10 lakhs or 20 lakhs or 40 lakhs, as the case may be, during the preceding financial year. Right, sir? Then only the legal services are taxable, whether it is being provided by an individual advocate or a senior advocate or a firm of advocate or tribunals. So as long as the service recipient is a business entity whose aggregate turnover during the preceding financial year exceeding threshold limits, then only legal services are taxable, and that is to under reverse charge mechanism. That is the only case. That's it. Remaining in all other cases, legal services are exempted from GST. That's it. Next. Skill development related services. You can see here, you just try to remember these two wordings. National Skill Development Corporation and Sector Skill Council, fully exempted from GST. Okay, now next. So next one, artist performance services. Services by an artist by way of a performance in folk or classical art forms of music, dance, theater, exempted from GST. Okay, sir. But you have to see the consideration amount is, as long as the consideration amount is less than or equal to 1,50,000 rupees, then it is exempted. If the consideration amount is exceeding 1,50,000 rupees, it will be taxable. It will be taxable. Okay, sir. But if the same services are provided as a brand ambassador, there is no exemption limit. Even if you are providing the services as a brand ambassador for 10,000 rupees, the entire 10,000 is taxable. Entire 10,000 is taxable. Okay, mom. So you can see here, if the consideration charged for such performance is not more than 1,50,000, exempted. However, the exemption will not apply to services provided by such artist as a brand ambassador. Okay, sir. You can see the running notes also here. Artist performance services. Remuneration is less than or equal to 1,50,000, exempted. More than 1,50,000, taxable. But if such services are provided as a brand ambassador, fully taxable. Fully taxable under GST, irrespective of the fact the consideration received is more than 1,50,000 or not. Okay, ma'am. Next. All other activities by an artist in other art forms, fully taxable. Other art forms means Western music, Western dance, modern theaters, and performance of actors in films or television serials. So all our heroes and heroines are supporting staff, crew, cast, whatever the remuneration they are receiving for acting in films, for acting in television serials, fully taxable. Next, activities of artists in still art forms, fully taxable. Next. Right to admission to the various events, like services by way of admission to a museum, national park, wildlife sanctuary, tiger reserve, zoo, fully exempted. Fully exempted, provided the consideration amount is less than or equal to 500 rupees per person. Sir, I went to a national park where I have paid the entrance ticket. I paid for entrance ticket some 200 rupees, fully exempted. Sir, I went to a wildlife sanctuary where I have paid the entrance ticket of 1,000 rupees, fully taxable. So as long as the consideration is less than or equal to 500 per person, fully exempted. If the consideration amount is greater than 500 rupees per person, then it will be fully taxable. It will be fully taxable. Okay, ma. Next, services by way of admission to a protected monuments like Golconda Fort in Hyderabad, Taj Mahal in Agra, right? And Varangal Fort in Varangal, Kakatiya Fort, Khila Varangal. We call it as Khila Varangal. So these are all the protected monuments covered under the Ancient Monuments and Archaeological Sites and Remains Act. So whatever the admission ticket fees you are paying for getting admission into these protected monuments, that entrance ticket, whatever the price you paid, if it is less than or equal to 500, fully exempted, more than 500, fully taxable. Next, services by way of right to admission to circus, dance, theatrical performance, fully exempted, as long as the consideration is not exceeding 500. Award functions, concert, pageant, musical performances, recognized sporting events, planetarium, as long as the consideration not more than 500 per person, exempted. Okay, now next, Services provided by unincorporated entity, right? Services provided by an unincorporated body or non-profit entity to its own members, then up to 7,500 per month per member, it will be exempted. More than that, it will be taxable, sir. Right? And you can see the summary here. Regarding this, we'll be having one more provision at the end of the chapter. At the end of the chapter, I'll tell you, sir, regarding this. Next. Other exempted services like supply of services associated with transit cargo to the Nepal and Bhutan, landlocked countries exempted from GST. Next. Services by way of renting of residential dwelling for the use as residence, fully exempted from GST. I've already told you, renting of immovable property. Renting of immovable property. If that immovable property used for residential purposes, then it will be exempted from GST. Okay, next. Services by way of hotel, inn, guest house, club or campsite, as long as the accommodation charges is less than 1,000 per day or equal to 1,000 per day, fully exempted. Okay, sir. Right? Next. Services by way of access to a road by paying toll charges, fully exempted. And services provided by FSSAI, Food Safety and Standards Authority of India, to the food business operators, fully exempted. Services provided by independent journalists, Press Trust of India, fully exempted. Services provided by public libraries, fully exempted. Services provided by a person in relation to a business exhibition conducted outside the India, fully exempted. Services by way of slaughtering of animals, fully exempted. Then services by foreign diplomatic missions located outside in India, fully exempted. So what are covered under foreign diplomatic missions? Foreign diplomatic mission means embassy offices of different countries or consular offices of different countries, offices of Ministry of External Affairs, so these are all the covered under foreign diplomatic missions. Okay, ma'am. And services provided by way of providing information under RTI Act, fully exempted. Services provided to a recognized sports body. Services provided to a recognized sports body. By a player, referee, umpire, coach, or team manager for participation in a sporting event organized by a recognized sports body, fully exempted. Sir, if you take the game of cricket, see, players, referees, umpires, coach, and team manager, the services provided by these people to the recognized sports body like our BCCI, Board of Control for Cricket in India, BCCI. The services provided by these people, players, coach, referee, team manager, right, umpires, these services are exempted, provided such services should be provided in relation to a sporting event organized by the recognized sports body. Like, sir, if Virat Kohli playing for India in an ICC sporting events, then it will be exempted. But if the same Virat Kohli playing for Royal Challengers Bangalore to a franchisee, he's playing for a franchisee, not a recognized sports body, fully taxable. Dhoni playing for India, exempted. Dhoni playing for CSK, Chennai Super Kings, taxable. Are you following, sir? Next, services provided by selectors, commentators, curators, and technical experts, fully taxable. Service of a player to a franchisee, fully taxable. I already told you, fully taxable. Next. Services provided by the operators of common biomedical waste treatment facility to a clinical establishment by way of treatment of disposal of biomedical waste or other process incidental thereto. See, in every day, no, if you go to the corporate hospital, in every day, there will be at least a ton of medical waste will be generated. More than 1 ton, I can say. Medical waste will be generated. And that medical waste should be disposed of far away from the city. So there are some private people who will provide these services. They will come every day. At the end of every day, they will come to the hospitals and they will pick up the medi waste and they will take that medi waste out of the city and they will dump there. For providing these services, they will charge certain amount and that amount also exempted from GST. Next, services by way of public conveniences such as bathrooms, washrooms, laboratories, urinals or toilets fully exempted. And now let us see the latest amendments with respect to this chapter. Transportation of goods by vessel or by aircraft at the time of export from the customs station of clearance in India to a place outside the India. Earlier, we used to have this exemption benefit only up to 30th September 2020. Now it's been increased up to 30th September 2021. Next, services, satellite launching services provided by ISRO, Indian Space Research Organization, or ACL, Antariksh Corporation Limited, or NSIL, National New Space India Limited. So satellite launching services provided by ISRO, ACL and NSIL fully exempted from GST. This is the latest amendment. And some new circulars or notifications issued in relation to some exemptions, like new entry 9AA. This is with respect to the services provided by FIFA, Federation International de Football Association, right? Services provided by FIFA and its subsidiaries in relation to the events conducted FIFA Under-17 Women's World Cup 2020 to be hosted in India. Unfortunately, it was not hosted in 2020 because of the COVID. Also not possible in 2021 because of the COVID, right, sir? So mostly it's going to be happening in 2022, right? Any services in relation to the FIFA Under-17 Women's World Cup fully exempted from GST, sir. Next, new entry 24B, services by way of storage and warehousing of cereals, pulses, fruits, nuts and vegetables fully exempted from GST. New entry 82A, services by way of right to admission to the events organized under FIFA Under-17 Women's World Cup. I've already told you, FIFA Under-17 Women's World Cup, any services in relation to this sporting event fully exempted from GST. Next. Clarification on issues related to monthly contribution and subscription charged by Resident Welfare Association. So this is like for every apartment, there will be apartment owners association right now, and they will be collecting maintenance charges from you. If you're having a flat in that apartment, if you're owning a flat in that apartment, you have to pay the maintenance charges, right? And if that maintenance charges amount is less than or equal to 7,500 per month, fully exempted. If exceeding more than 7,500 per month, it will be taxable. Okay, so look at the issues. Are the maintenance charges paid by the residents to the welfare association in a housing society exempted from GST? If yes, is there any upper limit? Answer is yes. The limit is 7,500 per month per member. Up to 7,500 per month per member, it is exempted from GST. Okay, ma. Next, second issue. Resident Welfare Association has an aggregate turnover of 20 lakhs or less in a financial year. Is it required to take any registration under GST? Answer is no. even if the maintenance charges are 7,500 per month per member. See, only when its turnover exceeded the specified threshold limit, then only it is required to take registration under GST. Clear, sir? Next, you can see here, if the annual turnover of resident welfare association more than 20 lakhs and monthly maintenance charges they are collecting more than 7,500, whether exempted from GST? No, it will be taxable. Next, annual turnover more than 20 lakhs means it has to take the registration, and the monthly maintenance charges 7,500 or less, fully exempted from GST. Next, annual turnover of resident welfare association less than or equal to 20 lakhs. So it is an unregistered. As long as it is an unregistered association, you just ignore about this. In both the cases, it is fully exempted. Okay, sir. Next. Sir, whether that resident welfare association entitled to claim any input tax credit? Answer is yes, it can claim input tax credit. Next. Sir, if a person owning 2 flats in an apartment, now with respect to 2 flats, the limit 7,500 applicable for every flat, or both the flats put together 7,500? Answer, sir, if I am owning 2 flats in an apartment, now for me the limit is 15,000. For every flat I'll get exemption limit of 7,500. So I have 2 flats, so 15,000 rupees. Okay, right. So that's chapter number 4, exemptions, marathon video. Almost I've covered 80% of exemptions now. Hardly 20% I've left over. Okay, sir. So I'm closing this video here. In the next session, we'll start with the most important chapter, time and value of supply. Time of supply and as well as value of supply. Okay, ma? Right. So if you come across any doubts in regarding this exemptions chapter provisions, you can directly text me or call me, sir. I'll reply. Okay, don't hesitate to ask any doubts. You can ask me anytime. Clear, sir? So see you in the next session for chapter number 5. Till then, have a good day and good night. Stay home and stay safe. Bye, sir. Very good evening, students. So welcome to the GST marathon classes. So in the last class, we have completed chapter number 4, exemptions. Now time for the chapter number 5, time and value of supply. Time and value of supply. As I said in the last class, this is a very important chapter, right? From which you can expect at least 2 questions. One question from the time of supply concept and the other question from value of supply concept. So in this chapter, we have 2 different concepts. Part 1, time of supply. 1 question we can expect, and part 2, value of supply, 1 question we can expect. So the total weightage of this chapter, 10 marks. Okay, ma? Now let's moving on to the part 1 of the chapter, which is time of supply. So generally, what is time of supply? What it deals with? So time of supply deals with the point in time when the liability to pay the tax arises. When the liability to pay tax arises. Right. So what is time of supply? It explains you about the point of time when you are supposed to pay a GST. Right. A taxable event arises. Just look at this example, ma. On 15th of November, January 2022, order was placed for 10,000 units. 20th January 2022, advance received 5 lakhs. On 25th of January 2022, goods were supplied. And 10th February 2022, the remaining balance received, let it be some 15 lakhs. The total order value 20 lakhs, out of which on 20th January we received 5 lakhs. On 10th of February, we received the balance of 15 lakhs. So there are different events. You received the order on 15th of Jan, advance received 20th Jan, goods were supplied on 25th of January, and the balance amount received on 10th of February. Now, there are 4 different dates. Now, among these 4 different dates, on which date there is a liability arises on the supplier? On which date he is subject to the payment of GST. Right, sir? So when the levy will get attracted on supplier, there are 4 different dates, 4 different events. Right. So that is what actually we are going to learn from this topic, time of supply. On which date the levy gets attracted. At what point of time the levy gets attracted. That is what time of supply deals with. Okay, ma. Right. Without knowing the time of supply, you cannot say like, okay, for this particular day or for this particular month, I'm supposed to pay the tax. See, if time of supply occurs in the January month, then the liability arises on you in the January month, and that liability should be discharged in the February month. So only when you know that, okay, on me in the month of January, the levy got attracted, liability was arised on me, and that liability I have to discharge in the month of February. So without knowing this, you cannot say I'm supposed to pay GST in the month of February. Right. So first you should understand when the levy was attracted on you, and that was explained in time of supply. Okay, sir. So look at here. So GST is payable on the supply of the goods or services. Time of supply deals with the point in time when the liability to pay tax is arises. When the liability to pay the tax is arises. Okay, sir. And here the provision of time of supply of the goods and time of supply of services have been discussed in section number 12 and 13 of the CGST Act respectively. Section 12 deals with time of supply of the goods and section 13 deals with time of supply of services. Okay, ma. So first let us discuss with time of supply of the goods. So totally there are 5 different cases. Number 1, time of supply of the goods on which the supplier is liable to pay the tax, nothing but forward charge mechanism. So how to determine the time of supply in the case of forward charge mechanism? Number 2, time of supply in the case of reverse charge mechanism, RCM. Number 3, supply of vouchers that can be exchangeable for goods. Number 4, residual cases. And number 5, enhancement in the value on account of interest or late fees, etc. for delayed payment. So there are totally 5 different situations in which we are going to decide how to determine the time of supply. Okay. Now first let us discuss with supply of the goods where the supplier is liable to pay the tax. Forward charge mechanism. Right, sir. You can see the running notes. Time of supply of the goods, forward charge mechanism. Right. I have prepared that particular provision in a chart form. If the invoice was issued within the time limit for the issuance of invoice discussed in section number 31 of the CGST Act. Right, sir. So when it comes to the time of supply in the case of forward charge mechanism, first you have to look into whether the invoice was issued within the time limit or not. If the invoice was issued within the time limit, then time of supply will be the date of invoice or the date of payment, whichever is earlier. Date of invoice or date of payment, whichever is earlier. Okay, sir. In case if that invoice was not issued within the time limit, then the last date on which the invoice ought to have been issued or the date of payment, whichever is earlier. The last date, suppose that the time limit is 30 days. 30 days. Suppose that this 30 days time limit is applicable only in the case of time of supply of services. For time of supply of the goods, there is no number was mentioned. Okay, within this particular number of days that invoice should have been issued, that number of days was not mentioned in the case of goods. For goods, we have a separate time limit. We will be discussing next couple of minutes. Okay, suppose that the invoice should have been issued within 30 days, but you have not issued. So then the last date on which the invoice ought to have been issued, and nothing but 30th day. Nothing but 30th day. This is the last date on which you should have been issued the invoice. So 30th day or the date of payment, whichever is earlier. Okay, now see in both the cases, if you observe the date of payment right, was there in both the cases. What is changing? If you issue the invoice within the time limit, compare the date of payment with the date of invoice, whichever is earlier, will be your time of supply. If invoice was not issued within the time limit, compare the date of payment with the last date on which the invoice could have been issued, should have been issued, whichever is earlier. So in both the cases, date of payment was there. The only changing is that invoice. Okay, ma'am? Right. Now, what is the time limit for the issuance of invoice? See, we have different types of provisions for the different categories of issues. You can see here, time limit for the issuance of tax invoice. In case supply involving the goods, then the invoice need to be issued either before or at the time of removal of the goods, or at the time of delivery of the goods, or at the time of the goods are making available to the recipient. Right, sir? Suppose that I purchased a mobile phone. So I went to a showroom, right? And then I purchased a mobile phone. I paid the amount. So now you tell me whether the mobile phone will be issued to me immediately, or they will say like, okay, sir, you can go to your home. We will deliver the mobile phone either maybe today or tomorrow. No, right? You can carry the mobile phone. You can easily carry the mobile phone. Say if it is an electronical item like washing machine, a refrigerator, air conditioner, you cannot carry. So that is why that large electronical appliances will be delivered by the showroom personnel, maybe at the same day or maybe tomorrow or next day. But the things like laptop, mobile phones, you can carry easily, right, sir? So I purchased a mobile phone, I paid the amount, and I take out that mobile phone. So in that scenario, the invoice will be issued to me immediately, sir. So I paid the amount, right? So the invoice will be issued to me immediately. So generally in these cases, whenever there is a removal of the goods, right? Whenever there is the supplies involving the movement of the goods, right? So the invoice should be issued either before the removal of the goods or at the time of removal of the goods. Next, in the case of delivery of the goods, like I purchased an air conditioner. Now in that scenario, sir, either that invoice should be issued at the time of full payment of the consideration, right? Or that original invoice can be issued at the time of delivery of the goods. So that's why they said like the invoice needs to be issued either before or delivery of the goods. And next, third one, making the goods available to recipient. Nothing but here we are neither removing the goods from our showroom nor giving the delivery. So we are just making available to the recipient. Okay, recipient, whatever the goods you purchased, the goods are stored here. You can come and you can take out. The goods are stored in my godown. You can come and take out the goods. So we are just making the goods available to recipient. At the same time, at the time of installation of the lifts, escalators, or assembling of the large plant and machineries, so the manufacturing will be happen at the recipient's premises, right, sir? So if you look at the manufacturing of escalators or lifts, they will be manufactured or they will be assembled at the recipient's premises. And the huge plant and machinery is very bigger in size. They will be assembled at the recipient's premises. And after the assembling completed, testing and everything completed, that means we are making that good available to the recipient. Now in that scenario, the invoice should be issued either before or at the time of making the goods available to the recipient. Okay, ma'am. Next, in the case of continuous supply of the goods, continuous supply of the goods means we will be having some regular customers, those customers who are regularly purchasing the goods from us on a continuous basis. Means here, in order to call a particular transaction as a continuous supply of the goods, there are certain conditions to be satisfied, like there is a minimum supply of the goods for a continuous period of 3 months, and the goods are going to be issued in installments, and the payments are receiving in a timely basis, like on a fortnight basis or on a monthly basis. periodical statements are going to be issued for the same. See, if all these conditions are satisfied, then that particular transaction would be treated as a continuous supply of the goods. Okay, ma'am. So in case of the continuous supply of the goods, the invoice should be issued before or at the time of issuance of a periodical statement or the receipt of the periodical payments, which is earlier. Okay, next. Third scenario, when the goods are sent on sale on approval basis. So that means initially we will sell the goods to the customer, but the sale should be considered only when the customer approves, accepts such goods. Say at the time of removal of the goods from our factory to the customer premises, we cannot say the sale is completed. We have to say the sale is completed only when the customer accepts the goods. That is what we call goods sent on sale or return basis. Yes or no? Now, in that scenario, the invoice should be issued before or at the time of supply or 6 months from the date of removal, whichever is earlier. So we have some examples for this. You can see here, sale on approval basis. So on 15th of October, goods were sold on approval basis. 25th October, we received the approval from customer. So hardly within 10 days, we got the approval from customer. Now in this scenario, the supply was set to be completed on 25th of October 2021, not on 15th of October. Okay, next. So in this example, the invoice should be issued on or before 25th of October 2021. Okay, ma'am. Next. Suppose in the above example, the customer gives the approval on 18th of May 2022. When you have actually sold, you have sold on 15th of October. You have sent the goods on sale or return basis to the customer on 15th of October. You received the approval on 18th of May. It's been almost more than 6 months. You can see here the 6 months time limit completed on 14th of April 2022. From 15th of October 2021 till 14th of April 2022, if you calculate that 6 months time period comes out. Now in this scenario, right, what is the provision for the time limit for issuance of invoice? The invoice should be issued before or at the time of supply. When the supply is set to be completed, only when we receive the approval from customer. When we receive the approval from customer, 18th of May 2022, or 6 months from the date of removal of the goods. When you remove the goods, 15th of October, and when the 6 months time period is going to be completed, 14th of April. So before or at the time of supply, that means on or before 18th of May 2022 or 14th of April 2022, whichever is earlier. Now in this scenario, the invoice should have been issued on or before 14th of April 2022. Okay, ma'am. So that's the time limit for the issuance of the invoice. Clear, sir? Next. Excess payment up to 1,000 rupees. Option of taking the invoice as date of time of supply. Short advances, we call it as short advances or petty advances. See, generally in the normal cases where the advance amount is exceeding 1,000 rupees, earlier we used to take the date of receipt of that advance as time of supply. But now that provision have been removed, at least for goods, not for services, for goods. In the case of advances, you have to follow the normal provisions, right, sir? Earlier, we used to take the date of receipt of that advance will be the time of supply. But now that concept has been changed and that provision was mentioned here. That provision was mentioned here. Okay, sir. Right? Next. Next. In the case of the short advances where the advance amount is less than 1,000 rupees. Now, in that scenario, the option is given to the supplier. The supplier can take the date of invoice as time of supply. Okay, for this is also I've given one example here. Yeah, short advances. Yeah, in the case of small advances, time of supply in the case of small advances. Look at this example. December 2021, we got the broadband bill of 1,526 rupees. I've given him 2,000 rupees note I've given him 2000 rupees note. And the people said me like, sir, we don't have change. That person who's sitting in the billing counter told me that there is no change. I said him, it's okay, no problem. Keep that balance with you. Adjust that balance for the next billing, for the next bill. That means for January month bill. And he said, okay, fine. So that means for the January month bill, I have paid an advance amount of 474 rupees. So it is a small advance. Now in this case, with respect to the small advance of 474 rupees, what will be the time of supply? It's nothing but date of issuance of invoice for the January 2022. Because that advance I have paid for Jan 2022, no. So that is why whenever the invoice was issued for Jan 2022, that will be the time of supply for a small advance. Clear, sir? Right? Next. Now, what do you mean by the date of receipt of payment? So you can see here for date of receipt of payment also, I've given you the explanation here. So payment generally we can receive in two ways. We can receive in cash and we can receive through check. There are two options available, received in cash and received in check. In case if you received in the cash, right, then the date of receipt of payment will be the date on which you received the payment in cash. Look at this example. Payment received from customer in cash on 10th of October 2021. Now in this scenario, what is the date of receipt of payment? Same date. The date of receipt of payment will be 10th October 2021. Next. In case if we receive the payment through check, suppose that the payment was received through check on 10th of October 2021. And on the same day, we have entered that entry into our books of account. So date of entry into our books of account, 10th October 2021. Okay, sir. Now the payment was created to bank account on 15th of October 2021. Because as and when you receive the check, you may not send the check for collection to the bank. Because you generally wait for a collection of the bunch of checks. Then only you can send that bunch of checks to the banker for the collection. And at the same time, even after sending the check for collection to the banker will take time. At least 2-3 days, he will take time for collection and crediting that amount to your bank account. Are you following, sir? Every one of you. Now, in this scenario, you have received the check from customer on 10th October, made an entry into your books of account on the same day, but the payment was credited to your bank account on 15th of October. Now, in this scenario, what will be the date of receipt of payment? The answer is whichever is earlier. The date of entry made into the books of account or date on which the payment was credited to bank account, whichever is earlier. So in this scenario, the earlier amount date is 10th October. That should be treated as a date of receipt of payment. Clear, sir? Sometimes the customers may directly credit the amount to our account through RTGS or through NEFT or IMPS. Later on, he will intimate it to you. He will inform to you, sir, I've sent you some 5 lakhs rupees to your account through IMPS. Kindly check and confirm me. So due to our busy schedule, we might check that same in the same day, or we might check after 2-3 days. After 2-3 days, we checked out and we confirm it to the customer. Yes, sir, we received the payment. Then we will inform to our accountant. Okay, accountant, from so and so customer, we received the amount of 3 lakhs. Make the entry into your books of account. Now, in that scenario, the date on which the payment was credited of credit to the bank account will be earlier. Later on, we will make entry into our books of account. So that possibility is also there. That is why they have mentioned whichever is earlier. Okay, ma'am. Next. So that's about time of supply in the case of forward charge mechanism. Clear, sir? Next. In case if any of the events are not, information is not available, like, see, generally for the calculation, for the determination of the time of supply, we need 3 things: date of invoice, date of payment, and the last date on which the invoice would have been issued. Suppose that in case if we don't have sufficient information, like we don't know when the payment was received, in that scenario, you can directly take the date of issuance of invoice or the last date on which the invoice should have been issued will be your time of supply. Okay, next. Time of supply in the case of reverse charge mechanism. So look at here, sir. Reverse charge mechanism. Again, a chart presentation. And here you have to see whether the payment was made to the customer within a period of 30 days from the date of issuance of invoice. Right. See, I purchased a goods, sir. I purchased goods, right? And that particular transaction is taxable under reverse charge mechanism. So being the recipient, I have to pay the GST on it. Now for the payment of GST, first I should find out what is time of supply for this transaction. Now that will be decided basing on the fact that whether I have paid the amount of consideration to the supplier within a period of 30 days from the date of issuance of invoice or not. If I paid consideration within a period of 30 days from the date of issuance of invoice, then the time of supply will be the date on which the goods are received or date of payment, whichever is earlier. The date on which I have received the goods into my premises or the date of payment, whichever is earlier. In case, if I have not made the payment within a period of 30 days, then the time of supply will be date on which the goods were received or 31st day from the date of issuance of invoice, whichever is earlier. Now, in both the cases, you can observe what is common. The date on which goods were received. This point is common in both the cases. What is changing? If the payment was made within 30 days, compare with the date of payment, whichever is earlier will be your time of supply. If the payment was not made within a period of 30 days, then compare with the 31st day from the date of issuance of invoice. Compare with the 31st day from the date of issuance of invoice, and whichever is earlier will be your time of supply. Whichever is earlier will be your time of supply. Clear now, everyone? Next. Third one, supply of vouchers. Determination of the time of supply of vouchers that can be exchangeable for goods. Right, sir. Now look at the provisions. Right. So supply of vouchers exchangeable for goods. What do you mean by it? Like, sir, if you have any of your friends or relatives or neighbors working in MNCs, multinational companies, ask them about their food coupons, ask them about their food vouchers. Generally, there is a company called Sodexo, which will sell the food coupons to the companies, and that companies gives that food coupons to their employees as a perquisite. Of course, the company will deduct certain amount with respect to the same from the salaries of the employee, but comparatively less, right, sir? Sodexo food coupons, food vouchers. Now, the employee who got the food coupons will encash the same food coupon in the canteen and he will get the food from the canteen. So that means here that food coupon, that food voucher is exchanging for what? Exchanging for food items. Exchanging for food items. Like this, there are certain cases where you can exchange your voucher for the goods. Just like gift vouchers. Olden days now, when it comes to the marriages, we used to carry the gifts directly. Right. Whatever the gift we want to give, some watches or mobile phones or some gift articles. But nowadays the trend has been changed. Nowadays the people are giving gift vouchers. See, if you want to present him a gift of 10,000 rupees, now we can deposit the 10,000 in any of the Amazon or Flipkart or Paytm. They will generate a gift voucher and will be given to you. The same you can be transferred to the person to whom you would like to give a gift. Now later on, with that gift voucher, he can encash that gift voucher in that particular showroom and he can buy whatever the article he wants to purchase. Earlier now, in the olden days, there are some routine gifts like wall clocks, photo frames. Yes or no? How many photo frames you would like to have in your house? Yes or no, sir? Right? because we cannot deny the gift from the relatives or friends, right? Arey, how many gifts you will give to me? Yeah, gift photo frames. Already many people give me the photo frames. At for one particular point of time, my home become a photo frame, right? I don't need photo frame. You cannot say like this to a person who is giving the same to you as a gift, right? But if it is a gift voucher, then whatever is needed to you, by encashing that gift voucher, you can purchase. You can purchase a refrigerator, you can purchase a TV, you can purchase an air conditioner, you can purchase whatever you want, right, sir? So this is what the vouchers exchangeable for goods. Now, in that scenario, how to determine the time of supply? Sir, if the supply is identifiable at the time of issuance of voucher, what do you mean by the supply is identifiable? Like, sir, if I give you a shirt coupon, if I give you a shirt coupon, so that means this coupon can be exchanged only for a shirt, only for a shirt. If I give you a pizza coupon, so this coupon can be exchanged for a pizza. That's it. You cannot get any other different items, right? So that means at the time of issuance of the voucher itself, the supply is identifiable. That means the item which you're going to get is known to you. It is identifiable. Then in that scenario, the time of supply will be the date of issuance of the vouchers. Sir, in case if the supply is not identifiable, supply is not identifiable like gift vouchers. So I've given you a gift voucher of 10,000 rupees. Now with this gift voucher of 10,000 rupees, what is the item you're going to purchase? That I don't know. That even you don't know, because you haven't decided like which article or which item you are going to purchase. So gift vouchers, food coupons. Food coupons also, see, food coupon, yes, they are exchangeable for food items, but what kind of food item? Whether it is used for breakfast or whether it is going to be used for a lunch or dinner, whether it is going to use it for a veg or non-veg, yes or no? So the supply is not identifiable at the time of issuance of the voucher. Now in that scenario, the time of supply will be date of redemption of voucher. The date on which you are going to redeem that voucher will be the time of supply. Clear? So that is how you have to determine the time of supply in the case of the vouchers exchangeable for goods. Okay, sir. Now fourth case, time of supply in the case of enhancement in the value. Means, sir, I made a supply today. Okay. I've given supply of the goods to my customer and I've given him some 1 month credit period. That means he is going to pay me only after 1 month, not immediately, after 1 month. Clear, sir? But I've made a condition. What condition I've made is, okay, customer, if you're unable to pay within a period of 1 month, I will levy interest. The goods worth I have transferred, the worth of the goods I have transferred, let us assume that 10 lakhs rupees. And I've given him 1 month credit period time limit. 1 month credit period time limit. If he pay me the amount, if he pay me the amount of 10 lakhs within 1 month, okay, fine, no problem. But if he made any delay, if we take more than 1 month time period, then I'll clearly say to him that I will levy interest at the rate of 10%. Right, sir? Let us assume that he made a delay of some 2 months, for which I have levied an interest of approximately, let us say, 20,000 rupees. So that means I'm going to collect from him like 10 lakh 20,000 rupees. 10 lakhs is the original order value, 20,000 is interest for the delayed payment of consideration. Sir, for this 10 lakhs, we can easily determine the time of supply as we have the information of date of invoice, date of payment, right, sir? But with respect to this 20,000, we don't be having any information of date of invoice, because for the late fees, for the interest, generally we don't issue any invoices. Generally, we don't issue any invoices. Yes or no, ma? Just a second, sir. Yeah. Generally, we don't issue any invoices for interest payments. So we don't have any date of invoice information. We will be having only date of payment. So that date of payment will be treated as time of supply. So whatever the addition in value you're receiving, incremental value you're receiving in the form of an interest or late fees or penalty for the delayed payment of consideration. So for that increment in value, that enhancement in value, the time of supply is equal to the date on which you have received that addition in value. So as and when you receive this interest amount, that particular date will be the time of supply. Okay, ma? Right. Now the last one, in the case of residual cases. Now what do you mean by the residual cases here? I've explained through an example, ma. You just look at here. There is a supplier called Mr. Ram from Telangana. In financial year 2021, he is having a turnover of 20 lakhs. Sorry, not 25 lakhs. He's having a turnover of 25 lakhs. Okay, so that means his turnover exceeded 20 lakhs during that financial year 2021. Means he should apply for registration during the current previous year 21-22. He is liable for registration. Okay, now, but you can see Mr. Ram not applied for registration and continued to do the business as an unregistered person. There are so many Rams in India, not only in Telangana, in India. The people whose aggregate turnover exceeded threshold limits but haven't gone for registration yet. They have not taken registration. There are lakhs of people like that. Okay, now. Finally, his adventure comes to an end, sir, on 10th October 2021. Department found him and issued a notice for the payment of GST. Now, on 15th of October 2021, Mr. Ram paid a GST of 20 lakhs. Right. So these kind of situations comes under residual cases. The people who are supposed to be taken the registration but have not taken registration. Are you following, sir? Whose aggregate turnover exceeded the threshold limit but not taken the registration. Sometimes the people who are registered but may get involving into some fraudulent cases, like they have he's a registered supplier. During that previous year, he made a turnover of 20 lakhs, but he disclosed in GST returns only 15 lakhs. 5 lakhs were, not disclosed in the GST returns. But yet any point of time, the department definitely will come to know about this fact. May not be immediately, but definitely. Even after 2-3 years, the department got to know about this. Immediately, the department will issue a notice to you. So and so in the particular financial year, you have not disclosed this 5 lakhs worth of transactions in your GSTR 1 or GSTR 3B. So pay this GST liability with interest. So that kind of situations also comes under residual cases. Now in that scenario, what will be the time of supply? You can see here, if the supplier is registered, then the due date of the filing of periodical returns will be the time of supply. If supplier is unregistered, the date on which he paid the GST amount will be the time of supply. In the first example, I have taken that supplier as unregistered. That is why the date on which he paid the GST amount, he paid GST of 20 lakhs on 15th of October, that will be time of supply. Whereas in case if the supplier is registered person, then the due date of filing of periodical return will be the time of supply. Clear? So with this, we have completed time of supply of goods. Time of supply of goods. Just go through it and ask the doubts if any, sir. Completed, ma? Now time of supply of services. Concept of time of supply of services. So again, 5 situations. Time of supply of service in the case where the supplier is liable to pay the tax, that means forward charge mechanism. Time of supply of services in the case the receipt of the service taxable under reverse charge mechanism. And third one, time of supply of services in the case of supply of vouchers that can be exchangeable for services. Fourth one, residual cases. And fifth one, addition in value by way of interest or fees for the penalty for delayed payment of that particular consideration. Okay, ma, same 5 situations, but this time we are going to determine the time of supply of services. Just now we completed time of supply of goods. Now time for time of supply of services. Let us see one by one. First one, time of supply of the service in case the supplier is liable to pay the tax, nothing but forward charge mechanism. Now look at the running notes, sir. Time of supply of services, forward charge mechanism. So again, here you have to see whether the invoice was issued within a period of time limit is there. Now here the number of days are there. Unlike the goods, services, we have a time limit, number of days. 30 days is a time limit, sir. So if the invoice was issued within a period of 30 days from the date of issuance of invoice, right, sir? Sorry, from the date of completion of service. It's not invoice, sir. From the date of completion of service. If the invoice was issued within a period of 30 days from the date of completion of service. If the answer is yes, then the time of supply will be the date of issuance of invoice or the date of payment, whichever is earlier. If the answer is no, that means the invoice was not issued within a period of 30 days from the date of completion of service. Now in that scenario, time of supply will be the date of completion of service or date of payment, whichever is earlier. Right, sir? So we have a time limit of 30 days here with respect to services. But of course, in the case of banking companies, financial institutions, insurance companies, and NBFCs, the time limit increases to 45 days. In the case of normal firms and companies, normal suppliers, 30 days is the time limit. In the case of banking and financial institutions, insurance companies, and NBFCs, 45 days is the time limit. Okay, ma'am. Every one of you. Now, sir, if the invoice was issued within a time limit of 30 days, then date of invoice or date of payment, whichever is earlier. If not, date of completion of service or date of payment, whichever is earlier. So generally for the determination of time of supply, we want 3 informations: date of issuance of invoice, date of completion of service, and date of payment. Okay. If invoice is issued within a period of 30 days, then the comparison between these two. Date of invoice or date of payment, whichever is earlier. If invoice was not issued within a period of 30 days, that means the invoice information won't be there. If the invoice was not issued within a period of 30 days, the invoice information was not there, you just strike it out and make a comparison between date of completion of service and date of payment. Whichever is earlier will be the time of supply. So this is an easy way to remember. Okay, ma'am. Next. Time limit for the issuance of invoices in the case of cessation of services before the supply completed. That means, look at here, sir. A Limited is a supplier, B Limited is a recipient. They both are entered into an agreement. A Limited agreed to provide the AMC services to B Limited for the financial year 2021-22. Consideration agreed 10 lakhs. A Limited provided services till 31st of July 2021. That means the very first quarter. Very first quarter. And the relevant consideration is 3 lakhs. Let us assume 3 lakhs for the first quarter. Now on 1st August 2021 onwards, B Limited terminated the AMC contract because they are not satisfied with the AMC services they provided. They have terminated the contract. Now in this scenario, the A Limited should issue the invoice with respect to the services rendered till 31st of July 2021 for rupees 3 lakhs. Okay, ma? So that's the concept. Next. Time of supply of services in the case of reverse charge mechanism. Right. Now here you have to see whether the payment was made within a period of 60 days or not. In time of supply of goods reverse charge mechanism, we have seen 30 days time limit. Here 60 days time limit. Right. Whether the payment was made within a period of 60 days from the date of invoice or not. If the answer is yes, time of supply, you can straight away take date of payment. The date on which the payment was made as consideration, that will be the time of supply. If the answer is no, 61st day, 61st day from the date of issuance of invoice will be the time of supply. So if we made in 60 days time limit, if the payment was made directly, date of payment will be time of supply. If the payment was not made within a period of 60 days, 61st day will be time of supply. Okay, ma? Next. Sir, in the case of import of services from an associated enterprises, so you're importing the services from an associated enterprises. Now, in that scenario, the time of supply will be date of entry into the books of account or the date of payment, whichever is earlier. So why this provision has been made here, date of entry in books of account? Because basically in the case of associated enterprises, the payment of consideration won't be happen. Mostly book adjustments will happen. The person who provided the services will make a credit entry. The person who received the services made a debit entry in their books of accounts. That's it. Just some book adjustments will be happen because they are associated enterprises, sister concerned companies like that. Both that companies are belonging to same establishment. So that's why there is no payment of consideration will be happen. Majority of the cases, only book adjustments happen. That is why this provision has been made. Even if there is no payment was happened between two associated enterprises, but still the time of supply should be determined basing on the fact they will anyhow make the entry into books of account. So the date on which they made the entry in books of account will be time of supply. If payment was really happened, very happy. Compare the date of entry in books of account with date of payment, whichever is earlier will be your time of supply. Clear now? Next. Time of supply of services in the case of supply of vouchers. In the case of vouchers, right, sir? So here, whenever you are redeeming a voucher for receiving a service, sir, if the service is identifiable, okay, what kind of service you are going to get by redeeming this voucher? If that is identifiable, suppose that I've given you one Javed and Habib salon voucher. So what kind of services you're going to get? You're going to get some salon services, right? Hair cutting services, kind of. Yes or no? So that means the services are identifiable. In that scenario, time of supply is equal to date of issuance of vouchers. If supply is not identifiable, date of redemption of vouchers will be time of supply. Okay, ma. This is same as the time of supply of the goods. Okay, next. Reverse charge mechanism we have done with already. And supply of vouchers, just now we have discussed, right? If the supply of services identifiable, date of issuance of the voucher will be time of supply. In any other case, date of redemption of the voucher will be the time of supply. Residual cases, same here. If the supplier is registered person, due date for the filing of periodical return. If the supplier is unregistered person, date of payment of tax will be the time of supply. In the case of addition in value, because of the interest or late fees or penalties for the delayed payment of consideration, time of supply is equal to the date on which the supplier receives such addition in value. Right, sir? So there are some common provisions in the case of time of supply of goods and time of supply of services. What are the common provisions? You can see here, date of receipt of payment. Right? What is date of receipt of payment? The date on which entry is made into books of account or the date on which the payment was created to bank account, whichever is earlier. Same provision you study in time of supply of goods, time of supply of services. Next, vouchers exchangeable. Right? If supply is identifiable, time of supply is equal to date of issuance of voucher. If supply is not identifiable, time of supply is equal to date of redemption of voucher. In both the cases, time of supply of goods and time of supply of services, you will find the same provision. Residual cases, If supplier is registered, due date for the filing of periodical returns will be the time of supply. If supplier is unregistered, the due date of payment of tax will be the time of supply. Right, in both the cases, time of supply of the goods, same provision, time of supply of services, same provision. Addition in value, date of time of supply is equal to date on which that addition in value is received. So these provisions, these 4 provisions are same in the case of time of supply of the goods and as well as time of supply of services. Okay, ma. With this, we have completed the first part of the chapter, that is time of supply. As I already told you, there are 2 parts. Part 1 deals with time of supply, part 2 deals with value of supply. So just go through the time of supply, then ask me if you have any doubts. Completed. Now time for the part 2, value of supply. Value of supply. Now what are we going to learn from here? Value of supply concept. So generally, in order to find out the GST liability, we need 2 things. Number 1, the value. Number 2, rate of tax. So today I purchased a mobile phone. Example, I purchased a mobile phone worth rupees some 20,000. And the GST was levied at the rate of 18%. Now what would be my GST liability, sir? 3,600. How did you get this? GST liability is equal to 20,000 is the value of supply into 18% is the rate of GST. That would give me 3,600 as GST liability. So for finding out the GST liability, 2 things are very, very important. What is the value of supply and what is the rate of GST? So regarding the rate of GST, there is no need to worry. Already the department has been given the different rates of GSTs that are attracted to different types of goods and services. You can just follow that list and basing on which you can decide what is the rate applicable. Right, sir? But what is more important here is how to determine the value of supply. Value of supply. So that is what we are going to learn here. How to determine the value of supply. So generally, as per the provisions of the CGST Act, like section number 15, section 15 deals with the value of supply. And section 15 said the value of supply is equal to transaction value. Right here, value means nothing but transaction value. So what do you mean by the transaction value? It is the price paid or payable for the supply of the goods and or services. Whatever the price paid or payable in relation to the supply of the goods or in relation to the supply of services is nothing but the transaction value. Look at this example, sir. Mr. X purchased an air conditioner. Price of the air conditioner 30,000, but he actually paid only 28,000. He actually paid only 28,000. The original price is 30,000, but you have paid only 28,000. Now in this scenario, you have to take the transaction value as 28,000 rupees only. You should not go by the original price. How much actually you paid is what you called transaction value. Clear, sir? Next. Determination of the value of supply. Transaction value as per the provisions of section 15 should be considered as value of supply if the following 2 conditions are satisfied. What are they? Supply should be between unrelated persons and the price must be the sole consideration. If both of these conditions are satisfied, then only you have to take the value of supply as transaction value. Right, sir? If both of these 2 conditions are satisfied, what are the 2 conditions? Supply should be between 2 unrelated persons, and that there must be no relationship between the supplier and recipient. Right? They must be unrelated. And number 2, the price must be the sole consideration. Okay, if any of the above 2 conditions are not satisfied, then the value of supply should be determined as per the valuation rules. Sir, valuation rules concept is not there at the CA inter level, ma. It is there at your CA final level. At CA final, not at CA inter level. At CA final level, you have that valuation rule. Okay, ma. Right? Next. Sir, here you will get a doubt like, sir, what is the problem if supplier and recipient are related persons? What's wrong in it? You are saying like supplier and recipient should not be related. That means related person cannot make the transactions between themselves. See, they can make the transactions between themselves, but because of the relationship, the price should not get affected. Are you following now? See, I'm a chartered accountant, right? Earlier, I used to be in practice. So when I was in practice, I used to provide my professional services to my clients who also involves my friends, right, sir? So being a chartered accountant, whenever my friend need a chartered accountant services, he approached me and I used to provide him the services. Are you following now? Even I used to claim the service charges from him, professional charges from him, right, sir? But comparatively less. Suppose that if I provide the services to an unknown person in relation to the filing of income tax returns, I will collect some 5,000 rupees from him. But if I provide the same filing of income tax return services to my friend, I won't collect 5,000. I hardly collect 1,000 or 2,000 rupees for him because after all, he's a friend to me. Yes or no? So because of the relationship, what is happening here? The price is getting affected. When I provided the same services to an unknown person, I've collected 5,000 rupees as fee. On that 5,000, I'll pay the GST to the department. So 5,000 into 18% rate of GST, assuming 900 rupees will be the GST revenue to the department. But whereas if I provide the same services to my friend, where I am getting only 2,000 rupees into 18%, so I'm going to pay only 360 rupees to the department. So when I render the same services to an unknown person, department is getting 900 rupees as revenue, but when I'm providing the same services to my friend, department is getting only 360 rupees as revenue. So that means because of the relationship, what is happening? The department losing its GST revenues. So that is why department made a condition like this. See, if you provide the services to a relative and you're claiming the same price as you provided the services to an unknown person, then there is no problem at all. But because of that ship, what ship? Relationship. Because of the relationship with the prices getting affected, department won't accept. Are you following, sir? Every one of you. Next. The price should be the sole consideration. So what do you mean by sole consideration? Nothing but free from adjustments. The price should be free from adjustments. Clear, sir? Means, look at this example. Mr. Ram is a supplier, supplied goods worth rupees 10 lakhs to Mr. Sham, who is a recipient. Now here Mr. Sham has to pay 10 lakhs to Mr. Ram. But Sham said, Mr. Ram, last year I've given you a loan of 2 lakhs. When you are in financial scarcity, I've given you 2 lakhs rupees. Now the 2 lakhs I'm adjusting in this particular supply. Ram said, okay, fine, you can adjust. So whatever the Sham earlier he given 2 lakhs rupees, he's adjusting to this value of supply and ultimately he's paying only 8 lakhs. Now in this case, Mr. Ram would say to the department, sir, I've received only 8 lakhs from my recipient. So I will pay the 8 lakhs, only the GST on this 8 lakhs. But whatever the goods you supplied, what is the worth of the goods you supplied? 10 lakhs. So on 10 lakhs, you have to pay GST. Are you following or not? Here, I cannot say this 8 lakhs is a sole consideration. This 8 lakhs is a consideration after adjustment. Clear now? Sole consideration means it is free from adjustments. No adjustments would have been made with respect to that consideration. Then only it should be said as a sole consideration. Okay, now, next. Say transaction value definition would be in 3 parts, ma. First one, meaning, which we have already done. Second one, inclusions, and third one, exclusions. Okay, so look at the inclusions into the transaction value. So the first one, taxes other than GST are includable. Like some local taxes or municipal taxes, whatever that there, no sir, that taxes amounts are forming part of your transaction value. except GST. You just forget about the CGST, SGST because they are not forming part of your transaction value, sir. Because whatever you collected, the same you would be remitted to the department. So it is not forming part of transaction value. But other than GST, whatever the taxes you paid in the form of municipal taxes or some local taxes, that are always forming part of your transaction value. Next, any amount paid to a third party on behalf of the supplier by the recipient of the taxable supply in relation to such supply, and such amount is not included in the price, shall be included in the value of taxable supply. Like, let me explain you this with the help of example. Look at here, sir. GrandBiz is a event management company, supplier in this case. ABC Limited is a recipient. So ABC Company Limited have a dealers meet on a particular day. So for conducting this dealers meet, ABC Limited entered into a contract with GrandBiz because they are the event management company. So ABC Limited set the date. So on this particular date, let us say on 1st January 2022, we will be having a dealers meet across right with all the dealers across India. We have a meeting. There are approximately 500 people will come. So you need to conduct that meeting, make the necessary arrangements and everything. GrandBiz set for that and they entered into an agreement for the same. The value of supply, they agreed 5 lakhs. Consideration agreed 5 lakhs. So that means that GrandBiz company has now have to book a banquet hall or a kind of a seminar hall in a hotel. And from the time when the meeting was started till its conclusion, whatever the things needed, like a projector, right, a monitor, and mics, sound system, furniture, right? So all the things have to be taken care by the GrandBiz, right? And even the breakfast, lunch, evening snacks, everything, right? So that is why he's called as an event manager. Everything he should be take care of. So GrandBiz, they are ready to provide all the services except soft drinks because they don't have any stock of soft drinks and they won't provide any soft drinks. So for which purposes they entered into a contract with soft drinks vendor. So GrandBiz contacted a soft drinks vendor nearby. So on a particular date, I'm going to conduct an event. In that event, you have to supply the soft drinks. So that soft drinks vendor said, okay, fine. For which he is claiming 50,000 rupees consideration. So finally the day comes and the event was successfully completed. Now at the end of the day, soft drinks vendor went to the GrandBiz, said like, sir, as you said, I've supplied the soft drinks. And as we agreed, the consideration of 50,000, please paid me the consideration. Now GrandBiz approached ABC Limited, right? And then said, sir, in this particular event, the soft drinks have been supplied by this person. So pay him 50,000 rupees. Now, actually, it is a liability of the GrandBiz to pay to the soft drinks vendor because GrandBiz appointed him. Yes or no? But who is making the payment? The recipient is making the payment. So whenever the recipient making the payment to a third party on behalf of the supplier, so whatever the amount paid, this 50,000 is always forming part of transaction value. Now in this case, ABC Limited paid 50,000 to soft drinks vendor and 4,50,000 to GrandBiz. So 50,000 to the soft drinks vendor, 4,50,000 to the GrandBiz. Okay, now GrandBiz cannot say that, sir, I've received only 4,50,000 as consideration. So the value of supply only 4,50,000. No. Whatever the recipient paid on behalf of supplier to the third party, even this amount also forming part of this consideration. So 4,50,000 plus 50,000. So the value of supply provided by the GrandBiz is rupees 5 lakhs. Are you following or not, every one of you? Right, sir? So along with the recordings of these marathon classes, we'll also made available this running notes, sir. Don't worry. This running notes also made available to you at free of cost. You can download these running notes and follow these examples. Okay, ma. Next. All the incidental expenses up to the point of delivery of the goods or services, if charged to the recipient, shall be included in the value of taxable supplies. All the incidental and all the ancillary expenses are always forming part of transaction value, like commission paid to the agents, packing charges, right, sir? Right, primary packing, secondary packing, special packing, all these are always forming part of your transaction value. Inspection or certification charges, installation and testing charges, weighment charges, loading, unloading, designing charges, all these are always forming part of your transaction value. Next, interest, late fees or penalty for the delayed payment of consideration, includable into the transaction value. Subsidies from the central government and state government shall not be includable in transaction value. This we have already discussed. Whenever you come across the subsidies, first you have to look after from whom we received the subsidy. If the subsidy is being received from a central government or a state government, then it should not be forming part of transaction value. It should not be forming part of transaction value. But if the subsidy is being received from any other person other than central government and state government, it is always forming part of transaction value. Clear, sir? Every one of you. Right. Next. So regarding the same also, I have given you a chart here. Okay. Next. Inclusion of outward freight and transit insurance. We have already discussed whatever the expenditure incurred up to the point of delivery of the goods, they're always forming part of transaction value. They're always forming part of transaction value. Clear? So these are all the inclusions. Now, time for the exclusions. Exclusions in transaction value. Here we are going to discuss about only one exclusion, that is discounts. That is discounts. So you can see here regarding the discounts also I have given you a chart. So if the discounts are known or given at the time or before the supply, at the time of supply or at the before the time of supply, then they are always excludable from transaction value. Right? Like example, you can see here, buy one worth 1,000 rupees, get discount of 100 rupees. So by any trouser worth of 1,000 rupees, you will get a discount of 100 rupees. Now here, you know the discount before the supply. Yes or no? Now in that scenario, so you purchase a shirt rupees worth 1,000, right? But you're going to pay only 900 rupees because you'll get a discount of 100 rupees. So this is what we call transaction value. In this scenario, the discount should be excluded. Only 900 should be treated as a transaction value. So if the discounts are known to you at the time of supply or before the supply, then the discounts are always excludable from transaction value. But there are some situations where the discounts are not known at the time of supply. Discounts are not known at the time of supply. Now in that scenario, sir, in that scenario, the discounts are excludable from transaction value, but there are certain conditions to be satisfied. There are three conditions. If all the three conditions are satisfied, then after sales discounts would also be excludable from transaction value. But if any one of the three conditions are not satisfied, if any one of the three conditions are all the three conditions are not satisfied, then the after sales discounts are always forming part of transaction value. Clear, sir? Just look at this example. In the case of after sales discounts, right, the discount amount to be excludable only on satisfaction of the following conditions. What are they? After sales discount should be in terms of agreement. So that means there must be a reference about the discounts in the agreement between the supplier and recipient, and it should be linked to the invoices, right? And after sales discounts, you are going to whatever the discounts you are going to give, that discount should be linked to a particular invoice, and the proportionate amount of input tax credit should be reversed by the recipient in his electronic credit ledger. Then when all these three conditions are satisfied, after sales discounts are excludable. If any of these conditions are not satisfied, after sales discounts are includable. Are you following, sir? Now, sir, what are the three conditions? I'll tell you once again. First one, suppose that today I have supplied 10,000 units to a recipient who is happened to be a wholesaler. Sir, he said like, sir, it's a new product. I may not be sell this 10,000 units at the given price. I said, you have to sell this each and every product for 100 rupees. But the wholesaler said, sir, we already have some substitute to this particular product in the open market, which is available at 80 rupees only. Why the customers will come forward and purchase for 100 rupees? So I cannot sell this 10,000 units. Max I can sell up to 1,000 or 2,000 units. But you being the manufacturer, in order to promote your product, what you will say, okay, keep the 10,000 units with you. Don't worry. Try to sell as many as possible. I'll come back after 1 month. I'll come back after 1 month. If still these goods are lying with you after 1 month, I'll give you some discounts for the immediate sales. So recipient okay and accepted, and he taken 10,000 goods from us. After 1 month, the manufacturer again back to the wholesaler to see how many units he was sold. Sir, in that 1 month period, as the wholesaler said earlier, he was able to sell only 2,000 units. He was able to sold only 2,000 units. 8,000 units still lying in the wholesaler's godown. Now the manufacturer said, okay, fine. Give 30% discount. So that means now you sell this particular product as at 70 rupees only. So that means now whatever this 30 rupees is giving, this is what we call after sales discount. Right, sir? Now here, this after sales discount information should be there in an agreement, which is being entered by the manufacturer and wholesaler at the time of selling of the goods. So in that agreement, okay, there should be a provision. After a particular period of time, if the wholesaler is unable to sell, then the manufacturer will give a certain percentage as discount. That provision should be exist in the agreement. Number 2, it should be linked to the invoices. Means, so now whatever the 30% discount is we are going to give, is it with respect to all the 10,000 units? No. He already sold 2,000 units. No, only 8,000 units are lying in go down. So the 30% discount is giving only with respect to the 8,000 goods. Right, sir? Next, proportionate amount of IDC should be reversed. Like, look at this example. Mr. Manufacturer supplied 10,000 units worth 10 lakhs to the distributor, recipient here. And discount is given 1.8 lakhs. So 8.2 lakhs is ultimately pay net amount. Okay, now, sir, earlier when he received the goods worth 10 lakhs, GST comes out to be 1,20,000. So he would have taken a credit of 1,20,000 in his electronic credit ledger. But later on, after giving 1,80,000 as discount, he is going to pay only 8,20,000 rupees, on which the GST amount would have been just 98,400. See, if he is going to pay 10 lakhs, he is entitled for 1,20,000 input tax credit. But end of the day, how much he is paying, sir? He is paying only 8,20,000. That means he is entitled for a credit of just 98,400. Yes or no? So he is entitled for a credit of 98,400, but he has already taken a credit of 1,20,000. How much excess he has claimed? 21,600. This excess credit should be reversed in his books of account. So reversal of input tax credit 21,600. So 1,20,000 credit, 21,600 debit. Ultimately, how much is the entitlement? 98,400. Okay, now every one of you. So whatever the discount portion is there, 1,80,000, the credit attributable to this discount, 1,80,000 into 12%. Anyhow, you will get the same 21,600. The 21,600 input tax credit should be reversed by the recipient in his electronic credit ledger. That is the third condition. If all these three conditions are satisfied, after sales discounts would be excluded from the transaction value. Otherwise, after sales discount always includable into the transaction value. Clear, sir? So that's about the exclusions from the transaction value. Okay, now, right. And there are no amendments from this chapter. Okay, ma. right? So whenever there is an amendment, I've already disclosed and I've already included into this main material. The amendments which are applicable for May 2022 already included in this material. Okay, ma. So this is an amendment come marathon classes. Amendments come marathon classes. Clear? So with this, we have completed chapter number 5, marathon class. Okay. In the next class, I'll start with the chapter number 6, input tax credit. Okay, ma. Till then, have a good day and good night. Stay home and stay safe. A very good morning, students. So welcome to the GST marathon classes. So in the last class, we have completed our discussion regarding chapter number 5, that is time and value of supply. Right, sir. Now time for the chapter number 6, input tax credit. In this chapter, we are going to discuss about who are eligible for input tax credit. What is the need of allowing the input tax credit? What are the conditions to be satisfied for claiming input tax credit? What are the eligible and ineligible of items of the goods or services for input tax credit? And then what are the special cases with respect to the input tax credit? And finally, the utilization of input tax credit. All these are the topics we are going to learn from this chapter. Okay, ma. Right. First of all, let us see the introduction part. So generally, what is the need of allowing the input tax credit? The input tax credit will be given to avoid the cascading effect of taxes. So the main reason behind allowing the input tax credit is to avoid the cascading effect of taxes. You just look at the running notes. Look at this example. Mr. X is a manufacturer, purchased raw materials worth 10 lakhs and assume that it is an interstate transaction. IGST paid at the rate of 18%. So 10 lakhs into 18%, 1.8 lakhs. Now with these raw materials, he manufactured the finished goods and the value of the finished goods manufactured 15 lakhs. And he is selling them in the interstate again. So he is collecting the IGST at the rate of 18%. So 15 lakhs into 18%, which comes out to be 2.7 lakhs. So IGST collected 2.7 lakhs. From this, whatever the IGST he already paid at the time of purchase of the raw materials, that IGST he can claim as credit, only the net IGST payable 90,000 rupees. So taking the input taxes as credit from the output taxes collected is what we call input tax credit. Taking the credit of input taxes paid from output taxes collected is called as input tax credit. Clear, sir? So the meaning of input tax credit I have explained here. Input tax credit means taking the credit of input taxes paid from the output taxes collected. So input taxes is nothing but a kind of a prepaid tax. Input tax paid is nothing but a kind of a prepaid tax. Prepaid tax. That is why in the balance sheet, input tax credit will be shown as an asset item. Input tax credit will be shown as an asset item. Yes or no? Right? Because it is our asset. It's a prepaid tax. Any prepaid expenditure will be shown as current assets. Yes or no? Right. Next, why should we allow the input tax credit? For eliminating the cascading effect of taxes. What are the ill effects of cascading effect of taxes? Sir, we are not allowing input tax credit. What will happen? You know, the cascading effect of taxes comes into picture. Right, sir. See, look at here. The ill effects of the cascading effect of taxes. Tax burden on consumer increases due to double taxation. There will be rise in prices, which ultimately leads to the increase in inflation. Clear, sir? Right? Next. So important points here. You know, whenever you are claiming the input tax credit, there is no need of maintaining one-to-one relationship. Like, look at this example. Input goods purchased worth rupees, right? We have paid input GST of 10 lakhs rupees on this input goods, and with the help of which we purchased the finished goods A. Sir, here this input tax credit of 10 lakhs rupees we can be used either for the payment of output tax of finished goods A, or we can use B for the payment of finished goods B, finished goods C, finished goods D. There is no hard and fast rule that the input tax credit of input goods A should be utilized only for the finished goods A. There is no such a kind of rule. Any kind of input tax credit with in relation to any type of input goods can be used for the payment of the output tax liability of any output goods. There should not be any one-to-one relationship. There is no such a mandatory provision. Okay, ma'am. So look at the provision here. GST law does not require one-to-one correlation between the input services and final products and services. Any eligible input tax credit can be used for the payment of tax on any output supply. Okay, ma'am. Next, since ITC can be availed for the payment of tax on taxable output supply as a natural corollary, ITC is not available when the tax is not payable on output supplies, that is on exempted supplies. So with respect to the exempted supplies, you cannot claim input tax credit. Input tax credit is not allowed. Why, sir? Sir, input tax credit is allowed only when there is a situation like cascading effect of taxes. Only when your input goods and output goods are taxable, then only there is a need for input tax credit. Suppose that when your input goods are taxable, so you paid the input taxes, but your output goods are exempted from GST. Your output goods are exempted from GST. So there is no need of allowing input tax credit to such output goods, because, sir, on output goods, are you going to collect any GST? No, you're not going to collect, you're not going to levy any GST as your output goods are exempted. So when your output goods are exempted, there is no need of allowing input tax credit, as there is no question of cascading effect of taxes. The question of cascading effect of taxes comes into the picture only when both inputs and outputs are taxable. Are you following, sir? So look at this example. We purchased raw material X and we paid input GST of 5 lakhs. And with the help of the raw material X, we produced finished goods A, which is an exempted good. Assume that the cost of production 8 lakhs, right? And since whatever the input GST 5 lakhs you paid, not eligible for credit as your output goods are exempted from GST, you will add back that 5 lakhs to your cost of production, right, sir? You're not claiming it as credit. So how to recover that amount? Simply add to the cost of production. So 5 lakhs added, 13 lakhs, profit margin, let us say 2 lakhs. The total cost of production becomes 15 lakhs. Add output GST nil because your goods are exempted from GST. So the invoice value become 15 lakhs rupees. Now you tell me, in this entire process, is there any double taxation? Even though you added input tax credit, input tax is paid here, there is no double taxation happening. Double taxation comes into the picture only when you have an output GST. Since your goods are exempted, there is no output GST. So though you have added your input taxes paid to the cost of production, there is no double taxation. Hence, there is no need of allowing input tax credit. Are you following, sir? Next. The exceptions to the above principle is zero rated supplies. So with respect to the zero rated supplies, you can claim input tax credit. You can claim input tax credit. Are you following, sir? Sir, what do you mean by the zero rated supplies? Earlier we have already discussed, but let me explain you once again. You can see here the differences between the nil rated supplies and zero rated supplies. Nil rated supplies, it comes under covers under exempted category. It covers under exempted category, and the rate of tax column showing the wordings nil, and the input tax is paid not allowable as credit. Zero rated supplies, it covers under taxable category, and the rate of tax column showing 0%. Input tax is paid eligible for credit. Right, sir? So here in the rate of tax column, the wordings you will find nil. Here in rate of tax column, the wordings you find 0%. So these supplies are taxable, but taxable at 0%. Since your output goods are taxable, you are eligible for input tax credit. The examples for the zero rated supplies: number one, export supplies, And number 2, supplies made to the sales developers. Then you will get a doubt here. Sir, in the case of zero rated supplies, anyhow my output goods are taxable at 0%. I am not going to collect any output taxes. Right, sir? Now, without collecting output taxes, how can I claim input tax credit? So that is why in the case of the zero rated supplies category, on a timely basis, on a periodical basis, whatever the input taxes you paid, you can claim a refund. You can claim a refund. Clear, sir? So that was mentioned here. Exports or supplies to a special economic zone developers or units where ITC is available, even if is no tax payable on output supply. So ITC can be used either for the payment of tax on supplies made with tax, or refund of the same can be obtained. Okay, now next. So these are the important points with respect to the introduction of this chapter. Next, moving on to the definitions. Goods includes the capital goods and as well as input goods. Capital goods means the goods of value which is capitalized in the books of account, right, is called a capital goods. And input goods means goods other than capital goods. But whatever the input goods or capital goods you purchased, the purpose must be they have used or intended to be used in the course or in furtherance of business. See, if you purchase any goods for your personal purposes, you cannot claim input tax credit. Are you following or not? Next, services means input services, right? Whatever the input services you have received, that should be used or intended to be used in the course or in furtherance of your business. And next, eligibility and input tax credit conditions for taking the input tax credit. Eligibility criteria and conditions for taking the input tax credit. First, look at the eligibility for input tax credit, right, sir? So for the purpose of availment of the input tax credit, the following points shall be considered. First of all, let us try to understand what do you mean by the input tax. Input tax is nothing but the taxes paid or payable under forward charge mechanism, and also tax payable under reverse charge mechanism, right? Which also includes IGST leviable on import of goods. So any taxes paid or payable under forward charge mechanism, reverse charge mechanism, and IGST payable under import of goods. Right, sir, but excludes composition tax. Why? Because whatever the composition tax you paid, you're not eligible for input tax credit. This point we have already learned in the chapter number 3. We have already learned in chapter number 3. The persons who ever claiming the benefits of composition scheme, they are not eligible for input tax credit. Input tax credit. Okay, mom. Next, who can avail the input tax credit? Only a registered person can claim input tax credit. Next, on which a registered person claim input tax credit? On inward supplies of the goods or services or both. Now, what do you mean by inward supply? Inward supply is nothing but the goods which we received or the services which we received. Right, sir? Inward, they are incoming. So purchase of the goods or receipt of services covers under inward supplies category. Next, can a registered person claim input tax credit on inward supplies not used for his or her or its business? So generally, whatever the input goods or input services you have received, they must be used or intended to be used in the course of or in furtherance of your business. Then only whatever the input taxes you have paid on such goods or services, you can avail it as credit. Suppose that if you purchase any goods for your personal purposes, not intended to be used in the course or in furtherance of your business, you cannot claim input tax credit. Suppose if you received any services for non-business purposes, so again input tax credit not allowed. Are you following or not? Okay, ma. So the tax paid on inward supply of the goods or services are both, which are used or intended to be used for non-business purposes, cannot be availed as credit. Next, conditions for claiming the input tax credit. There are four main conditions there for availing the input tax credit. What are they? First one, documentary evidence. What is the first one, ma? Documentary evidence. First condition is that you need to produce a documentary evidence. So just by orally, I went to the department, I said to the department, okay, dear department, I purchased input goods worth rupees 1 crore, on which I paid a GST at the rate of 12%. So that means I paid an input GST of 12 lakhs. So let me avail 12 lakhs as input tax credit. Orally, you're telling to the department. Orally, there is no documentary evidence. So first of all, the department will ask you the documentary evidence. Okay, Mr. Supplier, you are saying that you paid an input tax of 12 lakhs. You purchased input goods worth 1 crore and on which you paid input tax of 12 lakhs. Very good. What is the documentary evidence for this? There must have been some documentary evidence. For you, it is an inward supply. The person whoever sold the goods to you, to him, it is an outward supply. For you, it is an input tax credit. For your supplier, it is an output tax liability. So he must have issued some document to you evidencing the supply. Yes or no? So for your supplier, it is an outward supply and it is an output tax to him. So you're claiming that 12 lakhs as input tax credit. For your supplier, it is an output tax liability. So your supplier must have been issued a document evidencing the same. The document which we call tax invoice. So if any person wants to claim input tax credit, he must have produced a documentary evidence called tax invoice. Are you following, sir? So if you have the tax invoice with you, basing upon which you can avail input tax credit. But if you don't have the tax invoice with you, you are not eligible for input tax credit. You are not eligible for input tax credit. So for availing the input tax credit, the first condition to be satisfied is the registered person, whoever claiming the input tax credit, must have the documentary evidence. Okay. A registered person can claim the input tax credit on a supply if all the following 4 conditions are satisfied. I've said there are 4 conditions to be satisfied. First one, any of the following documents shall be in the possession of the registered person who claiming the input tax credit. What are they? Tax invoice, a revised tax invoice, debit note issued by the supplier of the goods or services, or both. So what is a tax invoice, a revised tax invoices, debit notes? This we are going to learn in the chapter number 8. Chapter number 8 itself is a chapter in which we are going to discuss about tax invoices, debit notes, credit notes, and e-way bill. Okay, ma'am. Next, in case of the import, the bill of entry or similar document prescribed under the Customs Act. And the last one, in the case of the reverse charge, invoice issued by the recipient along with the proof of payment of the taxes. And in the case of the input services distributor, a document issued by the input services distributor should be there. So it depends upon the situation. You need to have, or you need to possess the necessary documents. If it is a normal case, tax invoice is enough for claiming the input tax credit. In the case of the imports, bill of entry should be there. Bill of entry, a documentary evidence. And in the case of the reverse charge, the invoices issued by the recipient should be there. And in the case of the input taxes transferred by the input service distributor, so the document issued by the input service distributor should be there. Okay, ma'am. Next, the above document should contain the following details like amount of tax charge, description of the goods and services, value of the supply, GST and number of the supplier and recipient, place of supply. These should be there, sir. Okay. And next, input tax credit of tax paid demands involving fraud. So in the fraudulent cases, whatever the input taxes you paid, that input tax is not allowed as credit. Okay, ma. Next, second condition to be satisfied, receipt of the goods and services. Right, sir? So second condition is what? If you want to avail the input tax credit, you must have received the goods into your premises. You must have received the goods into your premises. Then only you can avail the input tax credit, sir. Are you following or not? Right, sir. Without receiving the goods into your premises, you cannot avail input tax credit. Right, sir. See, irrespective of the fact whether you paid the consideration to the supplier or not, the day on which the goods were entered into your premises, you can avail input tax credit. Clear, sir? Now you just look at the running notes for the same. Yeah. So you can see here, example, Mr. X is a supplier. On 25th of August 2021, Mr. X supplied the goods to Mr. Y. Y is the recipient. Goods reached the recipient premises on 3rd of September 2021. Now, immediately on the same day, on 3rd September 2021, the recipient can avail input tax credit. So for the claiming of input tax credit, the recipient must have received the goods into his premises. Here, the fact of whether he paid the consideration or not, irrespective of the fact, of payment of consideration, even if the consideration payment was due, but still, as and when the goods reach to your premises, you can avail input tax credit. Clear, sir? But of course, we have an exception for this, that is bill to ship to model. Right, sir? Under bill to ship to model, the goods will be never be reached to the premises of recipient, but still the recipient can avail input tax credit. Like, look at this example. Look at this example. First, only concentrate on this portion. Mr. X, a supplier from Hyderabad, right, entered into a contract with Mr. Y, the recipient from Warangal. Both are belonging to the same state, Telangana. Hardly it will be a distance of 150 kilometers between Hyderabad to Warangal. My native place is Warangal, but my place of work is Hyderabad. Earlier. Now my place of work is Chhattisgarh. That is a different case. Earlier. Okay. So they entered into an agreement for the supply of the goods, and Mr. X started supplying the goods to the premises of Mr. Y. So the truck started from Hyderabad, right? It's on the way to Warangal. But meanwhile, while the goods are in transit, Mr. Y sold the same goods to Mr. Z, who is from Hyderabad. So immediately Mr. Y called to Mr. X and given the instructions, don't send the goods to Warangal. I've already sold the goods to Mr. Z. So you can directly send the goods to Mr. Z premises. Okay, sir. Now here you can see the goods are never reached to recipient's premises, but still Mr. Y can avail input tax credit. This is what we call bill to ship to model. Are you following, sir? So first a transaction between Mr. X to Mr. Y. Mr. Y is the recipient. Though the goods are not reached to Mr. Y's premises, still he can avail input tax credit. Are you following, sir? Every one of you. That's condition number 2. Condition number 3. Tax leviable on supply actually paid to the government. Right, sir? So whatever the input taxes levied, look at this example. Mr. X is a supplier, right? Sold the goods worth 10 lakhs to Mr. Y. IGST 18%, so 1,80,000. Okay, ma. So Mr. X will generate an invoice like this. Price of the goods sold 10 lakhs. Add IGST at the rate of 18%, 1.8 lakhs. So totally he will raise an invoice for 11,80,000. This 1,80,000 input tax credit can be availed by Mr. Y in his electronic credit ledger only when the same should be paid to the department. Are you following, sir? So the transaction taken place in the month of May. So in the month of June, right, this 1.8 lakhs of input tax should have been paid, remitted by Mr. X to the central government. Are you following, sir? So only when the supplier paid the taxes, that 1.8 lakhs to the central government, then only the input tax credit is allowed to the recipient. If supplier fails to make the payment of taxes to the department, recipient cannot avail the input tax credit. Clear, sir? Next. And the fourth condition is that filing of returns. So supplier and recipient both should be filed their respective returns. Then only the input tax credit can be allowed. Okay. Now look at the focus points. In case the goods are covered under an invoice are not received in a single consignment, but are received in lots or installments, then the input tax credit can be claimed only upon the receipt of the last installment. Suppose that I made an order for 1 lakh units. The supplier agreed to send me the goods in installments, an installments of 25,000 units. So first installment falls in the month of May. I have received 25,000 units. Second installment June, third installment July, and fourth installment August. Now here, can I avail the input tax credit proportionately in the month of May for 25,000 units proportionately, in the month of June 25,000 units proportionately? No, not like that. Whenever you're receiving the goods in lots, or whenever you're receiving the goods in installments, you can avail the entire input tax credit only upon the receipt of the last installment. So in the first 3 installments, in our example, May, June, July, you cannot avail input tax credit. But in the last installment, that is in the month of August, you can avail the entire input tax credit. Okay, ma? Next. In the case the payment for an invoice was not made within 180 days of the date of issuance of invoice. See, generally there is a condition that for the successful availment of the input tax credit, you must have made the payment of consideration within a period of 180 days from the date of issuance of invoice. See, you need not make the payment immediately, but you have to pay the amount within 180 days from the date of issuance of invoice. See, if you make the payment within 180 days, very good. Whatever the input taxes you have paid, that input taxes you can avail successfully. If you're already availed of it, well and good. There is no need of making any reversal provisions. There is no need of making any reversal provisions. Are you following, sir? Every one of you, right? In case if you have not made the payment of consideration to the supplier within a period of 180 days from the date of issuance of invoice, then on 181st day, immediately after the completion of 180 days, immediately on the next day, whatever the input tax credit you have already availed of, that should be reversed. That should be reversed. Are you following, sir? Reversed along with the interest of 18%. Reverse along with an interest of 18%. Right. See, I've already given an example here. Look at Mr. X is a supplier, supplied goods worth rupees 10 lakhs to Mr. Y, recipient. So CGST paid 90,000, SGST paid 90,000. So goods were supplied on 1st Jan 2021. So immediately in electronic credit ledger on 1st Jan 2021, we can avail 90,000 input tax credit. Okay, sir. Now look at this case. Mr. Y failed to make the payment of consideration within 180 days. Okay. Now Mr. Y makes the payment of consideration. Right. Okay. That's the second case. First, look at the first case. 180 days. In 180 days, he was failed to make the payment of consideration. Now calculate 180 days at what date the 180 days time limit is getting completed. So on June 29, 180 days time period completing. Immediately on the next day, 181st day. So 30th June, whatever the input tax credit he already availed of on 1st January, that should be reversed. So to reversal of input tax credit, CGST 90,000, SGST 90,000. Are you following or not? And this reversal should be happen along with interest of 18%. Clear? Next. So then you will get a doubt here. Sir, what if the case if he paid the consideration after 180 days? Let us say on 200th day, on 300th day. Okay, he not paid within a period of 6 months, but on 7th month or 8th month, he paid the consideration. Look at this. Mr. Y actually made the payment of consideration on 1st August 2021. Now, what you can do is, upon the payment of successful payment of consideration to the supplier, whatever the credit you already reversed, the credit you can be re-avail, reclaim. You can reclaim the credit. Are you following, sir? So the reclaim of input tax credit, CGST the 90,000, SGST 90,000. You can claim on actual payment of consideration. Clear? So if you paid within 180 days, whatever the credit you have already availed of, no need of reversal. But if you fail to make the payment of consideration within 180 days on 181st day, whatever the credit you already availed of, that should be reversed along with the interest of 18%. After successful payment of consideration, after 180 days, the day on which you paid the consideration, you can reclaim input tax credit. Whatever the interest you have paid, that will be credited to your electronic cash ledger. Okay, ma. Next. Of course, this 180 days condition is not applicable in the following cases where the supplies on which the tax is payable under reverse charge mechanism, deemed supplies, and additions made to the value of supply. These are the cases where that 180 days condition is not applicable, sir. Next, if depreciation claimed an input tax credit component, then input tax credit is not allowed. No double benefit. That means, look at the example. XYZ Limited purchased a plant and machinery worth 50 lakhs. Purchased a plant and machinery worth 50 lakhs. CGST paid 90%, SGST paid 9%, 9%, 4.5 lakhs, 4.5 lakhs. So the total amount paid 59 lakhs. Okay, sir. Look at the case one. In books of account, plant and machinery value recorded for 59 lakhs. On 59 lakhs, you are claiming input tax credit. Okay. Now in this scenario, whatever the 9 lakhs input taxes you have paid, 9 lakhs input taxes you have paid, not eligible for credit. Not eligible for credit. Now look at the case two. So the plant and machinery value recorded only for 50 lakhs, not for 59 lakhs. So excluding GST, we are recording the plant and machinery value, and we are claiming the depreciation only on the actual cost, not on tax portion. Now in this case, whatever the 9 lakhs input tax you have paid, that will be eligible for credit. That will be eligible for credit. So whatever the CGST and SGST paid, eligible for input tax credit. Okay, ma. Next topic. Time limit for availing the input tax credit. Now you can look at the provision here. The time limit for availing the input tax credit. So generally there is no hard and fast rule that immediately on receipt of the goods into your premises, you have to avail input tax credit. There is no such a rule. We have a time limit. Up to that time limit, you can avail input tax credit at any time. Right, sir? Look at here. Input taxes on invoices or debit notes pertaining to your financial year can be availed any time till the due date of filing of the return for the month of September of the succeeding financial year, or the date of filing of the relevant annual return, whichever is earlier. Whichever is earlier. Now look at this example for the better understanding. Mr. X supplier, goods were supplied on 10th of November 2021. That means it falls in the financial year 2021-22. So goods were supplied in the month of November. Either you can avail the credit in the month of November itself, or you can avail the credit in the month of December, a January, or a February, like that, up to the maximum time limit. So what is the maximum time limit? Look at here. Due date for the filing of GST or 3B consolidated return for the month of September 2022. So next financial year, September month return due date. Next financial year, September month return due date, or the date of filing of the annual return for the financial year 21-22. That means the financial year for which the transaction belonging to. These two dates, whichever is earlier. Now look at the case one. If the annual return files on 1st December 2022. So the maximum time limit up to which Mr. Y can avail input tax credit is, first one, the due date for the filing of September month return of next financial year. Nothing but 20th October 2022, or the date of filing of the annual return, 1st Feb 2022, 1st December 2022, whichever is earlier. So the maximum time limit up to which the input tax credit of financial year 21-22 can be availed up to 20th October 2022. Beyond this date, you cannot avail the credit of financial year 21-22. Whatever the credit is there, that will be lapsed. Next, look at the case 2. Suppose that the annual return is filed on 1st September 2022 itself. See, for filing of the annual return, the due date is 31st December 2022. This doesn't mean that you have to file the return on this particular date only. On or before this date, anytime you can file your annual return. Yes or no? So here the supplier chooses to file the annual return on 1st September 2022 itself. So the maximum time limit up to which the unclaimed ITC can be availed is next month September month return, due date 20th October 2022, the date of filing of the annual return 1st September 2022. Among these two, whichever is earlier. The earlier date will be 1st September 2022. So the unclaimed input tax credit can be availed up to 1st September 2022. Okay, ma'am. Next, apportionment and restrictions of input tax credit. So first look at the apportionment of input tax credit. In a case where the goods or services are both are used by the registered person, partly for business purpose and partly for other purposes, and partly for making taxable supplies, partly for making exempted supplies. Now in that scenario, only a proportionate amount of input tax credit will be allowed. Proportionate amount of ITC will be allowed. Proportionate amount of ITC will be allowed. Now how to calculate that proportion amount? Look at this example. Example number 1. Mr. X purchased a raw material plant and machinery for 50 lakhs. GST paid 5 lakhs. Now this plant and machinery we are using for both business purposes and non-business purposes. Assuming that 60% we are using for business purposes, 40% we are using for non-business purposes. Now the eligible input tax credit, total 5 lakhs you paid input tax credit, out of which you are using for business purposes only 60%. So 5 lakhs into 60%, 3 lakhs you can avail input tax credit. And for non-business purposes, you are using 40%. So 5 lakhs into 40%, 2 lakhs, this you cannot avail input tax credit. 2 lakhs you cannot avail input tax credit. Okay, ma'am. So to the extent it is used for non-business purposes, the credit not allowed. Are you following, sir? Next. Look at the second example. Mr. X purchased a raw material worth rupees 10 lakhs on which input GST paid 1 lakh. Now this raw material is used in both the manufacturing of taxable goods and exempted goods. Suppose that out of the total 10,000 units, 7,000 units used in the manufacturing of finished goods A, 3,000 units used in the manufacturing of finished goods B. So the ratio 7:3. See, the raw materials which are used with respect to the manufacturing of taxable goods, to that extent you can avail input tax credit. So the total input tax paid 1 lakh. So 1 lakh into 7/10, 70,000 is the input tax credit attributable for the manufacturing of taxable goods. This you can avail input tax credit. Next, 1 lakh into 3/10, 30,000. 30,000 is an input tax credit attributable for the manufacturing of exempted goods where the credit is not allowed. So proportionate amount like this you have to calculate. Okay, ma'am. Next. So what do you mean by exempted supply, zero rated supply? All this we have already discussed, ma'am. Now, common use of capital goods, this we have already discussed, right? And optional scheme for banking company, you can go through it on your own, not that important from examination point of view. Restricted credits, blocked credits, this is somewhat important, I'll explain. Restricted credit or blocked credit. Now what is this provision about? In this topic we are going to discuss about the restricted credits. That means the goods or the services which are not eligible for input tax credit. Okay, ma'am. So ITC would be allowed on most of the inputs, input services and capital goods except the following, right? The following items are covered under restricted items. First one, motor vehicles and conveyances. So with respect to motor vehicles and conveyances, right, you cannot avail input tax credit, but we have some exceptions. What are the exceptions? Motor vehicles used for making the taxable supplies of further supply of such motor vehicles, transportation of passengers, imparting the training on driving of such vehicles. Sir, whenever you're purchasing a motor vehicle for the transportation of persons with a seating capacity less than or equal to 13 persons, you cannot avail input tax credit. But you purchase the motor vehicle for further supply. Suppose that you are having a car dealer showroom, right, sir? Like you have some Kun Hyundai, Varun Motors, You are a car dealer. Buying and selling of the cars is your business activity. Buying and selling of the cars is your business activity. So you're buying the cars from the manufacturers for what purposes? For further supply. Whatever the input taxes you paid on purchasing of the cars, you can avail input tax credit. Okay, sir. Next. Sir, you are running Ola, Uber, right? So you're buying the cars for what purposes? For the transportation of passengers. You are owning a travels company, some Bharat Travels, Konark Travels, right? You owning a travels company, you're purchasing the motor vehicles, purpose transportation of passengers. You can avail input tax credit. Next. So you're running a motor driving school. You're running a motor driving school, right? You purchasing the cars, purpose, you're going to use that cars for imparting the training skills to the persons who would like to learn the car driving. Are you following or not, everyone? Right. So for imparting the training on driving of such vehicles, whatever the vehicle you are purchasing for these purposes, you can avail input tax credit. Clear? Next. Input tax credit on motor vehicles for the transportation of persons with a seating capacity of greater than 13 persons, you can avail input tax credit. You can avail input tax credit. Clear? Next. Input tax credit on any other motor vehicles, like the motor vehicles which are used for the transportation of goods, dumpers, tippers, lorries, trucks. These you can claim input tax credit without any conditions. Only for the transportation of passengers, you have to look into the condition. What is the seating capacity? If it is less than or equal to 13%, credit not allowed. If it is more than 13%, credit allowed. Next, vessels and aircrafts, the same provisions applicable. If you are purchasing the vessels and aircrafts for further supply, for reselling, you can avail input tax credit. For transportation of passengers, you can avail input tax credit. For imparting the driving skills, you can avail input tax credit. For transportation of the goods, you can avail input tax credit. In all these cases, input tax credit allowed. Next, general insurance, servicing and repairs and maintenance, you can avail the input tax credit as long as such vehicles, vessels, aircrafts are eligible for input tax credit. Suppose that I am owning a driving school. I purchased a car. Now, whatever the input tax I paid on such car, I can avail input tax credit. Now, with respect to the same car, if I've taken any insurance services, and on that insurance services, if I paid any input taxes, I can avail that input taxes also. So when car is eligible for input tax credit, whatever the services you have received in relation to such car, like insurance, servicing, repairs and maintenance, all these are also eligible for input tax credit. Are you following, sir? Next, when car is not eligible for input tax credit, like I purchased a car for my personal purposes. So whatever the input tax you have paid on that car, not eligible for credit. When the car itself not eligible for credit, whatever the insurance, the repairs and maintenance and servicing you have utilized for such car, also not eligible for input tax credit. Are you following or not? Next. These are some examples given. You just go through these examples, ma'am. Food and beverages, outdoor catering, beauty treatment, if these are provided by the employer to the employee in the contract of employment under a statutory obligation, the credit is allowed. The credit is allowed, right, sir? Right? Such goods and or services provided by an employer to the employee under a statutory obligation, the credit is allowed. If provided by the employer to the employee, not under a statutory obligation, not under a contract of employment, then the credit is not allowed. Okay, next. Membership of a club, health and fitness center, the same provision holds good. If such services are provided by the employer to the employee under a statutory obligation, credit is allowed. Otherwise, credit is not allowed. Next, travel benefits extended to an employee, same provision. If provided under a statutory obligation, credit is allowed. Otherwise, credit is not allowed. Next, works contract services for the construction of an immovable property. Sir, if the works contract we have received as a subcontract, credit is allowed. Or if works contracting services provided for the plant and machinery, credit is allowed. Otherwise, input tax credit is not allowed. Okay, now. The examples also provided here. Self construction of immovable property, credit is not allowed, credit is not available, right? Even though you are going to use it for your official purposes, self construction of immovable property, credit is not allowed. The credit is allowed only when if it is used for the construction of plant and machinery, where the value of the goods or services not capitalized and the construction is not on own account. Only in these three cases the credit is allowed, and these are all the examples. You just go through it once. Inward supplies on which the credit paid under composition scheme. This point we have already learned. Whatever the input taxes paid under composition scheme, credit not allowed. Next, inward supplies received by NRTP, non-resident taxable person, credit not allowed. Next, goods or services used for personal consumption. For personal consumption, the credit is not allowed. Goods that are stolen, lost, destroyed, or written off, are goods which are given as a gift or free samples, input tax credit not allowed. And the 12th case is fraudulent cases. Any input taxes paid under fraudulent cases, the input tax credit is not allowed. Okay, ma'am. Next, special cases with respect to input tax credit. There are some special cases where the input tax credit allowable, and there are some special cases where the input tax credit is not allowable. Okay, now first look at the first case, special circumstances enabling availing of input tax credit. Right, sir? So there are 4 cases. Number 1, a registered supplier shifting from composition scheme to normal scheme. Number 2, a registered persons whose exempted supplies becoming taxable supplies. Number 3, an unregistered person becoming a registered person. Number 4, this is on compulsory basis. Number 4 also same, an unregistered person becoming a registered person on voluntary basis. So these are the 4 special cases where he is becoming eligible for input tax credit. Earlier he was not eligible, but he is now eligible. Okay, now in these cases, how to avail the input tax credit? Let us see situations one by one. So special cases with respect to input tax credit, rule number section number 18. Look at the first one, registered person switching from composition scheme to the regular scheme of payment of taxes. Okay, now look at this example, sir. During the preceding financial year 2020-21, preceding financial year 2021, he opted for composition scheme, hence not eligible for input tax credit. Now during the current financial year, that is 21-22, current financial year 2021-22, he switched to the normal scheme. So whenever he is switching to the normal scheme, he becoming eligible for input tax credit. He is becoming eligible for input tax credit. Okay, ma'am. Now during the current previous year, that is 21-22, Mr. X can avail input tax credit. Right. Now what Mr. X has to do here, immediately the preceding day, the date on which he opted for normal scheme, immediately preceding day means 31st March 2021, whatever the closing stocks lying in the godown as on 31st March 2021, look at the closing stock, the input goods which are there in the form of raw materials, the input goods which are there in work in progress, input goods which are there in finished goods. Whatever the input tax credit attributable to the closing stock, he can now avail during the current financial year. Okay, ma. Now coming to the capital goods. Capital goods. So with respect to capital goods, how to avail input tax credit? Suppose that on 1st July 2020, Mr. X purchased a plant and machinery worth 50 lakhs. IGST paid 6 lakhs. Right, ma'am. Now, during the current financial year, he opted for normal scheme. So he can avail input tax credit. Now, can he avail entire 6 lakhs as input tax credit? No. He purchased on 1st July 2020 and up to 31st March 2021, he used that plant and machinery as a composition scheme supplier. As a composition scheme supplier. Yes or no? So that means for this time period, the credit is there, no? that credit is not allowed. So minus 5% per quarter for usage period as composition taxpayer. So from July to March, you will get 3 quarters. July, August, September, 1 quarter. October, November, December, other quarter. Jan, Feb, March, the 3rd quarter. Totally 3 quarters. So 6 lakhs is the total input tax paid into 5% per quarter into 3 quarters. So 90,000 is input tax credit attributable for the composition tax period. This 90,000 credit not allowed, amma. Remaining 5,10,000 you can avail input tax credit. Okay. This is the first case where a composition taxpayer switching to regular scheme. Now look at the second special case. A registered person's exempted supplies becoming taxable supplies. Same example holds good, ma. Mr. X is a registered person. During the preceding financial year 2021, his outward supplies are exempted, hence not eligible for input tax credit. Now during the current financial year 21-22, his outward supplies becoming taxable supplies. His outward supplies becoming taxable supplies. Now he is eligible for input tax credit. Now the immediately preceding day, the day on which his supply is becoming taxable, the immediate preceding day, that is on 31st March 2021, look at the closing stock. Whatever the input goods lying in the form of raw materials, work in progress, finished goods, the input tax credit attributable to the closing stocks, now Mr. X can avail during the current financial year. Because these closing stock you are going to use in the current financial year, no. So the credit attributable to such closing stock you can avail in the current financial year. Now with respect to capital goods, same as above, ante just like this. These calculations holds good. Whatever the input tax credit attributable to the exemption period, that is not allowed, amma. Remaining credit you can avail as input tax credit. Okay. Next. Third special case, an unregistered supplier becoming a registered supplier. Look at this example. Mr. X commences his business on 1st April 2021. Okay. So on 1st April 2021, he commenced the business. On 1st September 2021, his turnover crosses 20 lakhs. Means now Mr. X is liable for registration. Okay. On 15th of September 2021, he applied for registration in form number GST RAG 01. On 25th of September, he granted with certificate of registration in form number GST RAG 06. Okay, sir. Now, in this scenario, sir, Mr. X is said to be the registered person from 1st September onwards. Even though he got certificate of registration on 25th September, he will be treated as a registered person from 1st September 2021 only. 1st September 2021 here called as effective date of registration. Now look at the concept of effective date of registration. Effective date of registration. If the taxpayer applied for registration within a period of 30 days from the date on which he is becoming liable for registration. So the date on which you got the liability to registration from that particular day, within a period of 30 days, if you applied for registration, then effective date of registration is equal to the date on which he becoming liable for registration. In case if the application for registration has not made within 30 days, then the effective date of registration is equal to the date on which the taxpayer receives the certificate of registration. Okay, ma? Right, sir. Now, in our example, on 1st September, he got the liability. 15th of September, he applied for registration. So within 30 days, he applied for registration. That is why the date on which he got the liability is called as the effective date of registration. So Mr. X will be treated as a registered person from 1st September 2021 onwards. That means from 1st September 2021 onwards, he can avail input tax credit. Okay. So whatever the input tax is paid up to 31st of August, being he is an unregistered person, he was not availed of. But from 1st September 2021, he becoming a registered person, he can avail input tax credit. Now, the date on which he is becoming a registered person, the immediately preceding day, that is on 31st of August 2021, right? Closing stock of input goods in the form of work in progress, raw material, finished goods, whatever the attributable credit is there, now he can avail credit here. But with respect to capital goods, no, sir, the credit is not allowed. Again this here, in the first two cases you said, that means in the first two cases, composition supplier switching to normal scheme, exempted supplies becoming taxable supplies. In these two cases, you said you can avail input tax credit on capital goods also, right, sir? But whereas in third scenario, you are saying like input tax credit is not allowed on capital goods. Why? Why? Because, sir, in the first two cases, at the time of purchasing of the capital goods, you are a registered person. But in the third case, at the time of purchasing of the capital goods, you are an unregistered person. That is why the credit on capital goods not allowed, sir. Okay, now next. So capital goods purchased on in between 1st April to 31st of August, the credit is not allowed because he's an unregistered person. That also I have explained. Next, fourth special case, persons obtaining voluntary registration. Right, ma? Persons obtaining voluntary registration. Look at here. On 1st April 2021, he commenced the business. 1st September 2021, his turnover is just 8 lakhs only, well within the threshold limit, but still Mr. X applied for registration voluntarily. On 28th September, he got certificate of registration. Since here he is applying for registration voluntary basis, right, ma? The effective date of registration is the date on which the certificate of registration is granted. So that means from 1st April to 19th of April, he is an unregistered person. From 20th September to 31st March, he is a registered person. The same provision immediately preceding date, that is on 19th of September 2021, whatever the closing stock is there, right, in the form of raw materials, work in progress, finished goods, whatever the attributable credit is there, that attributable credit you can avail as credit, and capital goods you cannot avail as input tax credit, because whatever the capital goods purchased in between 1st April 2021 to 19th of September 2021, input tax credit not allowed because you are an unregistered person. Okay, now, so these are the four special cases where you are becoming eligible for input tax credit. Now, next one, four special cases. First one, registered person switching from composition scheme to regular scheme. Second one, registered persons exempted supplies becoming taxable supplies. Third one, persons applying for registration on a compulsory basis. Fourth one, persons obtaining voluntary registration. All these four cases we have completed. Okay, ma. Next, special circumstances leading to the reversal of the amount of credit. Quite opposite to the provisions just now we have studied. Right. Earlier provisions, you are becoming eligible for credit. Now in these provisions, you are becoming ineligible for credit. You have to reverse the input tax credit, whatever you are already availed of. Okay, now look at that cases. Special circumstances leading to reversal of credit. A composition taxpayer. These are the earlier cases. Now new cases. A regular scheme taxpayer switching to composition scheme. Your taxable supplies becoming exempted supplies. A regular, a registered person becoming unregistered person. In all these cases, the taxpayer becoming ineligible for input tax credit. Okay, ma. Now look at the examples. During the last financial year, you are a regular scheme taxpayer, so you are eligible for input tax credit. But during the financial year 21-22, you opted for composition scheme, so not eligible for input tax credit. Same provisions, the immediately preceding day, whatever the closing stocks are there in the form of raw materials, work in progress, finished goods, the attributable input tax credit, you have to reverse. Are you following, sir? Next, with respect to capital goods, right? So look at here, Mr. X purchased a plant and machinery for rupees 60 lakhs. GST paid 10%, 6 lakhs rupees. So in electronic credit ledger, immediately he availed of input tax credit ledger, 6 lakhs. Okay, now during the financial year 21-22, he opted for composition scheme. In that scenario, with respect to the capital goods, how to reverse the input tax credit? Look at here. The process of reversal of input tax credit with respect to capital goods. You have to assume the life of the machinery as 60 months, 5 years. So the ITC available for the remaining useful life of plant and machinery. Sir, in the last previous year, you purchased on 1st June 2020. Up to 31st March, you are opted for normal scheme. So that means for this 10 months usage period, whatever the ITC attributable, that is allowed. So out of the total 60 months life of the plant and machinery, 10 months you have used as a regular scheme taxpayer. That means the remaining 50 months, the remaining useful life. First of all, you need to find out the attributable input tax credit of this 50 months. So 6 lakhs is the total input tax you have paid. 6 lakhs for the total life of 60 months. So for 60 months, the input tax 6 lakhs. For 50 months, how much? You'll get 5 lakhs rupees. So this 5 lakhs is the amount of input tax credit you have to reverse. So simply you have to find out the input tax attributable to the remaining useful life of the plant and machinery. And whatever the answer you got, that should be reversed. Okay, ma? Next. So that's the provisions mentioned here. Amount of reversal of capital goods, reversal on supply of capital goods of plant and machinery on which ITC has been taken means, look at the provisions. Example here. Sir, Mr. X is a registered person, purchased a plant and machinery on 1st April 2021 worth rupees 10 lakhs. GST paid 12%, 1,20,000. So immediately in his electronic credit ledger, he can avail 1,20,000 as input tax credit. But after some 9 months time period, that is on 1st Jan 2022, Mr. X sold plant and machinery for 8 lakhs. X sold plant and machinery for 8 lakhs. After being used it for business purposes only for 9 months, he sold the plant and machinery. Now output GST collected 12%. See, you're selling, no, you're going to collect the output tax. You're collecting the output tax at the rate of 12%, 96,000. Now, so whenever there is a sale of the plant and machinery or any capital goods, how to reverse the input tax credit? Simple, ma. The amount of the input tax credit to be reversed. Point number 1, the total ITC availed 1,20,000 minus 5% per quarter for usage period. You have used it for 3 quarters. So 1,20,000 is a total input tax paid into 5% is a for every quarter into 3 quarters. So 18,000 it will get. 1,20,000 will be your first point. 1,02,000, sorry. Next, second point, output tax collected on transaction value, 96,000. Among these two, whichever is higher is the amount of the input tax credit reversed. Are you following, sir, every one of you? Right. So 1,02,000 rupees you have to reverse. So you have used it for 9 months, no. So 9 months, the attributable credit 18,000 rupees. This you can avail as credit. Okay, 1,20,000 you have taken credit. 1,02,000 you made a debit. That means the difference of 18,000 you are eligible for credit. Okay, next. Sir, here while calculating the number of quarters, even a part of the quarter should be considered as a full quarter. Sir, if the plant and machinery used for, say, let it be some 8 months, and take 2 full quarters, and in the 3rd quarter only 2 months, but still it should be treated as 3 quarters. Sir, if a plant and machinery used for 6 months, 10 days, and take 2 full quarters, and in the 3rd quarter it is used only for 10 days, but still you have to take it as 3 full quarters. Okay, now next. Transfer of input tax credit. Next topic, transfer of input tax credit in the case of change in the constitution of registered person. Sir, whenever there is a transfer take place, change in the constitution of the person means, look at this example. A Limited, B Limited, 2 companies are there. Now A Limited taking over the possession of B Limited. Both the companies are entered into the amalgamation contract. A Limited is taking over B Limited. So A Limited is called as an amalgamated company and B Limited is called as an amalgamating company. Now in the amalgamation process, all the assets and liabilities of amalgamating company transfer to amalgamated company. Now whenever I said asset, your ITC also comes into picture because input tax credit is an asset item. So now B Limited transfers the unutilized input tax credit to A Limited. Okay now, right? So whatever the unutilized balance of input tax credit transferred to the A Limited, now the A Limited can avail such input tax credit. But the condition is that there must be a provision of transfer of liability also. Okay now, then only the unutilized input tax credit of amalgamating company can be used by the amalgamated company. Okay, next. Utilization of input tax credit, this provision which we have already learned in the first chapter itself. First, input tax credit of IGST, right? So IGST can be used for the payment of IGST first. After paying the IGST liability, if you still have any credit balance in IGST, that credit balance you can be used either for the payment of CGST liability or for the payment of SGST liability in any manner or in any proportion. Okay, ma. I've given some options here. First, it should be used for the IGST liability. Then we used for CGST liability and finally SGST liability. Option 2. First, we used it for IGST liability, then for SGST liability, and thirdly, CGST liability. Option 3. First, it should be used for the payment of IGST liability. Then it can be used for CGST, SGST, UGST in any order, in any proportion, in any manner. Okay, ma'am. Next, input tax credit of CGST. First, it should be utilized for the payment of CGST liability. Then it should be used for the payment of IGST liability. CGST credit balance cannot be used for the payment of SGST liability. That provision is not there. Okay, ma'am. Next, ITC of SGST. First, it should be utilized for the SGST liability. Then it can be used for the IGST liability. Now, SGST credit balance cannot be used for the payment of CGST liability. Cannot be used. Okay, sir. Next. And there is one more important point, sir. Whenever you are discharging the IGST liability, first it should be discharged with input tax credit of IGST. Then it should be discharged with the input tax credit of CGST. And finally, with the input tax credit of SGST. This is the order you have to follow for discharging your IGST liability. Okay, ma. Immediately after using the input tax credit of IGST, you cannot use the input tax credit of SGST. Because IGST is a central tax. Try to pay this with the central taxes only. Okay, ma. So that's the important provision I've mentioned here. When CGST credit balance is available and sufficient for the payment of IGST liability, then we should not use the SGST credit balance for the payment of IGST liability. Okay, ma. Next. Restriction on availment of the input tax credit. Right now, what is the restrictions? Look at the example, sir. Here we got some amendments also in these provisions. Rule number 36(4). Let me take you there. The material. Utilization of input tax credit just now I completed. Yeah. Restriction on availment of input tax credit in respect of the invoices or debit notes not uploaded by the supplier in their GSTR 1. Rule number 36(4). Rule number 36(4). It's a latest amendment. Everyone should be very, very careful here. Now, let me explain you this with the help of example. So look at the example, sir. Mr. X, supplier, in January 2022, he made supplies to recipient. Okay, now totally 100 supplies made and 100 tax invoices issued. The value of the goods supplied 10 lakhs and the total input GST paid 1 lakh. So immediately on receipt of such goods into his premises, Mr. Y can avail input GST 1 lakh. Now look at the different cases. Case number 1, Mr. X, the supplier, uploaded all the 100 invoices in his Jan 2022 GSTR 1. Earlier the wordings are uploaded, ma. Now it is furnished. Furnished. Okay, ma. So now what do you mean differences between the uploaded and furnished? Uploaded means you just enter the invoice details into your GSTR1. That's it. But furnished means you have entered the details of invoices in your GSTR1 and the GSTR1 also filed to the department. Then only we can say that details of the invoices were furnished in GSTR1. Okay, now all the 100 invoices furnished in GSTR1. Now in this case, Mr. White, the recipient, can avail full amount of input tax credit, no restriction. Next, look at the case number 2. Mr. X furnished only 60 invoices while filing the Jan 2022 GSTR1. So corresponding input tax credit 60,000 and corresponding input tax credit with respect to the 40 invoices which were not furnished 40,000. Now the total amount of input tax credit that can be availed with respect to the invoices uploaded, full input tax credit you can avail 60,000. With respect to the invoices not uploaded, only the 5% of eligible input tax credit, 5% of the credit attributable with respect to the invoices furnished. How many invoices furnished? 60. What is the credit attributable? 60,000. So 60,000 into 5%, 3,000. The total amount of input tax credit you can avail is 63,000 rupees. Are you following, sir? Right? So the balance input tax credit of 37,000 can be availed by the recipient as and when that 40 invoices were furnished by the supplier in his subsequent GSTR1s. Okay, ma'am. Earlier this percentage used to be 10%, but now this has been reduced to 5%. Okay, next. Case 3. Look at the case 3. X is a supplier, furnished 95 invoices while filing his January 2022 GSTR1. So the corresponding input tax credit with respect to 95 invoices, 97,000. Assume that 97,000. The corresponding input tax credit with respect to the 5 invoices which are not uploaded, 3,000 rupees. Now, what is the total amount of input tax credit that can be availed? Ma, with respect to the 95 invoices uploaded, the entire 97,000 you can avail credit. Okay, now with respect to the 5 invoices not uploaded, what is the general provision? 5% of eligible input tax credit you can avail. So with respect to the invoices not uploaded, 5% of the eligible input tax credit we can avail. 97,000 is eligible input tax credit into 5%, which becomes 4,850. Right, sir? So with respect to 95 invoices, you can avail full credit of 97,000. With respect to the 5 invoices which are not uploaded, 4,580. Total becomes 1,01,850. But actually the credit paid only 1 lakh. 10 minutes. The total actually paid input tax 1 lakh only. So by paying 1 lakh input tax, how can you claim 1 lakh 1,850 as credit? So that is why in this scenario, the credit should be restricted to the 3,000 only. So you cannot avail 4,850 as credit here. You can avail only the original input tax credit attributable 3,000. So both put together becomes 1 lakh. Okay, now. So this is a very important point. Clear? Next. After that, rule number 86B, it's a new rule. Restriction on the use of the amount available in the electronic credit ledger. This is a new rule, ma, but this rule is applicable only for those registered taxpayers whose taxable turnover is greater than 50 lakhs in a month, not in a year, in a month. So the conditions to be satisfied: number 1, he must be a registered taxpayer. Number 2, his taxable turnover should be greater than 50 lakhs in a month. If these two conditions are satisfied, then rule number 86B comes into picture. Now, if rule number 86B is applicable, what is the provision? Look at here. Example. Sir, in the month of April 2021, the taxable turnover is 52 lakhs. So rule number 86B is applicable. Output tax liability 10 lakhs. The total credit available 12 lakhs. Now in this scenario, how to discharge output tax liability? Normal cases, what we will do, sir, we have an output tax liability of 10 lakhs minus input tax credit 10 lakhs. So output tax payable through e-cash ledger nil. This is general cases, but whenever 86B is applicable, you cannot do the calculations like this. Look at here, output tax liability 10 lakhs. 99% of output tax liability can be paid by using input tax credit. So 10 lakhs is your total output tax liability into 99% becomes 9,90,000. This 9,90,000 can be paid by utilizing input tax credit. So 1% of output tax liability should be paid through electronic cash ledger. So that means out of the total 10 lakhs of your output tax liability, at least 10,000 rupees you have to pay through cash. Okay, right? So this is a rule number 86B. If a registered taxpayer's monthly taxable turnover exceeded 50 lakhs rupees for that particular month, 86B is applicable. If 86B is applicable, at least 1% of output tax liability should be paid through electronic cash ledger. Only 99% of output tax liability can be discharged through your input tax credit. Okay, and this applicability of rule number 86B, you have to verify on a month wise. Sir, April month, 52 lakhs is your turnover, you applied 86B. But for May month, your turnover is just 48 lakhs. So 86B is not applicable. That means your entire output tax liability can be discharged through input tax credit. Okay, next. We have some exceptions to rule number 86B. What are that exceptions? Number one, a registered person has paid income tax exceeding 1 lakh rupee in the 2 preceding financial years. So the current financial year 21-22. Preceding financial year means financial year 2021, financial year 19-20. In that 2 financial years, if he paid input tax more than 1 lakh, then in the current financial year, rule number 86B not applicable. That is the first exception. Second exception, a registered person have received a refund of more than 1 lakh with respect to unutilized input tax credit in the last financial year. So current financial year 21-22, last financial year means 2021. In the 2021, you have received the refund of input tax credit 1.5 lakhs. So more than 1 lakh. In the current financial year, rule number 86B not applicable. Next, last one. A registered person who discharged greater than 1% of output tax liability through e-cash ledger up to the said month in the current financial year. Means, look at the example, ma'am. So we have taken the example of the 3 months, April, May, June. In the April month, 52 lakhs taxable turnover, output tax liability 8 lakhs. And how we discharged output tax liability? 8 lakhs we paid through input tax credit, 2 lakhs we paid through e-cash ledger. Okay. In the month of May, taxable turnover 60 lakhs, output tax liability 12 lakhs. And how we discharge? 10 lakhs we paid through ITC and 2 lakhs we paid through electronic cash ledger. Now in the June month, look at the June month, sir. Sir, in the June month, 65 lakhs is your turnover. 15 lakhs is your output tax liability. Since your turnover exceeded 50 lakhs, so 86B provisions are applicable generally. But this is a case falls under exceptions. In the last previous months, you have paid more than 1% of your output tax liability as electronic cash ledger, through electronic cash ledger. Look at here, total output tax liability for April and May, 22 lakhs. In the month of April, you got 10 lakhs. In the month of May, 12 lakhs, put together 22 lakhs. And in these 2 months put together, you paid your output tax liability through cash 4 lakhs, as a percentage student, percentage of the output tax paid through cash ledger, 4 lakhs total tax you paid through cash divided by the total tax liability 22 lakhs, it becomes 18.18%. So last 2 months output tax liability, so 18% of your last 2 months output tax liability you are paid through cash. It is enough that 1% paid through electronic cash ledger, but we have paid 18%. You fall under exceptions for the month of June. Even though your turnover exceeded 50 lakhs, still 86B provisions not applicable. Okay, ma. So that is rule number 86B. So with this, we have completed the entire theory of chapter number 6, input tax credit. So 36.4 we have discussed, and rule number 86B, a new rule, amendment. Are you following, sir? Every one of you, it's an amendment, right? That is also I've explained. 86B, restrictions on use of the amount available in electronic credit ledger. Sir, rule number 36.4, rule number 86A, rule number 86B. These three are latest amendments now for May 2022 exams, which is very, very important. Clear, sir? Right. So after rule number 86B, that's it. The theory was completed. So with this, chapter number 6 marathon recording also done. So see you in the next class for chapter number 7 marathon recording. So till then, have a good day and good night. Stay home and stay safe. A very good evening, students. So welcome to the GST marathon classes. So in the last class, we have completed discussion regarding our chapter number 6, input tax credit. Now time for the chapter number 7, registration. In this chapter, we are going to discuss about the persons who are liable for registration. What is the process of registration? To whom it is compulsory and to whom it is not compulsory. Concept of voluntary registration, and then cancellation of registration. What are the different circumstances under which the certificate of registration stands cancelled? Sometimes the certificate of registration is directly cancelled by the proper officer, right? And then how to revoke that cancellation of registration. All this we are going to learn from this particular chapter. Okay, ma. First, let us start with the nature of registration, the basic introduction. So what do you mean by the registration? First of all, registration means, you can see here, we can expect one question from this chapter, ma, and that is the weightage of this chapter. One question, 5 marks. So registration is legally recognizes a person as supplier and authorizes him to collect the taxes and authorizes him to pass on the benefit of input tax credit. So taking the registration means it's a kind of legal recognition, right? So you're getting a legal recognition that you are a registered supplier. Whenever you become a registered supplier, then you are authorized to collect the taxes. So generally unregistered suppliers not authorized to collect the taxes. So if you want to get the authorization to collect the taxes, first you have to register yourself with the department. And when you are a registered supplier, you can avail the input tax credit, and as well as you can pass on the benefits of input tax credit to the subsequent buyers. So that's the advantage of the registration. Okay, ma. So look at here. So generally registration legally recognizes a person as supplier of the goods or services, authorizes him to collect the taxes and pass on the benefit of credit of the taxes paid to the subsequent buyers. Under the GST regime, registration is PAN based. That means whenever you are going for the registration process, the first information you have to provide is your PAN details. So without having the PAN details, you cannot do the registration of the GST. So PAN is compulsory for GST registration. But of course, we have one exception. NRTP, non-resident taxable person, is an exception for this. That we will discuss later. Next, registration has to be taken state-wise. Right? At this point, we have already discussed in the point number 2, chapter number 2 itself. In the chapter number 2, right, sir, supply under GST. There we have discussed about, section 7.1. You read with schedule 1. 7.1c, read with schedule 1. Deemed supplies. Under the deemed supplies concept, we have discussed about supplies between the distinct persons. So there we have discussed about these provisions. Registration have to be taken state wise, right sir? So if you have the 10 branches in 10 different states, then you have to take 10 separate registrations. There is no concept of centralized registration under GST. Centralized registration is possible only when all of your establishments are in the same state and they are into the same business vertical. Then only you can take a centralized registration for all your establishments. But if your establishments are in different states, then you have to go compulsorily different registrations. Next, a person having multiple places of business in a state may be granted separate registrations for such each and every place of business. Next, registration under GST is not a tax specific. Sir, for CGST separate registration, SGST separate registration, IGST separate registration, not required. Once you take in the registration, it will be valid for all types of taxes. Okay. Next, look at the definitions. Common portal is nothing but www.gst.gov.in. That is our official website of GST, right? And then place of business. What do you mean by the place of business? Simply the place of business means the place where we are doing business, where we are conducting our business, from where we are selling our goods, and from where we are providing our services. That is what we call place of business. But it also includes a warehouse, godown, or any other place where taxable person storing his goods, and also includes the place where you are maintaining your books of account, also includes the agent's premises. Okay, sir. So that is what we call place of business. Next, another important definitions. GST IN is nothing but GST identification number. Nothing but in simple language, it is called as a registration number. It is a 15-digit number, right? 15-digit number which contains first 2 digits state code, next 10 digits, first 2 digits state code, 10 digits your PAN number, 2 digits entity code, and the last one checksum character. Checksum character and alphabet will be there. Okay, ma. So totally 2 plus 10, 12 plus 2, 14 plus 1, 15. So it's an alphanumeric code, ma. Alphanumeric code. Okay, sir. Next. So chapter overview, you can see here, section 22 deals with the persons who are liable for registration. Then 23 persons not liable for registration, 24 compulsory registration, 25 procedure for registration, 26 deemed registration, 27 special provisions regarding CTP and NRTP, 28 amendments to registration certificate, 29 cancellation or suspension of registration, and 30 revocation of cancellation. So all these sections we are going to study from this chapter. Okay, ma. So let us see one by one. First one, section number 22, persons who are liable for registration. And we already know this. Whose aggregate turnover during the preceding financial year, exceeding 10 lakhs, 20 lakhs, or 40 lakhs, as the case may be. So the supplier whose aggregate turnover during the preceding financial year exceeding the threshold limits, then they are liable for registration. Okay, ma. You can see here states with 10 lakhs limit: Manipur, Mizoram, Nagaland, and Tripura. States with 20 lakhs threshold limit: Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, and Telangana. States with threshold limit of 20 lakhs for services. For services, the threshold limit is 20 lakhs, except these 4 states. For all other states, for services, 20 lakhs only. For goods, we have some states like Jammu and Kashmir, Assam, Himachal Pradesh, all other states apart from these 6 plus 4, 10. Remaining in all other states, remaining in all 18 states, if you are a supplier from the, let us say, Jammu and Kashmir, right, and you're supplying the goods only within the state of Jammu and Kashmir, you are exclusively engaged in the goods, and supplying the goods only within your own state, then in that case you can have a higher threshold limit of 40 lakhs. Okay, ma. If you're a person from Tamil Nadu, supplier from Tamil Nadu, exclusively engaged in the supply of the goods, and you're supplying only within the state of Tamil Nadu, then for you higher threshold limit of 40 lakhs applicable. If you're a supplier from Maharashtra, exclusively engaged in the supply of goods, and that is to only within the state of Maharashtra, so you can claim higher threshold limit of 40 lakhs. Are you following, ma? Next, I've given the example as well here. First, look at this. Tarun from Assam, exclusively engaged in the supply of shoes, aggregate turnover 22 lakhs and applicable threshold limit 40 lakhs, because you can see here Assam is in the list of higher threshold limit of 40 lakhs. So is exclusively engaged in the supply of goods within the same state. So whether is he liable to obtain registration? Answer is no, because his aggregate turnover is less than threshold limit. Okay, next, Tarun of Assam, exclusively engaged in the supply of pan masala, sin goods. For sin goods, the threshold limit is 20 lakhs only, not 40 lakhs. Okay, so aggregate turnover 22 lakhs and applicable threshold limit is 20 lakhs. So your aggregate turnover greater than threshold limit, so you are liable for registration. Next, Tarun of Assam, exclusively engaged in taxable services. I've said already, for services, it's always 20 lakhs. So his aggregate turnover 22 lakhs, which is greater than threshold limit, so liable for registration. Tarun of Assam, engaged in both goods and services. So again, threshold limit 20 lakhs, and as your turnover is 22 lakhs, exceeding the aggregate applicable threshold limit, so then you are liable for registration. Okay, ma. So like this, complete the remaining example. Complete the remaining example and ask the doubts if any. So completed my example. Now let's moving on. So then after that, you will get a doubts of what do you mean by the aggregate turnover. This we have already learned for 2-3 times, right, sir? So we have learned about the aggregate turnover in the first chapter itself. We have learned about the aggregate turnover in the second chapter. We have learned in 6th chapter as well, right, sir? So aggregate turnover includes all outward taxable supplies, outward exempt supplies, exports, and outward interstate supplies. We have to calculate on a all India basis, but excludes all types of taxes: CGST, SGST, UTGST, IGST, cess, and inward supplies taxable under reverse charge mechanism. Next. So aggregate turnover means the turnover include the total turnover of all the branches with the same PAN number, right? That is what actually meant by computed on all India basis, right, sir? So if you have 10 branches, then you have to aggregate the turnover of all the 10 branches, and then you have to see whether that aggregate turnover exceeded the specified threshold limits or not. If exceeding specified threshold limit, then registration is mandatory for all the 10 branches. Are you following or not? Next, value of the exported goods and services, exempted goods and services, interstate supplies between distinct persons having the same PAN to be included in aggregate turnover, right? And aggregate turnover include all the supplies made by the taxable person, whether on his own account or made on behalf of all his principals, right? So even the turnover which you have achieved on behalf of your principal is forming part of your aggregate turnover. Okay, now, and aggregate turnover and state turnover are not one and the same. Both are completely different, ma. The purposes of finding out the aggregate turnover and state turnover is completely different. Aggregate turnover, we are finding out to verify whether he is liable for registration or not, to verify whether he is eligible for composition scheme or not, right, sir? And state turnover, we are calculating for the purpose of calculating your tax liability, right, sir? So whether you're liable for registration or not, you have to find out aggregate turnover. Whether you have to eligible for composition scheme or not, you have to find out the aggregate turnover. And after you finding out the aggregate turnover, you got to know that you are eligible for composition scheme and you have adapted for composition scheme. Now, what is my composition tax liability? For this purpose, you have to find out the state turnover. Are you following or not? Clear? So aggregate turnover is used for determining the threshold limit for registration and as well as the eligibility for composition scheme. Whereas the composition levy would be calculated on the basis of state turnover. Okay, ma? Next. A person having place of businesses in different states across India and one branch in any of the special category states, then the limit for GST registration will be 10 lakhs for all of his branches. Right, sir? Look at here. Raghav of Assam exclusively engaged in the intrastate supply of ready-made garments. Its turnover in the current financial year from Assam showroom 28 lakhs. It has another showroom in Tripura where the turnover is 11 lakhs. Sir, Assam is a normal state, but whereas Tripura is a specified category state, special category state, special category state, Tripura. So where the threshold limit is 10 lakhs only. Suppose that I have 5 branches. I have 5 branches, one in Telangana, one in Andhra Pradesh, one in Tamil Nadu, one in Maharashtra, and the other one in Tripura, or the other one in Nagaland, which is a special category state. Here we have seen the list of the special category state, Nagaland. So 4 in normal states, 1 branch in special category states. Now, whatever the specified threshold limit, which is applicable for this special category state, that is 10 lakhs, applicable for all the remaining 4 branches as well. Now, I have to calculate the turnover from all these 5 branches, aggregated. Now, you have to see whether this aggregate turnover exceeded 10 lakhs or not. If exceeded 10 lakhs, you are liable for registration. Are you following, sir? Next. From which state a taxable person is required to be registered? Simple answer, the state from which you are doing your business. The state in which your place of business is located. From that particular state, you have to obtain the registration, sir. A person is required to obtain the registration with respect to each place of business in India from where a taxable supply has taken place. Next. Is transferee liable for registration in the case of transfer of business? Yes. Whenever there is a transfer of business, or whenever there is a transfer of ownership of the business, then the transferor has to surrender his certificate of registration and the transferee has to obtain a fresh certificate of registration. Okay, ma? So look at this example. Mr. X transferor transferred his business unit to Mr. Y, transferee. Okay, now Mr. X transferor surrender his certificate of registration. He has to surrender because he's selling his business unit to Mr. Y. Now, Mr. Y being the transferee to whom that business unit was transferred, he has to apply for a new registration certificate. Okay, ma. Next. Persons liable for compulsory registration. Now, who are the persons liable for compulsory registration? Look at here. Persons making any interstate taxable supply. So whoever making interstate taxable supplies, they have to take the registration on a compulsory basis. But of course, we have an exception limit. The threshold limit will be applicable to the interstate supply of taxable services, notified handicraft goods subject to the following conditions. Right, sir? So basically, whoever engaged in interstate taxable supplies, for them the threshold limits are not applicable. By default, they have to apply for registration without waiting for the turnover exceeding specified limits. But of course, we do have some exception. In the case of interstate taxable supply of services, notified handicraft goods, we have threshold limits, 10 lakhs or 20 lakhs as the case may be. Okay. Next, CTP, casual taxable persons making taxable supplies. For CTP also, there is no threshold limits. They have to compulsorily apply for the registration. But of course, we do have some exceptions. The threshold limits applicable in the case of interstate taxable supplies of notified handicraft goods. Only one exception. See, if you are a casual taxable person engaged in interstate taxable supply of notified handicraft goods, then the threshold limits comes into picture. Okay. Next, persons who are required to pay the tax under reverse charge mechanism. Right, sir. So whoever required to pay the tax under RCM, they have to compulsorily apply for the registration irrespective of their threshold limit. Clear, sir? Next, exceptions. The persons who are exclusively engaged in outward taxable supplies, the tax on which liable to be paid on a reverse charge basis or exempt from registration. Like, look at this example. Mr. Subramanian Swamy, the famous advocate of India, right? He's also a political leader as well, right? A member of parliament. So here we know that basically the legal services, majority of the cases, legal services are exempted from GST. But only in one case, the legal services are taxable. Which case, ma? Only when that legal services are provided to a business entity whose aggregate turnover exceeded the specified threshold limits during the preceding financial year. Only in that case, the legal services are taxable, and that is to under reverse charge mechanism. Yes or no? Right, sir. So here, business entity, the recipient has to compulsorily register with the GST department. And when it comes to Subramanian Swamy, he is not required to obtain registration because he is exclusively engaged in the outward supply of services which are taxable under reverse charge mechanism. So where the liability shifted to the recipient has to take the registration. So for supplier, there is no liability to registration. Are you following or not? Next. NRTP, non-resident taxable person, compulsorily have to apply for registration. And then e-commerce operators compulsorily have to acquire the registration, right? Next. So those persons whoever supplying the goods through e-commerce operators, for them also specified threshold limits are not applicable. And when it comes to services, sir, if you are providing services through e-commerce operator, suppose that I am providing my tax consultancy services, right? I have registered in a Just Dial. You might have known about the Just Dial. A service, Just Dial services. See, whatever you want to know about a particular service, where it is available, who will provide, everything you can get the details from Just Dial. I think the mobile number also, all eights, 10 eights, Just Dial. So you can call to this number. You can call to this number and you can ask for any service. They will provide you the telephone numbers and everything. Are you following now? Right. Next. So when it comes to the service providers who are providing the services through e-commerce operator, for them the threshold limit is applicable, sir. Clear? Next. And after that, important points. Okay. Next. Persons not liable for registration, to whom the registration is not mandatory. So persons who are exclusively engaged in supply of the goods or services which are not liable to tax. So you're exclusively engaged in the supply of alcoholic liquor for human consumption. You're exclusively engaged in the supply of petrol, diesel, ATF, natural gas. These are all the goods which are not liable to tax under GST. See, they might be taxable under excise duty or VAT, but they are not taxable under GST. So there is no need of taking GST registration. Next, persons who are exclusively engaged in the supplying of the goods or services which are wholly exempted from tax. Wholly exempted from tax, not required to take any registration. Agriculturalists, not required to take any registration. Then specified categories of persons notified by the government. For them also, they are not required to take the GST registration. That means whose aggregate turnover is well within the specified limits. For them, the GST registration provisions are not applicable. Next. Procedure for registration. Section number 25 deals with the same, right? So time limit for registration, we know it already. The time limit is 30 days. 30 days from the date on which you are becoming liable for registration. And when you are becoming liable for registration, when your aggregate turnover exceeded the specified threshold limits. Are you following, sir? So the person who is liable for registration or compulsory registration, the time limit is within 30 days from the date on which he is becoming liable to registration. So as and when your turnover exceeded the specified threshold limit, from that particular date onwards, within 30 days, you have to apply for registration. Clear? And in the case of CTP and NRTP, they have only 5 days time limit, and that is to 5 days prior to the commencement of their business. Suppose that if they want to commence their business from 1st April, they have to apply for the registration on or before 26th of March. On or before 26th of March, at least 5 days prior to the commencement of business, they have to make an application for registration. Okay, mom. Next. Is single registration sufficient for multiple places of business? Absolutely, yes. So a single registration is sufficient for multiple locations. Answer is absolutely yes. So if that multiple locations are falling in the same state and they are into the same business vertical, then only a single registration is sufficient. In case if all of that particular business units are locating into the different states and they are into the different business verticals, then compulsory separate registrations are needed. Are you following, sir? So single registration is sufficient only when all the business establishment located in the same state and all of them into the same business vertical, same business line. Clear, sir? Next. We know that there is no centralized registration under GST, and distinct persons concept we have already learned. Next. Can a person be allowed to be registered for his normal supplies and as well as composite supplies as well? So basically, whenever you're taking the registration, you have to take the registration either as a normal scheme supplier or as a composition scheme supplier for all of your business units. Suppose that if you have 5 business units, with respect to 5 business units, either you have to register it as a normal scheme supplier, or with respect to all the 5 business units, you have to register it as a composition scheme supplier. Are you following, sir? You cannot register it like 2 business units as a normal scheme supplier, 3 business units as a composition scheme supplier. This is not allowed. Right, sir? Next. Is any possibility exists for an unregistered person to be registered voluntarily? Answer is absolutely yes. If you want to register voluntarily, you can do so, sir. Right? Without waiting for the specified threshold limits, you can apply for the registration on a voluntary basis. Absolutely possible. Are you following, sir? Next. Is PAN mandatory for registration? I have already told you it's mandatory. Yes. Because when it comes to your registration procedure, no, right? The first information you're going to give is PAN number, right? Without giving the PAN details, you cannot go forward in your registration process. But of course, we do have some exception, and that exception is the NRTP, non-resident taxable person. Clear, sir? So when it comes to the non-resident taxable person, being is a non-resident, he don't be having any PAN number in India. See, if you want to obtain a PAN number, you must be an Indian citizen. Non-resident being a foreign citizen, he don't be having any PAN number in India. So that is why that NRTP, when he is registered in India, he has to give the PAN details of his authorized signatory in India. So there must be some authorized representative to that NRTP in India. So that authorized representative's PAN details should be provided by the NRTP in the registration process. Are you following, sir? Next. What do you mean by the UIN, unique identification number? Basically, unique identification number is given to the specialized agencies of UNO, right? Like in India, different countries, embassy offices, right? So different countries, consular offices, right? And, all other persons which are notified by the commissioner of GST. So specialized agencies of the United Nations of Organization or any multilateral financial institution and notified organizations under the United Nations Privileges and Immunities Act 1947, consulate offices, embassy offices of the different foreign countries, right? These people are required to obtain UIN. Are you following, sir? And UIN, what is the need of UIN? Basically, the supplies made by these people are covered under zero rated category, zero rated supplies. So generally, UIN needed for claiming of refund of taxes paid or notified supplies of the goods or services are both received. Right, sir? So whatever the inward supplies they are made, on that inward supplies, whatever the taxes they are paid, that taxes they can claim a refund. For these purposes, UIN is compulsory. So whenever they are making an application for registration, in that application, they have to mention the UIN, unique identification number. Next, a registration can be granted by the proper officer himself. Answer is absolutely yes. Absolutely yes. Suppose that you are a supplier and your aggregate turnover exceeded threshold limits. Means you have to apply for the certificate of registration, but you are failed to do so. Later on, the proper officer came to know the fact, and the proper officer, right, in person to any query, inquiry, inspection, search, or any other proceedings, then on a temporary basis, the proper officer can issue the certificate of registration to yourself, right? So on a temporary basis, he issue an order in the prescribed form, right? So that person will temporarily registered by the proper officer, and after that temporary registration, no, right, that such supplier has to apply for the original certificate of registration within a period of 90 days from the date of granting of the temporary registration. So that supplier shall submit an application for registration within 90 days from the date of grant of the temporary registration. In case if such supplier having any dispute, like, sir, my aggregate turnover not exceeded specified limits, how can you give me the temporary registration? So if you have any obligation, like objection, right, for that temporary registration, then you can file a case against to that proper officer. You can go for an appeal against to such temporary registration. Suppose that in that appeal you have lost, the appellant authority given the decision in favor of proper officer. So from the date of that particular decision, within a period of 30 days, you have to apply for the original certificate of registration. Okay, ma'am. Next, what is the procedure for registration? The procedure for registration in 2 steps, ma'am. In 2 steps, right? So in the first step, you have to give your basic details, right? Like you have to give your PAN number, your mobile number, email address, and the state or union territory, right? In part A of GST REG 01. GST REG 01 is an application, ma. Are you following, sir? And there is no registration under GST by filing the documents manually. There is no concept of manual registration, sir. So if you want to register with the GST department, it should be online only. Okay, so in the part 2A, in the part A of the application form, you have to give your basic details of your PAN number, mobile number, email ID, and the state or union territory in which you want to register. Clear? And after that, after you're giving the successful details, then you will get the OTPs to that mobile number and to that email ID, which you have given in the part A. And you have to validate that mobile number and email ID by using that OTPs. Okay, so the PAN and mobile number, email ID shall be validated by the CBDT with OTP respectively. Then after the successful validation through OTPs, TRN will be generated. Temporary reference number will be generated. And using the TRN, then you have to apply the part B. Right? The applicant shall electronically submit application in part B of the application form along with the specified documents. So part B contains the remaining portion of the process. In part A, just you are giving basic details. Part B, the remaining details will be there in the part B. Clear, sir? In the case of the CTP, the TRN will be generated only after the deposit of prescribed advance by the applicant. So casual taxable person, right? So we already knows that he has to apply for the registration at least 5 days prior to the commencement of business. And that is to, before he is going to make the application, he has to pay the GST liability in advance. What do you mean by casual taxable person, ma? Means a person who is doing a business from a state in which he don't have his registered premises. Suppose that I'm a registered supplier from the state of Telangana. But whenever I want to do the business in Maharashtra or in Tamil Nadu or in West Bengal or in Orissa, so that means I want to do a business in a state in which I don't have any registered premises. So for Maharashtra state, I'm an unregistered person. There some business exhibition is going on and I would like to participate in that business exhibition. Are you following, sir? Now, whenever you want to participate in that business exhibition, first of all, you have to take the registration from the Maharashtra state government GST. Now, before taking the GST registration, you have to calculate the GST liability, estimated GST liability. Okay, how many months the exhibition is going to be there? It will be there for 1 month. Okay, within 1 month, how much turnover you're expecting? I'm expecting a turnover of 10 lakhs. So 10 lakhs into what is the rate of GST applicable to you? 12%. So your estimated GST liability 1,20,000. So first you have to deposit that 1,20,000 to the state government. Then only you are eligible to apply for the registration in that Maharashtra state government. Clear, ma? Next. While submitting the application, the applicant shall undergo the authentication of Aadhaar number. Aadhaar authentication recently becoming mandatory, ma. I will explain you the provisions. Okay. Next. On receipt of such application, acknowledgement in the prescribed form shall be issued to the applicant electronically. Right? After successful completion of the part B, also, you will get an acknowledgement stating that you applied for registration. Okay, and after that the proper officer examines the application and documents. Clear? Next, if the details given by the applicant are genuine and if he successfully validates his Aadhaar authentication, so whatever the details you provided are genuine and at the satisfaction of the proper officer, and you also successfully validates your Aadhaar, then immediately the proper officer within 7 days of the submission of application, he has to grant the certificate of registration in form number GST REG 06. Clear, sir? Right? So let me explain you this with the help of running notes. Section 25, procedure for registration. Look at this example. Mr. X commenced his business on 1st April 2021. On 1st August 2021, his aggregate turnover exceeded 20 lakhs. So he is liable for registration. Now he should make an application for registration in form number GST REG 01 within 30 days from the date of liable to registration. Okay. Now on 10th of August, he filed an application in registration in the form number GST REG 01. Right, sir? And at the time of filing of an application, he successfully completed Aadhaar authentication. Okay, sir. So look at the case one. Aadhaar authentication is completed successfully. Then within 7 working days from the date of application, that is, you made an application on 10th August. Within 7 days means on or before 17th of August 2021. So if the proper officer satisfied with all the info and documents provided in the application, then the proper officer should issue the certificate of registration. Okay. Then if the proper officer not satisfied with the information and documents provided in the application, then the proper officer has every right to issue a notice. The proper officer has every right to issue a notice seeking the clarification, information or documents. Right, sir? Now, after receiving that notice by the taxpayer, he should reply to that notice within 7 working days from the receipt of such notice. So the proper officer has a time limit up to 17th of August, either he has to satisfy himself and give the certificate of registration, or he has to issue a notice on or before 17th of August. Suppose that on 17th of August, he issued a notice. Now for that notice, the supplier has to give the reply within 7 working days. That means on or before 24th of August. Okay, sir. Assume that the taxpayer replied to the notice on 24th of August within 7 working days from the date of receipt of such notice. Clear? Now, if the proper officer satisfies with the clarifications provided, then the proper officer should issue the certificate of registration within 7 working days from the date of receipt of reply to the notice. That is on or before 31st of August 2021. Because on 24th, he received the clarifications from their 7 working days. So on or before 31st of August, he should issue the certificate of registration. In case if the proper officer not satisfied with the clarifications provided, then within 7 working days from the date of receipt of the reply to the notice, he has to reject the certificate of that particular application. Okay, now, so within 7 working days from the date of receipt of notice, if you satisfied with the clarifications provided, alert the certificate of registration. If you are not satisfied, reject the application. Simply you reject the application for registration. Clear? This is case 1. Now look at the case 2. What is case 2? If the taxpayer fails to comply with the other authentication process, or the proper officer deems fit to carry out the physical verification of the premises. Any of the case, either you failed in other authentication, or the proper officer deems it fit to verify the physical premises. In both the cases, the proper officer, first he has to issue a notice to the supplier within a period of 30 days from the date of application, right, sir? And after the physical verification of the premises, again within 30 working days, the certificate of registration should be granted. Okay, ma'am. So the certificate of registration will be granted within 30 working days from the date of the site verification. Okay, sir. So these are all the provisions mentioned here in this particular point. Next, deemed approval. Now, what is this concept? Look at the running notes here. Sir, come to the first case. On 1st April, he commenced the business. 1st August, aggregate turnover exceeded threshold limit. 10th August, he applied for registration. Now what? Now what? After making an application for registration, the proper officer shall respond within 7 working days. Within 7 working days. That means either that proper officer has to satisfy himself and allot the certificate of registration, or he has to issue a notice seeking clarification. Within these 7 working days, something has to be taken care by the proper officer. If he's satisfied with the documents and details, allot the certificate of registration. If he's not satisfied, at least issue a notice seeking clarification from the supplier. But assume that if the proper officer neither allotted the certificate of registration nor issued the notice, in that case, you can directly take the deeming up provision that you have been granted the certificate of registration. If the proper officer fails to reply, fails to respond in 7 working days, then you have every right to take a deeming fiction that you are deemed to have been granted certificate of registration. First point. Second point. Suppose that in 7 working days, the proper officer issued the notice seeking clarification. And with respect to that notice, supplier also given the response within 7 working days. Now, after receiving the response from the supplier, the proper officer has to respond now within 7 working days. Either he has to allot the certificate of registration or he has to reject the application. But in case if the proper officer neither allotted certificate of registration nor rejected the application, in that case also, again, you can take a deeming fiction that you are deemed to have been granted certificate of registration. Okay, now point number 2. Now point number 3. Suppose that the proper officer issued a notice for the physical verification of the premises. Okay, and the proper officer came and verified your premises. After that, within 30 working days, the proper officer either has to allot the certificate of registration to you, or he has to reject your application within 30 working days from the date of site verification. Suppose that after the site verification, the 30 days time limit also completed, and the proper officer fails in allotting the certificate of registration and fails in rejecting the application as well. He neither allotted certificate of registration nor rejected your application. Now, in that case, on 31st day, immediately you can take the deeming fiction that you are deemed to have been granted certificate of registration. Okay, ma. So that's deemed approval concept. Okay, 3 cases. Right. Next, special provisions with respect to NRTP and CTP. I've already told you they have to make an application at least 5 days prior to the commencement of their business, and they have to make advance deposit of GST. Then only they can claim the application for registration. And whatever the certificate of registration granted to them, it is having a validity period of just 90 days only, ma. Right? And if they want to further extension, another further extension of 90 days will be given. So maximum, the validity period of the certificate of registration granted to CTP and RTP is only 180 days. That's it. Next, what is the effective date of registration? This point we have already learned. If the application is made within a period of 30 days from the date of liable to registration, then effective date means the date on which he is liable for registration. In case if the application is submitted after 30 days, then the date of granting of registration is the certificate of effective date of registration. Okay, now next, changes in registration. It's not that important concept. You can just go through it once. Cancellation of registration. There are 2 different provisions, ma. Cancellation of registration. Registration can be cancelled either by the proper officer on his own, or an application registered made by the registered persons or legal heads. So these are the cases where the application is granted by the proper supplier, and upon the receipt of application for cancellation, then only the proper officer cancels your certificate of registration. What are the cases? Business discontinued, business transferred, amalgamation, demerger, changes in the constitution of the person. These are the situations where an application is made by the supplier. And basing on that application, the proper officer cancels the certificate of registration. Okay, now these are the cases where the proper officer directly cancels certificate of registration without being and waiting for an application from the supplier. Right, the proper officer has every right to cancel the certificate of registration in these particular cases. What are they? A registered person does not conducting any business from the declared place of business. Suppose that at the time of registration, I have mentioned my place of business as Warangal, but I am doing business in Hyderabad. So in certificate of registration, I have mentioned Warangal is my principal place of business, but I am doing business from Hyderabad. So it's a fraudulent case. Proper officer has every right to cancel my certificate of registration. Next, registered persons issues the invoice or bill without a supply of the goods. Sometimes the people will issue the invoices, fake bills, stating that they have issued this much quantity of the goods. They have sold this much quantity of the goods. Fake bills, fake invoices, fraudulent case. So again, the proper officer has every right to cancel your certificate of registration. Next, the registered person who is violating the provisions of anti-profiteering measures. A registered person not filed the returns for a continuous period of 6 months. In the case of normal cases, 3 consecutive tax periods in the case of composition levy. Next, a registered person who has not commenced the business within a period of 6 months from the date of registration. Next, finally, registration was obtained by means of fraud willful misstatement, or suppression of facts. So these are all the fraudulent cases where the certificate of registration can be cancelled by the proper officer on his own. Okay, ma. Next. And we got some amendments by the Finance Act 2021 here. Look at this amendment. As per the provisions of section 29 subsection 2 clause A of the CGST Act, the proper officer may cancel the registration of a registered person where he has contravened the provisions of the CGST Act or the rules made thereunder as may be prescribed. And these contraventions have been prescribed by rule number 21 of the CGST rules. So whenever a particular registered person contravenes, violates the provisions of CGST Act, the proper officer has every right to cancel the certificate of registration. Right? What are the contraventions? Right? Mentioned here already. These are the contraventions as per the rule number 21. Almost 1, 2, 3, 4, 5, 6 cases already listed out in rule number 21. And there is a new case has been added. New case. So A, B, C, D, E, F, G. G point newly added by the Finance Act 2021. What is that? The rule has been amended to provide few more contraventions, namely the violation of conditions of taking input tax credit, mismatch of GSTR 1 and GSTR 3B, and violation of rule number 86B provisions, which will make the GST registration of a person liable to cancellation. These are few more contraventions. Point number G, violations of conditions of taking input tax credit. Violations of conditions of taking input tax credit. Point number H, mismatch of GSTR 1 with GSTR 3B. Point number I, violation of rule number 86B provisions. Rule number 86B we have learned in the last class. Another latest amendment we have learned in input tax credit chapter. What rule number 86B explains about? If a particular supplier's registered supplier's turnover exceeded 50 lakhs in a particular year, in a month, for that particular month, his output tax liability should be discharged in this manner. Like 99% of the output tax liability can be discharged through input tax credit, and 1% of output tax liability should be discharged through the cash. At least 1% of output tax liability should be paid by cash. That is rule number 86B. Suppose that for you 86B is applicable, but you have violated the provisions. While discharging your output tax liability, 100% of output tax liability you have paid through ITC. So that means you have violated 86B provisions. So your certificate of registration liable for cancellation. Are you following, sir? Next important provisions. Suspension of registration. This is another new concept. Latest amendment, suspension of registration. Suspension of registration, the first proviso to section number 29.1 and second proviso to section 29.2, read with rule 21A, a new rule. So once a registered person has applied for cancellation of registration, or the proper officer seeks to cancel his registration, first of all, the proper officer may suspend his registration during the pendency of the proceedings relating to the cancellation of registration filed. Sir, suppose that today I made an application for cancellation of registration. Right, sir? Sir, immediately by evening, whether my certificate of registration gets cancelled? No, it will take time. It will take a minimum time of 10 days, 15 days. Right, sir? So first of all, the proper officer has to satisfy himself that during the registration period, he was satisfied all the provisions of the GST, he complied with all the provisions of GST, and there are no dues pending from the supplier. He has not been involved into any fraudulent cases. After the proper officer satisfying himself with all these facts, then only the proper officer cancels his certificate of registration. Are you following or not? So for these purposes, the time will be taken, ma'am. So if you file the application today, after 10-15 days only your certificate of registration will get cancelled. Now, during this 10-15 days, the proper officer has every right to suspend your registration. So your registration status will be suspended, not cancelled, suspended. Okay, ma'am. Next. So where the cancellation of registration has been department important. Yeah, look at this important point. A registered person whose registration has been suspended, then he shall not make any taxable supply during the period of suspension, and he shall not be required to furnish any returns under section 39. Are you following, sir? See, as long as your certificate of registration is under suspension, you should not make any taxable supplies, and there is no requirement of the provision that you have to file the returns. There is no such a requirement. See, as long as you are not providing any taxable supplies, there is no need arises for the filing of returns. Are you following or not? Every one of you. Next. Amendments made by the Finance Act 2021, provisions relating to the suspension of GST registration amended, rule number 21A. That is what I've already explained now, right? But the proper officer has the reasons to believe that the registration of a person liable to be cancelled, he can now suspend the registration of such person pending the cancellation of proceedings without affording the said persons a reasonable opportunity of being heard. This is the latest amendment. So earlier, a reasonable opportunity of being heard is provided to the supplier before cancelling the certificate of registration. But now, for the time being, as per the latest provisions, the proper officer has every right to suspend the registration before the cancellation. To suspend the registration, and for the suspension of registration, there is no need of providing a reasonable opportunity of being heard to the supplier. Okay, ma'am. Next. And another amendments, other authentication, I've already mentioned about the other authentication. The process also I've already explained. And to whom it is mandatory. The persons who are required to undergo other authentication. You can see here, in the case of a new applicant, every individual applicant, authorized signatory of all the types, managing and authorized partners, Karta of the HUF, right, sir? And sir, you will get a doubt here. So who are said to be the authorized signatories? You can see here, authorized signatory means managing director, whole-time director, members of managing committee of association, board of trustees, authorized representatives, managing and authorized partners of partnership firm. These are all said to be the authorized signatories. So these are all the persons who are required to undergo other authentication. Next. Sir, in case the persons who are already registered, then every registered person shall undergo Aadhaar authentication, furnish the proof of possession of Aadhaar number in the prescribed form and manner. Okay, next. Sir, in case where the Aadhaar number is not assigned, sir, I am applying for GST registration. Now, during the GST registration, Aadhaar authentication becomes mandatory. But actually, sir, I don't have any Aadhaar card with me. I have not applied for Aadhaar card. Then what? So no problem, sir. If you don't have the Aadhaar card, if you have not applied yet, you can do one thing. Before making the GST registration, go to the Aadhaar Facilitation Center, applied for Aadhaar, and you will get an acknowledgement number, sir. You will get an acknowledgement number, right, sir? Enrollment number, I can say enrollment number, Aadhaar enrollment number. Now, with the help of the Aadhaar enrollment number, you can complete GST registration process. And after you assign the Aadhaar card, that Aadhaar card details you have to upload in your GST portal. Are you following, sir? Next. Person or classes of persons who are exempt from Aadhaar authentication. The following persons have been notified in this regard. A person who is not a citizen of India, right? Because if he's not a citizen of India, anyhow, he don't be having any Aadhaar. Because only Indian citizens are entitled for Aadhaar. Clear. Next, department or establishment of state government or central government, local authority, statutory bodies, public sector undertakings, and a person applying for UIN. So these people are exempted from Aadhaar authentication. Next, Aadhaar authentication procedure. This we have already discussed, ma. At the time of filing an application, he has to undergo the Aadhaar authentication. Right, sir? And if Aadhaar authentication successful, very good. If not, then the notice will be issued by the proper officer. The time limit and the reply time limit, deemed approval, all this we have already discussed. Okay, sir. The same provisions repeated here. Physical verification of premises, I've already told you. If the proper officer deems it for the physical verification of the premises within period of 30 days from the date of application, he has to undergo the physical verification of the premises. And after the physical verification is completed, within a period of 30 working days, the certificate of registration should be issued. Okay, now the same will be explained here, ma. That's it. So with this, we have completed chapter 7 marathon class. Okay, ma. And statutory guidelines, the amendments which are made by the ICI, which are issued by the ICI, which are applicable for May 2022. Look at this. We have only one amendment, ma. Extension of time limit for the filing of application for revocation of cancellation of registration. Right, sir. See, suppose that the proper officer has initiated the cancellation of your certificate of registration. Now you have every right to file a revocation. Revocation means cancellation. So cancel, you want to cancel the proceedings of the cancellation of registration. Now for this purpose, you have to make an application. Right, sir? Right. Earlier the time limit is 30 days time limit, sir. And if you want a further extension, you can apply for a further extension of 30 days, not exceeding 30 days. Okay, now, right? So you can see here, with effect on the 1st Jan 2021, proviso to section 30 subsection 1 of the CGST Act was substituted to permit the extension of time limit for the filing of application for revocation of cancellation of registration by a registered person. Accordingly, the time period for the filing of application for revocation of 30 days from the date of service of the order of cancellation of registration may, on sufficient cause being shown and for reasons to be recorded in writing, be extended for a period not exceeding 30 days. Okay, ma, by the AC or JC, as the case may be, for a period not exceeding 30 days. And by the commissioner for a further period not exceeding 30 days beyond the period specified in the clause A. Okay, ma. So for commissioner, the commissioner also has the right to further extend 30 days more. Okay, now. So that's the amendment made here, sir. Clear? Next. So we'll wind up the session here. In the next session, we'll start with the chapter number 8, that is tax invoice, debit notes, credit notes, and e-way bill. That I will discuss in the tomorrow's class. Till then, have a good day and good night. Stay home and stay safe. A very good morning, students. So welcome to the GST marathon classes. In the last class, we have completed regarding the chapter number 7, that is registration. Now time for the chapter number 8, tax invoice, debit notes, credit notes, and e-way bill. So in this chapter, we are going to discuss about the concept of the tax invoice, debit notes, credit notes, e-way bill, concept of e-invoicing, then dynamic QR code, static QR code. All this we are going to be learned from this chapter. Okay, ma. So comparatively, I can say that less important from the examination point of view, right? And yeah, once in 2 exams, we can expect a question from this chapter for 5 marks. Okay, sir. So let's continue with first one, matching of the concept of invoices issued under GST. So first of all, what is an invoice? An invoice is a commercial instrument issued by the supplier of the goods or services to a recipient. So in normal cases, right, that means in the forward charge mechanism cases, I can say that 90% of the cases are covered under forward charge mechanism, where the invoice is issued by the supplier to the recipient. And invoicing is a very crucial aspect for ensuring the tax compliance under any indirect taxation system. In order to ensure the transparency, issuance of invoice for every taxable transaction is a prerequisite. Tax invoice acts as a document evidencing the payment of the value of the goods or services or both, and as well as the tax portion in the same. For the purpose of claiming the input tax credit, invoice matching also needs to be done. The inward supplies of the person claiming credit should match with the outward supplies of the supplier. So a registered person cannot avail the input tax credit unless he is in the possession of a tax invoice. So you can see the example here. So look at this example. Mr. X is a supplier and Y is a recipient. X has supplied goods worth 10 lakhs and GST at the rate of 12%, 1.2 lakhs. Now here Mr. X being the supplier, he has to issue the invoice, tax invoice. So value of the goods is supplied 10 lakhs at GST at the rate of 12%, 1,20,000. Total invoice value 11,20,000. So this invoice is to be issued by the supplier to the recipient. For supplier, the same invoice details have to be furnished in his GSTR 1, that is outward supplies return, because for supplier it is outward supply, and the recipient, right, he has to furnish the same details in his GSTR 2, that is inward supplies return. Now in this scenario, Mr. Y, when he wants to claim the input tax credit of rupees this 1,20,000, Mr. Y should be in the possession of this invoice, right, sir? So when Mr. Y is claiming 1,20,000 as input tax credit, immediately department looks into the GSTR 1 of Mr. X. Mr. X should have disclosed that value of the goods is applied to Y 10 lakhs, GST tax collected 1,20,000. So Mr. X should have disclosed all these details in GSTR 1. So when GSTR 2 of recipient matched with the GSTR 1 of supplier, then the recipient is eligible for claiming the input tax credit. So that is why matching of the invoices needs to be done. Clear, sir? Next. So invoice, what do you mean by an invoice? Right, we have already learned about the tax invoice, which is referred to in the section number 31. And however, there is no hard and fast rule that it is to be issued the invoice in electronic format only. See, you can issue the invoice in a physical format. You can issue the invoices manually, or you can issue the invoice electronically. See, in some of the shops, you can find the physical invoices. Manually, the invoice will be written and then it will be given to you. And in some of the cases, the invoice is computer generated. So both are acceptable under the GST law. Who are liable to issue an invoice? Basically, a registered person who supplies the goods, and as well as sometimes the recipient who receiving the goods from an unregistered person. Reverse charge mechanism. What is the time limit for the issuance of invoice? We have learned in section number 31, and this section number 31 we have already discussed in chapter number 5. Okay, sir. Next, to what extent the invoice shall be issued? To the extent of the supplies made. To the extent of the supplies made. Then to that extent you have to issue the invoices. Suppose that you entered into a contract for 1 crore, but after providing the goods for some 20 lakhs, assume that the contract was terminated. Now, to the extent of the supplies made means to the extent of the 20 lakhs worth of goods you have supplied, you have to generate the invoice. Are you following, sir? Next, when the invoice will be issued in the case of the goods sent on sale or return basis. This we have already learned, sir. Whenever the goods are sent on sale or return basis, the invoice has to be issued on or before the supply, on or before the time of supply, or 6 months from the date of removal of the goods, whichever is earlier. You can see here, on or before at the time of supply, or 6 months from the date of removal of the goods, whichever is earlier. What is the format and particulars of the tax invoice? Generally, there is no specific format for the invoice, ma'am. right? So you can follow your own format, absolutely no problem. But whatever the format you are following, that format should contain the following contents. So generally, I've already given the format of the tax invoice here. You can see. So whenever you come across a particular tax invoice, you'll find these particular contents like serial number, name and address of the recipient, and GST IN of the recipients, and a GST registration number of the recipient, date of the issuance of invoice, name and address of the supplier, GST registration number of the supplier, description of the goods, quantity, rate, amount, and then CGST, SGST, the details of the GST. If it is an interstate transaction, IGST, the total invoice value, and the signature of the person who issuing the invoice. So these are the basic details to be contained by a particular invoice, ma. Okay, now next, all these are mentioned here, ma. And when it comes to the goods, HSN is mandatory, harmonized system of nomenclature, depending upon the turnover of the person who is issuing the invoice. And in the case of the services, SAC, services accounting code is mandatory. Okay, ma. Next, QR code have been having embedded in IRN invoice reference number in case of the e-invoices. In the case of e-invoices, what is the concept of e-invoice? I'll tell you later. Okay, next. So this is regarding the HSN code, right? So requirement of coding the HSN code in the invoice. If your turnover during the preceding financial year is less than or equal to 5 crores, in the case of B2B supplies, under business to business supplies, minimum 4 digits of HSN code you have to be mentioned. And in the case of B2C supply, business to customers, it's optional. And in case if your turnover exceeding 5 crores, in the case of B2B and as well as B2C supplies, minimum 6 digits HSN code you have to be mentioned. Totally 8 digits, ma HSN code, 8 digits, right? So out of which you have to mention 6 digits. Clear, sir? The first 6 digits you have to be mentioned. Next. Then the format which we have already discussed. Amount of the tax to be indicated in the tax invoice and other documents. So whatever the tax you are paying, that amount of the tax should be mentioned in the tax invoice separately. See, only when your tax details are mentioned separately in the invoice, then only you are eligible for input tax credit, ma. You just look at here. That is why I mentioned the tax details separately. So you are paid 13,500 CGST, 13,500 SGST. So total put together 27,000. So when the tax details are mentioned like this separately, then only you are entitled for input tax credit. Otherwise, if the invoice is issued for 1,77,000, means 1,50,000 worth of goods supplied, 27,000 GST. So 1,27,000 inclusive of GST. So if the invoice is issued like this for a consolidated amount, now in this scenario, no input tax credit would be allowed to you. Are you following, sir? So the tax details should be mentioned separately. Then only the input tax credit will be allowed to you. Next. What is the manner of issuing the invoice? So generally, in the case of the goods, the invoice should be issued in triplicate. Original copy is for the recipient, duplicate copy is for the transporter, and triplicate copy, third copy is to the supplier. And in the case of the services, the invoice should be issued in duplicate. The original is for the recipient, duplicate is for the supplier. Clear, sir? Next. The serial number of the invoices issued during a month or quarter shall be furnished electronically in the form number GSTR1. Okay. Now, what is the revised tax invoice? This is something but a very important concept. Revised tax invoice. You may expect a practical question with respect to this particular topic. Revised tax invoice. Now look at here. Let me explain you with the help of the running notes. So this is a concept of revised tax invoice. Look at the example. Mr. X is a supplier, commenced his business on 1st April 2021. On 1st September 2021, his turnover exceeded 20 lakhs. So he is liable for registration. On 20th of September, he made an application for registration in form number GST REG01. So that means within 30 days from the date of liability to registration, he applied for registration. Now, what is the effective date of registration, ma? The date on which he got the liability. So effective date of registration is 1st September 2021. Okay, ma. On 25th of September 21, he received the certificate of registration in form number GST REG 0106. Okay, sir. So on 1st September, liability arises on him for registration. 20th September, he made an application for registration. 25th September, he received the certificate of registration. So in this scenario, the supplier is said to be the registered person from 1st September 2021 itself. Okay, now the doubt arises, sir, what are the supplies we have made between 1st September 2021 till 25th of September 2021? What are the supplies we have made between these two dates? We might have issued the invoices, but in that invoices, we might not be mentioned our GST registration number, because we got to know about our GST registration number only on 25th of September 2021, the date on which we are received certificate of registration. Though theoretically you are said to be the registered person from 1st September onwards, but suppose that you applied for registration on 20th September, on 10th September you made a supply. As on 10th September 2021, what is your status? You haven't filed an application for registration. Yes or no? You don't know that you are going to made an application for registration on 20th September. You don't know this fact on 10th September. Yes or no? So on 10th September, what are the supplies you have made? You might have issued an invoice, but on that invoice, you might not mention your GST registration number, because on 10th September, you haven't applied for application GST registration. So you don't know your GST registration number, right, sir? So that's the case. Now, whatever the invoices issued between 1st September 2021 till 25th September 2021, for all the invoices, now you have to issue the revised tax invoices. Once again, you have to issue for all that supplies a tax invoice. Now, this time you have to mention your GST registration details. So by mentioning your GST registration number details, you have to issue the revised tax invoices for all those invoices which are issued in between effective date of registration till the date of receipt of certificate of registration. Are you following or not? Right, ma? Now, so revised tax invoices should be issued with reference to the invoices issued between effective date of registration and the date of registration of receipt of the certificate of registration. Okay, ma'am. Right. Next. So now, is there any time limit for issuing these revised tax invoices? Yes, sir. From the date on which you have received your certificate of registration, that is on 25th September 2021, you have a time limit of 1 month. You have a time limit of 1 month. Now, within this 1 month time limit, you have to issue the revised tax invoices. Clear now? So from the date of receipt of certificate of registration, you have a time limit of 1 month for the issuance of the revised tax invoices. Clear, sir? Next. So that's the concept of revised tax invoices. Okay, ma. Next. Is there any exception for the issuance of a tax invoices for smaller value of supplies, say 100 rupees? So generally it's become difficulty for the supplier to issue the tax invoice for each and every supply. That is why the department giving some exceptions, like, okay, for small supplies, you are not required to issue a separate invoice. For all those supplies, you can issue a consolidated tax invoice. A single tax invoice is sufficient for all those petty supplies. Now, what are they? So is there any exception for the issuance of tax invoice for smaller values? Answer is yes. The tax invoice not required to be issued if the value of supply is less than 200 and the recipient must be an unregistered person. Now, in these cases, the consolidated tax invoice can be issued, ma'am. Okay, now. Next, what do you mean by the bill of supply, and explain in brief? See, generally, bill of supply can be issued only when you are supplying the exempted goods, or when you opted for the composition scheme, or when you opted for optional rate scheme. So these people have to issue the bill of supply instead of tax invoice. So if you're a composition scheme dealer, you are not authorized to issue the tax invoices. Instead, you have to issue the bill of supply. When you opted for optional rate scheme, you have to issue the bill of supply instead of a tax invoice. So these people shall issue a bill of supply instead of a tax invoice. Okay, ma'am. Next, what do you mean by a receipt voucher? Explain in brief. Nothing but whenever you are receiving an advance in relation to a particular contract, right? So acknowledging the advances received, whatever the voucher you are going to issue, that is what we call the receipt voucher. So a registered person shall issue a receipt voucher in respect of the advances received. Okay, sir. Next, what do you mean by a refund voucher? Sir, you received the advance for the purpose of providing some supplies on a particular date, but on that particular date you are fails to do so. You are fails to provide the goods as agreed. You fails to provide the services as agreed. Now in that situations, whatever the advances you have received, that advance amount you have to refund. So at the time of refunding the advances which you have received earlier, you have to issue the refund voucher. So a refund voucher shall be issued by a registered supplier if all the following conditions are satisfied. An advance has been received from the recipient, the receipt voucher has already been issued, and the supply of the goods and the tax invoice has not been made. As agreed, we are unable to provide the services or goods. Then whatever the advances you have received, that advance amount you have to refund. And at the time of refunding that advances, whatever the voucher you are going to issue, that is what we call the refund voucher. Next, is registered recipient is liable for issuance of an invoice under reverse charge mechanism? Absolutely yes. So whenever the recipient is paying the GST under reverse charge mechanism, he has every right to issue the payment voucher and as well as invoice. Look at the situation where the recipient is registered or not. So for issuing the payment voucher, the recipient must be a registered person, and for issuing the tax invoice, he must be a registered person. Good. Next, in case of providing the notified services, whether the supplier is registered or not. In the case of notified services, for the issuance of the payment voucher, the registration to the recipient is not mandatory. He may be a registered recipient, he may be a registered, unregistered recipient. Now, when it comes to the issuance of the invoices, right, the recipient can be unregistered recipient, absolutely no problem. Sorry, recipient kadama, supplier, status of the supplier, sorry, status of the supplier. Okay, so the recipient must be registered in both the cases. The recipient must be registered for the issuance of the payment voucher, for the issuance of the tax invoice. The recipient must be registered. But when it comes to the notified services, the supplier must be unregistered. Then only the registered recipient has every right to issue the tax invoice. Next, specified services. The list is given here, banking and financial services, right? Generally, in the case of a tax invoice, can be issued any other document? Answer is yes. See, when it comes to the banking companies, financial institutions, you never see a tax invoice from them. They will issue simply a counterfoil. A counterfoil will be given to you. Just like you went to deposit, and deposit voucher you will take in. That voucher contains two parts. One part, after the successful deposit of the amount, one part will be retained by the banker. The smaller part, the counterfoil part, just like the voucher will be like this, deposit voucher. Deposit voucher will be like this. After the successful deposit of the money, this part will be retained by the banker and this part will be cut it down and will be given to you. This is what we call counterfoil. Yes or no? And that itself is a tax invoice to you. So generally bankers, insurance companies, financial institutions, including NBFCs, instead of the tax invoices, they can issue some other documents. Like whenever you are paying the insurance premium, you will get the premium receipt. That itself tax invoice. Yes or no? Next, also GTA, goods transporting agency. Generally the goods transporting agencies, instead of the tax invoices, they will issue the consignment note. The consignment note itself is a tax invoice. Alane, suppliers of the passenger transportation services, they will issue the tickets. Whenever you are having a journey by bus, a train, or by flight, whatever the ticket you are getting, the ticket itself is a tax invoice. Clear, ma? Next, what do you mean by the delivery challan? Nothing but whenever there is movement of the goods, whenever there is the goods are being removed from the factory, then the delivery challan should be issued. Clear, sir? So normally at the time of removal of the goods, the tax invoice may or may not be issued. However, in that cases, a delivery challan may be issued instead of the tax invoice at the time of removal of the goods. But at the time of delivery of the goods, the tax invoice should be issued, ma'am. Clear? Next. So in the following cases, delivery challan may be issued at the time of removal. Supply of the liquid gas quantity, because at the time of removal, the quantity is unknown, ma'am. Right, the quantity will get to know only after completion of a particular period, say 1 month. After that only the consumption will be calculated, and basing upon the consumption, the final bill will be issued. Transportation of the goods for job work, transportation of goods for any reason other than supply, and any other supplies notified by the board. Focus points: the delivery challenge to be issued serially numbered, not exceeding 16 characters. It is in one or multiple series, and it should be issued at the time of removal of the goods for transportation. So generally that delivery challan should be prepared in triplicate, original for consignee, duplicate for transporter, and the third copy is with the consignor. Okay, ma'am. Now, what do you mean by the credit note, debit note, and explain in brief? Now, look at these examples for credit notes and debit notes, ma, in the running notes. So this is the concept of the credit notes. Look at the example. Mr. X is a supplier, supplied 10,000 units, each one at the rate of 100 rupees, and GST at the rate of 18% to Mr. Y, recipient. And after receiving the goods and after inspection, Mr. Y came to know that 1,000 units are found to be defective, and that 1,000 units returned to Mr. X. But okay, for the time being, first look at the first transaction, right? That is, you just ignore this point for the time being. So initially, Mr. X supplied 10,000 units to Mr. Y. So acknowledging the same, Mr. X will issue a tax invoice. Value of the goods supplied: 10,000 units into 100 rupees per unit, 10 lakhs. GST at the rate of 18%, 1,80,000. So the total invoice value, 11,80,000. Now, immediately after receiving the goods from Mr. Y, right? So he will inspect the goods, whether all the goods are in a usable condition or not. Make sure that there are no defective or damaged goods. But later on, after his inspection completed, he found 1,000 units damaged, defective. So that 1,000 units returned. Now, with respect to this, now Mr. X has to issue a credit note acknowledging the same. After receiving these 1,000 units returned from Mr. Y, Mr. X has to issue, the supplier has to issue a credit note to the extent of value of the goods received as returned 1 lakh, GST at the rate of 18%, 18,000, totally 1,18,000 rupees. So the credit note will be issued where the value of supply is greater than the taxable value of supply. You can see here, the taxable value in the invoice is greater than taxable value. Means originally the taxable value is 11,80,000. But now, that means I can say the taxable value 10 lakhs earlier, now it is only 9 lakh. So the taxable invoice in the invoice is greater than the actual taxable value. Next, the tax charged in the invoice is greater than tax payable. Earlier, what is the tax charged in the invoice? 1,80,000. Now, the value of the goods are 9 lakhs into 18%. So you'll get my 1,62,000. So the taxable value in the invoice 1,80,000 is greater than actual tax payable 1,62,000. Right now, in this scenario, right, the supplier has to issue a credit note. Whenever these conditions are being satisfied, the way the taxable value in the invoice is greater than actual taxable value, tax charged in the invoice is greater than actual tax payable, and where the goods supplied are returned by the recipient, where the goods or services are both supplied are found to be deficient. In these cases, if any of these cases are existing, the supplier has to issue a credit note. Okay, ma'am. Now the quite opposite concept, debit note. Quite opposite concept, debit note. Look at the debit note running notes. Mr. X is a supplier, supplied 10,000 units at the rate of 100 rupees each, and GST 12%, and Y is the recipient. And there existing an escalation clause as well. in that particular. Initially, he's sending the goods at 100 rupees per unit. But Mr. X said, in future, if the value of the goods increased, accordingly, you have to pay. Suppose that after 1 month, the value of the goods increased to 120. So you have to pay me at 120 rupees per unit. That is what the escalation clause is. Yes or no? Right? So initially, tax invoice issued for 100 rupees per unit. So 10 lakhs and GST 1,20,000. He issued the invoice for 11,20,000. But after what happened is, after 15 days, the cement bag price increased to 120. Now the value of the goods is 12 lakhs. Okay, sir. Look at here, tax value charged in the invoice 10 lakhs less than actual taxable value 12 lakhs. Right, sir? Now for the difference of 2 lakhs, Mr. X, the supplier has to issue a debit note. The supplier has to issue a debit note. So whenever the tax value charged in the invoice less than the actual taxable value, the supplier has to issue a debit note. Or whenever the GST tax charged in the invoice 1,20,000 is less than actual tax payable, right? Then again, for the difference amount of the tax charge, a debit note has to be issued. Clear, sir? So you can see here conditions where the taxable value in the invoice less than actual taxable value, tax charged in the invoice is actual tax payable. If these cases are existing, a debit note has to be issued. Okay, ma'am. Next. And after that, you have the concept of e-way bill, right? So meaning of e-way bill and why is it required? So generally, e-way bill is an electronic document evidencing the movement of the goods. Right, sir. E-way bill includes the name of the consignor, consignee, the point of origin, consignment, and its destination, and as well as route. What are the benefits of e-way bill? Sir, earlier, ma'am, before the introduction of this concept, before the introduction of e-way bill concept, right? Like I can say 4 years back, 3 years, 4 years back, 5 years back, whenever you access to a highway, you might have observed a large queue of the trucks, mainly at the state borders, mainly at the state toll points, checkposts, large queue of trucks which are carrying the goods. Because at the state border, at the state checkpost, each and every truck which is being carried the goods have been stopped and verified physically. All the documents of the vehicle, documents of the goods being transported, and the physical verification, physical checking of the goods will be happened, sir. For all these purposes, it will take at least 15 to 20 minutes for every vehicle. Right, for verifying the documents of the vehicle, for verifying the documents of the goods being transported, the physical verification of the goods, everything. 15 to 20 minutes for every vehicle it will take, sir. But now with the concept of the e-way bill, majority of the verification done through online only. And now hardly at every state checkpost, you can find a vehicle is being stopped for hardly 5 minutes. Hardly 5 minutes. Within 5 minutes, the vehicle gets clearance. The vehicle gets clearance. Now, because of this, what happens? Faster movement of the goods we can expect. Earlier now, suppose that your vehicle is on the queue line. Before your vehicle, there are some 20 vehicles are there. Each vehicle take 20 minutes time. So 20 vehicles into 20 minutes, 400 minutes. And approximately 6.5 hours you have to wait. 6.5 hours to 7 hours. Who knows, when your vehicle comes, they might be going for a lunch or they might be going for a dinner. Possibility is there, no? So the waiting time at the state checkpost will get reduced. Earlier 20 vehicles into 20 minutes, now 20 vehicles into 5 minutes and 100 minutes. Max within 1.5 or 2 hours, your vehicle turn will come and your vehicle will get clearance in 5 minutes and you can go. So hardly you are now waiting for 1 to 1.5 hours in the state checkpost. Earlier you used to wait for 6 to 7 hours. So faster movement of the goods, and physical interface giving pave a way for digital interface, resulting the elimination of state boundary checkposts. It will facilitate the faster movement of the goods. It will improve the turnaround time of the trucks and help the logistics industry by increasing the average distances traveled, reducing the traveling time as well as costs. It is just like a kind of, sir, you might have heard about this fast tag. Earlier, whenever you are accessing highways, especially at the toll gates, you have to stop at the toll gate, you have to pay the toll fees, then only you will get the clearance. Right, sir? So unnecessary huge amount of the time will be wastage at the toll gates. But now with the fast tags, whenever your vehicle approaching the toll gate, there will be a camera scanner which will scan your fast tag, and immediately the gates will be open and you can go on. You need not stop at the toll gates. Yes or no? So because of this fast tag, there is less quantity, less number of vehicles are being stopped at the toll gates. The queue is very less now. Yes or no? Right. So that's the advantage of the e-way bill. When e-way bill is required to be generated, sir, every time whenever there is a movement of the goods, every time e-way bill generation is required, answer is absolutely no, not required. E-way bill is mandatory only in the case of the movement of the goods where the consignment value exceeding 50,000 rupees. So whatever the goods you are being transported, if the value of the goods exceeding 50,000 rupees, then only the e-way bill is mandatory. So movement should be in relation to a supply, or it could be for reasons other than supply, and inward supplies from an unregistered person. Now exceptions to the general rule. What is general rule? The e-way bill is required to be generated only when the value of the goods exceeding 50,000 rupees. But sometimes, even if the value of the goods being transported less than 50,000, you have to issue the e-way bill. E-way bill needs to be issued even if the value of the consignment is less than 50,000. What are the cases? Number one, interstate transfer of the goods by principal to job worker. Interstate transfer of handicraft goods by a person exempted from obtaining registration. E-way bill has to be generated electronically in form number GST EWB01, and the facility of generation, cancellation, updation, assignment shall be made available through SMS to the supplier, recipient, and transporter. And e-way bill can be generated through various modes like web, app, SMS, and bulk uploading tool. Next, e-way bill, the person who is generating the e-way bill should be a registered person on the GST portal. Okay, sir. And registered person causing the movement of the goods shall furnish information relating to the said goods in part A of the form GST EWB01. So generally e-way bill consisting of two parts, part A and part B. Part A has to be filled up by the either consignor or consignee, and part B will be filled up by the person who is driving the vehicle owner. A GTA, I can say GTA person has to be filled up the part B details. Part B details consisting hardly the vehicle details, chassis number, route, everything. That's it, ma. Next, who causes the movement of the goods? Generally, the supplier registered and undertakes to transport the goods. Suppose you purchase the goods from Mr. X, and Mr. X himself providing the transportation services as well. Now the supplier is a person causing the movement of the goods. Second case, sir, in case if the recipient himself arranges the transport for the movement of the goods. Now I can say the movement of the goods is caused by the recipient. Okay, next, e-way bill in the case of bill to ship to model. Now what is this bill to ship to model? You can see with the help of example. Bill to ship to model, I guess I've explained you earlier in the previous chapters, but okay, once again I'll explain. Look at this, mom. The first transaction, you can see M is a person who has ordered N to send the goods directly to O. Means it will be like this. Mr. N, the supplier, the first transaction between N to M. M is a supplier and M is a recipient, right? And while the goods are in transit, right, sir, the Mr. M given the instruction to N, don't transport the goods to me. I've already sold the goods to Mr. O. So send the goods directly to Mr. O. Now here the first transaction between N to M, second transaction between M to O. Now in this scenario, sir, there are two transactions. Now you will get a doubt here. Sir, is there any requirement of generating two e-way bills? Not required. It is enough to create a single e-way bill, and that e-way bill can be either generated by N or generated by M, because there is only one movement of the goods. The goods are not being sent to Mr. M. M given clear instructions to N to transport the goods to O. So there is only one movement of the goods. So only one e-way bill is required. So either M or N can generate the e-way bill, but only one e-way bill is required. Next, information to be furnished in e-way bill, that I've already told you. Part A is to be furnished by the registered person who is causing the movement of the goods, like could be a consignor or consignee. It contains the following details: GST registration of the supplier and recipient, place of delivery, document number like tax invoice, bill of supply, value of the goods being supplied, HSN code, and finally the reasons for transportation. Part B, transport details. This is to be furnished by the person who is transporting the goods, like GTA. And it contains, I've already told you, vehicle details, vehicle number, chassis, transport document number, all this should be there. Okay, now next, who can generate the e-way bill? Right, the registered consignor or consignee, in case if the transportation is being done in own or hired vehicle. Transporter, if the goods are handed over to the transporter, right, sir, then the e-way bill has to be generated. Sir, in case if the consignor or consignee forgot to generate the e-way bill, now it shall be the responsibility of the transporter to generate it. Okay, now next, goods transported by railways shall be delivered only on production of e-way bill. Only after producing the e-way bill, the goods will be delivered to you. Okay, next, transfer of the goods from one conveyance to another conveyance means there are so many possibilities. Like initially you have sent the goods in a particular conveyance in a truck. After some distance traveled, the truck got damaged or repaired, or the truck may be met with an accident. Then immediately you have to move the goods from that particular truck to another truck. Yes or no? Right, sir. Later, up to a particular destination, our GTA agreed to transport it, the goods. From that particular destination, you have to enter into another contract with another GTA person. So there will be the possibility of two GTA services. Like I've explained you here with the help of an example. You can see here. So consignor from city X supplying the goods to consignee who is there in city Z. Now initially transporter A agreed to send the goods from city X to city Y. So then e-way will be generated by the consignor. Part A, he will be provide the details in part A. Then the e-way bill assigned to transporter A. The transporter A has to fill the details of part B. Now once the goods are reached to city Y, from city Y, transporter B undertaking the transport of goods. Now what Mr. A has to do, the transporter A has to assign the e-way bill in the name of transporter B. Now the transporter B has to update the vehicle details in part B. Then the goods will be moved to city Z. That's the example given in the material. Okay, now next. Cancellation of the e-way bill. Yes, whenever you have generated the e-way bill through some wrong details, you have every right to cancel the e-way bill which is generated, but that e-way bill should be cancelled only within a period of 24 hours from the time of its generation, within 24 hours. And whatever the e-way bill generated, that should be valid for a period of 15 days for updating the information in part B. Okay, now next, the validity period of the e-way bill or consolidated e-way bill, right? So earlier we have an amendment actually in the Finance Act 2020, right? Earlier here we used to find 100 kilometers. Now this has been increased to 200 kilometers. So basically the validity period will be discussed like this. for every 100 kilometer earlier before the amendment, for every 100 kilometers, 1 day is the validity period of the e-way bill. Like, sir, you have to transport the goods for a distance of 600 kilometers. So that means whatever the e-way bill you have generated, that will be having a validity of 6 days. So that means within the 6 days, you have to transport the goods to the destination. Your vehicle must reach the destination within 6 days. That's the validity period. Are you following, sir? In case if any reasons, if your vehicle is unable to reach the destination within the 6 days, the validity period of the e-way bill gets closed. Either you have to renew the e-way bill or you have to generate a new e-way bill. Okay, now this has been reduced to 200 kilometers per day. And earlier you used to get 6 days validity period. Now it is decreased to 3 days only, because for every 200 kilometers, 1 day is a validity period. So 600 kilometers, you have a destination. So 600 divided by 200. So the validity period is now just 3 days. Are you following, sir? Next. Yeah, amendments by the Finance Act 2020, blocking of e-way bill generation facility extended to a person whose registration has been suspended. Sir, whenever your registration is under suspension period, then you are not entitled to generate a e-way bill. So blocking of e-way bill generation facility means disabling a taxpayer from generating the e-way bill. A user will not be able to generate the e-way bill for a GST registration number if the GST registration number is not eligible to generate the e-way bill. Are you following, sir? So GST registration numbers of such blocked taxpayers cannot be used to generate the e-way bills. Right. So as long as your GST registration number under suspension period, you cannot generate the e-way bill. Are you following or not? So rule number 138 blocks the e-way bill generation facility of a person paying the tax under regular scheme if he has not furnished the returns for a consecutive period of 2 months. So if you are not filing the returns for a consecutive period of 2 months, then your registration will be under suspension. When your registration will be under suspension, you cannot generate the e-way bill. Are you following, sir? Earlier the wording said 2 months. Now this months wording replaced with the 2 tax periods, because now we have a concept called QRMP, quarterly returns, monthly payment. So when you opted for QRMP, for you tax period means a quarter, not a month. So that's why they have replaced the wordings with 2 months with 2 tax periods. Okay, sir. So if you opted for QRMP scheme, if you fails to file the returns for a consecutive 2 quarters, then your registration will be under suspension. When your registration under suspension, you cannot generate the e-way bill. As simple as that. Okay, ma. Next. These are all given in the italics. That means not so important from examination point of view. Yeah. Amendments made by the Finance Act 2020. Finance Act 2020. So concept of e-invoicing. Look at the running notes for e-invoicing. So with effect from the 1st April 2021, the concept of e-invoicing is mandatory for the following notified persons. Right, sir. Sir, here you can see in the running notes text I've given you with effect from 1st January 2020. Right, sir. In the running notes I've given with effect from the 1st April 2021. What is this? See, initially when the concept of e-invoicing was introduced, it is made voluntary, sir. Voluntary. Right, sir. And from 1st October 2020 onwards, the voluntary becomes mandatory only for notified category taxpayers. Only for notified category taxpayers. And who are notified category taxpayers? Whose aggregate turnover is greater than 500 crores. 500 crores. But now these are all the old provisions, ma. This is an old provision. This is an old provision. Now whatever provided in the 3rd paragraph, this is the amended provision. See, the old provisions I have given you only for your knowledge purposes. See, at the time of introduction, what is the limit? What is the status? Now, what is the limit? Only for a comparison purpose, I've given you the old provisions. Okay, now with effect from the 1st Jan 2021 onwards, the e-invoicing has been made mandatory for all registered businesses with an aggregate turnover in any preceding financial year from 1718 onwards greater than 100 crores. I can say even this is also old provision. Now the new provision is this. Further, the threshold limit for the mandatory issuing of the e-invoice is now 50 crores with effect from the 1st April 2021 onwards. So the new limit is 50 crores whose aggregate turnover exceeded 50 crores rupees. For them, the e-invoicing is mandatory. Are you following, sir? So that is what I've given in the running notes is like this. From 1/4/2021 onwards, the concept of e-invoicing is becoming mandatory for all the following notified persons. So from the financial year 1718 till the financial year 21-22, in any of these financial year, if aggregate turnover exceeded 50 crores, e-invoicing is mandatory. In any of these, even in any one of these preceding financial years, if your aggregate turnover exceeding 50 crores in the current financial year, e-invoicing is mandatory to you. Are you following, sir? Next. Meaning of e-invoice. So then after listening to this, you will get a doubt. Sir, e-invoicing means, do we require to generate the e-invoices only on the government portal, only on the gst.gov.in website? No, it doesn't mean like that. E-invoicing ante GST portal lo invoice generate cheyadam kadamma. Right? You have a separate procedure for that. I'll explain. E-invoicing is not the generation of invoice in the government portal. Are you following, sir? Taxpayers will continue to create their GST invoices on their own accounting, billing, or ERP systems as per e-invoice schema. Right? Now, what is the procedure? Look at here. Step number 1, the invoice has to be generated in any regular way. Step number 2, then whatever the invoices generated, they have to be reported in IRP, invoice reporting portal. That invoices should be reported in the IRP. Step number 3, IRP will generate IRN, invoice reference number, and then the invoices will be returned to the suppliers. Now in these invoices, there will be an embedded IRN. Now that supplier has to issue the same to the recipient. This is a procedure of e-invoicing. Are you following, sir? Next. You can see here, the invoices shall be reported in IRP. Then after that, IRP will generate IRN, digitally sign it and return to the supplier. And this GST e-invoice will be valid only with a valid IRN. Clear, sir? Next. Advantages of e-invoices, you just go through it. It's only theoretical purpose, ma. And e-invoice statutory provisions. So e-invoice shall be prepared by the notified classes of registered persons by uploading such particulars as contained in form number GST INV01 on the GST common portal, and then obtain an invoice reference number in the prescribed manner. Okay, sir. However, the commissioner may, on the recommendations of the council by notification, exempt a classes of person from the issuance of the e-invoice. Okay, sir. Next. Where the concept of e-invoicing is applicable, there is no need of issuing the invoices in triplicate or duplicate. Only one copy is enough, sir. Okay, now. GST INV01 is only for reporting invoice details to IRP. Right, sir? So in IRP, you have to report the invoice details, no? For reporting that invoice details into IRP, you have to use GST INV01. Clear? Next. Sir, for the classes of persons notified to mandatorily issue the invoice, to whom it is mandatory? To whom it is mandatory to issue the e-invoice? Every registered person whose aggregate turnover in any of the preceding financial year from 1718 onwards exceeding 50 crores. I've already told you, right? They have to issue the e-invoices for all the B2B supplies and as well as for exports. Okay, now, and such notified persons are not required to issue the e-invoices for B2C transactions. Okay, sir. Next. Persons exempted from issuing the e-invoice. Who are exempted from issuing the e-invoices? Now look at here, sir. The following entities are exempted from issuing the e-invoices, like SEZ units, special economic zone units, insurance or banking company, financial institutions, GTA supplying services, and supplier of passenger transportation services, and supplier of goods who are providing the services by way of admission or exhibition to cinematographic films or multiplex screens. So these people are now presently exempted for issuing the e-invoices. Okay, now the above mentioned entities are not required to issue the e-invoices even if their turnover exceeding 50 crores. Next. It is important to note here that only the SEZ units got exemption from generating e-invoices, not the SEZ developers. If SEZ developers turnover exceeding 50 crores in any of the preceding financial year, starting from 17-18, then they have to mandatorily required to issue the e-invoices. Okay, ma. Next. Cancellation or amendment to amendment of reported invoice. See, the seller can cancel the IRN and invoice already reported into the reporting portal. No problem, sir. Within a specified time limit, you can cancel that invoices, or you can make amendments to that e-invoices as well. Absolutely no problem, sir. Okay, now. And then the invoices. First of all, I've told you already, whatever the invoices generated, which are generated regular way, that invoices should be reported to the IRP portal. And what are the IRP portals presently have been notified by the department? So these are all the IRP portal notified by the department. E-invoice1.gst1, gst.gov.in, e-invoice2.gst.gov.in, like this up to 10 e-invoice 10.gst.gov.in. These are all the invoice reporting portals. You can use any of these websites for uploading your invoices, for reporting your invoices into IRP. Okay, now next. IRN, invoice reference number. I've already told you, sir, whenever you are generating the invoices through e-invoicing concept, IRN will be generated, and that IRN will be changed from invoice to invoice. It's a unique number, right? The example I've already given here. This is IRN. Okay, sir, which contains 64 digits. 64 digits. Okay, sir. Next, after that, QR code, quick reference code. Upon the successful generation of the invoice on IRP, it will be returned as signed e-invoice to the supplier with IRN and QR code. You will find a QR code on that invoice, and that IRN is embedded in the QR code, which shall be extracted and printed on the invoice. The QR code enables the quick view, validation, and access of the invoices from the GST system from handheld devices. Through even mobile phone also, you can scan the QR code. Upon the scanning of the QR code, you will get all the details of invoice. Right, sir? Then dynamic QR code. The purpose of the generation of this is to enable and encourage the digital payments, where the buyer can scan this dynamic QR code and make the payment from mobile wallet directly. Today many shops have static QR code, right, at the payment counter, which is scanned by the buyer, but the buyer has to enter the amount details to be paid to the shop in the mobile payment app. The dynamic QR code, on the other hand, will have the payment details, and thus scan and pay in one go is possible. See the difference between the dynamic QR code and static QR code I've given here, sir. Yeah. See, whenever you find a QR code, a particular outlet, sir, in this, if you scan this QR code, if you get the payment details, the amount to be paid, right? The amount to be paid is also mentioned. You got that information immediately after scanning that QR code. That is what you call dynamic QR code. You just simply enter your UPI pin and make the payment. That's it. But sometimes at the scanning of this QR code, you will get the details of only the supplier. how much amount you have to pay, you have to enter manually. Right, sir? So manually you have to enter the amount to be paid. Then you have to enter your UPI pin. Then the payment will be successful. And that kind of code is called a static QR code. Okay, now. Next. Persons mandated to have a dynamic QR code. So to whom it is mandatory? So every registered person whose aggregate turnover in any of the preceding financial year starting from 1718 onwards exceeding 500 crores shall have the dynamic QR code in respect of all the B2C invoices. Okay, ma'am, right? Dynamic QR code made available to the buyer by such a registered person through digital display with the payment cross-reference printed on the invoice and shall be deemed to have been the QR code. Next, non-applicability of the dynamic QR code. Just like the same provisions we have seen for non-applicability of e-invoicing. Same provisions, ma. Insurance companies, banking companies, financial institutions, including NBFCs, GST, supplier of passenger transportation services, and services in relation to exhibition of cinematographic films in multiplexes, and the person who providing the OIDIR services. And as well as exports, those who are engaged in the exports. Right, ma. So for all these people, there is no need of having a dynamic QR code. Clear, dynamic QR code is not mandatory. Next. These are all the just your knowledge purposes I've given. Whenever you find the time, just go through it. The differences between e-invoicing and dynamic QR code, I've already explained. You just go through it once. It's only given for your knowledge purpose. Like you can see here, purpose. Why should we issue the e-invoice? For the automation of GSTR 1 and e-way bill, right? So reduction in the transcription errors, reduction in the disputes. For these purposes, we are issuing the e-invoicing. Dynamic QR code we are issuing for the facilitation of the digital payments. And suppliers to whom it is mandatory, where aggregate turnover exceeding 50 crores in any of the preceding financial years, starting from 1718. Dynamic QR code, aggregate turnover exceeding 500 crores. Okay, now. And to whom it is mandatory, like which supplies? For B2B supplies and as well as exports. But here, only for B2C supplies, dynamic QR code is mandatory. Okay, now. And for generating the e-invoice, the original invoice need to be sent to the invoice registration portal. For generating the dynamic QR code, there is no such a requirement. Okay, now, sir. That's it. These are the differences maximum. And yeah, with that, we have completed the theory of the 8th chapter as well. Tax invoice, debit note, credit note, and e-way bill. And also we have learned about the concept of e-invoicing, static QR code, dynamic QR code, and then finally the quick response code and everything. All this we have learned, sir. And the amendments also, e-invoicing is not applicable for the government, departmental, and local authorities. This we have already studied, ma. The concept of e-invoicing is not applicable for special economic zones, insurance banking companies, GTA services, supplier of passenger services. This list we have already studied just now. Here, invoice, let me take to the e-invoicing system. Yeah. Persons exempted from e-invoicing. This list you have already studied, ma. Now in this list, there is some more new additions like government departments, local authorities. Now, even these people also not required to generate the e-invoicing. That is what mentioned here. The said notification has been amended to exempt a government department and a local authority, right, from generating the e-invoicing. For these people also, e-invoicing is not required. So these two people also added into this list. That is the latest amendment, right? Next. E-way bill generation facility to be blocked in respect of outward movement of the goods by defaulting registered person. Rule number 138E, we have already discussed, ma. E-way bill concept lo chadukunnamo. Let me take you to there. Rule number 138E. Yeah, here it is. Blocking of e-way bill for generation, right, for the defaulted suppliers. Rule number 138E. Clear, sir? So even all the amendments from this chapter also we have discussed. Clear? Right. So with this 8th chapter marathon video is completed, sir. So see you in the next session for the 9th chapter, payment of taxes. And till then, have a good day. See you in the next session. Till then, stay home and stay safe. A very good evening, students. So welcome to the GST marathon classes. In the last session, we have completed the discussion regarding our chapter number 8, tax invoice, debit notes, credit notes, and e-way bill. But the time for the chapter number 9, payment of tax. Now, in this chapter, we are going to discuss about what are the different types of ledgers that we will have in our GST common portal. That is electronic cash register, cash ledger, electronic credit ledger, and electronic liability register. Okay, ma. And what are the debit items? What are the credit items with respect to that particular ledgers? And after that, we are going to see how to make the payment of taxes, and then how to calculate the interest for the belated payment of taxes, and everything we are going to learn from this particular chapter, ma. Okay, now. So let's go for the introduction first. The different types of payments to be made under GST are as follows. Like, we'll pay CGST, which is credited to the account of the central government, then SGST, UTGST, and they have to be paid for the intrastate supply of the goods or services or both. So whenever there is an intrastate supplies, we used to pay the CGST and SGST, or CGST and UTGST, right, sir? And IGST, integrated GST, right? It is nothing but the sum of the total of CGST and SGST, and it is to be paid for any interstate supply of the goods or services or both. And then after that, TDS and TCS is to be paid by certain categories of registered persons. This is not income tax TDS and TCS. This is GST, TDS, and TCS. Okay, sir. And after that, interest, penalty, fees, and any other payments also required to be made wherever applicable. Right, sir. So how many different types of payments are there? CGST, SGST, UTGST, IGST, TDS, TCS, interest, penalty, fees, cess, everything. These are all the different types of the payments we are going to be made under GST. The introduction of the e-ledgers is a unique feature under the GST resume. E-ledgers. See, as in when you completed your registration process, right? And when you logged into the GST official website, GST common portal, that is gst.gov.in, immediately there will be 3 ledgers will be opened on your name, in your name. 3 ledgers, 3 electronic ledgers, right, sir? So here the 3 ledgers are electronic credit ledger, electronic cash ledger, and electronic liability register. Okay, sir. So 2 e-ledgers, cash and credit ledger, and an electronic liability register. Clear, sir? So next, payment of tax, interest, penalty, and other amounts. First, let us try to understand the types of e-ledgers. As I already told you, there are 3 ledgers. Number 1, electronic cash ledger. Number 2, electronic credit ledger. And number 3, electronic liability registers. Now, first, let us try to understand what is electronic cash ledger. In simple terms, it will operate just like a bank account. So whatever the savings bank account you open in the bank account, or whatever the current account you open in a bank, just like the same, you have electronic cash ledger in your GST common portal against your credentials, right, sir? So look at here, running notes, payment of tax, e-cash ledger, e-credit ledger, and e-liability register. And e-cash ledger, you just look at the very first point, what I've just told you. It is just like a savings bank account. SB means savings bank account. Whenever you deposit the money, then e-cash ledger is credited. Obviously, whenever you went to a bank and deposited the money in your account, then immediately your account will get credited. And when you are making the payments, then your e-cash ledger will be debited. Whenever you are making the payments, your bank account will get debited. Yes or no? Right, sir. Next. So in the electronic cash ledger, how to deposit the money? Right. See, for depositing the money, we have 2 options. For depositing the money, we have 2 options. One, through online mode, we can deposit, and the other one offline mode we can deposit. Right, sir? So look at the running notes for the same. Deposit of the money, option 1, online deposits, and there is no limit for deposits. You can deposit any amount through online. If you want to deposit 10 crores in your electronic cash ledger, you can do so. You can deposit 10 crores into your electronic cash ledger through online mode. But when it comes to the offline mode, there is a restriction. The maximum deposit you can make is 10,000 rupees per challan per tax period. Per tax period means it could be monthly or it could be quarterly. It could be quarterly. Right, sir? Suppose that if you are paying the taxes on a monthly basis, so for every month per a single challan, the maximum deposit you can make into your electronic cash ledger is just 10,000 rupees. Even for the offline deposit, first of all, the challan has to be generated electronically. The challan has to be generated electronically. Say if you want to deposit some 8,000 rupees through offline mode into your e-cash ledger, first of all, you have to generate a challan for 8,000, take the printout of the challan, go to the nearest bank, give the challan to the banker along with the cash of 8,000 rupees. Then the banker will process the challan, and after that the 8,000 will be credited to your electronic cash ledger. So even if you want to opt for the offline deposit into your electronic cash ledger, first of all, you have to generate the online challan. The challan has to be generated electronically. Clear, sir? Or else directly go for online deposit. Now, why unnecessarily offline deposit where there is a restriction of 10,000 only? If you opt for the online deposit, any amount you can deposit, sir. No restrictions at all. See, in order to encourage the cashless payments, digital payments, the department made the conditions like this. Are you following, sir? So online mode, what are covers under online mode? You can see the payment deposit can be made in electronic cash ledger by using internet banking, credit or debit cards, NEFT, RTGS without any limits. And when it comes to offline mode, the maximum limit that can be deposited by cash through OTC over the counter is 10,000 rupees per challan per tax period. Okay, now, but of course we have some exceptions for this 10,000 limits in the offline mode, right? So exception to 10,000 rupees limit. In the following cases, the ceiling limit of payment through OTC 10,000 does not apply. Deposit made by the government departments or any other persons as may be notified by the commissioner or in response to the action taken by the proper officer or any other officer authorized. Suppose that there is some inquiry going on you, search is going on you, inspection is going against you, and during that inspection, the proper officer found that you have evaded 10 lakhs GST liability. So the proper officer issued the notice to you for the payment of 10 lakhs immediately. So you said, sir, I don't have enough balance in my electronic cash ledger. First, let me deposit into my electronic cash ledger. Okay, fine. But sir, you made a restriction that when I opted for the offline mode, I can deposit a maximum of 10,000 only. Right. So every month 10,000, like that for a year 1,20,000, like that 8 years it will take minimum. 8 years, 4 months minimum it will take to have the balance of 10 lakhs in my electronic cash ledger. So now you just get out and come after 8 years, 4 months. Then I will have 10 lakhs rupees in electronic cash ledger account. I will pay 10 lakhs. Now tell me whether proper officer accepts this. No. So what the proper officer will do is, okay, for you, the 10,000 limit is not applicable. Right? You are more than that. Antaku minchi. Right? So for you, the 10,000 limit is not applicable. You can deposit any amount through offline mode. You are a special case. Yes or no? So in response to the action taken by the proper officer or any other officer authorized in this behalf, deposits made as a consequence of recovering the outstanding dues from any person, whether registered or not, including the recovery made through attachment or sale of movable or immovable properties, any investigation or enforcement activity or any ad hoc deposit amounts collected by way of cash, check or demand draft. And the payment is to be made through GST PMT 05 challan. So GST PMT 05 is a challan ma. Okay now. Next. Is manual challan applicable under GST resume as allowed earlier under the VAT resume? Answer is absolutely no, not allowed. Manual or physical challans are not allowed under GST. It is mandatory to generate the challans online on the GST portal only. Next, how many types of challans are prescribed for various taxes and payments? Not required. A single challan is enough. A single challan is enough for all the types of taxes, fees, penalty, interest, and other payments. There is no need to generate separate challans, a separate challan for CGST, separate challan for SGST, separate challan for IGST, not required. In a single challan, you can make all these payments of taxes. Next, what is the manner of utilization of the amount reflected in electronic cash ledger? Right. So generally, electronic cash ledger contains four major heads. One IGST, two CGST, three SGST, UTGST, and four cess. And each major head contains five minor heads. Tax, interest, penalty, fees, and others. So four major heads, and after that, each and every major head contains five minor heads. Right, sir. So I think I have shown this in the running notes. Yeah, manner of utilization you can see here. So CGST is the one major head, right? In one major head we have five minor heads: tax, interest, penalty, fees, and others. Then after that, again SGST, another major head. The second major head, SGST. This SGST also contains five minor heads like tax, interest, penalty, fees, and others. And then after that, UTGST, another major head, contains same five minor heads: tax, interest, penalty, fees, and others. So like this, each and every major head contains five minor heads. Okay, now manner of utilization. Look at the examples here. CGST having a credit balance of 10,000 rupees and having a debit balance of 8,000 rupees. That means you have a liability of 8,000 rupees. So this 8,000 liability you have paid through 10,000 credit balance. Still you have a balance. Still you have a balance of CGST tax around 2,000 rupees. Are you following, sir? Right now, sir, here we have a penalty of some 5,000 rupees we need to pay. We have a debit balance, we need to pay 5,000 penalty. Now for the payment of this penalty 5,000 rupees, for the payment of CGST penalty, can I use CGST tax balance? Answer is no, you cannot use. Right, sir? Even though tax and penalty belonging to the same major head, but you cannot use it. So CGST tax balance, whatever you have, that can be utilized only for the payment of CGST tax liability. So CGST tax balance can be utilized only for the payment of CGST tax liability. Are you following, sir? Right? Now look at this example number 2. Example number 2. Sir, CGST tax credit balance, you have 1 lakh rupee, and CGST penalty, you have a debit balance of 50,000 rupee. Sir, this provision, whatever I've said earlier, this provision is actually before the amendment provision, sir. Right? See, if you want to pay by using the CGST tax balance, you can use a CGST tax balance for the payment of CGST penalty. But first of all, what you have to do is you have to transfer from CGST tax to CGST penalty. So the transfer should be happen by using the GST PMT 09 challan. You have to generate a challan GST PMT 09 through which you can transfer the balance from one minor head to another minor head of the same major head. The major head should be same. So you're transferring CGST tax balance to CGST penalty. For such transfer, you have to use GST PMT09 challan. So 50,000 debited to CGST tax, the same will be credited to CGST penalty. Now with this credit balance, pay off your penalty becomes zero. Are you following or not? This is a very important provision. Latest amendment, very important provision. Clear? Next. Sir, what about the two different major heads? Suppose that, sir, I have SGST penalty, credit balance of 10,000 rupees, and CGST penalty, credit balance of 10,000 rupees. दोनों credit balance कैसे होता है? नहीं. So we are transferring from CGST penalty to SGST penalty. Suppose that we have a SGST penalty, we need to pay some 10,000 rupees. Right, sir. But we have the balance in CGST penalty. CGST major head, minor head penalty. Now you can transfer the CGST penalty balance to the SGST penalty by using the same challan. By using the same challan. That flexibility is also given now. Right, sir. Next. So let us look into the textbook. The amount deposited reflected in electronic cash ledger can be used for making any payment towards tax, interest, penalty, fees, and others. Okay. Manner of utilization. New subsections. I've told you, these are the latest amendments. New subsections 10 and 11 inserted in section 49 with effect from the 1st Jan 2020. White Finance Act 2019 provides a facility to the registered person to transfer the amount from one major or minor head to another major or minor head in the electronic cash ledger. Earlier, we don't have this facility, man. Now we have that facility. By using the challan, GST PMT 09 challan. This challan is used to transfer the balances from one major head to another major head or one minor head to another minor head. Okay, sir. Next. So the balance amount available in the electronic cash ledger can be utilized for the payment of any liability for the major and minor head. Clear, sir? So if the registered person has a made deposit of tax erroneously by virtue of a human error under a particular head instead of a specific head, the same can be transferred to the respective intended head by form number GST PMT 09. Clear, sir? Next. Prior to the above amendment, the registered person has to claim a refund of such erroneous deposits or unutilized amounts. But now we have the facility of transferring from one major head to another major head, from one minor head to another minor head. Absolutely no problem, sir. Clear. The new section 53 capital A provides for the transfer of amount between center and states consequentially to amendment in section number 49, allowing the transfer of an amount from one head to another head in the electronic cash ledger. Now we have that facility of transferring the balances from one major head to another major head, one minor head to another minor head. Absolutely no problem, sir. Okay, now next. So that's all about electronic cash ledger, sir. So just go through it once and ask the doubts if any. Completed. Now let's moving on to electronic credit ledger, right? Electronic credit ledger. So basically electronic credit ledger contains, right, whatever the all input taxes you have paid will be credited to your electronic credit ledger, and whatever the all output taxes you have paid will be debited. So whenever you have paid the input taxes, your electronic credit ledger will get credited. Now by utilizing this input tax credit, if you are paying any output taxes, then immediately your electronic credit ledger will get debited. Are you following, sir? Every one of you, right? Next, balances lying in electronic credit ledger can be used only for the payment of CGST, SGST, IGST, and UTGST. Right? That means electronic credit ledger balances can be utilized only for the payment of major heads: CGST, SGST, UTGST, IGST. For the payment of minor heads, you have to use only electronic cash ledger balances. Interest, penalty, fees, others, all these are have to be discharged only by using the balances in the electronic cash ledger. Okay, now so chundama, so the self-assessed input tax credit by a registered person shall be credited to this ledger, right, sir? And it's important to note that the credit in this ledger can be used to make the payment of tax only and not any other minor heads such as interest, penalty, fees, that I've already told you. And the manner of utilization of the amount available in electronic credit ledger, this point we have already learned in chapter number 6 itself, already discussed at chapter number 6. It's nothing but the manner of utilization of input tax credit. So input tax credit of IGST, first it should be utilized for the payment of IGST, then it should be utilized for the payment of CGST or SGST, UTGST in any order or in any manner. ITCs of CGST first should be utilized for the payment of CGST, then for the payment of IGST. You cannot utilize the balance of CGST for the payment of SGST. Same as the case of ITC of SGST. Okay, ma'am. Next. What happens if the taxable person files the return but does not make the payment of tax? Sir, if you file any return without payment of taxes, whatever the return you have filed, that return will be treated as invalid return. Invalid return. So a return should be treated as a valid return only when the self-assessed tax was paid in full and the filing of return by the supplier and as well as a recipient. Then only it should be treated as a valid return and the input tax credit will be confirmed to you. Okay, now next. Conditions of use of the amount available in the electronic credit ledger, 86A. This point we have already discussed, 86A, 86B, both these two sections we have already discussed in chapter number 6 itself. Okay, ma'am. So in case the commissioner or officer authorized by him in this behalf, not below the rank of assistant commissioner, if he is having the reasons to believe that ITC available in the electronic credit ledger has been fraudulently availed or is ineligible, he may prohibit the use of input tax credit for the discharge of any output tax liability. Right, sir? That's 86A. And 86B, we have already discussed restrictions on the amount available in electronic credit ledger. If a registered taxpayer's monthly turnover, aggregate turnover in a particular month exceeding 50 lakhs rupees, then in that particular month, he has to discharge his output tax liability. 99% of output tax liability can be discharged through ITC and 1% of output tax liability should be paid through electronic cash ledger. Yes or no? This we have already discussed. And next one, electronic liability register. Electronic liability register, look at here. So whenever you file the GSTR1, that is outward supplies. So saying that these are my outward supplies during the particular tax period, right? Totally, I have made the outward supplies of some 10 crores on which I have collected some 1.2 crores output tax liability. So then this output tax liability of 1.2 crores will get debited to your electronic liability register. So your output tax liability debited And whenever you're paying that liability by using electronic cash ledger and electronic credit ledger, so the credit items will be electronic cash ledger and electronic credit ledger. Next, order of discharging the liability. Sir, first of all, presently we are in the month of April 2022, sir. Sir, for April 2022, you have a liability of 10 lakhs. But of course, in the month of March also, you have a liability outstanding 8 lakhs. So now, first of all, the department will ask you to discharge your previous tax period's liabilities first. So previous tax period's liability, you have to discharge first, then only think about the current tax period liability. Without clearing the previous tax period's liability, you cannot pay the current tax period's liability. So the order of discharging liabilities, first priority is go to the previous tax period, then second priority to the current tax period. Okay, now next. So what are the debits to be made in the electronic liability register? So all the amounts payable towards tax, interest, late fee, and any other amount, that will be the debits of this particular electronic liability register. What is the order of discharge of the taxes? I've already told you, previous tax periods liabilities, first we have to discharge, then current tax period liabilities we have to discharge. Okay, sir. And after that, any liability arising out of demand notice or adjudication proceedings, then you have to pay that in the third priority. So first priority, previous tax period dues, second priority, current tax period dues. Okay, next. What is the treatment of making the payment of GST using the above three ledgers? So you can see here, payment of tax, interest, penalty, fees of a registered person. The debit items should be the electronic credit ledger, electronic cash ledger, and credit to the electronic liability register. That's why I've given the entry here. The entry will be like this: electronic cash ledger debit, electronic credit ledger debit to electronic liability register. This entry you have to be used while paying the taxes, while paying out the tax, interest, late fees, penalty, etc. Okay, sir. Next, payment of TDS collected, TCS collected by e-commerce operator. So for these people, you don't have any electronic credit ledger balances. They have to discharge their liability only through electronic cash ledger. So the entry should be electronic cash ledger, electronic cash ledger debit to electronic liability register. Electronic cash ledger debit to electronic liability register. Okay, ma. So that's the entry. Next, summary of the items that can be debited or credited to the above three ledgers. Electronic cash ledger debit items will be all the deposits made by you and TDS and TCS claimed. These will be your credit items. And debit items will be what are the payments you are making, right? So the credit amount of this ledger may be used for the payment of tax, interest, and fees. If you have any remaining credit balance amount after paying making the payment of taxes and everything, that will be refunded to you. Okay, sir. Now coming to the electronic credit ledger, whatever the input tax credit self-assessed in the returns, that will be created to you, and the debit will be the credit balance of this amount can be used for the payment of all the taxes. Okay. Now coming to electronic liability register, first to look at the debit items. First look at the debit items, right? All the amounts you are payable, right? Like tax, interest, fees, late fees, penalties, all these will be gets debited to your liability register account. And the credits will be electronic cash ledger and electronic credit ledger. Okay, ma, right? Next, benefits of new taxation payment system. So the major benefits of the new tax payment system is, as majority of the people opt for the online payment of taxes, right? See, the payment of the tax should be online only, sir, right? There is no offline payment of taxes. See, offline you can deposit the money into electronic cash ledger, but the tax should be paid through online only. So hence earlier when we were in articles, I was in articles in the period from 2008 to 2012, right, sir? So at that time period, no, service tax, value added tax, these are into picture, right? Where we have the option of paying the taxes through offline mode. Offline only we have to write the challans, and then we have to take the challan, go to the nearest bank, and we need to make the payment. So there will be long standing queues in the banks, but now the payments are made through online 24/7. There is no need to stand in the long standing queues. So no more queues and waiting for making the payments, as the payments can be made online 24/7. Immediately after the payment of the challan, you will get instant online receipts. And tax consultants can also make the payments on behalf of clients. A single challan form is to be created online, replacing the 3 or 4 copy challan. Earlier in the manual cases, no, we used to fill up the 3-4 copies. Like if 3 copies are filled, 1 copy for us, 1 copy for the banker, and 1 copy for the department. Unnecessarily. But when it comes to online, a single challan required to be filled up. Next, revenue will come earlier to the government treasury as compared to the old system. Greater transparency, as you are making the payments through online, so you cannot make any manipulations in the challan. And online payments made after 8 p.m. will be credited to the taxpayer account on the same day. Earlier, no, whatever the payments made after 8 p.m. that will be credited to the taxpayer accounts on the next day. But now under the new tax payment system, even if you make the payments after 8 p.m., the amount will be credited to the taxpayer's account on the same day itself. Clear, sir? So these are all the advantages of the new tax payment system, sir. Okay, now. And after that, we have some interesting amendments by the latest Finance Act 2020. But before that, just go through this and ask the doubts if any. Completed, sir. Now let's moving on. Interest on delayed payment of taxes. Section number 50 deals with the same, sir. So general interest under section 51 and 52. So interest in case of failure to pay the tax or any part thereof to the government within the period prescribed. So generally, whenever you are filing the consolidated return in form number GST at 3B, right, generally the due date will be the 20th of the following month. Means for the April month, the due date will be May 20th. So that means on or before May 20th, you have to pay your GST tax liability. Suppose that instead of May 20th, you have paid the tax on June 15th. So there is almost a delay of around 25-26 days. Now for this delay period, you have to pay interest. Now how to calculate this interest? Look at here, the amount on which interest payable, the short payment of output tax within the due date. Suppose that instead of 10 lakhs, you have paid only 2 lakhs within the due date. So what is the short payment? 8 lakhs. On that 8 lakhs amount, you have to pay interest. What is the rate of interest? 18% per annum. And the period, it starts from the day on which the due date was completed until the date of payment of tax. Right, sir? the period of delay starts from the day on which such tax was due to be paid. So on May 20th, you have to pay, but you have not paid. So starting from May 20th till the actual date of payment of tax. So in our example, June 15. So you have to calculate the delay period. For that delay period, you have to pay the interest. Okay. So look at here, interest and delayed payment of taxes. For the calculation of interest, first of all, we need some three things. Number one, the rate of interest, it is 18% per annum. Number two, amount on which the interest is payable. We have two options here. Gross liability means the total liability, and net liability means the tax paid through e-cash ledger. Okay, under what circumstances gross liability should be taken? Under what circumstances net liability should be taken? I'll tell you in a couple of minutes. Next, third one, the period for which the interest is payable. It starts from the next day from the due date, ending with the date of payment of the tax. Okay, sir. Now, whatever the interest payable, it should always be paid through electronic cash ledger. I've already told you, electronic credit ledger balances should be utilized only for the payment of major heads, not minor heads. Interest is a minor head. So minor head liability should be paid only through electronic cash ledger. Okay, ma. Next. So specific interest under section 53, right? So undue or excess claim of input tax credit or undue or excess reduction of output tax liability. See, this provision has now been removed from our ICA syllabus. You can just leave it. This here I provided you only for your knowledge purposes. Okay, now this 53 has now been removed from ICA syllabus, sir. Okay. Now, yes, this provision is there, recently added. Interest payable on gross liability or net liability. This provision recently added. Look at there. Sir, before the commencement of any proceedings under section 73 or 74 by the proper officer, supply made during a tax period and declared in the return for the said tax period, right? So supplies made during a tax period declared in the return. Suppose that we have made some supplies in March 2022. Now regarding the same, we have already disclosed the same in just year 1 of March 2022. Now in that scenario, the interest should be paid only on net liability. That is interest payable on tax paid by cash ledger only. Right? This is case 1. This is case 2. Case 2. Supplies made during a tax period and declared in the return for the subsequent tax period means March 2022 supplies. You have made some supplies in March 2022. These are supposed to be disclosed. These are supposed to be disclosed in GST year 1 of March 2022. But instead, in April 2022 GST year 1, they have disclosed. So we have disclosed such supplies in the returns, but for the subsequent tax period. Now, in this scenario, the interest should be paid on gross liability. That means interest should be payable on tax paid by both cash ledger and as well as credit ledger. For this purpose, I've given you an example here. Look at there, ma. Outstanding liability 1 lakh. Out of which by utilizing the input tax credit, we have paid 80,000. The remaining 20,000 we have paid through electronic cash ledger. Okay, sir. Now, gross liability means whatever the tax you have paid through electronic credit ledger and electronic cash ledger, both put together. So that means 1 lakh. Net liability means only the tax paid through electronic cash ledger. So 20,000 rupees. That's the difference, ma. Everyone following now? Next. GST year 1 outward supplies return. Due date will be 10th of the following month. GST year 2 inward supplies return. Due date will be 15th of the following month. And GST year 3B consolidated return. Due date will be 20th of the following month. Are you following, sir? All right. And so these are the cases only when the proceedings have not been commenced. Before the commencement of proceedings by proper officer. Now you will get a doubt here. Sir, what if the case if the proceedings have been commenced by the proper officer? after the commencement of proceedings. Then in all the cases, means whether you have disclosed the details of the supplies in the same tax period written or in the subsequent tax period written, whatever might be the case, the interest always have to be paid on gross liability. Okay, ma. Next, interest in case of belated payment of tax, the payment of interest should be made voluntarily even without a demand. So the proper officer will not issue any notice to you. Babu, you have made a default in payment of taxes. So there is a delay. You have to pay the interest. So such a kind of notice the proper officer will not issue. You have to pay voluntarily. The system will calculate the interest portion by default and you have to pay it. Okay, now the interest payable debited to the electronic liability register, and such interest can be settled by adjustment with the balance in electronic cash ledger, not with the balance in electronic credit ledger. Are you following or not? Okay, ma. So here for the late payment of tax, I've given you some examples. So look at this example, ma. Payment of tax and filing of monthly return by regular taxable person, GST at 3B for the April 2021. At the due date will be the 20th May 2021. So case 1, supplies of April 2021 declared in April 2021 return itself, and the payment and filing done on 18th of May 2021. You can see here April month supplies declared in April month return itself, and that return also filed and the payment also made well within the due date. What is the due date, Mark? 20th May 2021. When you have filed your return, 18th May 2021. When you paid the taxes, 18th May 2021. So hence, no interest liability. Interest nahi lagega ma. No interest liability. Okay. Next. Look at the case 2. Supplies of April 2021 declared in April 2021 itself. Declared in April 2021 itself. Payment and filing done on 28th August 2021. They're supposed to be filed by May 20th. But when actually filed, ma? 28th August 2021. Okay, fine. What is your output tax liability? 7 lakhs. What is your input tax credit? 10 lakhs. Right, sir? Sir, first of all, here we have to pay the interest on net liability because April month supplies declared in April month return itself. Hence, we have to pay the interest on net liability. What is net liability? The tax which is paid through electronic cash ledger. Here, you have an outstanding liability of 7 lakhs. This is your output tax liability. And you have input tax credit balance of 10 lakhs. Now, this 10 lakhs balance you can use for the payment of your output tax liability. Now, you tell me what is the tax paid by utilizing e-cash ledger? Nil. So, your net liability is 0. Hence, your interest liability is 0. Okay, sir. Now, look at the case 3. Supplies of April 2021 declared in 2021 return itself, but the payment was made and filing was done on 28th August 2021. So you can see here the return is supposed to be filed and the payment is supposed to be made on or before May 20th. On or before May 20th, but the payment and return was filed on 28th August. Here also the interest is payable on net liability only because April month supplies declared in April month return itself. So the interest will be payable on net liability. Now, what is the net liability here? Look at the example. Case 3. You have an outstanding liability of 10 lakhs and ITC you have a balance of 7 lakhs. So output tax payable through e-cash ledger 3 lakhs. This is your net liability. 3 lakhs rupees. So period of delay I've calculated here. You got 100 days. And if you calculate the interest, you will get 14,795. 3 lakhs is the amount on which interest is payable. 18% is the rate of interest into period of delay 100. 100 divided by 365. You will get the interest amount 14,795. You got it now? 14,795. Clear? Okay, sir. Next. And like that, case number 4. Okay, right. So after that, illustration number 4 is also there, and then problems for classroom discussion. That's it. So with this, we have completed GST marathon class, chapter number 9. So we're left with only one chapter, that is chapter number 10, returns. That I will take up in the next session. Till then, have a good day and good night. See you in the next session, sir. Stay home and stay safe.